So Warwatch, energy, basic resources, that's a mixed picture as well, with gold up strongly in the session as well. FTSE 100 then with that focus on basic resources at the open, currently a little higher by 0.1%. DAX futures down by 18 points. Anna.
Let's take a look at some UK stocks. They all just happen to be UK stocks this morning. In focus at the start of the trading day. Burberry, the luxury goods company, they are under a fairly new CEO. Greater China market seeing strong sales up by 6% thanks to demand from Gen Z customers. That seems to be the narrative there. So we'll see whether that spreads, any positivity there spreads across the sector or not. Defence will be in focus for wider reasons, but Babcock in particular in focus as the UK is seeking to advance talks to sell warships to Denmark, and they are manufactured by Babcock International Group. So we will certainly keep an eye on that one in the current climate. Curry is also in focus. The UK retailer could be up quite substantially. The electronics retailer forecasting higher than expected full-year profits, Guy.
Okay, here we go. The session is almost upon us. Feels like a day of kind of a bit of early morning skiing, maybe. Wait for the president to arrive a little bit later on. That's when the action's going to be. We are, though, not going to do that. We're going to focus on what is happening out of Davos. There's some great commentary coming out. European markets, honestly, I don't think you're going to see much action. There could be some single stock stories that you're going to be thinking about, maybe a little bit of sector rotation. But basically, we are top down. This is a macro day. It's a geopolitical day. Geopolitics is ultimately going to determine it. How we price that, though, is going to be really key. The dollar hasn't bounced. Stocks haven't bounced. We are waiting for Trump. What is he going to say? Scott Bessent sounded really, really hawkish a little bit earlier on. Are we going to see a similar tone coming from the President of the United States? There you go. Look at that. European equity markets are doing nothing right now. We are sitting on our hands. We are waiting to see what comes out of Davos a little bit later on today. Tom, any sector rotation? What are we seeing there?
Basic resources are doing something. Copper prices are up 1%. That's lifting basic resources. That's your top sector so far. Gold, of course, up 2% as well, outstripping the gains coming through for silver, which is up 0.2%. Basic resources then gaining 1.3%. That is your top sector right now. Consumer goods up 0.7%. That's second on the list. On the downside, the pressure coming through for financial services down 0.6%. What is standing out to you, Anna?
Yeah, it's the read across from Burberry, because I don't think we have an opening price for Burberry itself yet, but we have the impact of it, and it is a positive impact. I certainly see that caring is higher, so we do see a focus on luxury goods. The sector, consumer products up by 0.7%, caring up by 1.5%, LVMH up by 1.4%. Now let's remember, of course, the beginning of this week, we were particularly concerned about luxury goods and exports, in particular from Europe into the United States. But the numbers out of Burberry are interesting because they highlight strength in China, so maybe that adds a slightly different narrative, and enough at least for some of these luxury names to bounce a little this morning.
Yeah, they got battered around yesterday, didn't they? LVMH is the top points gainer on the Stock 600 this morning. Richemont is also climbing as well. It is up quite nicely. ASML is up by 0.3%, but the other standout story is what is happening, as you say, Tom, in terms of the commodity position. That's kind of where we find ourselves. But these are small rotations, relatively small rotations in terms of what we are seeing in these markets.
The higher yield story we were talking about with Lawrence Markin, whether we are in for a higher yield environment, it certainly seems to have captured the imagination for European stocks this week. Yesterday we saw real estate was the worst performing sector, and that was because of the higher yields that were driven by Japan. Today looks a little bit different, but we have another day of negativity for some of the real estate companies. Not falling by much, but that is the worst performing sector.
Gilt yields are down this morning. We're trading at what, 4.436.
Is that a UK CPI story? Is that a Japan story?
It's entirely in line with the rest of the European bond market. We're down by 2.1 basis points in the UK. We're down 2.5 in France. We're down 2.1 in Italy, 1.6 in Germany. The US 10-year is down by 2.4 basis points. So pretty much exactly in line.
The inflation data that dropped at 7 a.m. was not concerning.
Doesn't seem to be. I think people are treating it as a one-off. Okay, the big story continues to be what is happening with the geopolitics. The derivative of that is obviously what is happening with the trade story. That is the focus of the World Economic Forum. We're waiting for President Trump's highly anticipated speech a little bit later on. What is he going to focus on? Where will be the emphasis? What will be the message also coming from European leaders? Let's come at this from a trade point of view, though, now. I want to take you back to the World Economic Forum. My good friend and colleague, Anne-Marie Hordern, is there. Let's get another line on this narrative. Anne-Marie.
Very good morning to you, Guy. It's so great to be back in your time zone. I'm joined now alongside U.S. Trade Ambassador Jamieson Greer, who's traveling here with the President of the United States. Ambassador Greer, thank you so much for your time this morning.
I'm happy to be here. Thank you.
I want to start with Greenland, because it's kind of been the elephant in the room. For Europeans, some have called it an existential threat. Others I've talked to have said this is really just a distraction. From when you arrived to now, have you seen that issue become a little bit less important? Have we de-escalated at all?
Well, listen, everyone brings it up, and they bring it up because the president has been very clear that he views it as an important national security issue for the United States. It's on our northern reaches of the North American continent. It's incredibly important to him and to the United States, and has been for a very long time, by the way. It's not.
Yeah, we have a military base there.
We have a military base there. We defended it in World War II when the Danes couldn't. So there's a long history with Greenland. So obviously it's come up. Mostly it comes up with me because there's the tariff angle. We have a trade deal with the Europeans. We're still trying to get them to lower their tariffs like they promised they would do. They haven't done that yet. So they bring up this potential tariff action on the Greenland side. For me, I try to keep those separate. For them, they put them together. I understand they have different national interests than we do.
You had said, though, this week that it's possible the president using it as a negotiating tactic. Could this now change the trade agreement you had set in motion with the European Union?
Well, the trade agreement really is purely about trade. It's not about national security. Greenland is a national security issue. I just came from a meeting with European Trade Commissioner Šefčovič, who I have a great relationship with. He raised this issue. He gave me the European view. I relayed President Trump's view, of course. It's not a term of the trade agreement, and this is what I keep trying to say, is we should compartmentalize these
But for
things.
the Europeans, it'll be an additional tariff.
Potentially, that's right. Yeah.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem. And it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover. Even trade things, right? There are things about pharmaceutical pricing or digital that aren't quite covered there. And it certainly doesn't include, geographical or territorial issues.
Do you see this administration using tariffs to gain new territory?
I mean, the president has been really clear, and the United States has always been aware of territory that's important for it geopolitically. You've seen the president talk about the Panama Canal. Obviously, we're talking about Greenland. Interestingly enough, one of the last times the United States acquired territory was getting the U.S. Virgin Islands from Denmark in last century. So there's a long history of countries acquiring territory through purchase or other means.
You're working with the Europeans now on critical minerals, choke points that come from China. How challenging is it to work with them on critical minerals when the president is threatening tariffs on a national security issue like Greenland, which you could actually get critical minerals?
Sure. I would say the critical minerals in Greenland, I'm not familiar with all of the deposits, et cetera. Conditions there to extract them are challenging, but they do have critical minerals, is our understanding. Critical minerals are also in the continental United States. The United States is taking a lot of unilateral actions on critical minerals to support new facilities and new mines in the United States. We're working with allies and others. We're trying to have negotiations on critical minerals to expand that, take what we're doing in the United States and grow it.
Has Greenland made it harder?
I mean, it doesn't make it harder for me, right? I think obviously it complicates it for the Europeans because they're trying to, loop Greenland into the trade issues. They want to combine the national security and the economic trade issues. I'm less inclined to do that. My own sense is, let's see what happens over the next few days. The Greenland issue, it's really at the leaders' levels. It's not, certainly not USTR. The Secretary of State's working on this issue, the Vice President, the President. I think we need to give a few days to let this process work through and see if we can find a good way forward.
Prime Minister Mark Carney had a very blunt statement yesterday to Davos. He's talking about basically if you're a middle country and you're not at the table, you're on the menu. He talked about a new strategic order with China. He just got back from a trip to Beijing. Are you concerned that some of this aggressive tariff policy has unintended consequences of pushing your allies towards your biggest adversary, which is China?
So I think that is really overblown. First of all, everyone trades with China. The United States trades with China. Europe trades with China. Canada trades with China. The Canada-China deal, it's not a comprehensive deal. It's really a trade. The Canadians put a big tariff on Chinese vehicles a couple years ago. The Chinese retaliated like they always do, and they did it on Canadian canola, which is an important export. And so the Canadians said, well, instead of having a tariff, we'll have a quota. We'll have a hard quota on Chinese vehicles. So from a substantive point of view, I think that has been a little bit overblown. I am focused on suggestion about Chinese investment into Canada and that kind of thing. I'm not sure that's healthy for the North American relationship. So we'll be looking at that. I just think that Canada, the Prime Minister himself said it, they're a middle power. History doesn't swing on the hinge of Canada's geopolitical decisions. 75% of their GDP depends on the United States. So I'm not terribly concerned about it. They're always going to have a constructive relationship with us.
When it comes to China, I'm sure you've seen the record exports that are still coming out of China, but the United States, those exports are actually down.
Yes.
So these goods are going elsewhere. Does USTR have tracking of the transshipped goods that are going to other countries and then entering into the United States?
So we've done some analyses on this, and there are a couple different ways this happens. There's kind of the actual illegal transshipment where you have a Chinese good that might go to Vietnam or Indonesia, and they just say it's an Indonesian article and there's been no change. That's an issue that Customs and Border Protection, they track this. People who import have to verify this, and so there are investigations about that kind of thing. Separately, there's the idea that you have Chinese goods, components and parts going to other countries and being assembled elsewhere and then coming into the U.S. Legitimately as products of those third countries. That's something we watch quite a bit. The reality is, as you mentioned, our trade deficit with China has really improved over the past 10 months, which is a great development. We do have some insight into parts and components going to third countries. We understand that development. That's the kind of issue in the future that can be dealt with rules of origin, et cetera. We're really focused on finalizing our trade agreements with others, keeping stability with China. We're in a good spot. We can't solve every problem right now, but transshipment is one that we're very focused on.
The Anthropic CEO had said to Bloomberg this week that selling high advanced chips to China is like selling nuclear weapons to North Korea. Do you think the United States should be selling advanced chips to Beijing?
Well, I saw those comments. I think they're kind of the most extreme thing you could say about it. The United States export control policy has always been fluid. That's how it is supposed to work. As technologies advance, older technologies become less sensitive and they can be shipped overseas. And so in the Trump administration, there's been an ongoing dialogue within the administration, with members of Congress, with industry, with consumers of chips, with producers of chips, to figure out what's the right balance for national security and commercial interests, and the president himself has made some of these decisions.
What do you make of Congressman Brian Mast's bill, which is basically saying that we need to regulate, Congress should be regulating these chips?
Well, Congress passed a law, the Export Control Reform Act back in 2018, that updated and gave new legal authorities for export controls. The Commerce Department has authority to implement those regulations. My view is if Congress has a view on this and they want to, take a stronger approach and take a more hands-on approach, they can do that. They can pass a law. Congress is notorious for proposing laws and never getting them passed. To me, I think it's important that we have a conversation with Congress, regardless of whether they pass a law or not, on their views. I think all of that goes into these conversations. And remember, when you see something that says, we're shipping these chips to China, every time that happens, whatever company wants to make that shipment, they have to make an application to the Department of Commerce. And on a case-by-case basis, the Commerce Department looks at it. They check who the end users are. They check what the security measures are. They check, who's going to be touching it along the way, and they make a decision based on that. That's a process that's been around for a long time. We execute that process in the Trump administration. We feel comfortable that we're, honoring our national security obligations.
Ambassador Greer, I just wanted to give you a moment to reflect on where you are right now.
Yeah.
I was thinking back about your Senate confirmation hearing, and I remember you talking about how you grew up in a mobile home, how your parents worked multiple jobs, and now you are here on what your colleagues have said to me is the epicenter of the global elite, but you are having these high-level conversations. What is it like? How does it feel?
Yeah, it's interesting. I grew up in a small town in Northern California, and we had mountains like this with, snow on top of them, but we didn't have chalets. We had, mobile homes and things like that. Listen, to me, it's very important that normal people, regular people, have a voice in what's happening, and that's a great thing about the Trump administration. They have a very strong working class base, and so that's a voice we're bringing. It's a voice I bring, right? I've been very fortunate to be in the U.S. and be able to, climb the ladder of success thanks to, my parents and people who surrounded me. And I think that opportunity that we have in America, everyone else should have this too. When I go around to other countries, they have an elite, right? A lot of those elites are here, and they don't have that kind of opportunity. Even in Western countries, there's not the opportunity for advancement. So I think the American model, where we have growth, we have it available for every walk of life, I think that's one of our most important exports.
Ambassador Greer, thank you so much for your time this morning. And I'll send things back to you in the studio. That was the United States Trade Representative, Ambassador Greer, ending there on a personal note as he travels with the president here in Davos, Switzerland.
Yes, absolutely. Really fascinating conversation. Bloomberg's Anne-Marie Hordern on the slopes of Davos there. Interesting, Jameson Greer might find some common ground with Keir Starmer then. He talks about no opportunity for advancements in the West, but he makes a lot about the fact he was the son of a toolmaker, so maybe there are some parallels in that conversation. Interesting that he called Mark Carney's reaction overblown, maybe that driven by anger that the president had put out a fake photo showing the US flag all over Canada, Greenland, Venezuela and the rest, and accused Europe of linking trade with Greenland, when I think the president did some of that at the weekend, at least.
Absolutely. All of this build up to the Trump speech. Are we hearing from Besant, from Greer, what the lines are going to be? Are they going to differ? How aligned is the administration in all of this? What clues can we take thus far from what we've heard this morning out of Davos?
It wasn't that long ago, a few days ago, where we thought the speech was going to be about real estate, property.
Affordability, apparently, it's still supposed to be about.
Was going to be the pitch. Bloomberg Economics have looked back at his previous two speeches when he was on the ground in Davos and said that actually he's moderated and he pitches himself as a global leader. So their expectation, based on previous history, is that this will be a more moderate response from the US president in this speech. We'll see if that's the way it goes. A lot has changed.
Absolutely. Where could the surprises come from today? Could it be that Trump shows up and goes, I want a deal. I don't want to do tariffs. I want to find there's common ground here. We can do this. We can do that. Is the surprise that he de-escalates rather than escalates? Because everybody's expecting escalation here.
Yeah, absolutely. We are told by Scott Besant earlier on, wait for President Trump, see the message he brings, and we will be all ears. Among the TV guests that we have still to come here on Bloomberg, Nicola Mendelsohn, Meta Head of Global Business Group, Bill Winters, Standard Chartered CEO, and Steve Witkoff, US Special Envoy. All of those conversations still to come. Guy.
Absolutely. Let's take a quick look at what the core numbers look like and what we are seeing here in Europe. This is the core six, some of the stocks that we watch on a daily basis to get a sense of what is happening. Defence stocks a little off this morning, but not by much. Tech's a little off, but not by much. In fact, everything's a little off, but not by much. Where you are seeing some weakness today is actually in pharmaceutical stocks. That is pretty much across the board. You are seeing names like Novo Nordisk coming under pressure today. It is down, but names like Astra, GSK, Roche, Novartis are also under a little bit of pressure as well.
LVMH, there you go, 2.5%. So the luxury story is interesting, and evidence may be of a turnaround in the Chinese market coming through in terms of the numbers for Burberry. Burberry then making strong gains, up more than 4%, and that's lifting the broader luxury space this morning after the beat in terms of third quarter sales. We're going to bring you the details next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade. 19 minutes into our session, and I think the session, as it is so far, not really reflecting the level of excitement and drama that the day could offer. We'll be heading back to Davos a little bit later, of course. We are awaiting the US president's address later today. We're keeping an eye on the timing. So far, it hasn't moved. 1:30 p.m. is the timing that we are being given for this speech, but we are, of course, alert to whether that shifts around.
Okay, before we get to that major moment, there's a bit of excitement when it comes to luxury stocks and what's been happening with Burberry. Burberry on the move then after strong sales in Greater China over the holiday period. Third quarter sales rising 6%, so doubling growth than the previous quarter in a win for CEO Joshua Schommel's strategy to turn the brand around. The stock gaining 4.4%, as you can see. Let's bring in Maddie Parker, our consumer reporter, for the details. Maddie, what is going right for Burberry at this point? Can it be maintained?
Yeah, I mean, it's really good news across the board for Burberry this morning, and yeah, very good news for Schulman. It's sort of gone back to their basics, really. I mean, his whole kind of turnaround effort has been, let's focus on our core staple items. We're talking things like their tartan scarves, their trench coats, and those have shown really robust sales. As you mentioned, it's quite promising signs in Greater China. It's sort of a market that's very important for luxury. They're not sort of entirely out of the woods on that front, but it's really important that they're appealing to Gen Z customers and some of those younger customers as well. So it seems that those core products are really luring customers.
It's not just Gen Z. Guy Johnson's been looking at the price tag for some of these scarves.
But back to basics seems to be working, though, because the basics are quite well priced. And as a result of which, yeah, they seem to be doing quite well. Can I just quickly get your take on this Lululemon story? Which I got in the car this morning and was trying to sort of figure out what was going on and trying to kind of look at it as I woke up.
Don't look too hard, is the advice.
And that seemed to be the kind of takeaway.
Yeah.
I just walk me through. Is this something that Lululemon can correct quickly? Basically, some of their leggings are see-through.
Yes, that's kind of the gist. So basically, they have the new Get Low range, is what it's called, and it's been apparently customers can't really get low is the problem.
Right.
Their products are a bit too see-through, a bit too sheer, and as a result, Lululemon had actually to withdraw that whole range from their website only 3 days after its debut. So it's not such a good look, and it's actually the third time this has happened for Lulu where customers have complained about the quality of the products. Yeah. Hopefully, they can turn it around. The whole brand is under kind of greater scrutiny at the moment.
It's amazing. And this is so Andrea Felser's got this great piece as well, which I was listening to as well, talking about the fact that if you want to get ahead now, you can't be wearing. It's not about leggings anymore. It's about blazers. You've got to smarten up. So if you want to,
if you want your bonus,
if you want your bonus, basically, it's a great story.
But today in the markets, it's either Lululemon sheer joggings, leggings, jeggings, or
any of the above.
You're making words up now, aren't you?
I think I'm
okay. Let's get on to safer territory, shall we?
Let's move on. And other things you can listen to and watch. Netflix delivering fourth quarter results that largely beat Wall Street's estimates, but the streaming giant is warning of rising content costs and issued a cautious forecast for the months ahead. It's also looking like it's going to pause its buyback. This obviously comes back to the M&A story, which we've been focusing on as well. Manuel Bagori joins us now. Manuel, let's start with kind of the outlook and the pause in the buyback. Is that what the market is responding to? Because the stock got hit pretty hard overnight.
Yeah, absolutely. I mean, there was a bit of a stock reaction negatively, and mostly based on the outlook. They were a little bit more cautious, and they explained that it was due to potential investments. They see opportunities in creating new shows and films this year, so that required a fair amount of fresh investment, and at the same time they need to devote more time and money to the potential closing of the Warner Bros. Deal that will also require a fair amount of investment, and they will also have to carve out some cash to finance that transaction. It was also interesting just the amended potential agreement as well. But this remains an ongoing saga, so let's see what the next episode will be.
And Manuel, what are the details of that amended takeover offer then for Warner Brothers coming through from Netflix?
Yes, Tom, super interesting, isn't it? Well, they amended, they agreed to an all-cash offer deal to buy the streaming business and studios of Warner Bros. For $27.75 a share. Remember that the previous one was a mix of cash and shares. That is still to be competing with Paramount offer that remains there, and whether or not they come back with another offer remains to be seen. But yeah, I think this shift into an all-cash deal is definitely a bold move. So we'll see how shareholders react to that and what the next steps might be. I think there could potentially be new moves from the different parties involved. So definitely worth watching closely as this transformative deal, progresses.
Thank you very much, Manuel. Bloomberg's Manuel Bagori. Always good to get your perspective on some of these deals that we're following. The European Commission President, Ursula von der Leyen, is speaking in Strasbourg, and one of the lines that stands out to me, she's saying that it is important that Europe fully prepares to act if necessary. And she's been talking about trade, of course, and the potential for responding on the trade front over recent days.
And what does acting mean? Does it mean putting troops into Greenland? Does it mean ongoing military exercises? Is it exercising some of the more extreme measures that Europe has at its disposal? The French would certainly like to push us in that direction. How we respond? We're going to respond.
She's giving us a few lines here. She's saying we need a departure from Europe's traditional caution. They agree with the US on the need to secure Arctic security. The US's threat of additional tariffs is simply wrong. Preferring dialogue and solutions with the United States. Europe fully prepared to act. Yes, was the line I mentioned.
Is this EU leadership laying the groundwork for using that anti-coercion instrument? We know the trade deal is essentially frozen at this point. The US-EU trade deal.
The criticism of her is that she's been super cautious. The criticism of Ursula von der Leyen is she has not pushed the agenda hard enough in Europe. Maybe we get a tougher line from her going forward from here. But is Europe really willing to go toe-to-toe in the way that the Chinese did with the United States? I don't know, but maybe that is the lesson that needs to be learned for Europe. Anyway, coming up, we're going to head back to Davos. We're going to talk markets, we're going to talk technology, Meta, AI's ambitions, front and centre. Nicola Mendelsohn is going to be joining us. This is Bloomberg.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real moment, to your point, we're at a real moment in time to be able to capitalise on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
This is the opening trade. Welcome back. We are 30 minutes into today's session. Is this wait and see ahead of the big presidential Trump visit, of course, and speech in Davos? Is this a market on tenterhooks? There's been a bit of a reprieve over in Japan with some bond buying, so making up for some of the losses yesterday. But really, it is the build-up to that speech. And so for the moment, it seems many investors are not taking big bets. Across the European benchmark, you are down just 0.1%. The DAX over in Germany down 55 points. The CAC current is supported by the luxury space. Burberry came through with some results suggesting that China is turning around, so you're seeing French names in that sector lifting the broader index over in France just modestly by 3 points. The FTSE 100 here in the UK currently down 0.1%, but the basic resources story is some strength. The miners doing quite well on the back of higher copper and gold prices. Guy.
Okay, we're basically holding yesterday's position. Big moves yesterday. Today, nothing really to see here. 291 stocks are up in the stock 600. 292 are down. I guess you'd call that a fairly evenly balanced market, obviously not taking into account weightings. Volume is light. We're on a 20-day average, down by around 20%. It's a fairly choppy number, but we are light today. Market's waiting to see what happens next. Tom mentioned the luxury names, LVMH, Burberry, both rising quite nicely. LVMH, obviously, the bigger company, but Burberry responding well to what has been delivered today. Miners are up, as Tom says. We're up by 3.3% on Rio. Let's talk about where we're seeing some downside weakness. You've got it in Danone. I think there's a price cut on that stock this morning. We're down by 6.6%. So ratings, upgrades and downgrades are having an impact. Novo and AstraZeneca are both soft. The pharmaceutical sector continues to be under pressure, Anna.
Let's talk about some of the other stories that we keep on watch today. Japan's longer maturity bonds have rebounded after the finance minister, Satsuki Katayama, called for calm among market participants following a rout that pushed yields to an all-time high. Meanwhile, Japan's second biggest bank said that it plans to aggressively rebuild its local sovereign debt holdings once the surge in yields runs its course. The UK is seeking to advance talks to sell warships to Denmark amid increasing threats posed by Russia in the North Atlantic. This as transatlantic ties are put under strain by Donald Trump's efforts to take control of Greenland. Sources say the UK Defence Secretary and his Danish counterpart are expected to discuss the potential agreement when they meet in Copenhagen later today. Speaking earlier, the US Treasury Secretary Scott Bessent said President Trump will be, quote, about 3 hours late to Davos, where he is due to speak later. President Trump's trip to the World Economic Forum was delayed earlier after his plane had to return to Joint Base Andrews shortly after takeoff due to a mechanical issue. That was said, Tom, to be out of an abundance of caution. He was put on another plane and he is en route now to Davos, expected to arrive late but not necessarily to speak late.
Yeah, 1:30 p.m. local time is the still expected time for that speech, isn't it? Despite that delay on Air Force One for the US president. The topic of AI, of course, in Davos is high on the agenda as well as what we expect to hear from Trump. And the message from tech executives is that it is a powerful geopolitical force. Let's bring in Bloomberg's Francine Lacqua, who, of course, is on the ground for us in Davos with another guest, Fran.
Tom, thank you so much. I'm delighted to be joined by Nicola Mendelsohn, Head of Global Business Group at Meta. Thank you, Nicola, for joining us. Look,
Great
there's
to be here.
a lot going on for the tech companies. We'll talk about growth. We'll talk about the use of AI. But there's also more and more countries in Europe trying to think of banning social media for under 16s. What do you say to that?
Look, we've raised concerns about this, and keeping young people safe on our platform is incredibly important to us. It's an absolute priority. And we've been investing in this area for a number of years. It's why we launched Teen Account back in 2024 to keep young people safe, to give parents supervisory controls so that they can also work with their children, their young people, in terms of keeping them safe. So what does that mean? It means restricting the amount of time that they spend on the platform. It means that they can restrict who comes on, and we place them all in that category automatically. So this is very important. But of course, we're going to work with regulators wherever they are.
Do you think the ban will come through?
I'm not going to speculate. I'm not going to speculate with you on that.
What are your primary goals for dealing with Brussels this year? The company was targeted with an abuse of dominance probe last year. Given also the relationship between the EU and the US now, do you expect it to get worse?
So I don't know in terms of how we speculate on where it will be, but what's very clear, and talking to European business leaders in particular here, they're very concerned about the rate of innovation and the rate of growth. We're seeing that all of the tech platforms have not been able to launch particularly their AI products at the same rate as they can at the rest of the world. And there's increasing frustration with business leaders here, even more so than last year, because they can see that they're not able to take advantage of all the new products. You know, when you look at some of the research out there, take GDP. 20, 30 years ago, GDP of Europe and the US was exactly the same. When you look at the creation of new companies that are reaching over 10 billion in market cap, Europe's had about 20 of those companies. The US has had over 200. So it's very clear that there's a link between complicated regulation and also the ability to allow innovation to flourish and grow.
But is your relationship with Brussels changing, and actually how do you approach regulators?
So we work very closely with regulators. You know, it's complicated in Europe because there's over 270. So we're always going to err on the side of strong regulation that allows both for people to enjoy the new products that are out there and businesses to be able to use the new products. And a good example of some of those products are we're talking here about growth as well, is our whole AI suite of products. Yeah. So they're called the Advantage products. They reduce the number of steps that advertisers have to take. And what we see now from the research is that for every dollar invested in our platforms, we're seeing an average return of $4.52. These are strong numbers. And when businesses turn on these devices, these tools that we have on our platform, accessible for everyone, the biggest kind of businesses in the world, but also, the local bakery in Cloisters, they're seeing on average between 20 and 25% increase in return on ad spend. So these are the things that make me very excited.
So what's the main way, for example, advertisers are even using AI?
Yeah, well, many different ways on our platform. So first off, we use AI when it comes to people on our platform to see more of the things that they want to see. So we have growth across all of our different platforms, which is fantastic to see. Then we have the Advantage Suite, which is very simple. I mean, some of the practices that you used to do took 150 different steps. Now you can do it in one step. We also see more and more the increase in our generative AI tools, how they can use it for text, for translations, for even the creation of for video now. We have over 2 million advertisers doing that. So all these things are combining alongside both Reels as well to really give growth for our advertisers.
Nicola, what do you think is still untapped in your mind?
Oh, so many things. I mean, I've got a whole smorgasbord of things. So definitely messaging. We're seeing a continuous uptake in more personalized communication between businesses and people. There's now over 1 billion messages sent every day between people and businesses. We see 8% of people around the world globally that are speaking with a business every single week. So this is an area both on the marketing side, but increasingly more on the utility and the authentication side. A good example is Air France. So Air France, when they switched this on, within a few days, it became their primary source of communicating with their customers. And they're doing it to deliver boarding passes, tell you about where your baggage is, also remarketing as well. So that's a very good example of some of the changes that we're seeing all over the world.
And where are we on AI-generated ad campaigns? I mean, could you see a future where actually, I also give my credit card to Meta and then you do the rest of what I want to buy or not?
So we're already being able to provide, and especially for our smallest advertisers, that they can go in and they can start a campaign by giving very clear instructions on who they want to target, what sort of growth that they want to see, and how they might want to adapt the different message in different ways. So we're working towards that as well.
Nicola, there have been reports that Manus is being folded into Meta's business unit. Can you talk about Meta's efforts around building a subscription business?
Yeah, okay, so there's a few questions in that. First of all, we're very excited about Manus. That deal was only closed like a week or so ago, and it's very much towards a drive towards Mark's vision of personal superintelligence. We already put Meta AI across all of our platforms, and so that means now that over 1 billion people are using Meta AI on a monthly basis. So that's fantastic that they have access to AI products for free. Within that, then, there's many different areas that we're working towards. And what does superintelligence mean and how we're going to get it? And what's the best form factor that we think that we'll see that in? Well, it's got to be the glasses, the wearables. And that's a big thing that we're demoing here this week. I've got my neural wristband on. I spared you my glasses as well. You've been trying it and you know what it's like. So the fact that the AI, which is delivered through the glasses, really keeps you in the moment, keeps you present. And the AI sees what you see, hears what you hear, and then can act as your own personal agent to help you with whatever a task it is, to maybe send you a birthday card in advance because it knows that that matters for me to be able to do that, to many other things as well.
Nicola, thank you so much for joining us today. Nicola Mendelsohn there, Head of Global Business Group at Meta. And I'm going to send it back to you in the studio. We'll have plenty more throughout the day here in Davos.
Francine, thank you very much. Bloomberg's Francine Lacroix. And of course, Tom, we are just beating the drum towards President Trump, aren't we? That's going to be the big geopolitical focus of the day.
The drum roll, you can almost hear it, can't you? Despite the glitches on Air Force One, he will be there for that speech, 1:30 p.m. London time is what we expect. And of course, we will bring that and all the analysis live to you, of course. The big question for us has been what kind of tone the president will strike, particularly on the question of Greenland. The expectation a few days ago was that he'd be talking about affordability. Now, of course, we're waiting for anything he has to say about Europe, about threats of trade tariffs, and about Greenland.
Got some great guests coming up as well. Looking forward to hearing what Bill Winters has to say, what the banking sector is looking for in some of these speeches as well. As we say, got some fantastic guests coming up out of Davos. Philip Hildebrand will be with us. Bettina Orlock from Commerzbank. Steve Witkoff a little bit later on as well on Bloomberg Television.
There's a lot of money, of course, in Davos. And talking of money and the wealthy and the elite, coming up, by how much did Ferrari new car registrations here in the UK decline in the third quarter of last year? The answer when we come back. This is Bloomberg.
Here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins. are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back. Now, before the break, we asked, by how much did Ferrari new car registrations here in the UK decline in the third quarter of 2025 from a year earlier? The number, and the answer is 44%. Auto market research firm Jato Dynamics says Ferrari's UK third quarter 2025 new car sales totaled just 116 vehicles, marking the luxury car maker's weakest quarter in this country this decade. Speaking to the Financial Times in October, the Ferrari CEO previously attributed a reduction in the number of cars the company sells here in the UK to people leaving the country for tax reasons. Anna Edwards has yet to convert the Fiat Punto to the Ferrari. Anna.
I've also yet to leave the UK for tax reasons. I thought that's what you were going to say, Tom. But no. Right, let us return to Davos as investors and businesses grapple with a rapidly changing world order being reshaped by the US President Donald Trump. The focus is firmly on his upcoming speech at the World Economic Forum. There will be a lot for global finance to think about. With that in mind, let's get back to Francine Lacroix in Davos.
So much, Anna. Look, there's a lot going on today. We know that the president, of course, is going to be delayed by a couple of hours, but we're still expecting him to speak around 2:30. And I also expect the queue to get into the Congress Center, it's open to everyone, will be quite long. Now, to talk about geopolitical risk, I'm joined by Standard Chartered Chief Executive Bill Winters. Bill, thank you so much for joining us. As always, there's a lot going on. There's a lot of risks. There's a lot of geopolitical concerns, geoeconomics. What do you worry about the most?
I worry about the complete breakdown of dialogue. So what we found over the past many years, actually, this has been going on for quite a while, of geopolitical tension, is that things get very hot, and then people talk about how there is some common ground, and we get back to something. Things change, of course, things have changed a lot, but get back to something that's manageable. So for us at Standard Chartered, our job is to connect. We connect markets to markets, people to people, east and west, and as long as people are talking, those connections work really well. So my fear is that the dialogue breaks down.
Why? Why are people not talking? Because they're too far apart?
I think people are talking, and I think it's fantastic that we've got 6 of the 7 G7 heads of state sitting here in Davos. They didn't come here because they enjoy the cold weather. They came here because they want to talk and share some views. So I'm hopeful that we can work through this.
But what do you worry if there is a breakdown, further breakdown in communications? Is it trade and tariffs that's top of mind? Is it potential wars?
We've obviously been through a big period of volatility in tariffs. I think we've gotten to a place where we're definitely operating in a different world with much higher barriers to trade in some key corridors, most obviously with the U.S. But the global economy is continuing to perk along just fine. China, which was the most affected by tariffs, printed a 5% GDP number last year. Of course they've got problems. Of course there are challenges. This enormous trade surplus is one of the imbalances, together with the fiscal deficit in most of the world. These are real imbalances that are structural. So I worry about these, but these seem to be a little bit more medium, long-term things than tomorrow.
But Bill, so what do you worry about tomorrow? And again, China was the only country last year that actually retaliated. What happens if more countries retaliate this year if things get a little bit crazier?
Well, I don't know about, when we get into the tit for tat, it's always hard to know which came first. But at the end of the day, when people have stood up to each other and said, this is what's important to me, they've tended to find an accommodation that makes sense. Yeah. I hope we can find the same accommodation on the issues of the day. But yeah, I mean, another ratchet up in tariffs would certainly rattle markets as they did a year ago. I think there would still be a hope that the dialogue could unravel that. I think the security issues around the world are not. The market seems to be a bit immune to what happens on the security front in any of the theaters of conflict, but only to a point. And if it feels like it's changing the world in a structural way, or inviting aggression, for example, in any of the different spheres of conflict, I think that could be rattling for the markets.
Are clients asking you to move away from U.S. assets?
No. No, but like, we're a U.S. dollar denominated bank. Our main businesses are moving goods and money between markets. We're not a big asset accumulator. So no, we're not, and certainly nobody is saying you should be underweight the U.S.
But do you see a move away longer term from U.S. assets?
I think there's been a diversification of asset portfolios for some time. So. The euro was created in part to have an alternative to the U.S. dollar as a reserve currency. But the euro's had its own problems, as we know. But the percentage of reserves held in U.S. dollars has been going down. U.S. dollar still dominates. The proportion of trade that's denominated in U.S. dollars is going down significantly. China has an interest in having payment flows happening in currencies other than the U.S. dollar for the obvious reason of the weaponization of the dollar. So that diversification and that it's not even diversification. Diversification sounds like you're making a risk-based decision to spread things around.
Right.
Actually, it's just there are convenient and efficient channels that aren't just the U.S. dollar channels, and those will continue to develop.
But how much volatility are you expecting in markets? And actually, it could be a good kind of volatility, or it could be the bad kind, which could come from like an AI bubble or a systemic worry.
Oh, well, when we think more broadly, I think there's been a structural shift of capital from the banking system into non-banks globally. And that's following on the capital rules following the great financial crisis, which leave the cost of capital for banks relatively high for some assets, not all assets. And that migration is happening. So the good news is, and these private credit buyers, whether they're mutual funds or big asset managers or dedicated private credit funds, they're not very leveraged, much less leveraged than banks. So if we do have this appearance of credit losses, if the credit cycle manifests itself, which it will, right?
This year?
No, I don't know. I wish I knew. It doesn't feel like it at the moment, I can say. But the credit cycle's not dead, so of course it's going to come back. And credit cycles are fine. They get ugly when that translates into a property bubble, right, as has happened in China, happened in the U.S. That doesn't feel like it's going to happen outside of China, who's cleaning their problem up. And it's really bad. They get really bad when they infect the financial system. When the financial system has to delever quickly, great financial crisis being the big example, then the credit cycle becomes amplified by hundreds of times in terms of GDP impact and prosperity. It doesn't feel like we're there because the system is just much, much safer and sounder than it has been. The debt, as we know, has gone into sovereigns. If a sovereign were to get into trouble, no indication of that, that would be a different story, but that's not going to happen.
Could we see a downgrade of the U.S. economy? Could we? I mean, is there any? I don't know if there's a flash. Is there a flashpoint that you worry about away from credit?
The U.S. economy is doing quite well. The economic growth is strong. Inflation is not as low as the Fed and others would like, but it's not out of control. And trade flows are good. Investment flows are good. So a downgrade of the economy, I don't know. A downgrade of the credit, possibly. I mean, they've got big budget deficits. No, so I think right now the world feels pretty good. I think we'd have to do something pretty overt in terms of letting one of these conflicts blow up to disrupt what is otherwise a good business environment.
But your bank is probably a little bit more advanced when it comes to crypto and digital assets than others. Like, what's next?
I think we're just in the very earliest stages of things like stablecoins that have been a bedrock of the crypto community, that self-contained crypto community, moving into what has been traditional banking and the use of fiat currency. So we're just beginning to use these stablecoins or tokenized bank deposits or other types of digital money as a medium of exchange for trade and for payments. I think as that happens, we're going to see a complete rewiring of the banking system, and in fact, the financial system. we've been sort of on this case for about 8 years now. We've got lots of seeds that are planted. They're sprouting, but they're really quite early green shoots. But it's going to happen. It's going to happen.
Bill, I think less than 2 years ago, you called your share price a word that I cannot say because we're Ofcom regulated, but it wasn't a good word. It wasn't a good word. It wasn't that bad. But now you're all at record highs. Are we going to see M&A from you guys?
Well, we've had a good run up in our share price. I think we are. I'll say we're still cheap. I wouldn't go as far as to say we're some expletive, but there are a few areas that are critically important to us. We're a cross-border bank, which means that we're serving our clients who have cross-border needs with their risk management, with their payments, with their funding flows, with their investments, et cetera. Associated financing. We don't need to do any M&A for that, and nobody needs to do M&A with us. The second key area of focus for us is our affluent client franchise, so wealth management products. Super fast growth. We're the fastest growing wealth manager in Asia, Middle East, and Africa, third largest overall. Very attractive business, and we would love to build out that portfolio. So if there's something that we could buy or partner with, one way or the other, we'd love to do that.
Okay, Bill, thank you so much for joining us. Standard Chartered Chief Executive Bill Winters. Tom, I'm going to send it back to you in London, and of course we'll be here with nice weather, a little bit cold throughout the day, waiting for the President of the United States to land in Davos.
Fran, great stuff. Thank you. Of course, on the slopes for us at Davos, Francine Lacqua with the CEO of Standard Chartered, Bill Winters. And if President Trump's speech at Davos wasn't enough for you, here's what else to be thinking about today. 9 a.m. UK time, we're counting down to this. Then the IEA oil market report on the day. We're seeing some pressure coming through for oil prices. US earnings, Johnson & Johnson on the docket, Halliburton and Charles Schwab. And Warner Brothers, the shareholder deadline is coming up. Netflix changing its deal to all cash. And later, it is the Supreme Court hearing that case in terms of the Trump administration versus Lisa Cook. That could be consequential.
Okay, but we're waiting for Trump. The Lisa Cook thing I think is really interesting, but we'll come back to that in just a moment. We're waiting for Trump. What is he going to say? What does he do? Is he going to de-escalate? Is he going to escalate geopolitics front and centre this morning? How does that translate into the market? Let's find out. Scarlett Montgomery-Koenig joining us around the table from our M Live team. Is that what we're waiting for?
Yeah, I mean, absolutely.
It's the only thing, isn't it?
I think what's been interesting the last couple of days is typically markets move on from geopolitical risk quite quickly.
Yep.
So I think that would be your baseline assumption now as well, especially because we've had more kind of bond market calm. The kind of soundings overnight was that Trump is still open to a deal. And so it's unlikely that we get a material sell-off before we get to that announcement.
Yep.
Now, it very much depends on what that announcement or what that speech is, the feed through after. And what makes me a little bit more worried, although I think the base case should always be you move on from geopolitical shocks like this quite quickly, is positioning heading into this week. So if you look at something like AAII surveys, it was the most bullish heading into this week that it's been for a year. So there is potentially more room for people to draw down or take profits.
Yeah, so this was a geopolitical event, but it had an economic expression with the tariff threat from President Trump, didn't it? Let's talk about Japan. Have we moved on from that, do you think? I mean, it seems to have been parked for now, but still on a two-day, of course, yields are higher at the long end in Japan.
Yeah, I mean, I think on the long term, we've certainly not moved away from the discussion of higher term premia, whether that relates to Japan or the U.S. The context is we're coming from the 2010s where you had QE, you had very low policy rates, very predictable monetary policy. And so that means you had this unusual level that was very low in term premia and in yield. So as we shift to an environment that's more uncertain from an economic perspective, as you have a flipping bond equity correlation, all of these factors mean that you should really have a higher term premia, and it means that when you have greater supply, greater fiscal, that you're thinking about it. And, you know, we're only like 2 weeks away now or just over from the actual election. So we're certainly watching that for what the announcements are and whether you get a stronger mandate there. And that could certainly be a trigger again.
Of course, the Japan story can't be done. We still have the election to go.
Countdown to February the 8th. And, of course, we're seeing that bid for Japanese bonds in the session today. But we'll see how long that lasts, of course, and whether or not there is significant repatriation of those assets into the Japanese market. Skylar, thank you very much indeed. Skylar Montgomery-Koenig from our M Live team. It is the countdown, of course, to the President's speech at Davos. We're also going to be hearing, by the way, from the World Economic Forum, from BlackRock's Vice Chairman, Philip Hildebrand, and at 9:15 UK time, the Commonwealth Bank CEO, Bettina Orlop. And at 10:30, we will hear from the US Special Envoy, Steve Witkoff, who, of course, has involved himself in a number of those geopolitical tension points and flare points. That's it for the opening trade. Up next, we are back to Davos, of course, for the Pulse with Francine Lacqua. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning, everyone, and welcome to The Pulse, live from the World Economic Forum here in Davos. Now, the U.S. president, we know, is on his way to Switzerland right now, is due to give a highly anticipated special address this afternoon. Now, we'll have special coverage of that speech. We'll also be hearing from the UN Secretary General, as well as chief executives from NVIDIA, Accenture, and NASDAQ. Also coming up on the program today, we're joined by Philip Hildebrand, Vice Chair of BlackRock, the Chief Executive of Commerzbank, and the Bank of Israel Governor. But first thing is first, let's check on the markets. Now, U.S. stock futures seem to be staging a pretty tentative recovery, I would say, after the S&P 500's biggest drop yesterday in 3 months. Traders, of course, waiting on President Trump's address at Davos for signs that tensions may cool over Greenland, or whether that's hopeful thinking and whether they actually go up a notch. Now, sentiment received a further boost after a sharp rebound in also some of the long-dated Japanese bonds that seem to be offering a lift to global markets. The mood, however, is cautious on the markets. It's also cautious here in Davos. So President Trump due to address the World Economic Forum this afternoon. The exact timing is in flux after Air Force One was forced to return to Washington because of an electrical issue. Now, the president is now on his way. His speech will be closely watched for further comments on Greenland. Speaking before his departure, President Trump also said he did not think that Europe would follow through on threats not to approve a trade deal with the U.S.
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that. But we'll see what happens. We have a lot of meetings scheduled on Greenland.
Well, President Trump's threats of 10% tariffs on countries opposed to his Greenland ambitions was described as a strategy to weaken and subordinate Europe by the French president. The transatlantic rift has also dominated conversations, of course, with European leaders.
The proposed additional tariffs are a mistake, especially between long-standing allies. The European Union and the United States have agreed to a trade deal last July. And in politics, as in business, a deal is a deal. And when friends shake hands, it must mean something.
Canada strongly opposes tariffs over Greenland and calls for focused talks to achieve our shared objectives of security and prosperity in the Arctic.
Europe has very strong tools now, and we have to use them when we are not respected and when the rules of the game are not respected, by the way. The anti-coercion mechanism is a powerful instrument, and we should not hesitate to deploy it in today's tough environment.
All of our focus is on de-escalation, not in worst-case scenarios. The strategic relationship between the US and UK, the military and strategic partnership between our countries is more important than the partnership between any two countries in the world.
With us now, Philip Hildebrand, the Vice Chair of BlackRock. Philip, as always, thank you so much for joining us. What a week. I feel like all of the tensions, the shocks, the geopolitical wrangling is distilled here in Davos. How worried are you about the ripple effects this could have on the world economy?
You know, when I've been having many conversations with clients and political leaders, and what you see is there's a great kind of urging both clients and political leaders to say, we need an honest discussion about the real security issues around the Arctic, Greenland, and with some specificity to identify what the critical security issues are, and so that you can enter into a dialogue that leads to solutions ultimately within the context of NATO. I think that's the, in a way, in many ways, the litmus test here. And so people are worried. The consequences, I think, both geopolitically and economically, are significant depending on the outcome that, you know, we'll end up seeing in the months to come.
But is there any doubt in your mind that tariffs are being weaponized? And if that's the case, it's very difficult to model, actually.
It is hard to model. You know, economies are good at adjusting. One of the things I've learned as a central banker is you always underestimate the degree to which companies will adjust to changing realities. And there's no question that the world has changed. This is probably, I was thinking about this morning, probably the most challenging moment in US-European relations since World War II, or certainly one of the most challenging moments. And markets will see what the new equilibrium is. I think it's pretty clear, again, when you speak to our clients and leaders, that there's a general consensus that the old order that has shaped the world for the last 60 years is no more. And so the question is, what new equilibrium will we move towards? And there are many different outcomes that one can imagine, and depending on where we end up ultimately, we could have very different outcomes in the economy and in markets.
So how do you look at this new world order? And I know you say there are different, way of looking at it, but what does it mean for the deployment of capital and financial markets and where they need to be positioned? If we're seeing blocks that are based on geopolitical thinking or alignment on the political front, then it's it is going to be a very different world, but it'll also be different in terms of financial markets.
Yes, I think much will depend on the ability of Europe to essentially take advantage of the very large economy it is. If you look at the European economy, it's vast, right? The question is, can it come together? Can it enhance competitiveness? Can it address the issues that Mario Draghi identified so clearly in his report? This is no longer about diagnostics. We know what the issues are. Can Europe rise under pressure to come up with the right answers to be one of the important blocks going forward? That would be, the most likely scenario, I would say, still today, that under pressure Europe finds these answers and then is able to be one of the important geopolitical blocks going forward. You could have very different scenarios where you have much more fragmentation, which again would be quite a different world from a financial market perspective. But I would say the most likely scenario at this point is that Europe rises to this occasion. That's certainly what our European clients, European policymakers are striving for, or hoping for. And then you end up with Europe being a player. And then, as you saw, Prime Minister Carney yesterday talking about the middle powers. So you can kind of see a world order, but we don't know where this ends up. I think we are in a period between geopolitical orders, basically, and that's always a period of uncertainty, some volatility, and questions as to where we ultimately land.
Philip, are we too tough on Europe? Because I hear, especially around, the Davos corridors, a lot of European leaders saying, look, we have 3,000 years of history. We kind of know what we're doing. People actually want to live in Europe compared to other parts in the U.S. So actually the U.S. economy is doing so well because of threats. So people move manufacturing. I mean, surely we don't want Europe to do the same.
I think Europe has tremendous potential. There's no question about that in my mind. I'm perhaps somewhat biased, But when I say potential, it's we have enormous potential in addressing things that are relatively easy to address. You know, again, Prime Minister Carney, in a very noted speech yesterday, was describing how he has eliminated interprovincial barriers, trade barriers. That alone in Europe, again, this has been identified by Mario Draghi and others, has enormous competitiveness potential. So these issues are, you know, some of them are hard to tackle. Deregulating is very difficult in the European context. The European apparatus is slow by design and not always the most efficient one. But other things can be done quite easily. So I think there's a reservoir of measures that would dramatically enhance Europe's competitiveness. So I agree that there is tremendous potential, and we shouldn't be too pessimistic going forward.
How are clients behaving? Are they changing some of their behavior? I don't know whether they want less exposure maybe to U.S. assets. Is there a de-dollarization theme going on?
I would say if you look at the period since the great financial crisis, the dollar has done, the U.S. has done incredibly well. This reflects itself in the fact that today 60–70% of the capital markets is U.S.-based. So most global portfolios came into last year being, you know, structurally long the dollar. So you did see some adjustment, but I think that probably would have happened anyhow to some extent, given the degree to which most portfolios were long. And now the market, by and large, when I speak to clients, what I see is a sort of uncertainty, concerns, and worries, and you essentially wait and see what this new world order will look like that we're moving towards. This is, you know, my guess is we will look back in 20 years at 2025, 26 as one of those pivotal years in the post-war period where things change. What we don't know yet exactly is where it ends up. And hopefully all this, I mean, the one echo I get from clients and leaders, frankly, is that whatever issues we have, we must try to solve them in the spirit of a dialogue, focusing on specific issues. What are the specific issues that are leading to this tension, and then try to address them?
And we haven't even touched on AI, but do you worry about central bank independence in the U.S. and what that could do to the markets?
Well, central bank independence, and more importantly, the achievement of central banks, namely price stability, has been an underpinning of the post-war economic order, or certainly not the entire post-war, but the last couple of decades. So there is value in this, undoubtedly. But what we're seeing at the same time today, we have many other structural forces that are really coming in. You know, you mentioned AI. When you look at the AI, broadly defined, has led to something like 40% of GDP in the U.S. in the last year. So there's tremendous potential in these investments around AI, data centers, infrastructure, energy, that could really enhance the growth potential. And ultimately, this will be the most important thing. We need to find ways to enhance growth. Given the debt levels that most countries are in, and the vulnerabilities of many countries in terms of their fiscal situation, we saw signs of this even yesterday in Japan. It is essential that we find ways to enhance growth. The investment spending that we're seeing, tremendous investment spending around technology, infrastructure, energy, has the potential of raising potential growth. If that happens, many of the problems that we're facing will be solvable.
I did a big panel actually yesterday on how to get growth, and I had Mark Benioff on it, I had Ruth Porat and others, and I think one of the conclusions was that you need inclusive growth, because you can have good growth and great numbers, but if half the people are left behind, then that's going to be problematic.
That is clearly, and that's, as you see, has been one of the themes that Larry Fink has really, I think, you know, brought into this year's discussion. We need to find ways to do this, and AI, of course, is critical, because how do these technological innovations, how do they spread into the economy? Who benefits? Which companies, by the way, benefits? Also a very big macroeconomic question, a big asset allocation question, and then ultimately, how do you spread it into the workforce, into the population? I think that will be, from a kind of human perspective, and you heard some of the leaders now talking about this more and more. Ken Rogoff talked about it, but also some of the CEOs of the hyperscalers. You know, this will be one of the critical issues. How do we make sure that these benefits kind of spread through the population?
I mean, are companies, do you see companies changing fundamentally when CEOs talk to you about AI?
I think what I see is new. Obviously, we had a big hype around this last year, but what I find is new and encouraging this year For the first time, you're beginning to see some of these questions being addressed. What does it mean for our children? What does it mean for the future workforce? How do you make sure that you have a population that supports the system? And of course, some of this is happening in the context of the populism that we're seeing rising in many countries. So there is I find a promising new focus by the tech leaders themselves on some of these secondary issues in a sense of how it will impact humanity ultimately.
I mean, away from how it impacts humanity, how do you think it impacts financial markets? Are we in a bubble?
Well, it has had a huge impact on growth. First of all, as I mentioned, depending how you look at this, close to half of GDP growth has been related to, broadly speaking, AI. It has huge potential in raising growth. And if it does that, then the market pricing that you see will be justified. We will be able to deal with the high debt levels. We will be able to have growth that is not particularly inflationary. If some of these expectations are not fulfilled, we'll be in a very different world of stickier inflation, of lower growth, bigger debt problems, presumably more significant political issues. So it's a very important issue on how this potential, this ability in principle of these investments to enhance productivity, push up potential growth, I think is in a sense the critical macroeconomic question, which will have huge repercussions on financial markets.
Philip, thank you so much for joining us. Philip Hildebrand there, the Vice Chair of BlackRock. Now, coming up, feisty Scott Bessent describes Denmark as irrelevant. More on those comments by the U.S. Treasury Secretary next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question. It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television, top experts, great questions. This week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Denmark's investment in U.S. Treasury bonds, like Denmark itself, is irrelevant. That it's less than $100 million. They've been selling treasuries for years. I'm not concerned at all.
There you go. The U.S. Treasury Secretary Scott Bessent brushing off the prospect of Denmark selling off its American bonds. Now, meanwhile, Jameson Greer, the U.S. trade representative, told Anne-Marie Hordern that territorial issues, such as Greenland, are not part of the EU trade agreement, while acknowledging that European concerns about possible tariffs.
It's not a term of the trade agreement, and this is what I keep trying to say: is we should compartmentalize these.
But for the
things.
Europeans, it'll be an additional tariff.
Potentially, that's right. Yep.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem. And it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover. Even trade things, right? There are things about pharmaceutical pricing or digital that aren't quite covered there. And it certainly doesn't include, geographical or territorial issues.
Do you see this administration using tariffs to gain new territory?
I mean, the president has been really clear, and the United States has always, been aware of territory that's important for it geopolitically. You've seen the president talk about the Panama Canal. Obviously, we're talking about Greenland. Interestingly enough, one of the last times the United States acquired territory was getting the U.S. Virgin Islands from Denmark in last century. So there's a long history of countries acquiring territory through purchase or other means.
That was the U.S. Trade Representative Jameson Greer speaking to Anne-Marie Hordern, who's with me now. Anne-Marie, what a week. We're expecting the president. He's a little bit delayed. A little bit delayed. I mean, I hear, he's going to be in the Congress Center. We're expecting him still at 2:30. Loads of people are going to line up an hour before. Do we know what he's here to say?
So he's probably going to be about 3 hours delayed because the Air Force One had to turn around. That's according to the Treasury Secretary. I think when the president frames his speech today, and as of last night, I heard it was still being worked on, I would think of it as a two-pronged approach. He has to talk to the domestic audience in America, especially when it comes to affordability. Since the start of the year, they've been teasing out all these ideas they might do, because November 3rd, the midterm elections, that is his North Star this year. So you're going to hear him talk about how to get on the housing ladder, maybe going after some institutional investors that are here in the audience who actually buy up housing in the United States, even though it's less than 2% of the market. He's probably also going to talk about things like the defense sector, that they have dividends and buybacks. He doesn't want to see that. Credit card interest rate caps is going to be another big issue for this president when he talks to bank CEOs. And then he's going to pivot and probably talk along the lines that he doesn't think individuals at the World Economic Forum, which people in the White House have said to me, this is the center for the global elite, have met the moment for everyday citizens around the world, including the United States. And he's probably going to talk about national security. And then the elephant in the room that has been part of every conversation here has been Greenland.
Yeah, what will he say on Greenland? I mean, again, Greenland is a little bit of a surprise, because if you look at national security, I don't know whether, a lot of Europeans think this is a personal obsession, that he wants it because he wants to win, but it doesn't make a massive difference to Arctic security.
So he started talking about Greenland in 2019, his first term. He really does care about the routes in from China and Russia in the Arctic. A lot of pushback comes from even Republicans in Washington will be, well, we already have a military base there. Let's just expand our presence there. Let's do a deal with the Europeans, which is why for some people, they're calling this a huge distraction. I know a lot of Europeans are calling it an existential threat. The take I get from a lot of individuals is that in the United States, they feel like it is a national security concern. I would say potentially the president...
But Denmark is actually ready, I think, to negotiate, right?
Yeah, well, all these European countries are. I feel like if you look back to how the president operated April 2nd when it came to Liberation Day, the question was always, are these new rules of engagement, or are you doing this for better negotiating tactics? And the president said, these are the rules of the road, until the bond market and the stock market started pushing back, and then it became a negotiation. We saw him take that tact as well with NATO. First term, reports all the time, the United States is going to drop out of NATO. Never dropping out of NATO, but the president achieved what he wanted to, which is that the Europeans started paying more on collective defense. So if you think of it in that realm, this is just Trump negotiating live in the moment. And he is coming here where everyone is talking about him, and everyone is talking about potentially some sort of off-ramp when it comes to Greenland.
Do we know the CEOs that he's meeting? There's apparently a reception, maybe later. Yeah. Could be canceled because he's delayed.
He'll be delayed. I'm sure he will be meeting with all of them. I imagine is going to be a number of business executives. There's one individual that I do track closely that travels with the president, and that's Jensen Huang. everywhere I've gone with the president, whether or not it was Riyadh, he did it as well in Tokyo. Jensen Huang is there in the audience, and he constantly says, my friend. He's like the new diplomat. First term, it was Steve Jobs, Tim Cook. Now it's Jensen Huang, and I imagine NVIDIA will play a huge part because they are really playing this huge role when it comes to national security with China and whether or not chips are allowed to go through.
Anne-Marie, thank you so much. Bloomberg surveillance co-anchor Anne-Marie Horder, and Anne-Marie will also be speaking with the U.S. Special Envoy Steve Witkoff a little bit later this morning. Now, the UK Chancellor has called for cool heads ahead of President Trump's arrival in Davos. Here's some of my conversation with Rachel Reeves at Bloomberg House yesterday.
All of our focus is on de-escalation, not in worst-case scenarios. We have worked incredibly closely with President Trump the last year because we believe it's in our UK national interest to do so. The strategic relationship between the US and the UK, the military and strategic partnership between our countries is more important than the partnership between any two countries in the world. And it's very important for safety and security of the Western world that that continues, and we're determined that it will do so. Similarly, the fact that we were able last year to secure the economic partnership deal with the US, and we continue work on the transatlantic markets work that we're doing at the moment to make it easier for our capital markets to be better integrated, and firms listed in the UK and the US raising finance in each other's jurisdictions, greater collaboration when it comes to digital assets. All of that is in the UK's national interest, and we'll continue to pursue our national interest vigorously. But I don't think it's in anyone's interest to escalate tensions or to allow rhetoric to be a substitute for hard work and diplomacy.
But you think the trade deal stands? Because at the moment there's wild speculation about whether everything needs negotiating, whether President Trump goes really hard. I mean, how do you model this?
I would just urge people to keep cool heads.
Cool. Okay.
I mean, that's what we did all through last year, and it actually served us pretty well. And whilst trade barriers are going up around the world at the moment, we can all see that. In the last year, barriers to trade with the UK have fallen. We've secured a comprehensive trade deal with India, which will come into force in the next few months. Just taking legislation through both of our parliaments to secure that. That includes trade in services, support for exports, and also around government procurement. That's a huge deal. The deal with Korea, one of the fastest growing economies as well in the G20, is very important for the UK. But most important probably is the trade with our nearest neighbours and trading partners in the EU, which was damaged after leaving the EU, voting to leave the EU in 2016. We are now fixing that mess by improving trade relations and cooperation with our closest allies and neighbours.
The UK Chancellor there, Rachel Reeves, speaking to me at Bloomberg House here in Davos yesterday. Now, we also have the NATO Secretary General Mark Rutte speaking on a panel here in Davos. Given all of the focus on security, let's listen in.
2022, and Donald Trump tried to convince our European partners that we have to solidify, and his voice is very important because of the financial, because of the strategic, geopolitical point of view. I, of course, hope that it will be solved thanks to all partners on the diplomatic way, and I'm rather...
How far are you willing to go to have good transatlantic relations? Does that mean giving the Americans Greenland, selling the Americans Greenland? How far should European allies go if the Americans do move?
Okay, that is, of course, the panel on defense going on right now. Coming up, we'll be joined by the chief executive of Commerzbank to discuss developments here in Davos and how the bank has remained independent despite continued takeover attempts by UniCredit. That's next, and this is Bloomberg.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome back to The Pulse, everyone, live from Davos. Now, talk of a new world order under the Trump presidency has led Germany to ramp up its defense and infrastructure spending. It's something that Commerzbank has more time to focus on after managing to fend off a takeover attempt by Italian bank UniCredit, one of the biggest M&A stories of last year. Now, with us now, Bettina Orlopp, the chief executive of Commerzbank. Bettina, thank you for joining us. Look, let's start with the President of the United States coming here. It's all anyone's talking about. I know there are going to be long queues to hear from him, and this is about reshaping a new world order. What does that mean for banks servicing clients in Europe?
Well, first of all, I think we need to be we need to be very diligent. So a good risk management needs to be in place because we really have to have a diversified portfolio. But we also have to have the profitability to support our clients because we all know that there's lots of ideas for investments, and it's also the necessity for investments, and the banks are there to be at the side of their clients.
But I mean, there's also, again, because of Greenland partly, an idea or people saying, well, let's just diversify away from U.S. assets, that we could see a de-dollarization or a slow asset decline of maybe clients interested in playing that game. Do you see any rumors or clients saying, look, this is something that I'd like to look into?
I mean, clients are clearly cautious. That's for sure. And we always also have seen after Liberation Day a dip, but then also a recovery, because we should not forget U.S. is a very attractive, very large market, and there are a lot of very strong ties between Germany, between Europe and the U.S. So therefore, yeah, you see that people are cautious, but they are also thinking about how can we make it work. So how can we localize business more, and how can we reduce dependencies.
So you don't see clients saying, like, I mean, he's obviously not calling you up, but calling the bankers up and saying, sell all treasuries I own.
No, we don't see that.
We were talking also about the fact that there has been really a sea change in Germany because of the defense spending, infrastructure spending. They were expecting to have an impact on GDP either later this year into 2027. What does that mean for Commerzbank?
Well, I mean, our latest assumption now is something around 0.9% for 2026. That at least is a little bit of growth. It's not great, but it's a good starting point. And it's also that, I mean, this year is really the year where the whole investment program starts and will be continued then in the years to come. And we will see more of impact if we see also the reforms unfolding. And therefore, there is a big ask not to only have the reforms we have seen so far, but speed up and do even more.
Yeah. I mean, because German policymakers are so busy with not only infrastructure, pension reform, defense, and everything else, are banking topics a little bit off the table? Do you feel like maybe that's being forgotten a bit?
Well, we do not feel forgotten. We feel in the center of all discussions because it's very clear, and it's also very clear for the politician, that at least my opinion, that we are part of the solution and we are not part of the problem. That has already been the case during COVID, and it's also now the case. So we're really front and center of the debates, which is rightfully so, because we can really support, we can leverage, and that's our task. And luckily also we have improved our profitability so much that we also have the power to do so.
What do you make of the latest efforts by the ECB to simplify regulation?
It's a great effort. I have to say we would like to see more. I know the word is not very popular, but deregulation is also necessary. We see that there's no level playing field, not when it comes to the US banks, but also when it comes to some non-bank players. And therefore, we really ask to review at least some of the initiatives and make sure that we really have the power and also the flexibility and also the speed to move forward and to be competitive.
Does it help you already, or what would be your number one wish list for regulators?
Well, it helps. We see that that there are really some initiatives ongoing when it comes to the SREP process and stuff like that. But clearly, I mean, one of the key debates is Basel. We all know that, and we would wish for some support here. Another topic which is about to also impact us quite a lot is how we deal with AI. I mean, there is a governance necessary, clearly, but we really need to make sure that we really make the best out of AI, and that we also need the support of the regulator.
Bettina, overall, I mean, big banks like JP Morgan are actually expecting the benefits from AI to outweigh some of the costs.
Yeah.
Do you agree with that? And can you point to specific projects that Commerzbank is doing right now?
Yeah, it's a very important theme for us, that it will be the key priority for 2026, actually. Not only by starting digitizing even more our clients, but also digitizing our staff, have our staff become more familiar with AI. We have some very, very, very good use cases already in place. We use AI in pricing. We use AI to avoid negative revenues because of avoiding fraud. But we also use it for cost efficiency, like in KYC, to have really cost avoidance in place.
Where do you see in the future actually it most impacting your business?
Well, actually, it will impact everything. I don't see any area. I mean, the support functions anyhow are touched by it, because banks are data-driven. We also are very complex because of the regulation, and this is the ideal components to apply AI.
Do you need less bankers because of it? How do you look at your hiring over the next 4 to 5 years?
I think at the moment we see rather that we see a change in what profiles we need. So that is more the point and more the discussion. And the rest we'll see, because we don't see it yet that you really have big replacement of big processes. And in our case, for example, when I talk about KYC, it was more the question, do we need to hire more people for KYC because the changed regulation when it comes to review cycles and stuff like that. So what we do now is that we can stick with the people we have. So it's more cost avoidance so far.
Bettina, overall, I mean, how much do you worry about valuations actually in AI bursting and it impacting something, impacting some maybe the larger banks, but then filtering through to some of the European banks as well?
I think it's more a positive impact. I see really AI as an opportunity to even accelerate profitability improvements and things like that, and not as a threat.
So it was clear that 2025 was dominated in the banking space in Europe by a possible takeover of Commerzbank. Have you had a conversation of late with the UniCredit CEO, Andrea Orcel?
I mean, UniCredit is an investor, and it's a large investor. It's actually our largest investor and largest shareholder. So clearly, we have a constant dialogue as we have with all our larger investors, and that comes with the quarterly calls.
Is there anything that they could offer to actually make their offer overall more palatable?
Well, there is no proposal out there, has never been. We really focus on our, and very successfully, on our own standalone strategy. I think UniCredit shares the opinion that current valuation levels do not suggest that there's a value accretive deal really possible.
Bettina Orloff, thank you so much for joining us. That was, of course, the Chief Executive of Commerzbank. Now, let's also take you live to a conversation taking place right now. Bloomberg's Rumana Bersetci speaking with the Qatari finance minister here in Davos.
Far East Asia, India, Pakistan, now, Europeans, they've been talking to us because to diversify their source of LNG, especially after the Russia-Ukraine war. So some of that is going to Germany, is going to France, and we have signed deals, with the countries, and we see more potential with the Europeans, although we have some issues, I think I must say, especially when, with the regulations, sometimes, there was, the Corporate Social Responsibility Directive, CSDDD, I think we have mentioned it in many occasions that, this could affect, our contracts with Europe. However, we understand that Europe now is really taking an easy stand in that one, and that should, resume our talks,
Needs must, I suppose. I watched His Excellency, your Prime Minister, with his fireside chats yesterday, World Economic Forum, President Borja. And one thing he said about the economy, I actually took note of the line. He said, energy is our strength and power, diversification is key, and technology will power the future, which I think probably gives us an idea of the three prongs that approach the economy from your ministry, from the government. So energy obviously is going to be a key pillar for growth going forwards. Why the focus on diversification as well if you have this massive boon coming through?
No, diversification is very critical for the GDP because we don't want to be over-reliant, in energy, going forward. We know that LNG is the transit energy, and it's going to be there for some times. However, if we are to build a sustainable economy, we should not be dependent on a single sector. So definitely, growing the other sectors, creating jobs, creating businesses in Qatar, and then, having contributions from other sectors and the diversification, and not to be over dependent on a single sector is very critical. We are talking more about sustainability, future generation, and that's why really, I may speak from a Ministry of Finance perspective. For example, we have built, a medium-term fiscal policy framework for the country. This is something we have developed over 4 years, and we have seen, the impact. And what happens, we take different view in the economy for the next 20 years, and it can go beyond. Different scenarios, we look optimistic scenarios, pessimistic scenarios, worst-case scenarios, from a revenue perspective, from oil prices, from, even from economic sectors perspective. And then, based on that, we forecast our spend and our budget while investing in the economy, but in the same time being disciplined, and efficient in other issues of the spend. So we have this view, and then we decide on the surplus. So there is a surplus. We know exactly what's going to happen to that surplus. How much of it goes to Qatar Investment Authorities for the future generation, to create an intergeneration equity? How much of that goes to central bank to enhance the reserve of central bank and to build resilience, in our monetary policies? How much of that it goes to settle debt? And to say about debt, Qatar debt, went down from 58% in 2021 to 41%. And as a result, we got a double A. We got upgraded to a double A, where we are the highest rated country in the region. And better than among even many more developed economies. And also, some of that money on the surplus goes, we call it for a stability fund. That's under the control of Ministry of Finance. Basically, so when we have a bad year, we don't have to go and borrow, just to support the budget. So, and we are being very disciplined in the following this fiscal policy framework. So very important, as I say, this complete the pictures with the economic diversification, His Excellency the PM was mentioning.
The Qatari finance minister there speaking to Bloomberg's Jubana Bersachi. Now let's return to the storm of controversy around President Trump and Davos with Chad Thomas, Bloomberg's executive editor for Europe. Chad, look, there's excitement, right? Everyone I know is going to try and get into the Congress Hall to see that speech, much anticipated speech by President Trump. We know he's late. How's late, and does it actually impact the public speaking engagements?
Yeah, so that seat is the place to get into today in Davos, and basically for the whole week, let's be honest. He's running a couple of hours late in terms of his landing in Zurich because of the fact that there was problems with his plane when he left from D.C. But there was some buffer built into his schedule for the early afternoon, so we're not sure yet exactly when that speech is going to happen, but everyone is obviously anticipating, and I suspect that line is going to start forming sometime pretty soon. The speech itself, as planned, is supposed to be very much on U.S. domestic issues around housing affordability and topics like this. However, as we both know, he doesn't always follow the script, so we'll have to wait and see. And whether he takes questions from anybody in the audience, that will also be what we'll be watching for to see if he then starts talking about Greenland and some of these other topics that have been so big this week here in Davos.
I mean, do we know who he's meeting? So there's many chief executives. Are there receptions? There's something potentially tomorrow also on Gaza and Ukraine, maybe?
Yeah, so he's having a reception this evening and dinner with executives. He himself said that he's going to have many meetings. That's what he said on Greenland. We don't know exactly with whom he's sitting down with for Greenland, other than we do know he's going to meet with the German Chancellor, because the Chancellery has said that that meeting is taking place. I actually think that today could go off a little bit more harmonious than most people think, and that's because of the people he's likely to be talking to. The German Chancellor has been one of the people who's been trying to turn down the temperature. We know that Meloni is here. She's someone who has put herself forward as a negotiator on this. And the people who've already left, Macron has already left, von der Leyen has already left. Those are the two the people he's been in a spat with most recently. And the Danes are not here, and President Zelensky is not here. So it could be more harmonious than many might have thought.
Chad, so interesting. Thank you so much. Chad Thomas, Bloomberg's executive editor for Europe. Now, coming up, the Bank of Israel surprised markets with a rate cut earlier this month. We'll get more on the path ahead and the wider uncertainty coming from the White House with the governor next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to The Pulse, everyone. This is, of course, our show live from Davos. Earlier this month, the Israeli central bank surprised markets with an unexpected rate cut, citing lower inflation due to the ceasefire in Gaza and a strong shekel. Let's get more on the path ahead with Bloomberg surveillance co-anchor Lisa Branovitz. Hi, Lisa.
Hi, Francine. Thank you so much. And I am here with the governor of the Bank of Israel, Amir Yaron, here in Davos, Switzerland, where he is not wearing a jacket, which is rather shocking to me. So if he starts shaking, you understand why. Governor Yaron, I want to just start with your impression so far of this Davos. I know you've come for many years. How is this one different?
Well, first of all, naturally, everyone is waiting to see what President Trump will say today. In general, geopolitics are immense. Europe, energy, Middle East. So there's a lot of developments that are very important and are more than just the normal economics than we often are focused on.
And I'll ask you extensively about your opinion on Greenland and your outpost there. No, I will not do that, but I will ask you about rate cuts. And you have cut rates twice since November. It was the first rate cut in about 2 years. There was a better outlook for the Israeli economy. Is this the beginning of a path of gradual lowering of rates as the economy does continue to strengthen and as the shekel also strengthens?
So, Lisa, first of all, I want to say the Israeli people and the Israeli economy have shown great resiliency given the 2 years of war and the horrific day of the 7th of October. We are seeing people buying credit cards. VC money is back and is at high numbers. The shekel has strengthened. We are seeing the CDS of Israel government has come down back to pre-war level. And that's basically all demonstrating that we are in a better geopolitical situation than we were. But since the ceasefire, we've seen 3 major developments that have led us to the rate cuts, and in particular, the last rate cut. One, we've seen inflation environment moderated, not just realized inflation, but also expected inflation. Second, we've seen the shekel continue to strengthen, which provides a tailwind for more inflation moderation. And third, very important, I've talked to you in the past about the balance between demand and supply shortages of workers in Israel. We've seen that being moderated since the ceasefire. Reservists are coming back. We are seeing more participation in the labor force, and we're seeing some moderation in wage pressure. All these together have tipped the balance into the last rate cut. And in terms of your questions, we're continuing to do it based on what we've said all along, the developments in inflation and economic activity and in geopolitical uncertainty. Going to try to do it in as gradual as the developments happen. And we're seeing an interest rate a year out at about 3.5 because we think we are not very far from neutral. So that's our assessment as of now, with a growth rate for next year at 5%. This is assuming the ceasefire continues.
Does the Board of Peace, as proposed by President Trump and adopted by the United Nations Council, help foster that security that the ceasefire would potentially remain?
So, I'm going to speak from an economic perspective. I hope that the mechanism that this brings about, and it got a lot of members that have stakes in this issue, bring about some of the constraints that are related to this. If Israel needs, first and foremost, continued security that will facilitate ceasefire, hopefully it also brings about the mechanism to enhance rehabilitation in Gaza, hopefully bringing prosperity and security there. If those two things happen, then obviously the Israeli economy will continue to do well. Gaza will improve, and I think it will also unlock levers for further regional arrangements. And if those happen, I think we will see much bigger growth, not just for Israel, but for the region at large.
And this really goes to a key question, which is that Israel has lost some clout in the international sphere. And you've seen this with the Gaza war really becoming a political hot potato in a lot of different places. What do you think it'll take to get the reputation back to a place where travel can come back, where business can keep flooding in, and really maintain the economy?
So you're right. One cannot deny that we've seen sentiment being negative in some circles. Having said that, we've observed, as I mentioned, improvements in high-tech investments, in Israel's risk premia, obviously purchases of our defense, equipment. So all that is good, but I think to the extent that sustainable ceasefire and furthermore, basically sustainable regional arrangements are developed, I believe that negative sentiment will dissipate over time.
You are the central banker to Israel. You have an increasingly international presence as well. You talk at a lot of conferences. You're very involved in research around the world. How focused are you on what's happening with Federal Reserve Chair Jerome Powell and some of the questions around the intellectual freedom around the Federal Reserve, the political independence of the Federal Reserve? How closely are you watching things like the hearing today with Lisa Cook and beyond?
I won't get into the detail of the Feds. Even, of course, I hold Chairman Powell and the Fed with very high respect. I want to say you've heard me in the past speaking about the importance of maintaining the strength and independence of institution. I've said it in the context when the judicial changes in Israel started in 2023. And obviously, central banking is an important institution, and central bank independence is kind of the pillar to facilitate its operation towards price stability, which ultimately facilitate growth and prosperity of the economy. So I think these elements are very, very important. And I think all central banks look at the developments in a way that we want to see central bank independence continue, because we believe that's a pillar for delivering price stability, which we think ultimately, even though sometimes there are short-run trade-offs perhaps, that's ultimately the right way to deliver prosperity to the economy.
Do you think that the independence is more in question today of some of these institutions than they have been in the past?
I think obviously we're seeing a lot of things in the news in not just in the U.S., but I think ultimately it'll come down to us central banks delivering the goods of maintaining price stability, even when the environment is, let's say, more challenging.
In general, do you leave this meeting more optimistic or more pessimistic?
I think there's a lot of uncertainty about various developments, but I think there's also a lot of avenues for hope for better outcomes economically, not just for Israel, but around the world in many ways.
Governor Yaron, thank you so much for being with us. That is Governor Amir Yaron of the Bank of Israel, and I will send it back to you, Francine.
Thank you.
Lisa, thank you so much. Bloomberg Surveillance co-anchor Lisa Abramovitz. Now, on tomorrow's show, we'll be joined by the French trade minister and, of course, the chief executives of Accenture, Marsh, and Darktrace. Still to come today, an interview with Steve Witkoff, the U.S. Special Envoy, at 10:30 a.m. London time. And, of course, we'll have full coverage of President Trump's special address to Davos from 1:30 p.m. London time. So it's going to be a busy day. You'll have all of the highlights from Davos throughout the next couple of hours. Up next, Bloomberg Brief, and this is Bloomberg.
For U.S. markets, we are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rising after the S&P 500 posted its biggest drop in 3 months. Japanese bonds rebounding, lifting global debt markets. President Trump brushes off concerns of jeopardizing trade deals with European Union countries ahead of his speech in Davos. And Netflix out with a cautious forecast due to higher program spending and a potential cost issue associated with the Warner Brothers bid. So let's take a look at these markets. A rebound, you could say, but we're well off our highs. We are in the green, but just barely for NASDAQ 100 futures. So it remains to be seen how this mood shifts throughout the day. We're obviously waiting for President Trump to speak in Davos later. That will impact things. And we've had calls for calm, for example, from the Japanese finance minister, also Treasury Secretary Scott Bessent in Davos yesterday. Bessent also telling reporters that Japan's economic authorities had assured him that they were going to calm the situation. Let's take a look at bonds, because we did indeed see a little rebound in Japanese bonds. The 10-year yield down about 7 basis points and that 30-year yield down about 14 basis points. We're not back at levels, though, before yesterday just yet. The 10-year yield here in the United States still well above that range that we had put in for several months now. We're still at 427. And then take a look at gold, because this morning we are hitting more records on gold. Right now we're above $4,800 an ounce, and we did top $4,900 an ounce. The VIX hovering around 20. All right, let's get to some individual market movers this morning. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Netflix shares are firmly in the red this morning after the company provided quite a lackluster forecast for the first quarter and also said that it would need to pause buybacks so that it can accumulate cash to fund this pending deal for Warner Brothers. So despite the fact that fourth quarter numbers were actually quite strong, this outlook and also this news on buyback really disappointed investors, and we are down almost 6% in pre-market trading. Moving on to the aviation industry, and United Airlines is in the green this morning because fourth quarter numbers were ahead of estimates, and it also said it expects 2026 to be quite strong thanks to both international and domestic travelers. This echoes another upbeat outlook as well from Delta Airlines, and therefore we are up more than 4% this morning. And finally, Intel is extending some of the gains that we saw yesterday. That is after the company was both upgraded by HSBC and Seaport, and that is thanks to really strong AI demand driving orders, and so there's a brightening outlook for Intel, and this reflected in those shares today.
And Intel had a good day yesterday as well. Chloe, thank you so much. Chloe Melly there. And coming up in this hour, more conversations from Davos you don't want to miss. We're going to be speaking with Salesforce CEO Mark Benioff. But first, U.S. stock futures could be staging a recovery after the biggest drop in the S&P 500 in 3 months. We're off our highs, but very definitely pointed green. Joining us now is Bloomberg's Van Ram. Ven, was yesterday an outlier of a day? Had liquidity something to do with it when we look at what happened in Japan, for example? Or was this very definitely, an intentional sell-off?
Well, it was an intentional fall-off, at least as far as the JGB route was concerned, because, what happened new was Prime Minister Sanae Takaichi talking about, tax stops on food sales, and that meant that, the government is looking at additional fiscal gap of $32 billion, equivalent of $32 billion. Now, the key question for the markets is, that is coming at a time when the BOJ is already behind in its battle against inflation. And if you add that fiscal gap without an explanation of how they're going to fund it, that added to the market's fears. And that is why we saw the kind of selling. It was a multi-standard deviation event. One, in an entire lifetime of 30 years of trading or thereabouts, traders are likely to see only one such instance of such a ferocity of move. So I do think that the rout was coming, and it just so happened that it happened yesterday. But I think that the rest of the markets, if you look at the global markets, the sell-off in equities, that's not the JGB sentiment spilled over, obviously, and obviously you've got things going around on Greenland, and which is adding to negative sentiment. But I think that in the U.S. stocks arena, as far as U.S. stocks are concerned, I think that this could be a buying opportunity.
It does seem like potential buyers are stepping in this morning. Ven, thank you so much. That is Bloomberg's Van Ram. Over in Davos, the standoff around Greenland and trade continues to dominate.
It's not a term of the trade agreement, and this is what I keep trying to say, is we should compartmentalize these
But for the
things.
Europeans, it'll be an additional tariff.
Potentially, that's right. Yeah.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem. And it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover.
Joining us now from Brussels is Bloomberg's Oliver Crook. Oliver, when are we going to figure out if something is going to happen in Davos? Do we need President Trump to arrive there and start having conversations?
I think that will probably determine what the forward progress is going to be between Europe and the United States, which I think it's fair to say has probably reached its certainly in the last kind of several dozen years, a low point in the relationship between the sort of traditional allies of the United States and the American president. Donald Trump will be arriving in Davos at some point a little bit later today. And of course, everybody wants to get in the room with the president to try to get an understanding of what his thinking is. The rhetoric from the president of the United States has been somewhat different from some of the rhetoric from some of his advisors, who are really trying to get people to not focus on the Greenland issue as much. Jameson Greer there saying that basically the trade deal that's already been agreed to with the Europeans has nothing to do with Arctic security, has nothing to do with the tariffs that are being threatened. We heard it from Scott Bessent yesterday, the U.S. Treasury Secretary, saying basically everybody relax, calm down. What is all this hysteria? We had hysteria back in April over Liberation Day, but it was not really anything. We had Howard Lutnick writing in the Financial Times that everything will be sort of resolved in a sort of reasonable way. For the Europeans, this feels a lot like basically gaslighting, right, from the U.S. administration. They're the ones who are conflating these two issues of Arctic security and trade. And for the Europeans, they say, how can we not react to this? And the only reason that it resolved itself last time was because the Europeans rolled over. And I think there's a sort of dawning realization in Europe that they cannot continue rolling over indefinitely. Yesterday, it was the trade deficit. Today, it's Greenland. And tomorrow, it'll be something else if they don't stand firm.
There also seems to be this trend of members of the administration, including the president himself, putting out there in the open for everybody to see communications that perhaps were meant to be private. Today, we're learning that Scott Bessent said the Deutsche Bank CEO, Christian Sewing, called to basically dismiss his analyst report, George Saravelos, saying, there could be a bit of a sell America trade going on if this continues. And Christian Sewing essentially told Scott Bessent that he doesn't believe his analyst. Do we know any more about this?
Yeah, really interesting, Vonnie. This is one of the first notes that I got after the sort of tariff threat that we got over the weekend from George Sarayevos, and I'll just quote directly from it, because he was not actually advocating a Sell America trade or anything like that. He was merely pointing out that Europe is the largest lender to the United States, that European countries own $8 trillion of U.S. bonds and equities, almost twice as much as the rest of the world combined, in an environment where the geoeconomic stability of the Western Alliance is being disrupted existentially. It's not clear why Europeans would be willing to play this part. And that, of course, got the attention of the bond market. It got the attention of traders and everybody involved in the markets to say, you know, if the Europeans do want to exert pressure on the United States, this is one of the levers that they have theoretically to pull. Now, we should say there is a Danish pension fund, for example. It's got $25 billion, about 100 million of those in treasuries, that have said they're going to sell their U.S. treasuries. All of that being said, Vonnie, I think it's a very unlikely path for the Europeans to go. This is effectively being deploying sort of economic warfare, but it shows how much influence and how much fear there is in the hearts of not just European politicians, but also the C-suite within Europe about the Trump administration, that the CEO of Deutsche Bank needs to call the U.S. Treasury Secretary to say they don't stand by an analyst note, which is just pointing out information.
Yes, and Besson saying that this notion that Europeans will be selling assets came from a single analyst at Deutsche Bank. I think there are more than one analyst out there saying this. Oliver, thank you so much. That's Oliver Crook. And I do want to point out as well that a spokesperson for Deutsche Bank didn't have an immediate comment when contacted by Bloomberg News. Shares of Netflix falling in pre-market trading after a cautious forecast, citing higher program spending and the potential cost of closing its deal with Warner Brothers Discovery. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So, Tom, Netflix did well, but the shares have been falling over the last several weeks and months. Investors seem to be really cautious on this potential Warner Brothers Discovery deal. Why?
Yeah, that's certainly part of it, Vonnie. And to your point, look, the earnings actually beat and subscriber numbers came in above 325 million, so that's an 8% increase. So on those metrics, this was positive for Netflix, but you're absolutely right that there is caution in the markets around the stock, particularly today, and that is about their forecast for the current quarter, where they see actually profit coming in below estimates. And a lot of that is down to the spend. It's not just Warner Brothers, but it's also on these investments that they see. They are seeing attractive investment opportunities in film, in some of their intellectual property. They're building out their gaming franchise. They're building out their live events, but it's going to come at a cost. And of course, there is the Warner Brothers deal as well, which they've amended slightly. So it's now going to be an all-cash offering for Warner Brothers. They also said, executives, that they are getting and making progress in terms of getting the right signals for regulators for that deal. Of course, it hasn't closed yet. They've amended it to make it an all-cash deal. That will come at a cost. So those things seem to be weighing on the share price for Netflix, at least for now. And a cost around the deal and around those investments to build out the Netflix product for longer term.
Yeah, I mean, those shares are already down almost 7% year to date, and we're not even through January. We'll see how shares trade today because, of course, yesterday was very risk-off. Tom, thank you so much. Tom McKenzie there, co-host of Bloomberg Tech Europe and the opening trade. Coming up, we go live to Davos with Salesforce CEO Mark Benioff. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's head over to Davos, where Bloomberg's Emily Chang is standing by. Emily.
Bonnie, thank you so much. I'm here in Davos with Mark Benioff, CEO and chair and founder, of course, of Salesforce. Good to be with you in another country.
Great to see you, Emily. Aloha.
Aloha from the slopes.
You are the Kama Aina of Davos.
All right, so this is my first Davos.
Wow.
This is your 24th.
Right.
Davos.
What's it like being a nice Hawaiian girl here in Davos?
You know, it's chilly, but I'm liking the vibes.
Okay.
What's the mood this year? Are people anxious? Are they optimistic? Or are they confused about the future?
Well, it's an exciting moment. There's no question. This is just an unbelievable, amount of change. And I think when there's this much change and this much excitement, people are a little frenetic. And I think that, sometimes Davos is like a measurement of the economy. That's not what's going on. Well, is the economy good? Is it bad? How are people feeling about the economy? This is more like, well, what's happening exactly in the world? Because you have the AI situation, you have the political situation, you've got, these very broad shifts. And I think that is what's really happening here. There's a lot of discussion. And, Davos was built on the concept of a multi-stakeholder dialogue, the idea that we bring in lots of different kinds of people, political leaders, business leaders, spiritual leaders, cultural leaders, and have a conversation. Mm-hmm. And this year's Davos is about the spirit of dialogue, and that is playing out in spades.
Well, talking about that spirit, we're waiting for President Trump to arrive. You've said you want to see him prioritize U.S. businesses. What does that mean?
Well, I think the number one thing is, for the U.S. president is, as he is doing his job all over the world, he needs to support U.S. businesses and make them successful. And I was with Macron yesterday, and his job is to make French businesses successful. And there's no different. That's the role of the nation-state leader, is to help the people of their state. And so I have a lot of respect for President Trump and how he always supports the businesses of the United States.
So you're using Davos sort of as a live demo for some of Salesforce's new digital labor tools. I know you were prepping on Slackbot, but a lot of AI customers are saying...
You're not supposed to give away my secrets, Emily. That's not right.
I don't think that's too big a secret, but a lot of customers are saying they're sort of stuck in AI pilot purgatory. Yeah. Like they're not... Yeah. They're trying stuff, but it's just not working.
It's unfortunate because there's so much that you can do right now in AI. Unfortunately, there's so many false narratives. So I think because so many companies and pundits have said things that are not true, it kind of freezes certain customers and they don't know who to believe. So that's why, like we were talking just before we went on, that Ramon is here, the CEO of Pepsi, it's a new generation, and he just deployed 125,000 of his salespeople, 125,000, supporting millions of businesses, a lot of small and medium businesses all over the world who sell Pepsi, using new AI generation tools that we built for him. Really only took us a few months, and they're getting fantastic results. And that all started actually last year. I saw Ramon, and he once said, I'm ready to get a new level of efficacy in Pepsi. Another, Raj is here from FedEx, the CEO of FedEx. We just finished with him. He was a year ago saying, I've got trouble selling internationally. We identified all of his domestic customers that when they start to work with his salespeople, his website, and they haven't done international, now we surface them as an opportunity for international. It's generated hundreds of millions of dollars for FedEx. So there is great opportunities right now to deploy AI. And look, that's our job. Our job is to sell it, to convince, show the use cases, make people excited about it. And that's what we're doing here. We will meet with more than 500 CEOs one-on-one here.
You obviously have also taken on a sort of, a policy bent. You recently apologized for endorsing President Trump sending the National Guard to San Francisco. What did you learn from that moment, and how will you continue to reconcile the sort of Salesforce Ohana values with the administration's policies, whether it's ICE raids in Minneapolis or taking over Greenland?
That's such a great question. Emily, the way I look at it, and I think that this is probably the right way to look at it, is I've been doing this for 26 years now. Salesforce, amazingly, is 26 years old, 80,000 employees. We'll do more than $41 billion in revenue this year. Presidents are constantly changing, but our core values are not changing. And so we're just anchored down into our core values, and then we just speak to that and what we're trying to achieve as a business to reflect back into our customers and our communities what those values are. As you know, in San Francisco, where we are the largest tech company, there have been a lot of challenges. And so, yeah, I always have anxiety about safety for our employees. And, I think that anxiety just manifests into how can we create a greater San Francisco? And so I'm excited to be working with everyone from Mayor Lurie to President Trump to do that.
You're really focused on AI and especially its impact on teens, and you've been sort of raising the alarm about AI influencing teen suicides, which is, it's horrible that we even have to talk about this. You've called them suicide coaches. What should companies be doing about this?
Well, I think we should talk about that we are dealing with a new kind of very unwieldy technology, which left by itself, these large language models, they can do all kinds of terrible things. I mean, they can do a lot of great things too. You've used them. They can summarize things, and you can ask them queries, and you can get information. But unfortunately, we saw this year this horrible example where this company, Character AI specifically, started to find that their product was turning into a suicide coach for their customers. And one of the most horrific things I've ever seen in technology is these children, died. And it was completely unnecessary. And I think it needs to be a wake-up call that, we're letting all of this AI technology out fully unregulated. And by the way, you remember, that's true what we did with social media as well. And you probably remember what I said in 2018 here, which was social media was becoming the same kind of very dangerous technology. And look, a lot of governments have made changes around social media now. So you go to a lot of countries, if you're not 17, 18 years old, you're not going to use social media. There are controls, there are protections. We need to get there with AI now. There doesn't need to be any more deaths. We need to be taking this seriously. And AI is great, it's incredible, but these models, they're inaccurate, they hallucinate, they're kind of hard to control.
So what should we do? I mean, should CEOs be held personally liable? I was talking to Demis Hassabis, the CEO of Google DeepMind, and I asked, look, if we knew every company in every country would pause, should we pause AI so society and regulation can catch up? And he said, yes, he would be in favor of that. Would you be in favor of
Emily,
that?
number one, tech hates regulation. You know that they hate it, right? They get people on, it slows down innovation. They hate regulation, they hate it, they hate it, they hate it, except one regulation they love, Section 230, which basically says they're not held responsible or accountable for these deaths or for anything that their social media or their AI does. And that needs to change, because here at Bloomberg, if you say something, you're held accountable. And I own Time, and if we say something, we're held accountable. But these companies are not held accountable because of a very specific federal regulation called Section 230. It needs to be reshaped, reformed, basically restructured to really reflect social media and AI and the dangers that we see. And that is something that we should all be pushing for, that these companies need to be held accountable. And right now, they're not going to be held accountable because of this regulation. And
what regulation is the right regulation? California's tried to regulate. David Sachs has his own version. I know you just chatted with him. Is there any regulation you like?
I'm going to have a one-on-one conversation with David. He's a close friend of mine later today. I hope you tune in. And we're going to talk about that because, look, I think social media kind of is almost like a best practice that we can learn from, that if we look around the world, you'll see that a lot of countries, not necessarily ours, but a lot of countries have made really good changes. And we could make those changes too, because, it's kind of funny. I'm like a large language model myself. I feel like I'm putting one word together, but I have context, I have a life, I was born, I have a childhood, I have friends, hopefully you're one of them. And you know, I have a creator, I have a higher power that I'm connected to. These large language models, they're running by themselves. They were not born. They don't have a childhood. They don't have context. They're not connected to a creator. So that they're running kind of in a different way, and then all of a sudden it feels very familiar. It feels like, oh, this is my friend. It's not your friend. So we need to like step in now and look, we can kind of see where it's going. It's not completely out of control.
Right.
So now is the moment, and I think people like you and others should be aggressive about this.
Last quick question, and it feels almost trite going to the stock, but you know, you're trying to build your company on this new emerging technology. Wall Street's really down on software. Wall Street's Salesforce stock is taking a beating, you know, quickly. What I mean, what needs to happen to reverse the negativity? I've been doing this for 26 years, and every now and then the software sector kind of falls out of favor. It doesn't mean our financials are out of favor. I mean, we'll do more than $41 billion in revenue this year, more than $15 billion in cash flow. Our margins are more than 34%, all record numbers, by the way. And we just introduced an amazing new version of Slack. You know, that was Slackbot, the new AI-enabled Slack that has the context and the AI built in. We have Agentforce helping our customers deliver customer agents, so we do employee agents and customer agents. We've rebuilt our architecture to have a data layer, an application layer, the Agentforce layer, and then these agents that sit on the top in the ecosystem. That's been a lot of work in the last 3 years, selling a lot of huge deals. But, you know, you sometimes have to wait around for Wall Street to realize, whoa, this is a huge opportunity, and we're just going to keep executing it. Yes or no? Are you at 1 billion yet? 1 billion agents?
I think we're beyond that. I haven't actually counted them all, but, you know, here's a way to think about it. We now just passed, and I think we're number 1 or number 2 enterprise software company, or maybe software company overall, in the use of tokens. You know, tokens are what these models generate to generate their intelligence. We just passed 11.1 trillion tokens. And you remember we talked after our earnings, and we were about 3 trillion tokens. And that idea that as an enterprise software company, we're publicly reporting and talking about the number of tokens, and I know all of those people, you know, who love Bilbo Baggins are wondering if that's the tokens. It's a different tokens.
All right, Mark, next time we'll have to do this in Hawaii.
It would be
thank
warmer.
you. Yes,
I hope you're okay.
I'm good. I'm surviving. Thank
Are
you
you?
for joining. It's a beautiful day.
I know.
Thank you for joining
all right.
us.
Next time it's Waikiki Beach. Let's do that.
Absolutely. Mark Benioff, CEO of Salesforce. Guys, I'll send it back to you.
Great stuff. Emily, thank you so much. That is Bloomberg's Emily Chang there. And I do want to point to markets now because futures do seem to be staging a rebound, a definite sense of at least a little bit of calm coming back into the market in Japan. That we're not at the levels that we were at before yesterday's massive sell-off. But as you can see, futures pointed higher. If we look at bonds, bonds are also rebounding ever so slightly. We have the Japanese 10-year down about 7 basis points, the 30-year down 14 basis points. And that seems to be at least bleeding a little bit into the US market, although we're still elevated with the 10-year yield at 427.67. And I do want to point to gold as well, also being above $4,800 an ounce. It topped $4,900 an ounce earlier. Coming up, a live panel from Davos with Sergio Ermotti, Geeta Gopinath, and more next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rising after the S&P 500 posted its biggest drop in 3 months. Japanese bonds rebounding, lifting global debt markets. President Trump brushing off concerns of jeopardizing trade deals with the EU ahead of his speech in Davos. And Netflix with a cautious forecast due to higher program spend and a potential cost around the Warner Brothers bid. So let's take a look at those futures. Very definitely pointed higher and back up on the rebound now, having erased some of those gains earlier. So it looks like we might have a green day after a very, very red day yesterday in the United States. It's partially because of bonds. If we take a look at where the Japanese 10-year and 30-year and 40-year are trading well below yields that we saw yesterday. So that 30-year yield is down 14 basis points. It's seeping a little bit into the U.S., but there you can see the 10-year yield only down about a basis point right now, just a little more than that. We're still elevated at 427.87, and gold is still above $4,800 an ounce. Let's get to some individual movers now for some stocks to watch. Here's Chloe Malley. Chloe.
Good morning, Bonnie. Netflix is seeing some weakness today after providing quite a tepid outlook for the first quarter and also saying it will need to pause buybacks to accumulate cash so that it can fund this acquisition of Warner Brothers. And so despite the fact that fourth quarter earnings were actually quite solid, investors were disappointed by this cautious outlook and those concerns around acquisition costs. And therefore, we are down almost 6% in pre-market trading. Moving on to United Airlines, which is in the green this morning after solid fourth quarter results and also an upbeat outlook for 2026, echoing what Delta has already said. So there might be a rebound in the aviation industry after a volatile 2025. And finally, Intel is having another good day today after a solid day yesterday already. It was upgraded by HSBC and Seaport, and there's the AI demand that's really driving those orders for Intel, and therefore a brightening outlook, which is reflected in those shares in pre-market trading this morning.
Yeah, and that's after nearly a 3.5% gain yesterday. Chloe, thank you so much. Chloe Malley there. So as we've been saying, futures in the green now after a sharp drop for equities the last session. Bloomberg's Ben Ram is back with us. Ben, the Sell America trade does seem to have found a floor. Does it all depend on what President Trump tells Fora in Davos later?
Yeah, absolutely. A lot will be riding on what how he's going to characterize this this spat with the European Union. I think that what we can all take away from what has happened of late and what has happened last year is that, look, this is a market. These are two people, Scott Bessent and President Trump, of course. two people who are acutely cognizant of what is happening in the markets. And if the markets are in upheaval for a prolonged period of time, that's not something they are comfortable with. And therefore, there is a considerable sense that they will dilute the measures that they have announced. Even if you look at what Scott Bessent was saying yesterday to the press, his message was look beyond what the bluster has been and look to what happened in 2024, meaning they will dial back some of those tensions.
Yes. Ven, thank you so much. Ven Ram there for us in Dubai. Now let's go to Davos, where Bloomberg's Anne-Marie Hoydern is standing by. Anne-Marie.
Thank you so much, Vani. I'm now joined by, of course, the Special Envoy for Peace Negotiations, the Middle East. His portfolio has expanded as well to what's going on in Ukraine, Steve Witkoff. Thank you so much for joining us here.
Oh, it's my pleasure. Thanks for having me.
So this Davos, I thought I would start with you talking about your portfolio, Russia, the Middle East. You successfully negotiated peace in Gaza. But we first have to talk about this elephant in the room when it comes to Greenland. What's the thinking behind this?
Well, I think the president feels, as many other presidents before him have indicated, that it's of strategic significance, importance. It's just strategically critical, and we're in the best position to defend it against adversaries and enemies. And I agree with that position.
The president's talking about if he doesn't get Greenland, there's going to be tariffs on the Europeans. At the same time, you're trying to bring the Europeans on board to get an agreement on their soil, on their continent in Ukraine. Does it make your job more challenging?
No, he makes my job easier, actually. I'm his emissary, and he sets the table pretty good for people like me.
Do you think there'll be an off-ramp on Greenland? What are the conversations like right now?
I think the president is an incredible negotiator. He'll get to the right place.
And those negotiations could potentially take place here in Davos.
I think there'll be some discussions here.
Do you think a lot of leaders are going to show up to the Board of Peace event because Emmanuel Macron has left, von der Leyen's leaving, they're all going to have an emergency summit on Greenland?
You know, we've got 20 or maybe 25 leaders who have already said yes. This is not such an easy place to get to. They've already said yes. I think you're going to see overwhelming response. We had many people who we weren't sure if they were going to even want to get an invitation. Now they're calling up for invitations. So everyone wants to be a part of this. What we're going to do here, what the president is going to do here, will be it'll be game-changing for the world.
How have you pushed the ball forward when it comes to Ukraine talks here? I know Kirill Dmitriev was here on the ground.
Yes.
He was tweeting about how the talks went well.
He's a tweeter.
Can you? Yeah, he is. He follows me. Can you give us some insight into, if the talks are going well, where are we at this moment? What is the state of play?
Well, the Ukrainians have said that we're 90% done. And I agree with them. In fact, I think that we've made even more significant improvement over this past weekend. We were meeting with Kirill Budanov, who is, of course, their new vice president, ran military intelligence for them, their head of the parliament, David, and with Rustem Umerov, and we made even more progress during those meetings in Miami this past week. I'll be with them tonight, and I think that, and then I'm going to Moscow with Jared. All of these discussions are...
When are you going to Moscow?
Jared and I will leave Thursday night and arrive in Moscow late at night and then go over to the UAE afterwards for working groups.
So do you think we are close to the final 10% of this deal? Do you think this will get done in the next few weeks?
The final 10%, I don't know about the next few weeks, but I know we've made more progress in the last 6 or 7 weeks since Geneva than we've made, according to the Ukrainians now. I'm going to use their, what they say. According to the Ukrainians, more progress than in the last 3 or 4 years.
We've seen, though, Russia continue their attacks, especially on critical infrastructure, most recently energy infrastructure, leaving thousands, maybe millions of Ukrainians without power, without heat. Do you think Putin is truly here for a peace deal?
Well, first of all, they're in a war, and so they're shooting at each other, and we don't condone that. I mean, we think it's unfortunate. That's why the president and me with Jared at the president's direction, are working so hard for the peace. We hope that'll occur. We think people, you're right, are suffering on both sides. It's cold there, and not to have heat is terrible. And we've got to correct all of these things. But a peace deal corrects it, and the president is focused on that peace deal. It's a very, very important part of his agenda from a foreign policy standpoint.
But do you think Putin is there, or is he just dragging negotiations on for the sake of it?
I think that they've asked for the meeting. The Russians have invited us to come, and that's a significant statement from them. And Kirill was here yesterday and working on this with us. So I think everybody is embedded in the process and wants to see a peace deal happen.
If we do not get to a peace deal, what does the toolkit look like in terms of potentially more punishments on Russia? I know I've spoken to a lot of CEOs which said it was a pretty big deal that the president went after Lukoil and Rosneft. What other measures do you think we could see?
Well, if a peace deal happens?
If it doesn't happen.
Oh, if it doesn't happen, okay. Well, we've sanctioned them quite a bit. And I'm not sure what the president's game plan would be if it doesn't happen. I think if it doesn't happen, a lot depends on who he thinks is responsible for it not happening. Right now, we have people working together. We're trying to build consensus. We're trying to build unanimity of opinion. We've sent an invitation out to President Putin to join the Board of Peace. The same thing with President Zelensky. So let's hope. I want to choose to be an optimist here. I think we're going to get a positive response from both. I believe that.
If there is a peace agreement, what are you hearing from corporate America and even European CEOs about rebuilding Ukraine and even going back and doing business in Russia? All of them had a presence there, and then they fled at the start of the war.
We have told Ukraine that we think that their GDP, their economy, can triple over the next 10 years. That's an assessment, by the way, by BlackRock, who is working on this, and Larry Fink is here now. They have done an exceptional job, by the way, with our staff. But we have told them that the sky's the limit for their economy, and we believe that. I think that's the secret. That could be the secret sauce here. Not just a peace deal, but aspirationally a better world and a better life for the Ukrainian people who have sacrificed so much, and for the Russian people as well.
I want to also ask you about your other big focus, which of course is the Middle East, and what is going on with Iran. Have you had back-channel discussions with the Iranians, either directly or through the Omanis?
Well, the president has indicated that there have been some discussions, and that's what resulted in the Iranian statement that the killings will stop.
Do you believe them that the killings will stop?
Well, there's been a lot of killings. And
it's been horrific.
And that's terribly unfortunate and horrific. That's a good word, because it is horrific. These people were defenseless. They were just coming out into the street saying, we want to change. You shouldn't be killed for expressing a viewpoint that you want changes. So Iran needs to change its ways. They need to do that. And if they do, if they indicate that they're willing to do that, I think we can diplomatically settle this.
Have you gotten the sense from this outreach that that is the path they want to solve this, in a diplomatic way?
We don't have that sense yet. We would have, I mean, I think Iran, their foreign minister was supposed to be here, couldn't come, or was even maybe disinvited. I'm not sure. I was actually looking.
Do you think it would be appropriate for him to come here, given the level of destruction and killings?
Well, I was looking forward to meeting him, because I think we need to build that communication channel. We have to, because the alternative to that is not a good alternative.
Do you have plans? I know you're going to Moscow. Then you said you're going to go to the United Arab Emirates.
Yes.
Do you have plans to potentially meet the Iranian foreign minister in the next few weeks or months?
We don't have a plan, but I think we're moving in a direction where we could have that conversation if they're willing to have that conversation.
I just want to end on what a year it's been. You're literally at the epicenter of massive seismic geopolitical shifts. You were very successful when it comes to Gaza. You're now dealing with a very hot topic when it comes to Iran. These negotiations continue to grind on Ukraine. What has been so challenging?
Well, first of all, we have a great administration. We have an amazing team. We have the ultimate boss, President Trump, and he sets the table for all of us. But Marco Rubio has been amazing, too. I get to work with the State Department with an incredible array of talented people. And my job is now made even more easier because Jared and I are doing so much together. So the president is focused on solutions. He's focused on cleaning up all these conflicts. He independently has settled 8 wars, and now we're on a path to settle all the rest of them. And I'm proud to work for the administration. I tell the president all the time, these are the great moments of my life.
You don't
to
strike
be able to
me
give
as
back.
you're preparing for an invasion of Greenland, though. So it sounds like potentially that could be solved here at Davos. Could you tell us what the president's going to say?
Well, I don't know what he's going to say, and I wouldn't presume to speak for him. But I think what he's going to tell, I think his feeling is that this is a strategic asset. and we have to make sure it's defended. And Denmark cannot defend it in an adequate way as compared to how the United States can defend it.
And just for logistics, as far as you're concerned, the president looks to be maybe on time now, catching up some speed.
I think so.
Okay.
I think so.
We look forward to your speech, and we thank you for your time.
Thank you,
know you're
Anne-Marie.
incredibly busy. You have tons of negotiations on the sideline here at the World Economic Forum. Of course, that was the president's special envoy, Steve Witkoff.
Anne-Marie, thank you so much. That is Bloomberg's Anne-Marie Horridern. She'll be bringing us more interviews throughout the day from Davos, and we'll stay at Davos now because Bloomberg's Jonathan Ferro is discussing whether markets are mispricing the future with panelists including Sergio Armotti of UBS and Geeta Gopinath of the IMF. Let's listen in.
Really seeing the potential upside.
All roads seemingly lead to tech, though, Mark. It feels like it's all one trade. AI. And when we opened up this conversation and talked about what insulates us from the craziness at the moment, it seems to be the money that's been printed at some of the biggest companies on the planet. Is it more than just one trade in your world?
Yeah, so I think if you look at what all of this investment means, you have to look at what's, the next step. And what's the productivity gain? So that's a key point, because if we think about where the S&P 500 is trading, think about where NVIDIA is trading, okay? Or the other tech stars, if we're adding 1 or 2% of productivity gains to GDP over the next 5 or 10 years, or are we adding, on the high estimates, you can see people estimating 5 to 7%. If it's anywhere near 3, 4, 5, 6, 7% of productivity gain, no, this is cheap. These are cheap stocks, okay? And so where is it going? I think if we look at the market, we look at the tech spend that's happening, it's a matter of conviction. So I believe that the AI tailwind is not something that's going to stop tomorrow. Okay, this is a long-term tailwind that's going to happen. We're not capable of choosing who the next NVIDIA is, but what we can do is invest in the infrastructure around it. One thing I'm certain of is energy creation, energy transmission, storage, water transmission, all of this stuff becomes more and more valuable, more and more important, and that's a multi-year tailwind. And you mentioned some of the politicians who were speaking about what's going on in their economies. Defense spend in Europe, defense spend in Canada, the budgets are doubling over the next 5 or 10 years. But that's not all going to planes and tanks and aircraft carriers. That's also going to AI spend. That's also going to quantum computing spend. So I think this is not a 2 or 3 year phenomenon that we're going to see. Now, if it turns out to be only 1% of productivity gains, yes, maybe it's overpriced, but there's this binary feeling in the market where either we're in a bubble or everything is green lights. There could be something in the middle. Maybe the productivity gains take longer to come online. So then maybe the valuations for certain sectors or certain companies are too high. But this is a 5 or 10 or 15-year phenomenon.
Can I take the other side of that? Because the way I hear it traditionally justified is that we benchmark it to the extreme. It's not the dot-com bubble, so therefore it's okay. And there's nothing to worry about here. So I would actually say that people look at history as a way to justify current pricing. It may never be the technology bubble. We may never see that again. And when I hear you talk about technology, you talk about the potential for the tech. But isn't that different to the way we price it in the market? The number one question I'm getting from people at the moment, and unfortunately they don't say it on Bloomberg TV, they say it offline, is what happens if OpenAI goes bust in 2026? What happens to the ecosystem? What happens to the way we price the whole market? That's a very different question to the potential of the technology 5, 10 years out, is it not?
Yeah, I also think you're right. I think drawing a parallel to what was happening in the dot-com days are totally different. These are assets that are making money, that are growing their earnings 30, 40, 50% year over year. If you take Anthropic was talking about their revenue going from $1 billion on run rate last year to $10 billion this year. These are massive gains, right? So I think there's an actual impact that we can measure. None of it can be completely parallel to the past because the future is always going to be different. That's for certain. But I also, one point I would echo with you is that if you listen to the economists or the big investment banks who are making their predictions for what the S&P 500 was going to be, or what the next rate cut cycle was going to be in the next 12 months, 3 or 4 years ago, yes, we expect 4 rate cuts over the next 12 months. None happened. We're going to expect 4 next rate cuts over the next 12 months. None happened. So yes, we're in a brand new world. Everything is changing daily. I do think volatility shocks like what we could hear today from President Trump could have a significant impact on the markets, and that could alter the course of where we're going. But I do think that still you have to try to look long term, which is very difficult in the news flow that happens on the.
Nikita, just quickly, you wanted to jump in?
Yes, now I want us to make this distinction between the potential of the technology and where valuations are, both those listed on the stock market and those not listed on the stock market. We could very well have productivity growth of 1.5% a year, which was at the upper end of the estimates, and still we could absolutely argue that the market is overvalued. Because what we need to do is it's not just about productivity growth. We'd have to figure out, is there a way for all of these companies with very high valuations who are doing trillions of dollars in investment and making at this point tens of billions of dollars in revenue, that they would all be able to generate the profits that justify the scale of investment that's being made and the valuations that they have. That's what concerns me. I think productivity will go up. I don't have a doubt the productivity will go up. I just don't see how all of the current incumbents will be profitable, have the kind of profitability and have the revenue model that can justify their valuations. And the reason for that is that it is a competitive space at this time. I mean, I work with the different LLMs and I keep switching between one and the other. One day it's, GPT 5.2, then it's Cloud Code. And that's just within the US. You have DeepSeek in China. So I think things are changing in warp speed. It's unclear what the revenue model is going to be for companies. Yeah. And so I think that is what the question mark. So I actually see a disconnect. I don't necessarily see if productivity goes up. That means these valuations are justified. I think you could have you could have question marks over that. And so, yes, so what is true this time around is that the companies, at least those listed on the stock market, unlike the .com time, are profitable companies. The revenue streams are not necessarily big ones. The big revenue streams are not coming from their AI investments, but they're coming from other sources. But then you have the other companies that are not listed, like OpenAI, which have very high levels of valuation, and that could be the indirect risk that we don't see.
Bonnie?
Yeah, I totally agree with that. I've heard someone describe it. With AI, there are three FOMOs, right? There's the capacity FOMO, the application FOMO, and the investment FOMO, right? So the valuations we're seeing, right, is probably a product of this investment FOMO on the, expectation or anticipation that one day, right, everybody in the world, all companies are going to find ways to apply it, right? And therefore everyone is also chasing the application FOMO. But the productivity gain, which we talk about, has to be backed up by people willing to pay for that productivity gain, right? And I think, Mark, you put it as a time frame issue, right? I think the mismatch of timing, right, between how much people are willing to invest to chase the investment FOMO and when customers are eventually going to pay for that productivity gain and translate into the productivity of these companies. I think that is really what we need to focus on.
Robin?
I would actually split it into three different constituencies, because I think when we have this conversation about valuation, the way we should think about it is a little different. So we've got the folks who are producing what is increasingly day by day more of a commodity, which are the tokens. So the token manufacturers, that's where the real concern on valuation has really ended up being. And they are creating what is now a bit of a commodity. And so we'll see, is there space for 3 of them, 5 of them, 7 of them? We'll debate. They're spending a lot of money. They'll build infrastructure. The infrastructure is going to be used. The tokens will be created. It's manufacturing capacity. And if one of them were to fail, at the end of the day, we'd probably see some of the others taking over that manufacturing capacity. Personally, I don't worry about that too much. The second constituency is the ecosystem that's built around that manufacturing. These are the folks who are truly innovating with agents and with capabilities that are essentially using that manufacturing capability of the general intelligence from the LLMs. And that's a whole new ecosystem that's going to allow us to do new and fantastical things. And that's not going to go away. It's going to be highly relevant and highly useful to us as we build, as we see and use all of these different capabilities. And then the third group are the users. And that could be us as individuals, it could be us as corporations. And this is where also the parallel with the dot-com boom breaks a little bit. We didn't see the type of productivity gain that we're talking about here on stage for the users over a fairly short period of time back then that we could see now. We didn't sit here saying, wow, Amazon, my ability to shop online, the rise of AWS. We didn't see those things as transforming 1, 2, 3, 4, 5% productivity gains year after year compounding back then. Now that is how we're talking about it. So I think by looking at the three constituencies, you can say, is the market assessing where the value's ultimately going to be correctly, and how do we look into the future? There's so much obsession about that first bucket, that manufacturing of the tokens, but it's easy to miss the real adoption and integration, which is much more in the second two categories.
Sergio, where do you stand on that?
Well, look, I don't think I can really add much more than what has been already well explained by my colleagues here. But one thing I would say that you mentioned before, AI bust. I mean, AI is here to stay and is not going to bust. Maybe some people may disappear. I mean, like in the old days, you know, Netscape as a browser doesn't exist any longer. But you know, but my point is that, of course, we touched on that. But when we talk about valuation, timing is very important, and this is the ABC of investing, right? So I mean, the issue is that it's undebatable that even if it takes longer, we're going to create economic value. So, but what matters for investors is, number one, not pretending to bet on any of these players being the ultimate winner, because at the end of the day, it's going to always be a race. And the second one is that how long it's going to take to create this output, economic output. In every major transformation we saw in history, we saw the same elements of people in technology, for sure, overestimation of how impactful it will be in terms of financial returns, and underestimation of the scope of the changes. And going back to the infrastructure part of the equation, you know, other people made that analogy with the railway system in the early days of the transformation of transportation, right? So it's exactly the same issue.
Is it fair to say that railroads don't depreciate in quite the same way GPUs do?
Well, maybe not, but it's an example on how a transformative process that created economic output created some collateral damages. And we need to accept that some investors will suffer, particularly the one who are trying to do stock picking in investing in the sector.
Mark?
Yeah, I think one point I wholeheartedly agree with you, Sergio, on is the importance of diversification. I think you mentioned that earlier, but there's diversification in a few different ways. I think diversification of asset allocation and geographic investment is important. We're seeing, you know, I take your point before, never bet against the U.S. The U.S. is going to continue to grow, and it's going to be the big market to invest in for now and for the future. But what we're finding is a lot of our investors, for that incremental dollar that they have to invest, they find themselves underweight Europe. And so they're saying, okay, maybe now is a good time to rebalance, because I'm very exposed to the U.S., I'm exposed to a lot of these tech names, so now is a good time to invest in Europe, and maybe I want to do it through the private markets, so we see a lot within our buyout business or within our infrastructure business. But the other way of thinking about diversification is within the asset strategy you've selected, and that's important too. And I think trying to find return streams that are kind of decorrelated, and that really limits your risk. You know, in our infrastructure business, yes, we invest in data centers, but we also are the largest investor in Heathrow Airport. You know, what drives the return for Heathrow Airport is very different from the data center that we're invested in. I think that's very important.
How expensive are those uncorrelated assets right now compared to the big theme at the moment?
You know, if I was talking about this with an international investor earlier today, and, you know, for a very good performing data center today, yeah, they're expensive, right? And the multiples that are getting thrown around can be very high. Now, if we're talking about a trailing 12-month number or a forward-looking number, somebody said a good data center with lots of different assets that is well contracted should be 25 times. Well, okay, 25 times forward or 25 times trailing. But on the other side of that spectrum, I was talking to a big investor in the data center space today. One of their largest assets is fully contracted for 15 years with two counterparties, Google and the US government. That's pretty good paper. That's a pretty good long-term bet on who your payers are. So, yeah, they're expensive, but the upside potential is there.
You've brought up another dimension of investing in this world, in this market regime, and that's partnering with the US government. The state capitalism that we traditionally used to focus on with China is now coming out of the American economy. Geeta, does that change the market backdrop?
Absolutely. I think each one of these events changes the backdrop. There is some bit of confidence that comes from all the regulation that happened to the banking system after the great financial crisis. You have all the stress tests, and I think part of the reason why every single event of this kind is not spilling over into markets is because there's a lot of faith in, or belief now, and justifiably, that there's a much more sounder banking system than existed at the time of the great financial crisis. The risk, of course, is that there are many other markets that were previously considered safe that are no longer safe, and that includes US Treasuries. If you look at the long end of the yield curve for the US, interest rates are above 4%, but you would ask yourself, well, that still seems cheap compared to the level of debt that's out there in the market in terms of the projected path of fiscal deficits for the US and the path of debt for the country. Well, even the administration recognizes that, which is why they're all shortening their maturity and selling at the short end of the yield curve to prevent the long end from going up. So we're setting ourselves up with a bigger conflict with monetary policy, which is in the off chance that inflation were to surprise on the upside and the Federal Reserve were to have to raise interest rates, it would be even more costlier on fiscal policy than it would have been a few years ago, because it's not just the US government, by the way, pretty much every government is moving to the short end of the yield curve. So we risk being in this world where we really don't have any truly safe assets. And one of the points I want to make when we talk about equities and compare it to the dot-com period, the scale of exposure is just much bigger. And it's not just US households and US equities, but international investors in US equities never been bigger. Just that in terms of any, scaled multiple of GDP or any measure, the exposure is big. So any correction, and it doesn't even have to be a very big correction, it doesn't have to be the size of the correction of dot-com, it could be half of that correction. I think the consequences of that for the world economy are larger this time around than back then.
Don't they have corrective options? I mean, one thing I would say, just to reflect on the European debt crisis, I remember people would always say Italy is poor. And coming from an Italian heritage, I would take offense and I would say, no, the Italian government is poor. Italians are rich. And I think the same point needs to be made about America. The government might be poor. Americans are rich. Don't they have options to do something about it?
That's usually not how things work. When you're in a crisis, the way policies get coordinated is the government steps in, does stimulus, the Federal Reserve cuts interest rates. If we're going to be in an environment where there are questions around central bank independence, then the Fed would typically in an environment like this do quantitative easing. The question is, there going to be even more pressure on them to do buy large amounts of assets, of classes of assets that they shouldn't be buying. There's the risk of that. And on the fiscal front, again, debt is very high. So they are quite constrained on how much they can bail out economies. We've seen the last 5 years. I mean, I think the last 5 years has been, shock after shock in terms of the pandemic, war in Ukraine, Federal Reserve raising interest rates sharply, but there hasn't been a financial crisis. And I think the sense has always been that there will be the government, either the Treasury or the Federal Reserve and governments around the world to save the day. It's getting to be a harder and harder proposition over time.
And yes, Sergio, we sit here, given all those risks granted and treasuries have a full handle and inflation-based, market-based inflation expectations are still pretty anchored. Is that the right way to look at things, or is that complacent?
Well, there is a level of complacency in the marketplace, but this is nothing new. In the last few years, we had an enormous amount of economic, macroeconomic, and geopolitical events that in the past would have triggered on their own huge corrections, and not only temporary corrections like the one we saw recently, but more fundamental correction. But I guess the system is now used to an environment in which either governments or central banks will be the ultimate saver. So this is what what is consensus in the marketplace, and is a very dangerous assumptions to make. I don't have any clear way to how to address that, and going back into the boring diversification headline, because unfortunately there are no safe assets, as you mentioned. There are no places where you can say, well, this is a place to go. Of course, I do see a pocket of undervaluations in certain markets, relatively undervaluations, right? So, for example, I mentioned before the Chinese market in terms of technology and innovation. I mean, if you look at multiples between the Chinese market and what China is doing every day in terms of innovation output and the US multiples, then you have to say, this is not only is not reflecting the economic reality of two countries, basically having almost 50% of the GDP of the board, right? 40 plus, 45, but also the innovation power, which is quite exponential. So there are mitigating factors, but everything is somehow then influenced by geopolitical issues. Why it is that the Chinese stocks are under weight is because of geopolitical issues, and this is something that is going to take time to be addressed. And I don't think even in the next 24 hours we will get a solutions of that.
Bonnie?
Yes. Now I do want to go back to one point that Jesus has raised, and again I agree with you that if things were to go wrong this time around, the impact will be much bigger. Because if you think back the dot-com days, the way that investors invest are very different with technology. And I'm surprised, right? We're just 10 minutes away from finishing this session. We haven't talked about tokenization and all that, right? It's in every conversation since I arrived in Davos. That is just going to make the impact so much more difficult to contain, right? Because you can, in a way, say, well, we're making markets more accessible to everyone and being more inclusive, but at the same time, you're syndicating out the risk to a much broader population of people, all around the world, right? So I hope, we will be able to get to a safe landing, but at the same time, the craziness that you alluded to, John, I think this time around with, it will be multiplied, given the change of the way that investors are investing.
Bonnie's good at this. We have got about 10 minutes left, so think of some questions you might want to ask, because I'll open it up to you in just a moment. Sergio, final word.
Maybe I have more of a question around tokenization and so on and so forth, which is, in my point of view, is still out there. I fully believe that blockchain and tokenization is the future. Having said that, I still don't understand, because I'm not a scientist and I'm not such an expert, how quantum computing will eventually put a severe threat to that system, or, again, maybe not a fundamental structural one, but rather delay how long is going to delay the timing for implementation of this technology, because security, I mean, when you tokenize, then you better know that it's safe. Because, and this is the issue that I still don't reconcile, and this is something that, in my point of view, is not fully priced.
Just to conclude this panel before I open it up to the floor, can I make it very simple, and forgive me for being a journalist by only asking one question to just condense this whole panel down into, but the S&P 500, higher or lower by year end? Based on everything you've said, all these risks, is the S&P 500 higher or lower by year end?
For me, well, go on.
I don't mind going first. You have to prepare. I think this is the theme of the panel. You have to prepare for all of the eventualities, and you really have to be able to withstand the answer being lower. But actually, given everything going on in the world, I'd go with higher.
Gita?
I think I like the preparation part of it. That is important. I would go with with higher, but probably not as high as what's currently being expected.
Mark?
Yeah, look at earnings. Earnings are good. I would say higher, but I think the line chart's going to look more like an EKG than a straight line up.
Bonnie, I don't know if this gets you in trouble or not if you have to answer this, so you can take a pass if you need to.
I will take a pass, but, I'll focus more on my market.
Sure,
right?
please do.
All I can say is that, it used to be the case that, the Hang Seng will go hand in hand with the U.S. indices, but, we're seeing now less of a correlation. We're hoping for the best.
Sergio?
Well, I mean, it's much easier question than the one I got last night on is the S&P going to be higher than last year? So that one, most likely we're going to be a little bit higher, but I think it's going to be, more importantly, still a very volatile year.
So ignore the speech
later. You're going to see
later.
spikes of volatility.
Hey,
and
ignore the speech later, we can all go home. Oh, right?
Well, we'll see. But, I told you before that, historically speaking, we are not very good at making prediction in Davos. So
True. True. Questions, please. Please stand. The individual at the front here, please.
Yeah, thank you. Isabel Hartung, Different Advisory, Bourse and Tech. My question would be, I mean, you very much focus on productivity and how much it will be and, whether this is reflected in the pricing. From my point of view, the more disruptive potential comes from new business models, doing things differently, and in the end, then winning a competitive edge, which also means where there will be a total reshuffling of the landscape in the different industries to new ecosystems. And I'm just wondering, I mean, do you have a read of, how this will translate into any kind of pricing or market expectations? Because, I mean, this is still a big black box.
Yeah. Look, it's sort of a couple of themes that we've already talked about. One is it's very hard to pick winners and losers, and so it's hard to look over the horizon and be able to do exactly what you said in the last part of your question. But to the first part, I think lack of adoption and integration deeply of AI into an individual's life or a government or a corporation over the next 10 years is an existential threat. So doing AI fairly well is table stakes to being able to exist, because the cost difference and the efficiency and the capacity creation is so transformational that if you talk about compounding the sorts of numbers that we've talked about, 5-6%, whatever the number is, maybe it's 2, who knows, but it doesn't matter, compounded over a 10-year period of time, it's massive. There are things in our company at BNY that we do today which cost 1% of what it is that they might have cost us to do a year or 2 years ago. You can't compete with a company that can produce things at 1% of the cost.
Yeah, and I would add that I fully echo that. And the reason why is pricing is going to go mainly in favor of clients. And so the winners will use it to gain market share. I mean, of course, it's going to be accretive to shareholders. And this is the reason why it's essential, because it's not about you making less profit than your competitors. It's you being put under pressure by the pricing advantage of your competitor driving you out of the market. So I think it's very, very important. Of course, what we haven't touched on is the social transition. What does it mean? This transformation for jobs and society, and this is a broader issue than 4 minutes, but I can tell you that this is probably the biggest challenge we have in making the adoption, because big organizations are based on maybe you have some visions at the top, maybe not, and you have some levels of embracement of changes at the first level in the organization, but large organizations have some degree of permafrost. And in this changing environment is is the biggest challenge we have, is really to find in 3 years' time that you are still competitive, both in pricing and capabilities.
We got any more? Any more questions? Why does everyone go shy at the World Economic Forum? Come on. What have we got? There we go. An individual at the front.
Hello, thank you for this really interesting panel. I was wondering, do you think climate change and the risk linked to that are well priced in today's market, or do you think that's going to change quite dramatically in the few years coming?
Anyone on the panel? Geeta?
So
So this is obviously tricky, and it does depend upon the particular market, because some markets have become uninvestable. You basically cannot get housing insurance, flood insurance in some parts. That is being priced in. If you're a small island nation, your ability to insure yourself from catastrophes has become incredibly expensive. So we are seeing some insurance markets basically shut down, that they don't exist. And that is a challenge with housing, which we know that's a big problem pretty much in all parts of the world. And governments are trying to figure out how is it that they're going to fix this market? What is it that they can do to be able to provide insurance? So basically people have to relocate and they can't really live there anymore. Of course, there are other kinds of risks, which is about whether the assets that you have are going to become obsolete. You know, the fossil fuels, how much is this going to be valued over time? That seems to be changing with the geopolitics, depending on how much support there is for it and how much there isn't. But yes, I do think climate-related events, already the implications that we see right now in terms of the kinds of financial instruments available for it, that's another big transformative area.
And I guess maybe, the two real issues that we need to face is that all these, developments are going to need a lot of energy. And how are they in conflict with the target of net zero, no matter if you look at the next 10, 20, or 30 years? So how do we get the two things converging? It's very, very important. And in that sense, I think that it's very important to really invest in new technologies for energy. And, it's fair to say that today, we are paying the price for demonizing nuclear in the last 40, 50 years. And it's very important that, it's unlikely to change in the short term, but it's very, very important we also embrace new way of production of energy, because there's no climate change and energy are the same kind of topic.
That wraps up our panel. We're on Swiss time, so we've got about 60 seconds left, so I'll round it up for us all. Can we have a round of applause for a wonderful panel today? Thank you for Mark, Dieter, Robin, Bonnie, and Sergio. Thank you very much. Thank you.
That was our very own Jonathan Ferro on the stage here in Davos, Switzerland at the World Economic Forum for day 2, day 3. I'm not sure. It's blurring together, and a lot of people are here just completely active. Good morning and welcome to Bloomberg Surveillance live from Davos. John will be back with us a little later. It is a huge day for global markets, and certainly here at Davos. All eyes, first and foremost, will be on President Donald Trump's speech in Davos later today. Anne-Marie, it seems like that has sucked all of the oxygen out of the room.
Oh, absolutely. And the president was supposed to be delayed. He was on Air Force One, and then they had to turn around. They had to deplane, get another plane. There was some issues. I was told by Steve Witkoff, and now the World Economic Forum is saying he is set to speak this afternoon. He has made up his time. And really, we just keep talking about how the message is going to be twofold. Obviously, everyone is talking about Greenland, and I'm sure the president is going to bring it up. But for him, the heart and soul of his speech really needs to be the affordability concerns at home in America, because for him, the North Star is November 3rd, when it's the midterm elections.
And this is a reason why the focus is so split here. Yes, a lot of the U.S. administration is here in Davos, Switzerland, but back in Washington, D.C., we're also getting the Supreme Court hearing arguments over President Trump's attempt to fire Lisa Cook. Fed Chair Jay Powell is going to be sitting at those hearings in support of her. We've already heard some commentary from Treasury Secretary Scott Bessent on this exact issue earlier this morning. It seems like this is very much in their thought process as well.
He's saying Treasury Secretary Powell is, quote, politicizing the central bank. He went on to say that he's become frustrated with the Fed for refusing to do their own internal investigation and not sure why they would support Lisa Cook. So he is saying the fact that Jay Powell is going to the Supreme Court, that is politicizing the central bank. I think Jay Powell would probably say, well, you politicize this when you delivered a subpoena to my office.
Either way, there is a swirling backdrop of geopolitics in a very transactional Davos. This is all about business at a time when people are looking for deals and business leaders are looking to avoid getting roped into geopolitical conversations that could potentially be detrimental to their businesses. Right now in markets, we are seeing a bit of a reversal of what we saw yesterday. Certainly, Japanese bonds helping that mood, given the fact that we heard some nice tone coming out of the Bank of Japan and the second biggest bank in Japan agreeing to buy bonds. Right now, you are seeing stocks stocks higher, but just a little bit. Right now you are seeing just minor gains across the board, really just 0.2% for the most part. When you take a look at the bond space, 2s, 10s, and 30s, you can see, again, a bid into all of these bond issuances, but just 2 basis points earlier this morning, now down just 1 basis point on the 10-year yield. And take a look at the precious metals. You cannot keep them down, even though you've got some dollar strength today. Precious metals, gold, silver, at new all-time highs. Coming up this hour, we have an incredible lineup. RBC CEO Dave McKay, Gap CEO Richard Dixon, and Lead Edge Capital founder Mitchell Green. As we await President Trump's speech, deals are getting done. Business leaders are engaged in rapid-fire client meetings. We have the wonderful lineup of guests today, starting with the very own CEO of the Royal Bank of Canada, Dave McKay, who joins us here. Dave, wonderful to see you. Thank you for being with us.
It's great to be back. It's amazing a year's gone by already.
Right? I mean, what's your impression so far of this Davos? It feels very different than the previous ones.
It's more intense. There's more leaders here than I think there's ever been. Over 850 CEOs, 400 ministers, 65 heads of state. So there's been a lot of dialogue already in the first kind of 48 hours. A lot of joint business government leader dialogue around investment. To your point, looking at making deals, looking at co-investment. Every country looking at diversifying trade, bringing business leaders with them to talk about co-investment, whether it's manufacturing investment, defense spend in Europe and Canada is going up. A lot of discussions about how do we spend $80 billion in Canada on defense. You know, what partners are we looking at, and how do we use that defense spending lever to attract manufacturing investment in automotive, energy investment. So there's a lot of grand bargain discussions going on with business leaders and I haven't seen that before. And so it's different, it feels different, it's transactional, as you said, but it's exciting at the same time. There's opportunity here.
Well, you're talking about the excitement, and yet you are Royal Bank of Canada. You are expanding in the United States, and right now there is a breakdown in the relationship between these two countries. How problematic is that for you at a time where you have been expanding in the United States, and you do see flows, at least in travel, going the other direction a little bit?
You know, I think we're in this temporary world where we're trying to figure out, you know, how we're going to trade going forward. But I come back to the core of USMCA. Canada really helps America with affordability. We make things in Canadian dollars. We sell it to the U.S. At the U.S. buys it at a 30% discount, whether it's automotive parts, whether it's steel, aluminum, food, and a lot of our canola goes to the United States, and therefore we help keep prices down in the U.S. And if the U.S. were to bring all of that back, it's inflationary. You shortage of labor in the United States. So as you look at the core of USMCA, it's good for America. And I think that gives me comfort that we will come to an arrangement going forward, recognizing this is good for America. It's good for Canada, obviously, but it's good for America, and that's important to the president. There will be change. I don't think it'll be the same agreement going forward, but the core of it, I think, is so important to both sides, and that gives me comfort that we will continue to trade. Canada, and you heard our Prime Minister's message, I'm sure we'll talk about that, has to diversify trade. I think we've relied on trade to the U.S. substantially, a big part of our economy, and I think that the conversations that are happening before Davos, after Davos, in Davos are very much about, here's what we're good at. Can we find a grand bargain deal? Can we expand trade across multiple countries, whether it's Europe? A lot of discussion with South Asia and Asia, and a lot of discussion with the Middle East and investing in Canada. And what's different about Davos this year, honestly, Lisa, it's risk on Canada.
Let's talk about the Prime Minister's speech. The sharpest tone I've ever heard from Mark Carney about Donald Trump without mentioning Trump's name. He's talking about a new world order, saying these middle countries, if you're not at the table, prepare to get eaten. Does that make it harder when you're talking about things like watching the USMCA trade deal? Do you think that the relationship is going to become more challenging between Canada and the United States?
I think relationships are about value exchange. And if there's good value exchange and you both see a benefit to that, then you're going to find the right place. So when you, just as I said, there's great value exchange. $400 billion go back and forth across the border every year because there's value. We're the #1 trade relationship with 36 states. Most of those are red states at the end of the day. So when we think about the importance of that relationship beyond that federal level into the state level, it's really important. So I think you come back and you say, it's good for America, it's good for Canada. That's a basis for exchange of value going forward. Having said that, I think the Prime Minister is very clear that we haven't done our role in defending ourselves. We haven't invested enough of our GDP in defense, and you've seen that commitment to spend that money. We have to do that. We have to increasingly defend ourselves and not just our economic security, it's our physical security. We have to play a bigger role in that. We have to defend the Arctic, and we have to invest in the Arctic, and it's a big part of the commitment we've made to NATO and we've made to the United States that you'll see a greater investment from Canada. We have to have dual use investments, not just military, but commercial and economic investments in the Arctic, and Canada should play a role in doing that. So you're seeing that was a big part of his speech yesterday, and we have to create scale. We're in a world of scale. Businesses need scale, countries need scale, and I think the Prime Minister's message was we have to continue to diversify, but diversify in a way that you continue to build scale in what you need. So I think that's what I took away
When
from
he
it.
says diversify,
Yeah.
does it mean maybe a new strategic partnership with China? Is that what you take from the Prime Minister?
You know, the Prime Minister was just in China a week ago, and it was a very important delegation that he led to China to kind of reset the relationship after, a better part of a decade where the relationship had separated. And part of it was to renew economic ties and to agree on areas where we definitely agree, and to say these are areas where we might not agree, but let's focus on where we agree and where we can build a future together. And I think that was a very positive step. You saw China make a commitment to resume buying our canola oil, and that's a very important market for canola. The United States and China are big markets. We ceded a small part of our automotive market, 3% to Chinese imports. That's an affordability issue. China will bring in affordable electric vehicles. So I think that's good for Canadians at the end of the day. So I think there's more to build on, and I think it's part of diversifying across multiple countries.
Okay, so we've gone all this time without talking about what you actually have done. You just had a year that's phenomenal. You had record revenues for any Canadian bank ever, and you have grown tremendously. You beat all of your targets. I'm just wondering, when you're talking about diversifying businesses, does it go to your business as well? Are you expanding in places like China? Are you still planning to expand in the United States?
Our second home market's the United States. We've grown wonderfully in the United States. We just launched a whole new treasury management platform in the United States, RBC Clear, that's had a great reception. Technology leap, we brought in $25 billion of new money from U.S. senior corporates, Fortune kind of 500. So the United States is our second home market, and we continue to invest there. We lend significantly to U.S. corporates. We lend in the mid-corporate space and the commercial space, and we have the 5th largest high net worth platform in the United States. So the U.S. is very important to us, serving Americans, helping Americans grow. And I told the administration already, yesterday that we've invested significantly in the U.S. economy, and we're part of the solution, and we feel very welcome in the United States. So it's a big part of our strategy. To your point, our strategy has not included China up until now, for all the reasons where we didn't have significant diplomatic ties. We didn't see the basis for that investment, and now we have to review that. I can't say how we would go back in, but if the trade continues to diversify and Canadian corporates invest in China, then we will have to be part of that. What I'm focused on now is the Middle East. Significant investment commitments from the Middle East to Canada. I think one of the themes of Davos is the Middle East is a great place to invest. Abu Dhabi, Dubai, UAE on that side, Riyadh, and Saudi Arabia, significant commitments on both sides, and you'll see a greater presence from RBC in the Middle East as well. So yes, to your point, it's a great question. You're seeing RBC become a more globally connected bank because Canada is going to become a more globally connected country, and the U.S. is already an incredibly globally connected country.
20 seconds.
Yeah.
One word answer. Is this year going to be better than last year in terms of deals?
We've entered the yield very strongly on the senior market side. I'm feeling there's very good momentum. I don't want to see it derailed, so I'm very positive about the year in the future. I feel good, yes.
That is a wonderful way of not giving a yes or no answer. RBC CEO Dave McKay, always a pleasure to have you. Thank you for being with us. Coming up next, Gap CEO Richard Dixon coming to join us. We are also going to be getting Morning Movers with Danny Burgers. We're going to be talking about Netflix after they reported earnings after the bell yesterday. From New York, from London, from Zurich, from the Alps, this is Bloomberg Surveillance.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg surveillance from Davos, Switzerland. Welcome back. We are here with markets trying to retrace a little bit of what they gave up yesterday. You are seeing a bit of a bid into U.S. equities, but really fading throughout the morning, up just 0.2%. A bit of a bid into bonds, but now 10-year yields down just 1 basis point. A bid into the precious metal space. This has been an ongoing theme as we hit new record after new record. Just a little bit of dollar strength, 117 on the euro-dollar cross. 3 hours away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, we got Netflix earnings after the bell yesterday, and the numbers were good, more subscribers, though it doesn't necessarily lay at that number, but the issue for them was the cost. They say that in 2026, they're going to spend 10% more than they spent in 2025. Then you add to that the acquisition of Warner Brothers Discovery, so costs stack up. They say it's necessary to invest in the properties to get people to watch Netflix, but those shares falling 6.7% in the pre-market this morning. Elsewhere on the move to the upside this morning is United Airlines, shares up 3.5%. Much like Delta, strong earnings thanks to luxury and business travel. Both high spenders in domestic and abroad did well. That intercontinental travel still looking good for them. The rewards program also looking good. The CEO, though, did say that this was a conservative outlook on their part. Finally, Kraft Heinz, those shares are sinking in the pre-market trade. The company registering shares being put up for sale, potential sale, by Berkshire Hathaway. The amount of shares that are being put up would essentially mean that Berkshire Hathaway is exiting its entire stake in Kraft Heinz. Warren Buffett himself had been really critical of the fact that Kraft and Heinz will be breaking up, but this would also be a bold new move with Greg Abel, the first time at the helm of the company. Those shares falling just under 5% in the pre-market. Lisa?
Thank you so much, Danny. We are here currently looking at some of the retailers. Gap seeing a steady sales rebound in its recent quarters, led by its namesake brand and Old Navy. We have the CEO of Gap Inc., Richard Dixon, here on site, looking like a poster child for the Gap. You always do. You look fabulous, as always.
Thank you.
I want to start with, we've been talking about how this Davos feels different. It is a transactional Davos. This is one where virtue signaling seems to have gone out the window. And you're here talking about your initiative to be sustainable with water and your Get Blue initiative with Matt Damon. How much do you feel like you're going against the grain here?
You know, I think Gap as a company has always prided itself on doing what's right. The origin story of our company was bridging the generation gap. We've evolved over the years to a purpose that we believe is incredibly powerful, which is bridging gaps to create a better world. And identifying that as a really important narrative in Davos, it's been about a dialogue. And that's really what Davos is about, having dialogue. And we believe the context of the content here for us has always been about purpose and profit. There's not one without the other. I mean, the more profitable we are, the more purposeful we can be. The more purposeful we are, the more profitable we can be. And so we think of ourselves integrating both, and I think that is the representation of our company. And here at Davos, we're doing just that. I mean, you mentioned the initiative that we're doing with Matt Damon and Gary White with water.org. We've created a campaign together called Get Blue, inspired by the Red campaign. which, by the way, Gap was a founding partner of. So it is part of our heritage, and we take a lot of pride in that. As you may know, water is an incredibly important conversation around reduction, recycle, reuse. It's scarce. What we were incredibly inspired by is this stat where 2.1 billion people today do not have access to clean or safe water. 2.1 billion people. And so that is a gap between those who have water and those that need water. And we believe Gap's on the forefront of creating that conversation here, soliciting more partners to get behind it. And we take a lot of pride in that effort.
But don't you feel like this Davos feels different? That there aren't as many people who are interested in hearing that message, and maybe it goes to the sort of divide between generations. But here people are looking to do business. They want to get deals done. They want to make money. They want to figure out what makes sense. It's a much more sort of practical, not touchy-feely type of Davos. Don't you feel that in a really concrete way?
I wouldn't disagree with that. But I do think as we are in Davos, the topics of conversations, obviously minute to minute, we're getting lots of different updates and how the world changes. And obviously there's a lot of business leaders here. There's a lot of dignitaries here, government leaders, and it is a merge. You know, it's a merge of all of that topic and conversation. So while there's dialogue, I think, on multiple subjects, it is true probably that the world of sustainability has not necessarily been the topic of conversation. But we at Gap take a lot of pride in the integration of that as part of our strategy. 50% of the world's GDP is dependent on nature. We're partners with nature, whether we like it or don't like it. And so it is a really important part of the dialogue. It's an important part of our business strategy. We can't make the great clothing that we do without water. And if we're intending on growing our business, well, we have to make sure that there's water in the world. And then that adds responsibility to what we do. And we're very, I'd say forthcoming around the fact that we're making progress, but it's certainly not perfection. And I think we're a champion here this week at Davos.
Davos is certainly a place for dialogue. Also, in the absurdity of it, I heard this whole pitch from Gary Wright and Matt Damon because I sat next to them randomly at a dinner.
Okay.
And I'm curious to know, I remember that Gap Red campaign. It's also profitable.
Yeah.
It is a way to spark consumer excitement and get people in. What are you actually planning for the store?
Well, that's a good point, because I think done well, it drives relevance. And
Yes.
relevance can drive revenue. And in the context of that integration, it is one and the same, right? So the Red campaign, which we were a founding partner of, is a great example. Taking a meaningful message that resonates and then developing products and partnerships and programs that bring more awareness and then more revenue to solve the problem. Get Blue is a very similar methodology. And it is a methodology to solve, if you will, the water solution. It's not necessarily the solution, but it is a methodology and a mechanism that we think is going to be very powerful. We're going to create a line of great clothing, obviously, that will be intended to drive more awareness, as well as part of the proceeds will go to help fund water.org. We've got amazing partners lined up: Starbucks, Amazon, Ecolab, and we're out here soliciting more support for it. So it will be a meaningful, what we call, movement that will help solve the issues of our day.
When it comes to relevance, right now the consumer has so many options. And we continue to hear from business leaders, though, the consumer is resilient. What are you seeing at your stores?
We concentrate on doing the best job that we can with great style, great value, great product, great quality. It is our job, day in, day out, to solve and attract that consumer to our brands. It starts with product, of course, but the narrative around that product is what drives relevance. And so we take a lot of time as storytellers to tell our brand stories. And we're doing a good job. I mean, it resonates. We had, as we reported last quarter, 7 consecutive quarters of comp growth, led by Gap, which is our founding, flagship brand, up 7%. And that's, again, consistently delivering. Old Navy, our largest brand, was up 6%. Banana Republic on the scoreboards up in single digits as well. So it's resonating. The message is resonating with our consumers. Our product is resonating with consumers. And ultimately, that can create a flywheel. Better storytelling, better product, better retail execution. Retail is detail. Every detail matters. We hear every day, some good experiences and then some places that we need to work on. So we're always talking about progress, not perfection. But it's working.
To build on what Anne-Marie's talking about, the sort of choicefulness or pickiness that people have because of the greater focus on affordability and the fact that there has been a real erosion of that. We did speak a number of months ago, and you were saying that people will pay for quality. Are you seeing difficulty passing along prices, say, from tariffs or from increased costs more generally because of the price of commodities?
Well, I think, consumers are smart. They see value. They know authenticity. And we pride ourselves on being, you know, an authentic brand with great price, great value, great quality, and great style. That's not easy, by the way, at scale. And certainly with all of the headwinds, tariffs included, we and our teams are doing a fantastic job organizing around the consumer value proposition. And so as you can imagine, behind the scenes, there's mitigation strategies as we absorb tariffs. There's the day-to-day expenses that we have to consider running a business of our scale. But with the consumer in mind, all day long, we're able to present a portfolio of assortment of products that are appealing to them. And it is resonating. So the more that we focus in on doing what's right by the consumer, and we have the expertise to manage that day-to-day and what we call control the controllables. There are certain things that are not in our control, as we here sit in Davos. But what we can control, we can execute with excellence and deliver that proposition to our consumers and our shareholders.
To talk about the uncontrollable, because it does seem like there's a huge focus on geopolitics. How difficult is it to adjust if the regime of tariffs is shifting, if there isn't sort of a stable backdrop that you know you have to adapt to?
Look, it creates complexity, and our company is, you know, in its 56th year, and there have been lots of different dynamics, both in, you know, political, you know, waves and policies and various different headwinds that we continuously have to deal with. And again, we go back to controlling the controllables. The dynamics of doing business today are quite complex. We all wake up in the morning and see the news and see that we've got new subject matter to deal with. But it's really important to stay steady and stay consistent, and in our case, stay very focused on the consumer. And we've been doing a good job of that. And so, again, headwinds will continue to come, but I think as long as we have a strong team, we really focus on our strategic priorities with the right due diligence and execute with excellence, good things happen, and you get that flywheel that continues.
Richard Dixon, wonderful to have you here. Thank you so much. Richard Dixon, the CEO of Gap Inc. Right now, let's head over back to New York and get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. President Donald Trump on his way to Davos after a more than 2-hour delay. The president's plane had to return to Joint Base Andrews shortly after taking off due to a mechanical issue. President Trump was eventually able to get on a replacement plane. The president is still expected to speak at 8:30 a.m. Eastern, 2:30 p.m. Davos time. Treasury Secretary Scott Bessent says he's not sure why Fed Chair Jay Powell is supporting Fed Governor Lisa Cook. Powell is planning to attend today's Supreme Court hearing where the justices will hear oral arguments over President Trump's bid to fire Cook over alleged discrepancies on mortgage applications. Bessent says Powell is, quote, politicizing the Fed. The European Union is ready to strike back against President Trump's Greenland tariffs. EU President Ursula von der Leyen sharing the bloc will back Greenland with a massive European investment surge and strengthen its security arrangements. Von der Leyen went on to warn current rhetoric is creating a, quote, dangerous downward spiral between allies. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, the U.S. versus China.
China is doing a lot more on energy, which is, it's just building out a huge amount of energy so that it can support its AI business. It's not just competition from within the U.S., but it's also competition from China.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are getting into the close, big event of the Davos of this day. We have, of course, that speech coming up in just about an hour and a half, I believe. President Trump will be speaking to the World Economic Forum. Right now in markets, you are seeing a bit of a bid into equities after yesterday's sell-off, although not necessarily retracing the losses. We're seeing just a gain barely of 0.1% for the S&P. You are seeing a bid into bonds, but barely, down just a basis point. You are seeing that bid into gold persist, up 2%, hitting yet another all-time high. Under surveillance this morning, the U.S. versus China.
China is doing a lot more on energy, which is, it's just building out a huge amount of energy so that it can support its AI business. They're more focused on applications as opposed to foundation models. But that said, I mean, we saw DeepSeek. So to my point about the ability of all these firms to earn the kinds of profits they do, it's not just competition from within the U.S., but it's also competition from China.
That was former IMF First Deputy Managing Director Geeta Gopinath of the rising competition between the United States and China. Joining us now, Mitchell Green, the founder of Lead Edge Capital and a seasoned investor in Chinese markets and in big tech just broadly. One of the seed investors in a lot of the big names that we talk about today. Thank you so much for being with us today, Mitchell.
Thanks for having me.
Do you think that there is a market delineation between how far China has gone with the energy and some of the specific areas that they've developed versus the U.S.? Do you think they're getting an edge right now?
They're not getting hurt, I can tell you that. I think there's, it's interesting how much investor sentiment has changed actually in the last even year towards China. Like a year ago, if you look at Alibaba, I think the stock's up 90% or something in the last year. Tencent traded on the Hong Kong Exchange is up like 50%. These things trade at mid-teens multiples. And I think people are realizing that, you know, China could be a big growth area over the next decade.
One thing you've been vocal about is that valuations are getting a bit stretched in the United States, particularly in non-big tech. The big tech names you've said in the past are going to be fine. It's sort of in the other places. Do you feel the same about Chinese tech companies, or do you think that the valuations still have a far way to go before they catch up to their U.S. counterparts?
There is definitely still a discount in Chinese equities relative to American counterparts, for sure. And I think there is. It is, you know, the one challenge with a lot of the Chinese internet companies, Baidu, Tencent, Alibaba, is they frankly just don't grow that fast right now. The economy in China is not doing particularly great. I think that's pretty well known. But what's crazy is like a company like ByteDance, if something like that went public, and who knows, I'm sure it'll go at some point. We obviously are investors in it. But like the growth of that company, I think would like astonish people. And like I probably would be a catalyst for getting people excited about Chinese equities again.
Is it just an issue of valuations, or is there something endemic in the way that China is developing their AI versus the way that the United States is developing their AI that makes you more interested, maybe right now on a valuation basis,
in what's going on in China?
The stuff we've done in China is gigantic businesses. ByteDance, Alibaba, Ant, Tencent Music. So I will say this: when I read that a while back that the Chinese weren't able to get a bunch of these chips, and then yet DeepSeek came out, it did not surprise us at all. These people are like highly intuitive. They work their living butts off. They're like really creative people, and they solved a lot. They cut the training costs with a massive amount with using like software engineering and things. I think it's the early stages of it. I think what's going to happen is, we're not an expert on these models. Like, shame on us. We could have invested in Anthropic and OpenAI early. And by the way, the secondary markets are so robust now. We could have sold and made an absolute fortune. I think clearly at Davos, there's something happening with a lot of countries around the world realizing, like, if you're a European company now, you could go use a Chinese model. And a lot of these countries around the world are trying to find alternatives to U.S. companies. That's going to take a very long time, and hopefully we can course correct it and everything. But I actually think like more U.S. agitation around the world will benefit like smaller Chinese AI companies, and more people are willing to say, hey, you know what? In the UK, 5 years ago, 3 years ago, I wasn't willing to use DeepSeek or some Chinese model. Like today, I will, and it's a fraction of the cost. And I do think that models like DeepSeek and others in China and in the US are going to drive pricing down for all companies leveraging these models a lot. Like, we think pricing is going to fall a tremendous amount.
So it sounds like the tension between Washington and Beijing makes you want to lean in to China instead of being scared.
A bit, yeah. Look, I mean, you tend to make lots of money when, be greedy when people are fearful, and the reverse. We bought a lot of ByteDance stock a year and a half ago when, at what we thought were extremely attractive multiples to like the growth rates.
When you say DeepSeek is happening without these U.S. chips, do you actually think it is without U.S. chips, or do you think that potentially...
I have no idea, is the short answer. I do think, like, we were like very... We were invested in Alibaba for a very long time, and I will tell you that what those engineers in China can do, and you can just read all this data, like number of PhDs, number of like patents being authored, and all this stuff. Like, China is accelerating in a lot of these different areas, and it doesn't surprise me. They're also trying to build a giant semiconductor business as well right now.
When it comes to the AI race, do you think they're on par? I mean, that's almost how Jensen Huang once put it to me. Or do you think actually China might be ahead of the U.S.?
Jensen would be the person to ask. And if he says they're on par or close to par, it wouldn't surprise me. I wouldn't bet against them, put it that way. I wouldn't bet against American ingenuity as well, but like the Chinese, it's funny, if you look at like a Tencent or a ByteDance, and they think the rise of super apps and how people shop and like live shopping and all these things, a lot of internet, I mean, just think about TikTok, like all that came out of China. Like a lot of the U.S. used to lead in like the trends for internet. A lot of those trends are now coming out of China.
One thing that's created some skepticism recently, and I know for you as well, has been just valuations in the U.S. We keep looking at that. OpenAI in particular, particularly given some of their funding rounds and some of their dependence on some of their customers to give them funding to buy, so the circular funding, et cetera. Do you think that that's kind of a linchpin that people are looking past, that potentially it has a systemic risk effect in the U.S. tech economy that people are overlooking?
I believe Howard Marks said, when it looks like a bubble, smells like a bubble, it probably is a bubble. And every like period of like tech exuberance, the PC revolution, the internet bubble in 99 or 2000 led to massive changes, which is what AI is going to. AI is going to be incredible. It's, by the way, people are going to overestimate it in the near term, and they're going to underestimate it in the long term. We could have sat here, if I was sitting here with you in 2000, well, we were in high school, but we would have been sitting here, and none of us would have talked about social media. Today, it is like a $3 trillion market cap category. The same thing will happen with AI. And in terms of, look, without going into the details of Anthropic or an OpenAI, there will be winners, and there are probably going to be spectacular losers as well. You have to, some of these like circular deals sure start to look funny. I think the party continues on until one of these companies has problems raising capital, but they sure haven't had any problem with it since. What surprises me, you'll talk to bankers and things like that. the IPO market is great. Like, look at Medline. The stock is up 50%, and it was a big IPO. It's like a $50, $60 million company. I would think that in the next 6 to 12 months, we see one of these things go public. You'll then probably see a whole wave of other ones go public. And then, you know, when you start to see the junk go public, you then probably realize you're near the top.
How conservative are you being right now? Are you deploying all your cash? Are you holding more?
We've been pretty conservative. We've taken a lot of our capital at our fund and invested it outside of Silicon Valley. A lot of like bootstrap companies. We're investing aggressively in software right now. I mean, the software markets have been destroyed. Everybody thinks companies like Workday are going to disappear. I mean, it's completely silly. It's a 99% gross dollar retention business. People think Salesforce is going to disappear. You know, like I've tried to use these cursors, and it's like what people don't. And I'm not a coder. What people don't understand is these software companies have giant distribution networks. R&D. These companies are not building semiconductors.
Yeah.
It's not actually hard to build it, but it's hard to get the customers, service the customers, add on products and things like that.
Your business is investing in private equity and private shares in small companies that are going to potentially grow significantly. How much are you also investing in public equities?
We take a portion of our capital and invest in private equities. Given the sell-off over the last few weeks in software companies, we are buying public stocks right now. We are buying public software stocks today.
Much more so than private.
Than we were a month and a half ago. Yeah, for sure. Stuff's cheap. I mean, there are small, mid-cap software companies that have 99% gross dollar retention that trade at 12 times EBITDA and are like, the stock prices are lower today than they were 5 years ago. Now, maybe 5 years ago they were overvalued, but that's really cheap.
Mitchell Green, wonderful to have you here. Thank you so much.
Appreciate it.
Really good to have you. That was Lead Edge Capital founder Mitchell Green here talking about artificial intelligence, one of the three prongs here at Davos. It's AI, it's deals, 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 and then, of course, it's the geopolitics, which brings us back to what we're going to be hearing on the main stage with Donald Trump.
That's right, 2:30 local time. We'll be hearing from the President of the United States. It was supposed to be derailed because he had a little bit of trouble taking off, but nope, it's not. He is on time, and that's what everyone really is waiting for when they want to hear from the president, because many people want to know what is going on with Greenland, what does he have to say about affordability, and they're just lining up to potentially also have a meeting with him.
Yeah, that's the other thing. There seems to be an increasing influence of governments in private businesses. And private businesses are very aware of this and very much on tenterhooks waiting for this conversation because they know it will influence them.
Well, especially when the United States is taking equity stakes in a number of companies.
Yeah, this is something that we're going to be watching. Coming up in the next hour, we've got TCW CEO Katie Koch. We've got BHP CEO Mike Henry on the huge rush to all of the mining products that build up the ecosystem of AI. GE Vernova CEO Scott Strozek and Republican Senator Tom Tillis, who's been making a lot of waves. We are seeing a bit of a bid back into equities after yesterday's sell-off, a question of the calming down of markets by the Bank of Japan and, frankly, by a big Japanese bank potentially buying those bonds. It seems like they're kind of the tail that's wagging the dog right now. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Nobusan, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The U.S. must maintain leadership around artificial intelligence.
We're in an inflection point for AI.
Energy is a key driver of everything that we're going to be doing to drive this AI race.
What you're seeing is the construction of the supply side of the AI economy.
Productivity, I think, will go up for sure. Whether that translates into profits is what I'm questioning.
Bloomberg Surveillance, live from Davos with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from Davos, Switzerland, for our audience worldwide. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and the focus is just one thing. Later on this afternoon, an address by the President of the United States, which is going to shake up this forum. The Europeans on edge, and yesterday the gloves came off. And it wasn't just the French. It was the Canadians as well. The reserved Prime Minister Mark Carney being very, very blunt about a new world order, calling it not a transition, but a rupture. What does it mean for financial markets? 2% from all-time highs on the S&P 500. And Lisa, credit spread still at historical tights.
Yeah, this isn't necessarily a wholesale dumping. However, this morning we had seen a bid into equities. We had seen a bid into bonds. That is fading as the session grows older, just turning negative in the S&P 500, now down about 0.2%. It just highlights the skittishness right now in committing to U.S. assets among this much volatility in some of the geopolitical headlines.
I have to say, before we get deep into Sal of America stuff, it's curious to me that we wake up this morning talking about Sal America after a 6-7 basis point move at the long end of the US curve when we saw a 20 basis point plus move in Japan. Shouldn't they have been the headlines today? Like Sell Japan? Isn't that the headline?
I think people don't care if it's Sell Japan because, yes, it's Sell Japan, but for fiscal concerns. And I think the real question is how much is it Sell America because of an unreliability in policy coming out of the United States? It clearly is igniting some pushback by the administration saying a couple people are speculating. And then, of course, your great conversation yesterday with Sergio Armati saying there is no alternative to Treasury. So try to diversify away from the United States assets and good luck to you.
The number one question I've fielded so far being here in Davos from people on the outside calling in, they'll say, so tell us, what's the vibe like? What's the vibe like? And my response to that is pretty simple. Draw a very fat line between the vibe the European officials are ultimately communicating and the vibe you get from business leaders. European officials on edge. Got that. Drama. Understand it. Americans and global business leaders still looking to America to invest, still bullish on the U.S. economy. I did a panel about an hour ago, had several business executives and economists as well, and asked them, okay, we've talked 45 minutes about the risk on the horizon. Let's boil it down to one thing. Is the S&P 500 going to be higher or lower by the end of the year? What did everyone say?
Higher.
The S&P 500 is going to be higher by the end of the year. So what's changed? And are we mispricing the crazy? And how crazy is this afternoon going to be?
What just changes the rhetoric? The president is obviously coming here with a determination Washington to have some sort of negotiation or deal when it comes to Greenland, something he's been talking about since 2019. Obviously, the rhetoric is incredibly hot. You have it feeling like, for the Europeans, an existential threat. But business leaders are just almost looking through. They view all of this as they've pretty much been trained. All those reports about Trump wanting to leave NATO in the first term. Actually, Europe's spending on collective defense. All that report of all these crazy high tariff rates. Guess what? At the end of the day, it wasn't new rules of engagement. It was actually just the start of a negotiation. And I think that's what everyone is taking it here. You see a lot of people roll their eyes. They say it's a distraction. And the Treasury Secretary says, take a deep breath. I think there's going to be an off-ramp.
Let's take a deep breath and check out the price action. Lisa mentioned some of it. Equity futures were positive in the last 10, 15 minutes, just rolling over a little bit, down by a few tenths of 1%. Coming up this hour, we'll catch up with the TCW CEO, Katie Koch, the BHP CEO, Mike Henry, and North Carolina Senator Tom Tillis with a few things to say about central bank independence a little bit later. We begin this out with President Trump preparing to deliver a special address at the World Economic Forum right here in Davos, Switzerland. Bloomberg's Tyler Kendall stands by with more. Tyler, the president had a bit of a delay, but we understand now he's on schedule.
Right, exactly. Good morning, John. We are expecting President Trump to take the stage there in Davos, still at 8:30 a.m. Eastern, and it really feels like domestic and foreign policy are about to collide because the White House had already previewed that the president's remarks are supposed to be focused on affordability, as officials say that he will roll out in more detail his plans to reduce housing costs in particular. That includes a new proposal to allow Americans to pull from their 401ks in part for a down payment on a home without penalty. But we're really expecting him to also hit on some of that more populist economic messaging that we've heard from him in recent weeks. Hit on those proposals we already know, right? Like capping credit card interest rates, or the fact that yesterday, before he got on that plane to come to Davos, he signed a new executive order aimed at limiting institutional investors from buying single-family homes, though worth mentioning it does fall short of any new regulations. That's the domestic side of things, but it is going to be hard to ignore the geopolitical tensions that have been flaring as President Trump has downplayed threats from Europe that they could pull out of the U.S.-EU trade pact or issue their own retaliatory tariffs if the U.S. does follow through with the threat of a 10% levy by February 1st against those countries that have rallied support around Greenland. Now, I will say our own analysts at Bloomberg Economics say they see a higher probability that President Trump is going to ease rather than escalate tensions when it comes to Greenland. And, John, that is partly because after the president gives these remarks, he is expected to have a series of meetings on the sidelines there in Davos where we may be able to glean some more details on if there is a potential off-ramp, whether that be U.S. military assets moving into the region, getting more access, or some sort of economic cooperation agreement, because President Trump himself says he thinks the U.S. and NATO will emerge happy, in his words, from these discussions, despite what has been grave concerns from our allies in recent days.
Tyler Kendall with the latest in Washington. Tyler, thank you. That address just a few hours away. Let's get the view on Wall Street. TCW CEO Katie Koch joins us now for more. Katie, good morning. Good to see you.
Good morning.
It's great to catch up.
Being with you guys.
Thank you for being here. I was going back over what you said 12 months ago.
Oh,
Don't worry, it's all good stuff. Everybody was so bulled up on America, U.S. exceptionalism. You were slightly more reserved about things. Give us an update on where you stand now.
Yeah, so we all know the consensus at this conference is notoriously incorrect. And actually, someone explained why to me earlier this week, which I thought was interesting. They said because this is a gathering of CEOs. And by definition, we're very optimistic. We're up into the right people. They said they should change this to a gathering of just CFOs. And then we'll get a very different consent, which I was like, oh, there's some wisdom in that. But we're a little bit more cautious than everyone else. I would say this, I just don't think we had an edge on calling whether this was going to be a great year of U.S. hegemony. This is looking back to 12 months ago. What we did know was that even if that was true, all of it was already priced into markets in our view. And so we entered the year 15% underweight credit. And then, as we know, we got the volatility. And as an update on that, the day after Liberation Day, we stepped up and we bought $6+ billion of credit, closed the gap because spreads had widened. And that was very impactful for our portfolios. It led us to have 80% of our fixed income portfolios in the 26th percentile or better. So we're just, we wait for those moments of try and think different, wait for those moments of volatility and lean in.
April was certainly one of those moments. And in April, you read the headlines, we all did. Some of us wrote them. It was about sell America, sell bonds, and ultimately you saw a weaker dollar off the back of that. interesting to me that you see a 6-7 basis point move on a 10-year Treasury, and we're back to that story all over again. How do you think about the potential for diversifying away from U.S. assets in the months and years ahead?
I think this is an important question. My ultimate answer is I think there is going to be some marginal move away. I'd like to talk a little bit about Europe first, how I think they're going to react to the current dialogue, if they're going to react to it, and then the broader investment community. So if we start with Europe, they have two options here for leverage. The first is the anti-coercion, which you guys are obviously well aware of, and that, let's just call that slowing trade dramatically. The second is that they can dump U.S. assets, and they do own 40% of the foreign ownership of the U.S. bond market is European. So they, in theory, have a lot of leverage. Will they use it? I think that's highly unlikely because number one, it would be self-defeating. It would create damage to themselves. And number two, you gave that quote from Sergio before. Currently, there's not a lot of great alternatives. But let's broaden it out to the investment community and think short and long term. So for the broader investment community, I have been meeting with the world's leading asset owners here and all throughout the year. And I would say they are looking to diversify away from U.S. assets. And I would kind of describe it as quiet quitting of U.S. bonds. I don't think there's going to be a massive announcement. I just think they're going to look for opportunities to diversify away. From a short-term perspective, what happened last night? Because you asked about last night, I want to follow up on that.
Sure.
I mean, it's called Sell USA because we had the dollar sell off, the bond market sell off, and equities. That's not a good day in the U.S. markets when that happens. A day doesn't make a trend, so we have to see how that plays out. If it continues, this administration will get it back on track. Why do I think that? There's a lot of reasons, but a main one would be U.S. voters care more about lower rates than Arctic security, I think. I haven't polled that, but that would be my guess. And so they will likely get it back on track. What we're going to get, in our view, is more volatility, and that's great for us as asset managers. From a long-term perspective, I do think you're going to see this phenomenon I called quiet quitting and stepping away from the bond market. We can talk about that because I think there's a lot of interesting things happening
So
there.
let's build on that. What does that mean in terms of how high yields could go, what type of haven or not the bond market really provides, and whether you can start to trade on that if that is a longer-term phenomenon now?
Yeah, so why are they doing that? Why are they looking to diversify? There's a push factor, and I think there's a pull factor. The push factor has been pretty well reported on, which is the fact that they're overexposed to the U.S. because the U.S. has outperformed for a long time. We're highly indebted, and this is a fixed income comment, we're highly indebted. The currency people think could be weak, and we have a lot of policy uncertainty. So that's what would make people kind of want to move on. The pull factor, which people talk less about, but I think is super compelling, is that global diversification in fixed income markets is actually valuable for the first time in a long time. So John talked about, I think you said this on air, but we were talking about the fact that people sold treasuries, they also sold JGBs. That is true. Now, that caused spreads to widen out. Actually, at the very longest end, up to 50, 60 basis points. This is the highest yield we've had in Japanese bonds in my whole career. So I actually think the overnight selling of U.S. Treasuries was to buy some of these JGBs. I know that because that's what TCW has done over the last 24 hours. We came in our global portfolios. We were underweight Japan, and we used this dislocation as an opportunity to step into the Japanese market and close 80% of that position. So I know that other people are doing that, and I can make the argument for Japan, I can make it for parts of Europe, I can make it for parts of emerging markets, that there's just better relative value. And that is the pull factor that I think we'll continue to see play out. And why I'm saying quietly is because sophisticated investors, when they are in a position that they think is mature or they want to work out of, they usually don't scream it from the rooftops, right? They quietly will move away from that. And I think we're going to see more of that.
This is the sovereign debt side, that maybe the sovereign debt side of U.S. markets looks less attractive. Is it the same story when it comes to risk assets, when it comes to credit, when it comes to equities, when it comes to some of the momentum that we hear from the business executives that we're speaking to here at this forum?
Yeah, I do think it will be true of broad credit as well as equity markets. I want to say, though, we still see a lot of upside opportunity in U.S. markets, too. I just think you have to be very selective about where to look for that. Obviously, people are extremely excited about AI here. I'm kind of scared to talk about it because you've probably done that a lot already on this program. I have a lot of views on that. And so we are invested in that. We actually started investing in AI. We launched a strategy 10 years ago, so we've been in this space for a long time. I would say one of my observations here that's a little bit more balancing on AI is that it's very clear that the people most excited about it are the tech companies, but they have to sell that to someone. And in the CEO community at all these roundtables, I think there's enthusiasm to do it, but there is a lot of friction to get to be a true enterprise user of this. What I mean by that is that you have to reimagine workflows and org charts, and actually people have to be willing to disrupt themselves. And so there is a lot of friction. Yes, the technology is amazing. As I said, we've been focused on it for a long time. It's going to transform the world. I really believe all of that. Massive revenue opportunity. I just think it may take longer to fully realize it on an enterprise basis than other people do. What we are super excited about right now is the power transformation that's supporting AI. And so 3 years ago, we launched an ETF, PWRD, a power ETF, that's investing in the power transformation in the US. The generation, the transmission, the storage. And why are we doing that? Because power in the US is going from a sector that basically had no growth for the last 20 years to something that we think will double in growth out by 2050. And when any sector of the economy does that, that actually generally brings strong returns behind it. And here's the good news about power. You get this tailwind of AI's part of it. It's the electrification of everything. And then also that we're reshoring supply chains. That's creating constraints. You can invest in those themes in utility companies, right? So people aren't talking about utilities here, right? They're talking about AI, but that's a way that you can actually really benefit from it. And if you look at that ETF last year, it performed a couple of points short of NVIDIA, outperformed all the Mag 7 and parts of the tech sector. So this is like the picks and shovels. There might be other ways to approach these themes.
This is also an important theme for the president in a midterm election year when it comes to power and electricity prices. Do you see that as a tailwind when the United States and the President of the United States make something a priority?
I do, and I also think affordability is going to continue to dominate as a topic, and that is something that we have to solve in bringing more supply to the power market. And there's a real debate that's going to continue with that, and I think it's going to create challenges for some of these AI companies in scaling because the country is going to want to deliver affordable electricity to Americans.
You've given us a lot to unpack. My takeaway, buy Japan.
That's exactly right. To me, 100%. To me, the headline
of that... Not to undermine everything else,
no,
just, you know.
The headline to me was in the past 24 hours, TCW is
Katie put in a call last night, you know,
going over to Japan.
Don't you feel like the headline is invest with TCW?
Yeah, okay, obviously.
That's why I feel like the headline is.
I can't say that.
Bloomberg terminals everywhere.
There you go. She wrote her own headline.
Katie, thank you.
It's always fun to be with you guys.
Thank you very much. Thank you. Katie Koch there, the TCW CEO. Let's give an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. President Trump's special envoy says he'll travel to Moscow tomorrow with Jared Kushner to continue Russia-Ukraine peace deal talks.
The president is focused on that peace deal. It's a very, very important part of his agenda. The Russians have invited us to come, and that's a significant statement from them. I think everybody is embedded in the process and wants to see a peace deal happen.
Ukraine President Volodymyr Zelensky was planning to go to Davos for possible talks with President Trump, but said he wouldn't come unless there were agreements to be signed on security guarantees. NVIDIA CEO Jensen Huang is set to travel to China later this month as he looks to reopen the country's market for the company's AI chips. Sources telling us here at Bloomberg, Huang will be headed to company parties ahead of Lunar New Year. It's unclear if Huang plans to meet with Chinese officials. Larry Fink, the interim co-chief of WEF, is thinking about a venue change for the flagship event. On a post on LinkedIn, he mentioned Detroit, Dublin, Jakarta, and Buenos Aires as possible future sites. Relocating the event would be a blow to Switzerland, which has benefited from the forum being held in the Alps for decades. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, betting on the US.
The U.S. is the strongest economy in the world, the one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the U.S.
what is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Live from Davos, Switzerland this morning. Good morning to you all. The main address a little bit later this afternoon from the President of the United States. Typically, we look at the price action at a time like this on any given morning, and I'll say something like, we'll see if this sticks. I've got no idea if this price action sticks because I've got no idea what the President's about to say later on this afternoon. Equity futures rolled over about 30 minutes ago. They're now down by a few tenths of 1% following yesterday's sell-off. And I have to say, there's no buying stepping into this equity market, at least no big buying so far this morning.
Yeah, and frankly, you're not seeing big buying step into the bond market either. So even though you've seen a little bit of calm there, same story again. All could be very much shaken up in just a couple hours' time.
So there is a big divide between European officials who are very bearish about the situation at the moment and American CEOs, and for that matter, global business leaders. Under surveillance this morning, betting on the US.
Diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US and also from the dollar is a quite dangerous bet. The US is the strongest economy in the world, the one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the US.
That was the UBS CEO, Sergio Eramotti, in the last 24 hours or so. To catch up with another major business leader, I'm pleased to say that joining us now is Mike Henry, the CEO of BHP, a multinational mining company, in fact, the biggest on the planet. Mike, it's good to see you, sir.
Great to be here.
I'm sure you're happy. Metals are at all-time highs. We've been talking about it on Bloomberg Savannahs repeatedly. Copper higher. It's not just copper. It's base metals across the board. Is there pressure building to find more supply, and what's coming online?
Well, so I think it's been that pressure to find new supply that's underpinned the price escalation that we've seen, certainly in copper. So this is something we've been talking about for years. We talk about the fact that copper demand is ubiquitous, used in all walks of the economy. You layer in on top of that the energy transition, renewables, very copper intensive, and data centers. So data centers, your previous guest was talking about how energy intensive they are. That requires more copper, and yet copper is getting harder to find. Deposits are smaller, lower grade, deeper. BHP starts as the world's largest copper producer, and we've grown by 30% in the past 3 years. We have 4 big growth prospects ahead of us, including one in the U.S.
We've got it ready to go in Arizona, I believe. Resolution Copper. I talk about it on the show so often.
We're chomping at the bit.
What is taking so long to get that joint venture moving and get the copper out of the ground?
Look, so it's held up under a administrative injunction currently. So I can't speak highly enough of the support that we've seen from the administration. So the administration, be it Secretary Burgum, Secretary Wright, President Trump, have been very keen to get more mining and processing going in the U.S. because they understand the importance of critical mineral supply chain resilience. And of course, it would support the U.S. economy and specifically the Arizona economy as well. So we're all ready to go, but we have to let the legal process take its course.
How long has it taken? More than 10 years?
It's taken a long time.
Yeah, I mean, I guess can you just quickly put a bow on that and say, is it going to be expedited in a serious way? Could we see it in the next, say, year or two lifetime?
It's very hard to predict. We were almost there a few months ago, but it's been held up for a little bit longer. We remain optimistic that it will ultimately be a project that goes ahead. It could supply 25% of the U.S.'s copper demand for decades. So this is a pretty significant project, one of the best undeveloped copper deposits globally. And from a BHP perspective, it's but one of 4 major copper growth projects in the portfolio.
You sound like the administration has been really helping you and your business. At the same time, there's potentially more tariffs coming down the pipeline when it comes to this administration. How do you navigate that environment?
So, look, it is a more volatile, uncertain environment than it has been in the past. But from a mining sector perspective, 5 years ago, it would have been hard to get airtime for mining companies globally. There wasn't a lot of interest in mining as a sector. If anything, there was a lot of pushback on mining, where I think there's been a growing awareness of just how important metals and minerals are to the world. Continued economic growth, economic well-being of billions, energy transition, and the digital transformation. And so broad brush support now that we're seeing, certain strong support in the US, but support in other countries as well. That's something we should all welcome. But of course, there's going to be uncertainty that we need to navigate along the way. The tariffs aren't impacting BHP directly in any big way because we only have about 3% of our revenue in the US currently, but it's something we do keep an eye on.
You got to acknowledge, though, Mike, there's been a change in management in the last 10 years or so, and it was forced by investors. There was a switch from volume to value, to discipline. Is there a little bit more of a push now to get back to a bit more volume? How do you manage the discipline alongside the increase in supply?
Look, so it is all about value. Now, we've been very deliberate in reshaping the BHP portfolio, and this is after a decade of being very disciplined when it comes to capital allocation. We've had license from shareholders to reshape the portfolio in a way that makes BHP more ready for the future. And a big part of that has been growth in copper and in potash, a fertilizer that's needed for sustainable agriculture. So we've been pretty successful on that front over the past number of years, and we're looking forward to executing these big growth projects ahead of us.
You got South 32. That was the spin-off of about 10 years ago.
It was simplifying the portfolio. So
the reason I'm bringing up South 32 is because I'm wondering what you'll do with the coal assets, the iron ore assets of BHP as well. Is it something you might be thinking about, some echoes of that decision back then?
So we always have to have the discipline of thinking about what the right portfolio is. But we believe that the diversified model holds value. We're running the best iron ore business, or best performing iron ore business in the world, generating strong margins. And then our growth focus is really in copper and potash. And that model allows us to have a very strong balance sheet and to fund growth through the cycle, which we see as a differentiator for us.
Mike, a clinic, as always. Let's catch up again soon. A lot to talk about. I keep bringing up Resolution Copper. It's right there.
I know. This is the
it's
frustration.
Like, there's the solution.
Huge copper just resource in the United States. Regulations. Different red
Secretary
tape.
Burgum and Secretary Wright seem keen to get the regulations, though, pulled.
I know. They want to do something about it, and Mike seems to be happy about the progress, and let's see if we make more progress in the year ahead. Mike Henry of BHP. Mike, thank you, sir. Appreciate it. Coming up next, we'll catch up with the GE Vernova CEO, Scott Strazik, as President Trump sticks with big tech and the AI energy bill. That's coming up next.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The open about 2 hours away. Check out the price action after yesterday's sell-off. No positive follow-through, no bounce whatsoever. In the last 30 minutes or so, we roll over on the S&P 500. Down almost across the board. The Russell showing a little bit of life. In the bond market, a sell-off yesterday worldwide. We talked a lot about what developed in Japan. Big sell-off at the long end of the curve. Yields up by more than 20 basis points on 30s, on 40s. A marginal sell-off in the Treasury market, but it spooked investors because of what was also happening in the FX market, which was a weaker dollar against everything in G10. And that's why you get the headlines that you wake up to this morning about the Sal America trade and a multi-year diversification away from America.
Yeah, the price action matches a narrative that a lot of people want to put out there. So a lot of people are building momentum behind that. That said, there are signs that there is a different flavor right now, something more akin to what we saw in April with Liberation Day, with people not flocking to treasuries the same way. The idea that we're seeing now 30-year yields actually higher on the day in the United States, even as we see a rebound in Japanese markets.
Just a judgment on the last 24 hours, because I've got no idea what happens in the next several weeks, next several months, no clue. But if we're going to make comparisons to April, you're going to need much bigger moves than the ones we've seen so far to get the president to rewrite that speech later this afternoon.
We should note, though, that Treasury Secretary did come out pretty swiftly. And we do know that the president has said in the past he likes to disrupt the markets, and he sends Scott Bessent out there to soothe the markets. Scott Bessent came out to try to calm people and say, take a deep breath. There could be a solution. And don't you get the sense, talking here in the conversations we're having, especially the Finnish president saying by the end of the week, he thinks we're going to solve Greenland?
Will we get a Fed chair by the end of the week? Apparently not. This is from a US official just moments ago. The president won't announce a Fed chair pick while he's in Davos. So that's the latest headline on that front.
He doesn't know yet who it's going to be.
I don't think anyone knows who it's going to be. Maybe the name keeps changing. As we count you down to the cash open, let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John, we got some earnings to work through this morning. Johnson & Johnson started with a rally, and now that has changed. In the pre-market, it is down 1% despite the fact it did beat, specifically on its cancer drugs. The issue with J&J that at first folks saw as a good thing is the fact that it's been had to discount some of its drugs because of a deal reached with the White House, and it was able to beat even despite that. Maybe that still is a big weight on the share price. It does see sales coming in between $100 billion and $101 billion for 2026. We also got Halliburton earnings. This is the fracking company. Those were a beat across the board. Shares rise 2.4%. With all the oil services company, we're going to be listening out on the investor, on the analyst phone calls to see if they say anything about Venezuela. They did call out specifically North America as a strong spot for them, so we'll see if anything is mentioned about other regions in the Americas. Finally, Netflix, those shares falling 7.2% in the pre-market. Sure, it was a beat on a lot of their metrics. The issue is the spend. They say they're going to be spending 10% more in 2026 than they did in 2025, which is $18 billion for those keeping track. And then you add on top of that of their planned acquisition for Warner Brothers Discovery. So that bit of the cautious outlook is what's sending shares lower this morning, John.
Danny, thank you. We'll see more from Danny a little bit later this morning right here on Bloomberg TV. Let's get back to it. The president pushing tech companies to pay for new plans to power AI data centers. Joining us now is Scott Strazik, the CEO of GE Vernova, an energy technology company. Scott, it's good to see you, sir.
Thanks for having me. I appreciate it.
I believe you sold out through 28.
We're pretty full for the next 2
You're doing
years,
all right, aren't
but
you?
we're ready to meet this moment. We're continuing to invest in more manufacturing capability in all of our factories in the U.S., and as there's more plants ready with pedestals that need the gas turbines, we'll deliver them.
Okay, put some oxygen into that story. Let's talk about this. How quickly has demand just absolutely exploded over the last few years?
Yeah, and gas, when you think about coming into 2025, we had 46 gigawatts on contract to future deliveries. We're ending the year with about 80 gigawatts, so we almost doubled our backlog over the course of 12 months. We expect that to grow substantially in the next 12 months. So this is a time when the world is very clearly seeing that gas is really a force multiplier that's going to enable a lot of economic growth, but also a lot of their power generation sources that'll be built above and beyond gas power.
It seems like all energy sources are not equal in this current environment, at least not politically. On one hand, gas, yes. Maybe even nuclear, we are seeing some more enthusiasm around that.
Yeah.
Wind, no way. There seems to be a real sense that offshore wind turbines are personas non grata right now. Is that your sense as well? Is that kind of how you're arranging your portfolio?
Well, there's no question that our order book for wind is much softer than everything else in the portfolio, and it's a complicated policy environment. At the end of the day, we talk about applying the right technologies where the right resources exist. Where there's good wind and a lot of land, we should build wind farms in smart ways that can make economic sense. But that is the softest business that we have right now. To your point, nuclear is gaining a lot of momentum. We're having more excitement and commercial discussions on our 300 megawatt small modular reactor than ever in the past, including in Europe. They're seeing the build that's starting to happen in North America, and I would expect for that to follow here. So probably in no administration is all technology sources treated equally. I wouldn't say that all technologies were treated equally during the Biden administration either. So you have to kind of take that step back and then just with every administration, serve them. And that's what we're doing.
How has your client mix changed? Because traditionally it's been utilities more than anything.
You bet.
And increasingly, as John was mentioning in the intro, it really is directly the AI companies and the hyperscalers themselves. How much is that changed the composition of your clients in the business?
Drastically. In 2024, our order book had very little negligible hyperscaler orders. In 2025, it was about 10% of our order book. In 2026, it very well may be 25% of our order book. So the growth is real. The reality is these are good companies take what puts their business model at risk and gains control over that. The reality is these companies need the electrons along with the data and the chip, and they're securing a lot of the long lead equipment they need to ensure that the electrons will be there when they need them.
Scott, I'm glad you mentioned the Biden administration because they did choose winners and losers in the energy space as well. We saw subsidies for EVs that we don't have anymore, and this administration squarely focused on oil. The president wants $50 a barrel. How do you plan for the long term if we have elections and we have another one in 2028?
The good news is that the world is going to need a lot more electrons for a really long time. And in the end, over the long term, they're going to need a diverse set of technologies. So we continue to invest in all these technologies.
Nuclear, though, what's so interesting is that I have heard optimism, Democrats and Republicans, about nuclear, but they really haven't been able to sell it yet to the public. How is that going?
Well, I think we're on the mantle of kind of making progress there. I think that we'll make progress in 2026. I think as people start to see it shift from talking about it to building it, I think sentiment's going to shift in a very material way.
Can that happen before, say, a midterm election?
Well, I don't know if that's not my role to figure out, what really moves the needle with elections. I'm just building power plants and serving the world with incremental electrons right now. But that we can do. And we're going to get a lot more stuff in construction quickly that I think is motivating for everybody involved.
That's the right answer, and I'm sure PR's happy with that. I just want to cut in because we're getting an update about the president's schedule and a bit of a sneak peek about what we might hear from the president in his address later on this afternoon. So according to an administration official, the president's speech later could touch on Venezuela and Greenland. Also, the president has about 5 bilats with European leaders in Davos, Switzerland at the World Economic Forum over the next few days or so. So that's a pretty packed schedule for the president.
Pretty packed schedule. I'm really not surprised he's going to talk about Greenland because that has been the topic du jour here at Davos. And Venezuela, can you imagine? It was just 2.5 weeks ago that the United States went into Caracas and captured Nicolas Maduro. Who are those 5 bilateral meetings with, though? That is going to be key because for the Europeans, what is going on with Greenland and this potential tariff threat on top of it has been existential for them, and they can't see through doing anything else in terms of deals with the United States because of it. Mark Carney yesterday, you brought him up. He said middle countries, if you're not at the table, prepare to be eaten. You're on the menu.
Hey, Scott, I'm not going to ask you about what's on the menu or Greenland, but I will ask you this. The world feels like, particularly sitting here, like it's becoming more polarized. For companies that have international ambitions, does that get a little bit more complex, a little bit more difficult?
Well, I think we need to build a more resilient business model. And to build a more resilient business model, you need to invest in local supply chains to serve local markets, and we're definitely having to do that. But at the end of the day, the demand is very healthy, and our relationships are very strong, and we're very confident investing into these markets. But we do have to assume a more polarized world, and because of that, more local manufacturing capability to serve local markets.
And it becomes more competitive, especially with other countries also trying to build out their power grids. And I just wonder how you toggle between the expense of the inputs that's going up, the incredible demand by hyperscalers that have endless cash, and the average consumer that funds the utilities that doesn't. How do you face that off and limit costs in a conscious way?
I would actually say over the medium to long term, the fact that those complexities exist with all of that growth, this is our moment to ultimately create more cost competitive products because we have more volume. We can invest in our business and our factories in different ways to automate that in the end will bring costs down. So in the early stages of a growth cycle, we're having to make investments in our factories. Medium term, we're gonna win this battle, including the affordability challenge.
There's a question, and just to build on the idea that John was raising about how the world's becoming more complicated.
Yeah.
Does it raise an issue for you as a US-based company that people maybe are a little more skeptical of buying from you if they're from another country, and there are these tit-for-tats going on between the leaders? Is that something that comes up?
We're a very proud U.S. company that's committed to serving our international customers, and I think they understand that, and they see that in our actions every day and the investments that we make every day. And to date, no, we have not experienced that in the end markets. It doesn't mean that every day we don't wake up and know we need to earn it. We need to earn it every day in the U.S. too, right? And that's exactly what we intend to do.
Hey, Scott, it's good to see you.
Thanks for having me again.
Hey, thank you very much. That was Scott Strazik there, the GE Vernova CEO. Just to update you on some of the headlines we got just moments ago for the president and his address a little bit later on this afternoon at the World Economic Forum. He may touch on Venezuela and Greenland. I think the bilaterals are going to be absolutely crucial. Is there an off-ramp? Can we resolve the tension between the European leaders and the President of the United States? There will be 5, according to a senior administration official, 5 bilateral meetings with the European leaders taking place over the next day or so.
So this is going to be really critical when it comes to at least Greenland. As you say, Jonathan, can there be an off-ramp? When it comes to Alexander Stubb, when the Finnish president, he sat here with us and said, I think by the end of the week, this will be resolved. There's been so many phone calls and text messages that the president has actually leaked, and we've been privy to because of that, revolving around Greenland. But at the end of the day, you heard from the NATO Secretary General Mark Rutte today saying without Donald Trump, Europe wouldn't be here in terms of defense spending. So potentially this is part of what the Trump administration would call the art of the deal.
I'm certainly not sitting here endorsing any policy decisions coming from either side, but I'm endorsing the radical transparency. Isn't it refreshing just to see and find out what everyone really thinks
As
at the
a
moment?
journalist, getting an eye on
There's a bias there,
chats,
of course.
on getting an eye on text message chats with world leaders is a dream that I didn't know would come true. And the president just, he leaks it. It's why sometimes actually it's hard to cover the Trump administration. You're on the edge of a scoop, and then Trump just blurts it out.
He just says it. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. President Trump says ICE agents sometimes make mistakes as he broadly defended the migrant crackdown in Minnesota that's led to nationwide protests. Bloomberg News has learned the Justice Department has issued subpoenas to Minnesota Governor Tim Walz and Minneapolis Mayor Jacob Frey, who are accused of conspiring to impede the federal crackdown. The European Union is ready to strike back against President Trump's Greenland tariffs. EU President Ursula von der Leyen sharing the bloc will back Greenland with a massive European investment surge and strengthen its security arrangements. Von der Leyen went out to warn current rhetoric is creating a, quote, dangerous downward spiral between allies. Vice President J.D. Vance and his wife Usha are expecting their 4th child in July. The Vances have been married since 2014 and already have 3, 2 boys and a girl. The couple announced on Instagram they're expecting another son. The last vice president to welcome a baby while in office was Thomas Marshall. That was 1917, and that is your Bloomberg brief. John.
Congratulations to the Vice President and his family. Vonnie, thank you. More from Vonnie in the next hour. Up next on the program, politicizing the Fed.
I am not sure why Chair Powell would go and support Governor Cook. I think that his sitting in the front row of the Supreme Court is a political statement. He is politicizing the Fed.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from Davos, Switzerland this morning. Good morning to you all. Counting down to the main event later on. It's about 45 minutes away. The president's slightly delayed, arriving into Zurich before traveling across to Davos. Ultimately, we're told by the World Economic Forum this should still be on schedule. 45 minutes away, the president addressing not just this convention, but also the world. And there's going to be a lot for domestic consumption as well. There's plenty of different audiences for this one, isn't there?
Absolutely. He's going to have to address, though, the domestic audience, especially when it comes to this idea of affordability. They've been teasing out what they're going to talk about when it comes to housing, when it comes to credit card interest rates, caps, which Jamie Dimon has some interesting choice, sharp words for the administration on that this morning. And then it's going to really be about foreign policy, because the entire conference has been taken up by an island that's inhabited by about 50,000 people when it comes to Greenland. And we understand from the White House the president will address what's going on with Greenland, and then we'll be sitting down with 5 European leaders.
And no Fed pig. At least not yet.
No Fed pig. But okay. You know what? To get to the Fed, you got to get to also the banking committee. And, you know, there's a senior member of the banking committee that's been roaming around Davos as well, Jonathan.
Let's get to that right now. Under surveillance this morning, politicizing the Federal Reserve.
I am not sure why Chair Powell would go and support Governor Cook when the Fed has not undertaken an examination of whether she did in fact commit mortgage fraud. If she did, she is stealing from the American people. I think that his sitting in the front row of the Supreme Court is a political statement, and I agree with him. The Fed should not be politicized. He is politicizing the Fed.
Joining us now, the Republican Senator Tom Tillis at the epicenter of some of the conversations down in Washington, D.C. regarding the Federal Reserve. Senator, good to see you.
Great to see you.
So you're like the human roadblock now to getting anyone confirmed. So let's get into that. Is it about the individual or the process?
No, it's about the process. Look, I made the statement that I did when the news broke about the investigation on Chair Powell, because I felt like leading up to the markets, that was on a Sunday night, that want to send a signal to the markets that the Fed is independent and will be independent, and this legal process needs to play itself out.
Your signal to the market is actually potentially why we saw the market shrug off that subpoena.
Well, and I think also you have to look at people like Chair French Hill and others who weighed in. I think that it made a simple fact obvious. The Senate does have control over who gets on the board.
The Trump administration definitely doesn't like slow processes. So how long do you think this is actually going to take?
Well, it's up to the Department of Justice at this point. I didn't get us here. They got us here. So they need to go through this process, either prevent the facts, fully adjudicate it, or determine what to do with the investigation.
So in other words, until this is dismissed, there's no new Fed chair?
Well, until it's dismissed or 347 days. That's the expiration of my term.
Okay, right now, we're here where you are diverging quite a bit from some of the members of your own party, including President Trump. You've gone back and forth. You're not running for re-election. What do you tell people who try to get a sense of what the American people are going to do or what Congress is going to do? What do you tell them when they approach you here at Davos looking for direction?
Well, I remind them that, you know, the United States, 250 years old now this year, happy birthday, but we're a very complex democracy. It's very difficult to understand. It's difficult to understand the institution of the Senate and why one Senate member in this particular Congress can control processes on committees. You know, we're the cloture maker, we're the deciding vote. So I think it's an opportunity for us to demonstrate democracy at its best in the United States. I support the vast majority of the president's policies, a lot of the whats, but some of the hows to me make no sense to me. Greenland, the what makes a lot of sense to me, project power in Greenland. Why would any fiscal conservative want to spend billions of dollars to buy something that we already have access to? Greenland has offered us a base for $1, folks. We could get 17 bases if you extend that for $17 versus $57 billion or whatever it would cost. Not to mention, the Danes pay about $500 million a year to just keep the infrastructure running for some 57,000 indigenous people on the island. Why do we want to take on that overhead? Is it really about projecting power in the Arctic or something else? If it's something else, maybe I'll look at the business case, but ostensibly it's about projecting power in the Arctic. And the best way to project power in the Arctic is through the NATO forces using their Arctic skills, their ice-breaking skills, the projection of power that we come together. The synergy of the NATO alliance is far greater than anything the United States could do on its own.
Do you know any fiscal conservatives in Washington?
Well, starting with one. No, there are several. I think there are several. Look,
Senator Paul being another,
we've got
maybe?
to start thinking about these other structural decisions that we make that run up the debt already to unacceptable highs. With the froth that we're seeing here, with the uncertainty, with the increasing debt, I worry about almost a level of irrational exuberance. We've somehow been able to withstand some of the uncertainty, but there's a proverbial straw out there, and these sorts of decisions could get us closer to breaking the camel's back.
What does corrective action actually look like?
Corrective action.
What's doable in Washington at the moment?
Well, presumably, even if we were to move forward and there was some deal offered to Greenland and to Denmark, that would require congressional approval. The president doesn't have a blank check that he can continue to run up debt. That would require a process and razor-thin margins. And if it's a process that doesn't play out until next year, it's post-election, we've got to know what Congress looks like next year, or they've got to know what Congress looks like next year.
The president is squarely focused on November 3rd. And this affordability push. Do you expect him to make more phone calls to Senator Elizabeth Warren, another senior member on the banking committee, than to you?
I actually, Elizabeth Warren and I are friends. We're not political friends, we're personal friends.
But
I got on the floor, in the House, I said, Elizabeth, remarkable. You've sold the president on your arbitrary caps on credit. We're no longer going to rate for risk. We're just going to be rating. Basically, what's going to happen, we're going to underbank or unbank a lot of people, and we're going to destabilize the asset-backed securities market along the way. I said, don't get me wrong. It's extraordinary that you've sold the president on this idea, but I'm going to do everything I can to kill it.
But do you think something will be done when it comes to credit cards? Maybe it's the other bill that's being floated instead of swipe fees?
Why would we want to repeat a bad idea? If you're taking a look at MasterCard and Visa, they're working with the small retailer. The retailers have a legitimate concern. And the credit card companies are working that out. We don't need a big government arbitrary solution. We've seen credit card competition acts in Europe, and they've been abject failures. 15 to 70% of all of the travel to Alaska, for example, are through rewards. The money's got to come from somewhere. Do you think that travel is going to be funded in the future, or are those sorts of rewards and programs going to be cut? It makes no sense. It's not sustainable, and I think that we have the votes in the Congress to hold it off this Congress.
The United States has been known for process. That's one reason why a lot of businesses have invested in the United States and the capital markets that we've created. And I just wonder, as you are here with global business leaders, does it worry you that you hear more investors, more businesses looking to diversify away from the United States states because of a lack of predictability of process of policy.
We have to do that. I spent nearly 20 years at PricewaterhouseCoopers and IBM Global Business Services. I would have to tell every client I advised at that time, this is a risk. You've got to reduce your buy box for any sorts of high-risk ventures. And that freezes capital. That tampers growth. That's the last thing we need right now.
Are you going to be in the room in 36 minutes' time?
100%.
What are you expecting to hear?
I'm expecting to hear President Trump give a speech.
And the content of said
That's
speech?
the one thing I'm certain of.
Have you got a read on the content of said speech?
No. I'll hear it when everybody else hears it. But, I will tell you the reason everybody's probably wondering what Stilla's got the bling on for. This is from, we had a new tribe. The largest tribe east of the Mississippi is the Lumbee Indians. They got recognized after 137 years of abuse and neglect. Interestingly enough, they're about the same size tribe, 55,000 of the indigenous people in Greenland. I heard a very important comment when I was in Denmark. They say people can trade, but you can't trade people. We need to make everyone understand that those people on the ground have been there for 4,500 years. They want us there, but they want us there in their territory, not American territory, and it can be accomplished much more conservatively, much more sustainably by cooperation.
Senator, you're a man of principle, a classy guy. It's good to see you. Thanks for being here.
Thank you.
Thank you very much. Senator Tom Tillis there. 40 minutes away, let's call it 35 now, away from the main event here in Davos, Switzerland, at the World Economic Forum, the President of the United States addressing this forum, this continent, and I would say the whole world right now, on edge.
Yep, he had a whole massive disruptor vibe coming into this Davos. He will be on time, we're told, even though it's a little bit of an issue taking off. But it's going to go about foreign policy, Greenland, of course, what Senator Tillis was talking about, but also the domestic issues at home, affordability, because you look at the polling and people are still saying prices are too high.
Just compare the drama from all the Europeans and everything that's going to take place to the optimism you might hear in the next hour from the Morgan Stanley Chairman and CEO Ted Pick, BNY CEO Robert Vince, and NYSE President Lynn Martin. All of that still to come.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Novian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Flutterwave by empowering our customers across all our segments?
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
All roads continue to lead to America. The only wild card is macro geopolitics.
There is some sell America going on.
The world has never been this unpredictable from a policy perspective.
Everything has changed for the global economy.
There's a lot of uncertainties. If the uncertainty tamps down, then I think we'll be back in business.
Bloomberg Surveillance, live from Davos, with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It is Davos Disrupted. Big time. Live from Davos, Switzerland this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The main event is 30 minutes away. The President of the United States addressing this convention, addressing the world. Only so many times in our careers can we sit here and say, you know what? I don't think I've seen a speech this highly anticipated for a long, long time. And this one is right up there.
And part of the reason why is because never before has one person dominated a conversation to such a degree. I mean, honestly, it wasn't just this Davos, but last Davos as well. The Davos man was President Donald Trump, and what that could mean for the global region. And it wasn't even here. He gave a speech. Remember that speech he gave that was beamed in? Scotty beamed in. And there was a huge crowd of people just waiting to get in for the remote screening. So this time is even more amped up, and it seems like everyone is just waiting to hear what that is.
There's going to be something for everyone a little bit later on this morning. It is going to be about, of course, foreign policy. Venezuela maybe, Greenland, the Europeans are on edge about that issue, obviously, but there's plenty for domestic consumption as well. Affordability was the big push coming into this week from the President of the United States going into the midterms later this year. That's going to be a big feature of this address.
Absolutely, and what does it mean if you are in the C-suite of an American business when the President of the United States is saying, I want you to cap credit card interest rates at 10%. I don't want you to have any more buybacks or dividends because you're privy to American tax dollars when it comes to, say, the defense sector. Or we heard from Kevin Hassett going into this. Maybe Americans can start in earnest really tapping their 401k to get on the housing ladder. He has the American public's attention at this moment in Davos. And you know what? He's always thought this was a little bit of a cabal of the global elite. And he's going to lean into that. And why these individuals here have really failed the everyday man. That is going to be, I think, the administration's spin on Davos.
Do you think it's fair to say if you're a banker right now and you don't have a credit card business, you're probably quite happy?
Oh, yeah. You're breathing a sigh of relief.
There's a guy just across from us that's feeling pretty good about that. Coming up on the program, we'll catch up with Morgan Stanley Chairman and CEO Ted Pigg, the BNY CEO Robin Vince, the NYSE President Lynn Martin joining us a little bit later this hour as well at 8:30 Eastern Time. We'll have full coverage for you of President Donald Trump's special address right here in Davos, Switzerland. We begin this out with stocks slightly lower following the biggest slide in 3 months as investors search for direction. The Morgan Stanley Chairman and CEO Ted Pigg has seen it all, and he joins us now for more. Ted, good to see you.
Guys, thanks for having me.
You must be feeling good, eh?
Moment.
You must be feeling good.
I'm feeling pretty good.
You're not going to be in this speech in about 28 minutes' time? Going to avoid that?
Yeah, I'll be with you guys.
Let's talk about how things are set up for 26. We've drawn a big distinction between the energy that's coming from European officials and the emotion they have about a place like Greenland and the optimism that people have for the broader U.S. economy, particularly from bankers regarding the pipeline and the amount of debt issuance we've seen over the past few months, the debt underwriting that you've really benefited from that's going to fund a lot of the transition. How amped up are you about the year ahead?
Well, thanks for having me, guys. Great to see you. I'm pretty amped up. You know, we had several years where the M&A activity was going to get going, and then COVID happened, and then rates roofed, and it's taken a while for it to unglue. But this kind of, in this case, literal noise speaks to C-suite need to act, whether it's to re-globalize or reorient where your operations are, who you want to do business with. And as long as there's activity, we're busy. So cross-border M&A, large cap M&A, going to be important. AI acts as an accelerant to that too. If you want to actually get after the productivity gains and embedded in AI, you have to have the wherewithal to do it. And if your market cap is 30 or 40 billion, that's tough. You know, how do you take a couple points off your income statement to do that year after year? But if you're 200-300 billion, maybe you got a shot. So people are thinking bigger, and then the sponsors, as you know, a couple thousand companies that have been sitting there that have billion-dollar market caps implied, they need to come. And then very importantly, you have these great companies that have been private, and over the last 15 years, we've seen companies go public to defease options or effectively be secondaries. You may actually see great companies that are growth companies, some of them in the AI ecosystem that want to go tap capital. So for the investment bank, a great period, and for a wealth manager, leading wealth manager in the U.S. and the world, you want to allocate your capital efficiently, so very exciting.
Let's unpack some of those business lines. So let's just pick up on the IPO pipeline, the activity we could see later this year. SpaceX, OpenAI, we're talking about some absolute monsters. You and the team have been historically quite dominant in the tech sector. What are you doing right now to prepare for that moment that might be in our future?
Well, these companies, you know, you bank them for a whole bunch of years, and you get to know them. So there's a process, obviously the formal bake-off process, and then the go or no-go decision. But typically, the company has a pretty good idea what it wants to do ahead of time because it's selected its group. And the stakes are really high this round because, as you say, the implied market caps, these companies are enormous, but also they are, paradoxically, they're very large, but also mega growers. They have, you know, some of them have a little bit of a change the world feel to them. So they could become must own. I mean, one of the things that you guys have talked a lot about is so much of the equity base has become either beta or it's become kind of the 7 or 8 names. Well, what if there's some additional companies that have $300, $400, $500 billion market caps, $1.5 trillion market cap? The active management community says, I want to own that. I want to own that from the time of the IPO. So I think it's not just Wall Street getting to know these companies. It's a whole bunch of investors who have either backed into early rounds or want to be there when the IPO comes.
When we were speaking with you a year ago in these seats, you were talking about how it was going to be a great year for IPOs and M&A, and it was for your bottom line. You had an incredible year. There was, though, a lot of IPOs and a lot of deals that got stymied by Liberation Day and policy uncertainty. What has to go right for some of these deals to come to fruition? OpenAI, Anthropic, SpaceX.
Well, I think part of the reason these companies are so interesting to investors is they are not rushed to go public. So there has to be an element of being patient if you're in and around the ecosystem. They don't have to come in the first half of 26. They can come in the second half of 26. They could even come in 27. But they are drawing a whole bunch of interest to names like them, derivative plays in the ecosystem as you sort of disaggregate the entire AI daisy chain. Where do you want to play? So the anticipation of the company going public almost is as important as the company itself coming. But whether they come, Lisa, in 26 or 27, they're going to come. They're going to come.
It's sort of a dissonance right now when you talk to business leaders about how much enthusiasm there is for deals and for energy in the U.S. economy, and then when you hear the policymakers, and you hear uncertainty, and you hear "Sell America." How do you square those two narratives at a time where you do hear a growing number of investors say they are diversifying away from U.S. assets?
I hear you guys talking about this a lot. I think there are two separate phenomena, but they're not exclusive. One is we got the arc of history. You know, I've gone on about the end of history and that things would get going again and that nation states would be battling for hegemony and kind of trying to, you know, win out on the rise and fall of nations. That's just a historical fact that kind of got, there was an interregnum between Berlin Wall and COVID. We're actually back to the balance of human history as we've all studied, and that means there's going to be the kind of stuff that we are living through right now. It's just been a while. And I don't know necessarily that is something we should expect to go away anytime soon. There's going to be renationalizing, nationalizing, and that means in some cases there'll be higher country risk. There'll be maybe pockets of illiquidity. There may be opportunistic transactions or allocations that happen. But after 20 years of financial repression, we're back to live markets and live nation states. That's here. But at the same time, you have U.S. capital markets, which are more than half the capital stock. And the reality is, very basically, as we know, corporate health is excellent. Consumer health at the top end is excellent. And obviously, the administration's getting after housing for the bottom half of the K. Earnings, as you know, grew 8% this year. They could grow in the mid-teens next year. That's double the long-term average. That's pretty good. So good corporate, good consumer, excellent capital markets, an easier Fed that lowered by 75. Maybe there's more to go. Maybe it's a demand-driven 2026, in which case the Fed doesn't have to move. We have good inflation. We keep on powering forward growth. Or maybe it's supply side, where they're spending, but there isn't the same kind of job creation, then the Fed will help out. So they're downside cases, but just in the main, and the tailwinds of deregulation in the bill are kicking in, it kind of is hard to argue against the 26 U.S.-led growth case. Now, we could get in a debate about where asset prices should be, but in terms of just 2 years ago, we were talking about recession. Last year, we weren't sure because the administration was coming in. We're not talking about that today. So for our business, very simply, we write tickets at kind of 2 times GDP nominal. And so if you think about our wealth and investment bank, if we're going to grow, 5-10% on a 2 times basis, nominally, that should be pretty good for our business if we're doing our job.
Corporate health is very good. It's excellent. Sovereign health is questionable.
Right.
Can we talk about that?
Right.
The move in the last 24 hours, the live market stuff, let's get into that. The move in Japan at the long end of the curve, is that a warning shot? Is that the start of something bigger?
Well, I mean, this Japan trade's been talked about forever. And I would expect that in a lot of, highly indebted countries, off the Liz Truss moment, where the demographics are poor and you don't have the wherewithal or fiat to kind of work your way through that, there could be some vulnerability. So what does that mean? That means if we were sort of do our economics meets, poli-sci thing, I think that means you want to get closer to places where you can act in your joint economic interest. And I think the Japanese example is one that we should continue to pay attention to. I wouldn't be surprised if we see pockets of that now and then when, there's a little talk of the balance sheet looks lousy, but we're going to inject a little stimulus and let's see if anyone notices. Yeah, they noticed. So, you sort of have to, then you adjust. It's a trial balloon. It gets pulled back, and that's probably healthy for markets. You see a lot of that's been bought back today, but that's different than the U.S. Treasury phenomenon. That's been hugely overblown. The reality is that when we did this a year ago, the Treasury Secretary, as you know better than anyone, was talking about the 10-year being so important to keep an eye on. I think the 10-year is around 457, 455, 460. Now it's at 425, 430. So the 10-year is doing its job. There's some steepening. Yes, it's probably healthy. So I do think there's a conflation between kind of U.S. Treasury phenomenon and the world. And I think there's a difference, and we just have to continue to highlight the difference.
Very quickly, Ted, because
Yes.
you've spent time, you grew up in Venezuela. New world now. Are you planning to maybe help facilitate companies go back in?
I had not prepped for that question.
Well, you lived it.
Thank you so much.
That's why I'm interested, because you have a different take probably than every other CEO walking around this forum.
Well, Venezuela is an extraordinary place, has a proud, but now in recent decades, very troubled history, but is, if you know your Monroe Doctrine, critical, and has, albeit, as you've talked about at length, it's more sulfuric, but very high, vast quantities of oil beneath the ground. So do I think Venezuela is going to be relevant? I think Latin America is going to be relevant. I think the hemisphere is going to be relevant in its sort of thinking around how it wants to get closer while maintaining its own, political and social independence from the U.S. But I think a coming together of some places may make some sense and may be in the broader economic interest. Back to the previous question.
That was a fantastic answer.
Thank you so much.
Brilliant. I've got one more. I hope it's not a landmine. There was some news earlier about Deutsche Bank, and I just want to breathe some life into that story. And essentially, the Treasury Secretary came out. There was some research that he didn't like, and according to him, the Deutsche Bank CEO has turned around and said, I don't stand by that research. That's basically the point. Is it difficult for the research department at Morgan Stanley to say what they think in an environment like this one? And I ask this question because I know some tremendous individuals at Morgan Stanley in research, and they are all highly intelligent, capable, and have their own thoughts about where they think we are in this moment right now. But is it difficult in the C-suite to allow them just to go out there full throttle, full-blooded, and just say what they really think about this moment?
Absolutely not. I've not had a piece of research hit my desk for a yellow light or a no-go. I think what gets a little tricky is these institutions also have desk analysts. So I don't know if this one came out of the research department or maybe a desk analyst sitting in one of the divisions. But
to answer your question directly, we celebrate broad opinion. I do think, but to give not kind of the standard answer, part of the reason you like our research is because it's not just regurgitation, because we all have a Bloomberg terminal. Okay, so it has to have some kind of value add, but it doesn't have to just be provocation for its own sake. So we have industry leaders, we have sector leaders, we have Seth Carpenter, who you pointed out. I was watching you talk to him, and that was quite a moment.
Okay. When I looked down the barrel of the camera, you're actually there. Okay.
Starbucks all over my suit. So thanks for that. That was excellent. So you had at least one viewer that day, and that was me. So and Seth, but. The answer is the independence of research is important. We've invested in it for all these years. That having been said, sort of writing research to just sort of provoke and kind of get your Warhol moment, I mean, that is not really fair to the institution either. And it puts the particular government or whomever in an awkward spot because they read the research. So I think there's got to be a balance between independent integrity and what you're writing and writing something that actually is meant to add value and bring intellectual capital to the fore.
Send me the dry cleaning bill. I'll sort that out for you.
I didn't actually spit it up. I just swallowed and smiled.
So thank you, sir. Thank you very much.
Thank you.
Ted Pick there, the Morgan Stanley chairman and CEO. Let's give an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The Justice Department sending grand jury subpoenas to multiple Minnesota officials, including Governor Tim Walz and Minneapolis Mayor Jacob Frey. The subpoenas are part of an investigation into whether they conspired to impede federal immigration enforcement activity. The move escalates a standoff over ICE efforts to deport people who are allegedly in the country illegally. U.S. Trade Representative Jameson Greer says another round of trade talks between the U.S. and China is possible ahead of President Donald Trump's planned meeting with Xi Jinping in China this April. Greer spoke after Treasury Secretary Scott Bessent held an informal meeting with the Chinese Vice Premier on Monday. Commuter rail service has been suspended in Spain's Catalonia region after a commuter train crashed Tuesday night. Spanish authorities said at least one person died and 37 others were injured in the crash. The news coming, of course, just days after Spain's worst railway disaster since 2013. That killed at least 42 people and injured dozens. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the program, BNY CEO Robin Vince, plus the president set to address the World Economic Forum right here in Davos, Switzerland.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Live from Davos, Switzerland, about 15-20 minutes away from the main event, the President of the United States addressing not just this forum, but addressing the world a little bit later on. We've been waiting for this one over the last several weeks, and it's taken on even more importance following the events of the last weekend and the tension building between European officials and the President of the United States. Following that address, full coverage right here on Bloomberg Surveillance. We'll catch up with the National Economic Council Director, Kevin Hassett, on the content on that speech and a way forward.
So Kevin Hassett has really been the one going out and promoting, teasing out what the president is going to discuss here in Davos when it comes to the housing market, when it comes to the credit card interest rate caps. On top of that, we do know that the president is not going to make a decision when it comes to the Fed chair race here in Davos. But that someone, Kevin Hassett, is still in the running. So potentially maybe he can tell us what the conversations have been like over the past 24, 48 hours.
Which Kevin's in front right now?
I don't know.
I've
It
not been
depends
watching.
on the hair.
Is that what it depends on?
We're a lot of things.
Wash is a little bit more slick,
He's got
more
a lot.
polished.
You know, the hair is a little bit more puffy. Look, we have no idea, and it's not clear right now that the president knows exactly who he's going to pick. So we're not going to hear it now, but certainly he'll be asked, and he'll certainly say, "I'll do whatever is in the pleasure."
He might get some input this evening when he sits around for a business roundtable. He's going to be meeting with CEOs right here at the forum, and he might say, you know, StartupPal, what do you guys think of Rick Reeder? What do you think of Kevin Hassett?
Is that how this is going to work?
Well, in Tokyo, remember, he called out Scott Bessent and said, I want you to take the job. And Scott Bessent says, no, I like where I am at Treasury. So, yeah, that's how it is. Prepare for a lot of weaving, as he calls it.
That address is about 10 minutes away. Look out for that. Let's talk about the financial system and banking. I'm pleased to say that joining us now is Robin Vince, the CEO of BNY Mellon. Robin, good to see you.
It's good to be with you all. Thank you on such an interesting day.
You are
Davos
across
is the place.
20% of investable assets. I mean, that's a lot of things. What are you seeing right now? Are you seeing those changes that people are talking about, that diversification away from U.S. assets? Do you see that at all?
Now, we really don't see that in the data at this point. And remember where we've come from, which is the U.S. has been really an incredibly strongly performing market, strong economy. People have been predicting the U.S. to be in some type of decline from an economic point of view, recessions. We've talked about that in the past 2 or 3 years. None of that's actually happened. And in fact, now, I think you'll find, and you've heard this on your show, more optimism associated with what the next year holds from an economic point of view. GDP pretty solid, looking to potentially even expand in 2026. You've got the stimulus checks coming, the way that they actually didn't adjust the withholding in order to be able to encourage those stimulus checks. That all is a pretty good setup. Now, you've got to be in the preparedness business. We're all risk managers. And at the end of the day, you've got to be resilient because things can go wrong, things can happen. But I think that's the setup. And so reallocating away from the U.S. in the face of that, probably not the smartest choice to make, but you've got to be diversified. So you cannot have the concentration. The U.S. has been a pretty concentrated bet over the past few years.
Although, what's the consequence of that? I mean, there's a difference between reallocating away from and diversifying. There is some knock-on effect, which is maybe some people are calling sell America. Other people are just saying diversifying and hedging your bets. I mean, how much will that affect the funding conditions of the United States?
Look, diversification makes sense. One needs to have a balanced portfolio. It's just good risk management. It's good investment management to make sure that you've got exposure to the various different opportunities that are out there. But we certainly have seen, and, you know, look around. We're a global firm. We provide platforms and serve clients all across the world. But when you look at the U.S. and you just look at the facts of the performance over the course of the past decade, you look at all the innovation that's been in the U.S., all of the value that's created, AI is one example, technology more generally, it would have been a mistake to not have participated in the U.S. market. And so a little bit of rebalancing, a little bit of sort of thinking about how to make sure you've got the right portfolio, whether it's equities, fixed income. We talk about 60-40, oh gosh, it was dead, now it's back. Bonds, okay, where do you want to be exposed to in the bond market? You know, the U.S. bond market is still the most liquid market in the world, and it is still the closest thing to a risk-free asset that there actually is.
How important is it that Senator Tom Tillis stays in Senate at least for the next 364 days? He was on on just moments ago with us, and he was talking about how he's not going to hold confirmation hearings until the DOJ suit or inquiry into Fed Chair Jay Powell is lifted. I'm just wondering, from your perspective, how important it is to see that type of noise die down around the Federal Reserve for you to feel confident that this truly is going to remain the status quo going forward.
Right. Well, the senator's a great public servant, and I appreciate all of his time serving in the U.S. Senate. But I think you hit the key point, which is at the end of the day, it's not super helpful for the long-term objectives of the U.S., which are keep interest rates on the low side, to be able to make it easier for people to be able to borrow, to be able to buy a home, to be able to fund a car payment, for companies to be able to borrow in order to be able to fund and invest their businesses. For all of that, we want low rates. So creating and sort of shaking at the foundation of the independence of monetary policy, that's not really in the interests of keeping long-term rates low. So I think it is helpful if that dies down and we can get back to the business of really seeing the economy perform.
Counterproductive, which is the words you used in the past when it comes to it. Have you had any engagement with the White House about this issue, given the concerns?
You know, we're always talking to the administration, making sure that we're giving our point of view. And so that's, of course, that's one of our jobs. And one of my jobs as a CEO is to be talking all across the administration and in Congress and giving them our perspective. And I do think it is in the interests, and the administration's been very clear, they would like to see long-term interest rates lower because it benefits companies and individuals. And so if that's the objective, then making sure that we're keeping the Federal Reserve sort of a little bit out of the news and not super controversial, I would personally say would be in furtherance of that objective.
It's certainly very much in the news at the moment. Robin, can we talk about your business?
Yeah,
how's BNY changing? In what direction are you leaning into?
Well, we've been reimagining the company, to be quite honest. You know, we've got a fun history. We're 240 years old. We were born right around the time of the United States, 1784, oldest bank in the nation, one of the oldest companies in New York. That's a fun history. Now, we got to be old because we've been innovating all along the way. We've stayed very focused on customers, and our culture is important. That's how you get to be a long-lived company. So what have we been doing? We've been taking stock of what we've actually got, our real assets, our great businesses, and we've really been focused on delivering them better for the client. We used to be a bunch of pieces, kind of siloed, fragmented. And so we set out 3 years ago to say, we're just going to reimagine the company, and we're going to pull ourselves together. We're going to focus on our clients. We've got these market-leading businesses. We're kind of a financial services platforms company these days, and we're going to rally round as a team. Very important, that culture, team, to be able to deliver for customers. And you can see the results. So this was past quarter for us, which comes to the sort of the end of that first 3-year chapter, was a quarter of records. It was actually a year of records for us in 2025. Record revenue, record pre-tax income, huge EPS growth. And the market's rewarded us for that. But what they're really looking through and seeing is the fact that we're delivering for our customers. And that's what it's all about.
Are you going to make it to this speech in about 5 minutes' time?
Like the rest of the world, as you said earlier on, I'm looking forward to watching and listening.
I imagine the room's pretty packed out right now.
It will be interesting.
Hey, Robin, it's good to see you.
It's good to see
Thanks
you
for your
as well.
time. We appreciate it. Thank you very much, sir. Robin Vince there, the BNY CEO. A lot to look forward to. So in about 4 or 5 minutes' time, we're expecting to hear from the President of the United States addressing this conference. As we anticipate that, let's just turn to the markets. This is how things are set up going into this main event a little bit later this morning and into the opening bell about an hour away. Equity futures on the back foot, turning lower in the last few hours or so. Equity futures down by a few tenths of 1% in the bond market. Looking across 2s, 10s and 30s. Yields just a touch higher yesterday. Yes, I know there was drama in FX as well. The dollar was weaker. Yields were higher. They were much, much higher over in Tokyo, Japan. JGB's the sell-off yesterday, hey? 20 basis point move at the long end of the curve. 20 basis points plus.
38 basis points over 2 trading sessions, and evidently TCW is in there buying and selling treasuries to finance some of those purchases. A real question here about what willingness there will be from the authorities to come in and to stave off some of that pain.
That's some of the price action for you. Let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John, you saw there the NASDAQ underperforming. Here's the reason. Netflix falling 7.5% in the pre-market after earnings yesterday. Sure, the metrics were fine. The issue was their spend. They're spending 10% more on their titles in 2026, along with that Warner Brothers Discovery acquisition. We also had some earnings coming from the banks, specifically the regional Citizens Financials reporting, and it is a beat across all their metrics. Deposits grew, and the really strong part was fee and capital markets. For the mid-market deal action, it is alive and well and benefiting the likes of Citizens, those shares at more than 1%. Finally, wrapping things up with Schwab, also reporting earnings this morning. For them, it's a miss weakness, but its off the lows are only down about 1%. It's back and forth considering most of their metrics beat, but revenue was weaker. A disappointment for a company that should have capitalized off the market volatility, and specifically the equity market volatility of 2026. So John, those shares down about 0.75% this morning.
Danny Berger. Danny, thank you. More from Danny in the next couple of hours on Bloomberg TV. Allow me to set up the next 60 minutes or so. So at some point on the schedule indicates that this is going to happen in the next 5 minutes or so. The President of the United States will address the World Economic Forum here in Davos, Switzerland. After that's wrapped up, commercial-free, throughout all of that, we'll be catching up with the National Economic Council Director, Kevin Hassett. So look out for all of that still to come right here on Bloomberg TV. In anticipation of this big event, let's turn to one of Wall Street's biggest names, the New York Stock Exchange, building a venue for trading tokenized stocks and ETFs around the clock. The NYSE President, Lynn Martin, joins us now for more. Lynn, good to see you.
Good to see you guys. It's must-see TV is what we're in the midst of right now, right?
It's box office, Lynn. What are you expecting to hear? What are you expecting to hear from the President?
Don't know. I think probably it will be a focus on strength of the U.S. economy. I'm sure will be covered. I'm sure the achievements of the administration over the last year will be covered. Other than that, I think it's a guessing game for all of us, right?
What's your sense about the volatility and some of the headlines around geopolitics, around U.S. policy, and frankly, the incredible enthusiasm for capital markets here, particularly in the United States with respect to deals and IPOs, et cetera?
Yeah, absolutely. I mean, our markets have done tremendously well. You look at the growth of the major indices over the last year, they've been resilient in spite of the volatility. I think that really speaks to the strength of the U.S. economy. And to your point, we continue to attract companies from not based in the U.S. to the U.S. markets. If I think about AstraZeneca and the moves that they made, they're going to be debuting on us through ordinary shares on February 2nd. They've seen 30% growth in their stock. There's still a tremendous amount of demand to tap the U.S. capital markets because of the unrivaled pool of liquidity, unrivaled transparency, and the amazing innovation that happens in the U.S., all of which I expect he's going to speak about.
Late last year, there was supposed to be a huge boom in IPOs, and it was stymied by the government shutdown because some of those offices weren't open to actually sign off on the deals. I'm just wondering how much that slowed things down in a way that still remains to be seen whether it can all come back.
Yeah, it slowed it down operationally, but it didn't slow it down from a coming to market perspective. If I look at our pipeline, we're expecting a tremendous amount of activity in these next couple of weeks. Actually, we have a deal on the road at the moment. We have another deal going next week. Early February is queuing up to be quite active, but we really see it towards the back end of Q1 into Q2 with many deals targeting their public market debuts then.
There was a pause around Liberation Day. To Lisa's point, there's a pause around the 43-day government shutdown. Could we potentially see a Greenland pause? We did see some pushback from financial markets.
I don't know. Again, I think these companies are looking to tap the broadest investor pool possible and diversify their investor base. And there really isn't any substitute for that for the medium to long term. The private markets have done a good job in financing these companies and enabling these companies to continue to build, to innovate, to refine their strategy, but there isn't a substitute for the public markets for the long term.
Are we about to make it easier to go public? What do you make of some of the recent comments from the SEC? It seems like you're aligned at the moment.
Yeah, we've been working a lot with Chairman Atkins and his team on paving a way for companies to go public. Now, that involves a variety of items. It's not just about quarterly versus semi-annual reporting. If you look at some of the pro-business legislation that a state like Texas has produced, that's designed to take away that uncertainty, that litigation risk, lessen that likelihood. It's why you've seen Texas become such a popular location for companies to incorporate in, and it's why we formed NYSE Texas last year as the first Texas incorporated exchange.
We could see some mega IPOs in the next 12 months. SpaceX, OpenAI.
Anthropic.
Yeah, the list goes on and on and on. Lynn, can I get this question in? Am I the only one not excited about 24-hour trading, 24/7 stuff? I mean, like, this is exhausting. We're waiting for the president. He's about to enter the room any moment and stand in front of that podium and deliver a major speech.
Yeah.
That's tiring enough. 24-hour trading, 7 days a week. What's going on?
Okay. Well, the traditional equity markets are moving to 23 by 5 at some point this year. If you recall, we had filed for that regulation in October of 2024. The reason we did that, though, is because the market is already trading around the clock.
True.
And we believe it is our responsibility to bring the regulatory structure, the certainty of trade execution to those markets to enable the buyer to know that they bought, the seller to know that they sold, and for it to appear in their accounts. That's what we're doing with traditional equities. We paved the way for that. And that's what we're doing with tokenized equities, too. Bringing the good hygiene, the resiliency, the stability, the reliability that only the NYSE can bring to markets.
And it's good to see you. I know you're excited about watching this as well, so we'll let you go. Thanks for dropping by. Thank you so much.
Thank you.
Thank you. That was Lynn Martin, the NYSE president, weighing in on what's happening with financial markets at the moment in anticipation of a major event taking place here at the World Economic Forum just moments away. Let's cross over to Washington, D.C. and catch up with Bloomberg's Tyler Kendall. Tyler, highly anticipated on the ground. Is Washington on edge as well?
Right, John, I would say Washington is, considering that we heard from a senior administration official earlier who previewed that this is going to have an America First feel as expected. The White House had already outlined that this is going to have to do with affordability, as we heard from the president's chief of staff, Susie Wiles, earlier this morning, who confirmed that President Trump is set to travel to Iowa on Tuesday, and then she says will make weekly domestic visits from now until November. And that is because Washington is watching closely as all gears go full steam ahead for Republicans and the midterms as they try to maintain their majorities in Congress. Just the quick context here is that Democrats only have to net 3 seats, in net gain of 3 seats, in order to flip that lower chamber. Now, we can confirm that President Trump has arrived at the venue, so we are expecting him to, at any moment here, take that podium, as he's going to be threading the needle between domestic policy, but then also foreign policy, as we know that he is expected to hit on not just Venezuela, but also, of course, Greenland, which is dominating the conversation where you are, John, because we have heard from President Trump in recent hours leading up to this speech that he is unconcerned by threats from European allies, as they have issued their grave concerns about the president's rhetoric when it comes to what happens in Greenland. But I will add that our own analysts at Bloomberg Economics say that they expect the president to use this speech to very likely ease instead of escalate tensions when it comes to the issue. And that is because we have learned that President Trump will hold 5 diplomatic meetings after his speech on the sidelines in Davos, and perhaps will glean some sort of information on what potential off-ramps could look like.
Tyler, I just want to take these pictures in full, just to give everyone at home just an idea of what's happening right now at the World Economic Forum in Davos, Switzerland. The president, moments away from this address, being introduced at the moment by the co-chair of the World Economic Forum, Larry Fink. That room is absolutely packed. It took a long time to get into the convention center a little bit earlier on this morning, and I imagine it took a lot of effort to get one of those seats in that room.
Absolutely. Individuals were lining up. This was a must-see event. This is the ticket of the week, especially given the fact that the president has completely disrupted the Davos agenda when it comes to foreign policy. He has threatened tariffs on Europe and a number of nations if he does not get what he says Greenland, which is critical to national security. I spoke with Ambassador Jameson Greer earlier. He sees this as 2 tracks. He's saying, yes, the Europeans bring up Greenland, but we have a trade deal. It's like, but the Europeans are saying that now you're adding more tariffs, so that might mean that negates the prior trade deal. There's a lot of discussions around Greenland and what this means for Europe. And the fact of the matter is it could have unintended consequences we saw on full display yesterday when it comes to the Prime Minister of Canada.
The Prime Minister of Canada with a very blunt, I would say almost aggressive speech yesterday. We've all talked about this radical transparency that's come to the surface at this forum, where people are no longer saving it for behind closed doors. They're saying it just up front on the record about what they think. Prime Minister Mark Carney saying this is not a transition, this is a rupture. He said it's a new world order. Middle powers need to understand that. Now, my question, Lisa, is, okay, that's the conclusion. Now show me the action. What are the concrete steps you'll be taking with that in mind?
Well, this is part of the problem and part of the reason why you're getting radical transparency from President Trump, but much less than that from a number of different leaders who are trying to be highly diplomatic so that they don't have targets on their back. And there's a real question, if you can't come through, then do you just make yourself persona non grata and put yourself in a worse position in some of these negotiations? It's a dance right now, and you could feel that in some of the text chains that were released with the president on Truth Social.
I don't think we even need the text chains anymore. Just listen to the words of the French President Emmanuel Macron in the last 24 hours, accusing the Americans of trying to subordinate the Europeans. Does the President respond to that in this address at the World Economic Forum as he steps up to the stage and addresses not just this forum, addresses the world in a much anticipated speech at the World Economic Forum, the President of the United States?
Well, thank you very much, Larry. It's great to be back in beautiful Davos, Switzerland, and to address so many respected business leaders, so many friends, few enemies, and all of the distinguished guests. It's a who's who, I will say that. I've come to this year's World Economic Forum with truly phenomenal news from America. Yesterday marked the one-year anniversary of my inauguration, and today, after 12 months back in the White House, our economy is booming, growth is exploding, productivity is surging, investment is soaring, incomes are rising, inflation has been defeated, our previously open and dangerous border is closed and virtually impenetrable. And the United States is in the midst of the fastest and most dramatic economic turnaround in our country's history. Under the Biden administration, America was plagued by the nightmare of stagflation, meaning low growth, and high inflation, a recipe for misery, failure, and decline. But now, after just 1 year of my policies, we are witnessing the exact opposite. Virtually no inflation and extraordinarily high economic growth. Growth like I believe you'll see very shortly our country has never seen before, perhaps no country has ever seen before. Over the past 3 months, core inflation has been just 1.6%. Meanwhile, fourth quarter growth is projected to be 5.4%, far greater than anybody other than myself and a few others had predicted. Since the election, the stock market has set 52 all-time high records. So that's in 1 year, 52 records, adding $9 trillion in value to retirement accounts, 401ks, and people's savings. People are doing very well. They're very happy with me. Since my inauguration, we've lifted more than 1.2 million people off of food stamps, and after 4 years in which Biden secured less than $1 trillion of new investment in our country. Think of that, 1 trillion, substantially less than that. In 4 years, we've secured commitments for a record-breaking $18 trillion, and we think when the final numbers come out, they'll be closer to $20 trillion of investment. That's never been done by any country at any time, not even close. Just over 1 year ago, under the radical left Democrats, we were a dead country. Now we are the hottest country anywhere in the world. In fact, the United States economy is on pace to grow at double the rate that was projected by the IMF just last April. And with my growth and tariff policies, it should be much higher. I really believe we can be much higher than that. And this is all great news, and it's great for all nations. The USA is the economic engine on the planet, and when America booms, the entire world booms. It's been the history. When it goes bad, it goes bad. You all follow us down, and you follow us up, and we're at a point that I don't believe we've ever been. I never thought we could do it this quickly. My biggest surprise is I thought it would take more than a year, maybe like a year and 1 month. But it's happened very quickly. This afternoon, I want to discuss how we have achieved this economic miracle, how we intend to raise living standards for our citizens to levels never seen before, and perhaps how you too and the places where you come from can do much better by following what we're doing, because certain places in Europe are not even recognizable, frankly, anymore. They're not recognizable. And we can argue about it, but there's no argument. Friends come back from different places. I don't want to insult anybody and say I don't recognize it. And that's not in a positive way. That's in a very negative way. And I love Europe, and I want to see Europe go good, but it's not heading in the right direction. In recent decades, it became conventional wisdom in Washington and European capitals that the only way to grow a modern Western economy was through ever-increasing government spending, unchecked mass migration, and endless foreign imports. The consensus was that so-called dirty jobs and heavy industry should be sent elsewhere, that affordable energy should be replaced by the Green New Scam, and that countries could be propped up by importing new and entirely different populations from faraway lands. This was the path that Sleepy Joe Biden administration and many other Western governments very foolishly followed, turning their backs on everything that makes nations rich and powerful and strong. And there's so much potential in so many nations. The result was record budget and trade deficits and a growing sovereign deficit driven by the largest wave of mass migration in human history. We've never seen anything like it. Quite frankly, many parts of our world are being destroyed before our very eyes, and the leaders don't even understand what's happening. And the ones that do understand aren't doing anything about it. Virtually all of the so-called experts predicted my plans to end this failed model would trigger a global recession and runaway inflation. But we have proven them wrong. It's actually just the opposite. In 1 year, our agenda has produced a transformation like America has not seen in over 100 years. Instead of closing down energy plants, we're opening them up. Instead of building ineffective, money-losing windmills, we're taking them down and not approving any. Instead of empowering bureaucrats, we're firing them, and they're going out and getting jobs in the private sector for 2 and 3 times what they were making in government. So they started off hating me when we fired them, and now they love me. Instead of raising taxes on domestic producers, we're lowering them and raising tariffs on foreign nations to pay for the damage that they've caused. In 12 months, we have removed over 270,000 bureaucrats from the federal payrolls, the largest single-year reduction in government employment since the end of World War II. Nobody thought that was coming, but we had no choice. To make a country great, you can't have all federal jobs. We've cut federal spending by $100 billion and slashed the federal budget deficit by 27% in the single year. It's going to go down quite a bit more from that, driving inflation way down from the record highs of the Biden administration. Every month, they went up and up and up. I promised to cut 10 old regulations for every single new regulation. But instead, I've cut, actually, till this point, 129 regulations for every 1 new regulation approved. So every time they come in with a new regulation, we do at least 10, but so far it's averaging out to 129, if you can believe it. In July, we passed the largest tax cuts in American history, including no tax on tips, no tax on overtime, no tax on Social Security for our great seniors. We also provided 100% expensing, that's the one they like, and bonus depreciation for all new equipment and capital investments to help companies expand and shift production to America. They are so in love with that. They build a plant, they're able to deduct it immediately, the whole thing, rather than waiting 38 to 41 years in the old days. This is a miracle taking place. Nobody thought it would ever be done by any country, but it's done by us. It was what made my first term the most successful 4-year term that we've ever had from a financial standpoint. And now we've upped it. This is a 10-year program, not a 1-year program, but you're allowed to deduct everything in 1 year. It used to be 38 to 41 years. With tariffs, we've radically reduced our ballooning trade deficit, which was the largest in world history. We were losing more than $1 trillion every single year, and it was just wasted. It was going to waste. But in 1 year, I slashed our monthly trade deficit by a staggering 77%. And all of this with no inflation, something everyone said could not be done. There were a couple of brilliant people that actually thought I was doing the right thing. I thought I was doing the right thing. Now they all think I'm doing the right thing because they can't believe the numbers. American exports are now up by more than $150 billion. Domestic steel production is up by 300,000 tons a month, and it's doubling over the next 4 months. It's doubling and tripling, and we have steel plants being built all over the country. Nobody thought they'd see that. Factory construction is up by 41%, and that number is really going to skyrocket right now because that's during a process that they're putting in to get their approvals, and we've given very, very quick, fast approvals. In the process, we've made historic trade deals with partners covering 40% of all U.S. trade. Some of the greatest companies and countries in the world. We have countries as our partner, too. The European nations, Japan, South Korea. They're our partners. They've gone into massive deals with us, especially on oil and gas. And these agreements raise growth and cause stock markets to boom, not only in the U.S., but virtually every country that came to make a deal, because, as you've learned, when the United States goes up, you follow. It's really become a staple. In America, I've stopped the nation-wrecking energy policies that drive up prices while sending jobs and factories to the world's worst polluters. They are indeed polluters. Under Sleepy Joe Biden, new domestic oil and gas leases fell by 95%. Think of that. And they wonder, why was gasoline going up so fast? The gasoline actually topped $5 a gallon, and some places $7 a gallon, and more than 100 major power plants were violently shut down by incompetent people that had no idea what the hell they were doing. Under my leadership, U.S. natural gas production is at an all-time high by far. U.S. oil production is up by 730,000 barrels a day, and last week we picked up 50 million barrels from Venezuela alone. Venezuela has been an amazing place for so many years, but then they went bad with their policies. 20 years ago, it was a great country, and now it's got problems, but we're helping them. And those 50 million barrels, we're going to be splitting up with them, and they'll be making more money than they've made in a long time. Venezuela is going to do fantastically well. We appreciate all of the cooperation we've been giving. We've been giving great cooperation. Once the attack ended, and they said, let's make a deal. More people should do that. But Venezuela is going to make more money in the next 6 months than they've made in the last 20 years. Every major oil company is coming in with us. It's amazing. It's a beautiful thing to see. The leadership of the country has been very good. They've been very, very smart. The price of gasoline is now below $2.50 a gallon in many states, $2.30 a gallon in most states, and will soon be averaging less than $2 a gallon. In many places, it's already down even lower, $1.95 a gallon. Numerous states are at $1.99, numbers that nobody has heard for years. Actually, since my last administration, we got it down to around those numbers. I've signed an order directing and approval of many new nuclear reactors. We're going heavy into nuclear. I was not a big fan because I didn't like the risk, the danger. But they have the progress they've made with nuclear is unbelievable, and the safety progress they've made is incredible. We're very much into the world of nuclear energy, and we can have it now at good prices and very, very safe. And we're leading the world in AI by a lot. We'll take care of the AI plants. And I said, we can't do that. We have an old grid system. And I came up with the idea, you know, you people are brilliant, you have a lot of money. Let's see what you can do. You can build your own electric generating plants. And they looked at me, they didn't believe me. All of the names that are, I think, in the room right now, if you want to know the truth, they didn't believe it. And I said, no, you can't. They came back 2 weeks and they didn't have the plant. They said, we thought you were kidding. I said, no, not only am I not kidding, you're going to have your approvals within 2 weeks. I always say nuclear will take 3 weeks. But most aren't going that. They're going oil and gas. They're even going coal in some cases. Because of my landslide election victory, the United States avoided the catastrophic energy collapse which befell every European nation that pursued the Green New Scam, perhaps the greatest hoax in history. The Green New Scam, windmills all over the place, destroy your land, destroy your land. Every time that goes around, you lose $1,000. You're supposed to make money with energy, not lose money. Here in Europe, we've seen the fate that the radical left tried to impose on America. They tried very hard. Germany now generates 22% less electricity than it did in 2017. And it's not the current chancellor's fault. He's solving the problem. He's going to do a great job. But what they did before he got there, I guess that's why he got there. And electricity prices are 64% higher. The United Kingdom produces just 1/3 of the total energy from all sources that it did in 1999. Think of that, 1/3. And they're sitting on top of the North Sea, one of the greatest reserves anywhere in the world, but they don't use it. And that's one reason why their energy has reached catastrophically low levels with equally high prices. High prices, very low levels. Think of that, 1/3. And you're sitting on top of the North Sea. And they like to say, well, you know, that's depleted. It's not depleted. It's got 500 years. They haven't even found the oil. The North Sea is incredible. They don't let anybody drill. Environmentally, they don't let them drill. They make it impossible for the oil companies to go. They take 92% of the revenues. So the oil companies say, we can't do it. They came to see me. Is there anything you can do? I want Europe to do great. I want UK to do great. Sitting on one of the greatest energy sources in the world, and they don't use it. In fact, their electricity prices have soared 139%. There are windmills all over Europe. There are windmills all over the place, and they are losers. One thing I've noticed is that the more windmills a country has, the more money that country loses and the worse that country is doing. China makes almost all of the windmills, and yet I haven't been able to find any wind farms in China. Did you ever think of that? It's a good way of looking at it. They're smart. China's very smart. They make them, they sell them for a fortune. They sell them to the stupid people that buy them, but they don't use them themselves. They put up a couple of big wind farms, but they don't use them. They just put them up to show people what they could look like. They don't spin. They don't do anything. They use a thing called coal, mostly. But China goes with the coal. They go with oil and gas. They're starting to look at nuclear a little bit, and they're doing just fine. They make a fortune selling the windmills, though, and I think really that's one that they wouldn't be surprised if it stopped. They are shocked that it continues to go. They're very friendly with me. They're shocked that people continue to buy those damn things. They killed the birds. They ruin your landscapes. Other than that, I think they're fabulous, by the way. Stupid people buy them. The consequences of such destructive policies have been stark, including lower economic growth, lower standards of living, lower birth rates, more socially disruptive migration, more vulnerability to hostile foreign adversaries, and much, much smaller militaries. The United States cares greatly about the people of Europe. We really do. I mean, look, I am derived from Europe. Scotland and Germany, 100% Scotland, my mother, 100% German, my father. And we believe deeply in the bonds we share with Europe as a civilization. I want to see it do great. That's why issues like energy, trade, immigration, and economic growth must be central concerns to anyone who wants to see a strong and united West, because Europe and those countries have to do their thing. They have to get out of the culture that they've created over the last 10 years. It's horrible what they're doing to themselves. They're destroying themselves. It's beautiful, beautiful places. We want strong allies, not seriously weakened ones. We want Europe to be strong. Ultimately, these are matters of national security, and perhaps no current issue makes the situation more clear than what's currently going on with Greenland. Would you like me to say a few words of Greenland? I was going to leave it out of the speech, but I think I would have been reviewed very negatively. I have tremendous respect for both the people of Greenland and the people of Denmark, tremendous respect. But every NATO ally has an obligation to be able to defend their own territory. And the fact is, no nation or group of nations is in any position to be able to secure Greenland other than the United States. We're a great power, much greater than people even understand. I think they found that out 2 weeks ago in Venezuela. We saw this in World War II, when Denmark fell to Germany after just 6 hours of fighting and was totally unable to defend either itself or Greenland. So the United States was then compelled, we did it, we felt an obligation to do it, to send our own forces to hold the Greenland territory, and hold it we did at great cost and expense. They didn't have a chance of getting on it, and they tried. Denmark knows that. We literally set up bases on Greenland for Denmark. We fought for Denmark. We weren't fighting for anyone else. We were fighting to save it for Denmark. Big, beautiful piece of ice. It's hard to call it land. It's a big piece of ice. But we saved Greenland and successfully prevented our enemies from gaining a foothold in our hemisphere. So we did it for ourselves also. And then after the war, which we won it big. Without us, right now you'd all be speaking German and a little Japanese, perhaps. After the war, we gave Greenland back to Denmark. How stupid were we to do that? But we did it. But we gave it back. But how ungrateful are they now? So now our country and the world face much greater risks than it did ever before because of missiles, because of nuclear, because of weapons of warfare that I can't even talk about. 2 weeks ago, they saw weapons that nobody ever heard of. They weren't able to fire one shot at us. They said, what happened? Everything was discombobulated. They said, we've got them in our sights. Press the trigger, and nothing happened. No anti-aircraft missiles went up. There was one that went up about 30 feet and crashed down right next to the people that sent it. They said, what the hell is going on? Those defensive systems were made by Russia and by China. So they're going to go back to the drawing boards, I guess. Greenland is a vast, almost entirely uninhabited and undeveloped territory. It's sitting undefended in a key strategic location between the United States, Russia, and China. That's exactly where it is, right smack in the middle. Wasn't important nearly when we gave it back. You know, when we gave it back, it wasn't the same as it is now. It's not important for any other reason, you know, everyone talks about the minerals. There's so many places. There's no rare earth, no such thing as rare earth. There's rare processing, but there's so much rare earth. And this, to get to this rare earth, you got to go through hundreds of feet of ice. That's not the reason we need it. We need it for strategic national security and international security. This enormous unsecured island is actually part of North America, on the northern frontier of the Western Hemisphere. That's our territory. It is therefore a core national security interest of the United States of America. And in fact, It's been our policy for hundreds of years to prevent outside threats from entering our hemisphere, and we've done it very successfully. We've never been stronger than we are now. That's why American presidents have sought to purchase Greenland for nearly 2 centuries. You know, for 2 centuries they've been trying to do it. They should have kept it after World War II, but they had a different president. That's all right. People think differently. Much more necessary now than it was at that time, however. In 2019, Denmark said that they would spend over $200 million to strengthen Greenland's defenses. But as you know, they spent less than 1% of that amount. 1%. There's no sign of Denmark there. And I say that with great respect for Denmark, whose people I love, whose leaders are very good. It's the United States alone that can protect this giant mass of land, this giant piece of ice, develop it and improve it and make it so that it's good for Europe and safe for Europe and good for us. And that's the reason I'm seeking immediate negotiations to once again discuss the acquisition of Greenland by the United States, just as we have acquired many other territories throughout our history, as many of the European nations have. They've acquired. There's nothing wrong with it. Many of them, some went in reverse, actually, if you look. Some had great, vast wealth, great, vast lands all over the world. They went in reverse. They're stuck back where they started. That happens too. But some grow. But this would not be a threat to NATO. This would greatly enhance the security of the entire alliance, the NATO alliance. The United States is treated very unfairly by NATO. I want to tell you that. And when you think about it, nobody can dispute it. We give so much and we get so little in return. And I've been a critic of NATO for many years. And yet I've done more to help NATO than any other president by far, than any other person. You wouldn't have NATO if I didn't get involved in my first term. The war with Ukraine is an example. We are thousands of miles away, separated by a giant ocean. It's a war that should have never started, and it wouldn't have started if the 2020 U.S. presidential election weren't rigged. It was a rigged election. Everybody now knows that. They found out. People will soon be prosecuted for what they did. It's probably breaking news, but it should be. It was a rigged election. You can't have rigged elections. You need strong borders, strong elections, and ideally a good press. I always say it. Strong borders, strong elections, free, fair elections, and a fair media. The media is terrible. It's very crooked. It's very biased, terrible. But someday it'll straighten out because it's losing all credibility. Think of it. When I went in a landslide, a giant landslide, won all 7 swing states, won the popular vote, won everything, and they only get negative press. That means that it has no credibility. And if they're going to get credibility, they're going to have to be fair. So you need a fair press. But you also need those other elements. And I inherited a terrible, terrible situation. If you look, the border was open. The inflation was raging. Everything was bad with the United States when I came into office. But I also inherited a mess with Ukraine and Russia, something that would have never happened. And I know Putin very well. He and I would discuss Ukraine. It was the apple of his eye, but he wasn't going to do anything. I said, Vladimir, you're not doing it. He would never have done it. It was terrible what happened. I could see it happening, too. After I left, I could see it happening. Biden had given Ukraine and NATO $350 billion, a staggering sum, $350 billion. I came in, and just like the southern border, just like inflation, just like our economy, I said, wow, this place is in trouble, meaning our country. All of these things were out of control. But the border was out of control. We fixed it with the strongest border anywhere in the world. And I've now been working on this war for 1 year, during which time I settled 8 other wars. India, Pakistan. I settled other wars that were Vladimir Putin called me, Armenia, Azerbaijan. He said, I can't believe you settled that one. They were going on for 35 years. I settled it in 1 day. And President Putin called me. He said, you know, I can't believe I worked on that war for 10 years trying to settle it. I couldn't do it. I said, do me a favor, focus on settling your war. Don't worry about that one. What does the United States get out of all of this work, all of this money, other than death, destruction, and massive amounts of cash going to people who don't appreciate what we do? They don't appreciate what we do. I'm talking about NATO, I'm talking about Europe. They have to work on Ukraine. We don't. The United States is very far away. We have a big, beautiful ocean separating us. We have nothing to do with it. Until I came along, NATO was only supposed to pay 2% of GDP, but they weren't paying. Most of the countries weren't paying anything. The United States was paying for virtually 100% of NATO. And I got that stopped. I said, that's not fair. But then, more importantly, I got NATO to pay 5%, and now they were paying, and now they are paying. So something nobody said was possible. They said, we will never go up higher than 2%. But they went to 5%, and now they're paying the 5%. They didn't pay the 2%, and now they're paying the 5%. And they're stronger for it, and they have an excellent, by the way, Secretary General, who's possibly in the room. Mark, are you here? Yes, he's here. Hello, Mark. We never asked for anything, and we never got anything. We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force. All the United States is asking for is a place called Greenland, where we already had it as a trustee, but respectfully returned it back to Denmark not long ago after we defeated the Germans, the Japanese, the Italians, and others in World War II. We gave it back to them. We were a powerful force then, but we are a much more powerful force now. After I rebuilt the military in my first term and continue to do so today, we have a budget of $1.5 trillion. We're bringing back battleships. The battleship is 100 times more powerful than the great battleships you saw in World War II, those great, big, gorgeous ships, the Missouri, the Iowa, the Alabama. Because I thought maybe we could take them out of mothballs. They said, no, sir, these ships are 100, think of that, 100 times more powerful than those big, magnificent pieces of art that you saw so many times ago, that you still see on television. You say, wow, what a force. 100 times, each ship 100 times more powerful than the big battleships of the past. So that was the end of the mothball story. So what we have gotten out of NATO is nothing except to protect Europe from the Soviet Union and now Russia. I mean, we've helped them for so many years. We've never gotten anything, except we pay for NATO. And we paid for many years until I came along. We paid for, in my opinion, 100% of NATO because they weren't paying their bills. And all we're asking for is to get Greenland, including right title and ownership, because you need the ownership to defend it. You can't defend it on a lease. Number one, legally it's not defensible that way, totally. And number two, psychologically, who the hell wants to defend a license agreement or a lease, which is a large piece of ice in the middle of the ocean where if there is a war, much of the action will take place on that piece of ice. Think of it. Those missiles would be flying right over the center of that piece of ice. All we want from Denmark for national and international security and to keep our very energetic and dangerous potential enemies at bay is this land on which we're going to build the greatest golden dome ever built. We're building a golden dome that's going to, just by its very nature, going to be defending Canada, Canada gets a lot of freebies from us, by the way. They should be grateful also, but they're not. I watched your Prime Minister yesterday. He wasn't so grateful. But they should be grateful to us. Canada lives because of the United States. Remember that, Mark, the next time you make your statements. What we did for Israel was amazing, but that's nothing compared to what we have planned for the United States, Canada, and the rest of the world. We are going to build a dome like no other. We did it for Israel. And by the way, I told Bibi, stop taking credit for the dome. That's our technology. That's our stuff. But they had a lot of courage, and they were good fighters, and they did a good job, and we wiped out the Iran nuclear threat like nobody can believe. Nobody's ever seen anything like it. That, Venezuela, taking down Soleimani, wiping out al-Baghdadi when he tried to reinstitute ISIS. We did a lot. I did a lot of big things, all perfectly executed. Everyone was perfectly executed. Somebody told me that, a military expert told me, sir, everything you've done has been perfectly executed. I said, I know. So other presidents have spent, whether foolishly or not, trillions and trillions of dollars on NATO and gotten absolutely nothing in return. We've never asked for anything. It's always a one-way street. Now they want us to help them with Ukraine. And let me say, we're going to. I'm really helping, not even them. I want to see, last week, if you saw, it was 10,000 soldiers, but last month it was 31,000 soldiers died. 31,000. That's this room times, the number of people in this room times 30. Think of it. 30,000 soldiers died in 1 month. The month before it was 27,000. The month before that it was 28,000. The month before that it was 25,000. It's a bloodbath over there. And that's what I want to stop. It doesn't help the United States, but these are souls. These are young people. Look like you, look like some of you right in the front row. They go to war. Their parents are so proud. Oh, there he goes, comes back. 2 weeks later, they get a call, your son's head's been blown off. I want to stop it. It's a horrible war. It's the worst since World War II. They keep going, they'll exceed World War II. The numbers are staggering, how many people they've lost. They don't want to talk about it. Ukraine and Russia lost just tremendous amounts. And I'm dealing with President Putin, and he wants to make a deal, I believe. I'm dealing with President Zelensky, and I think he wants to make a deal. I'm meeting him today. He might be in the audience right now. But they got to get that war stopped because too many people are dying, needlessly dying. Too many souls are being lost. It's the only reason I'm interested in doing it. But in doing it, I'm helping Europe, I'm helping NATO, and I've until the last few days when I told them about Iceland, they loved me. They called me daddy, right, last time. A very smart man said, he's our daddy. He's running it. I was like running it. I went from running it to being a terrible human being. But now what I'm asking for is a piece of ice, cold and poorly located, that can play a vital role in world peace and world protection. It's a very small ask compared to what we have given them for many, many decades. But the problem with NATO is that we'll be there for them 100%. But I'm not sure that they'd be there for us. If we gave them the call, gentlemen, we are being attacked. We're under attack by such and such a nation. I know them all very well. I'm not sure that they'd be there. I know we'd be there for them. I don't know that they'd be there for us. So with all of the money we expend, with all of the blood, sweat, and tears, I don't know that they'd be there for us. They're not there for us on Iceland, that I can tell you. I mean, our stock market took the first dip yesterday because of Iceland. So Iceland's already cost us a lot of money. But that dip is peanuts compared to what it's gone up. And we have an unbelievable future in that stock. That stock market is going to be doubled. We're going to hit 50,000, and that stock market's going to double in a relatively short period of time because of everything that's happening. But this is a good example. After giving NATO and European nations trillions and trillions of dollars in defense, they buy our weapons. We make the greatest weapons in the world, but now we're going to make them faster, much faster. You saw that. I put a cap on the salaries. Then I put no buybacks, no stock buybacks, no various other things that they were doing. I mean, they were making $50 million, but it would take them 3 years to give you a Patriot missile. I said, that's not good. My chauffeur can do a better job than that, and he makes slightly less than 50. They make big salaries. If they're going to make those big salaries, they're going to have to produce a lot faster. The good news is we have the greatest equipment in the world. Now we're going to start making it a lot faster. They're going to build additional plants. And all of the money that goes into stock buybacks is going to go into building plants. We're not allowing stock buybacks by defense companies any longer. They're going to build new plants to make Tomahawks, Patriots. We have the best equipment, F-35s. F-47, the new one just coming out. They say it's the most devastating plane, fighter jet ever. Who knows? They called it 47. If I don't like it, I'm going to take the 47 off it. I wonder why they called it 47. We'll have to think about that. But if I don't like it, I'm going to take that 47 off. But it's supposed to be the stage 6. It's supposed to be the first stage 6 plane, undetectable, like our B-2 bombers were undetectable. They flew right over Iran. They were undetectable. And they did their job, and they got the hell out of there. So we want a piece of ice for world protection, and they won't give it. We've never asked for anything else, and we could have kept that piece of land, and we didn't. So they have a choice. You can say yes, and we will be very appreciative, or you can say no, and we will remember. A strong and secure America means a strong NATO, and that's one reason why I'm working every day to ensure our military is very powerful, our borders are very strong, and above all, our economy is strong because national security requires economic security and economic prosperity, and we have the greatest that we've ever had. Biden and his allies destroyed our economy and gave us perhaps the worst inflation in American history. They say 48 years, I say forever, but I think 48 years is the equivalent to forever. Whether it's 48 years or ever, it's terrible, costing the typical family $33,000. What they did to this country should never, ever be forgotten. It's early, but he has to be rated as the worst president we've ever had by far. The auto pen did much of the damage. The auto pen, he was the auto pen president, because I don't believe a sane president would have ever signed the kind of things that he signed. But now grocery prices, energy prices, airfares, mortgage rates, rent, and car payments are all coming down, and they're coming down fast. We inherited a mess, but we've done a hell of a job in 12 months. Under my most favored nation policy for drug prices, the cost of prescription drugs is coming down by up to 90%, depending on the way you calculate. You could also say 5, 6, 7, 800%. There are two ways of figuring that. But we have a favored nations policy that every president wanted, no president was able to get. I got it, and other nations approved it. And I had to use tariffs in order to get it because they said, no way. In other words, a pill that costs 10% in London costs $130. Think it costs $10 in London, costs $130 in New York or in Los Angeles. And I'd say, boy, that's bad. Friends of mine would say, you know, we go to London, you can buy the stuff for nothing. We go all over the world, we can buy it for nothing. Because basically America was subsidizing every nation in the world because presidents allowed them to get away with it. It became very tough. So when I called up Emmanuel Macron, I watched him yesterday with those beautiful sunglasses. What the hell happened? But I watched him sort of at $10 for a pill. And I said, Emmanuel, and I have all the big pharmaceutical companies are in total agreement. It wasn't easy, by the way. They're tough, smart. They've been getting away with the scam for a long time. But they gave it up. But they said, you'll never get the countries to approve it. I said, why is that? Because they won't. They always said, we're not paying any more. Get the rest for the United States. So over the years, they stayed the same. We just went up, up, up. And I mean, we would pay 13, 14, 15 times more than some certain countries would. So I said, no, they'll approve it 100%. Sir, you'll never get them to approve it. I said, I guarantee you. But I actually started with Emmanuel, who probably is in the room too. And I like him. I actually like him. Hard to believe, isn't it? And I said, Emmanuel, you're going to have to lift the price of that pill to $20, maybe $30. Think of that. That means it's a doubling of prescription drugs. Might be a tripling, might be a quadrupling. It's not easy. No, 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 Donald, I will not do that. I said, yes, you will, 100%. He said, no, no, no. You're asking me to double. I said, Emmanuel, you've been taking advantage of the United States for 30 years with prescription drugs. You really should do it, and you will do it. I have no doubt. In fact, I am 100% sure you're going to. No, 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 I will not do it. Because, yes, in all fairness, he has to double or triple. Because the world being a bigger place than the United States, it's not that you meet in the middle. You just have to go up some, and we come down a lot. They go up a little, we come down a lot. So we're at $130, they're at 10. So they may have to go to 20 or 30. No more than that. I said, Emmanuel, you're going to be doubling or tripling? No, no, no. I said, here's the story, Emmanuel. The answer is you're going to do it. You're going to do it fast. And if you don't, I'm putting a 25% tariff on everything that you sell into the United States and a 100% tariff on your wines and champagnes. And that's about 10 times more than what I'm requesting. And you're going to do it. I don't want to go public with it, but you may make me do that. No, no, Donald, I will do it. I will do it. It took me, on average, 3 minutes a country, saying the same thing. You will do it. They all said, no, 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 I will not do it. You're asking me to double the cost of prescription. I said, that's right, because you've been screwing us for 30 years. And they said, we will not do it. I said, that's all right. On Monday morning, we're putting a 25, 30, 50. I gave different numbers for different countries. This is also national security we're talking about. Not fair. We're not going to subsidize the whole world. And every one of those countries have agreed to do it. So one of the biggest things that I've done is the fact that we have now most favored nation. We will pay whatever the lowest price is in the entire world. So our drug prices are going to be coming down by staggering 90%. Again, you could say 1,000%, 2,000%. Depends on the way you want to figure it, but we'll go with the way the fake news likes it better because it sounds, can you imagine a 90% reduction sounds much worse? But drug prices are going to be coming down tremendously in all the nations, and I appreciate them doing it, but they did it. In all fairness, without tariffs, I wouldn't have been able to get it done. After declining $3,000 under Biden, real incomes are up in the United States by $2,000, $3,000, and even $5,000 and more. Home ownership has always been a symbol of health and vigor of American society, but that goal fell out of reach for millions and millions of people in the Biden era because interest rates went up so high. Today, I'm taking action to bring back this bedrock of the American dream. In recent years, Wall Street giants and institutional investment firms, many of you are here, many of you are good friends of mine, many of you are supporters. Sorry to do this, Joe, I'm so sorry. But you've driven up housing prices by purchasing hundreds of thousands of single-family homes, and it's been a great investment for them. Often as much as 10% of houses on the market. You know, the crazy thing is a person can't get depreciation on a house, but when a corporation buys it, they get depreciation. Okay, that's something we're going to have to think about, too. I don't know if too many people think about that. You buy a corporation, they buy 500 houses, they buy hundreds of thousands, they buy 500 houses, they can take depreciation. A person sweats and works and buys one house, they can't. But homes are built for people, not for corporations, and America will not become a nation of renters. We're not going to do that. That's why I have signed an executive order banning large institutional investors from buying single-family homes. It's just not fair to the public. They're not able to buy a house. And I'm calling on Congress to pass that ban into permanent law, and I think they will. One of the biggest barriers to saving for a down payment has been surging credit card debt. The profit margin for credit card companies now exceeds 50%, one of the biggest. And they charge Americans interest rates of 28%, 30%, 31%, 32%. Whatever happened to usury? So to help our citizens recover from the Biden disaster, all caused by this horrible precedent, I'm asking Congress to cap credit card interest rates at 10% for 1 year. And this will help millions of Americans save for a home. They have no idea they're paying 28%. They go out there a little late in their payment and they end up losing their house. It's terrible. To unleash innovation in savings and financing, I'm also working to ensure America remains the crypto capital of the world. And to that end, last year I signed the landmark Genius Act into law. Now Congress is working very hard on crypto market structure legislation, Bitcoin, all of them, which I hope to sign very soon, unlocking new pathways for Americans to reach financial freedom. And I did it for two reasons. Number one, I thought it was politically good, and it was. I got tremendous political support. But more importantly, China wanted that market too. It's just like they want the AI. And we've got that market, I think, pretty well locked up. If I didn't do it, Biden was totally against it until before the election, when they realized that, there were millions of people voting against him over crypto. And all of a sudden, they loved it very much, but it was too late. They blew it. But it is politically popular, but it's much more importantly, we have to make it so that China doesn't get the hold of it. And once they have that hold, we're not going to be able to get it back. So I'm honored to have done it. Finally, I've instructed government-backed institutions to purchase up to $200 billion in mortgage bonds to bring down interest rates. And I'll be announcing a new Fed chairman in the not-too-distant future. I think he'll do a very good job. See, I gave away some of it. He did give that away. So we have something, got something, but somebody that's very respected. They're all respected. They're all great. Everyone that I interviewed is great. Everyone could do, I think, a fantastic job. Problem is they change once they get the job. They do. They're saying everything I want to hear, and then they get the job. They're locked in for 6 years. They get the job, and all of a sudden, let's raise rates a little bit. I call them, sir, we'd rather not talk about this. It's amazing how people change once they have the job, but it's too bad. Sort of disloyalty, but they got to do what they think is right. We have a terrible chairman right now, Jerome, too late Powell. He's always too late. And he's very late with interest rates, except before the election. He was just fine for the other side. So we're going to have somebody that's great, and we hope he does the right job. Last week, the average 30-year mortgage rate dropped below 6% for the first time in many years. Another major factor in driving up housing costs was the mass invasion of our borders. And I have to say one thing about housing, because nobody ever says this. I am very protective of people that already own a house, of which we have millions and millions and millions. And because we have had such a good run, the house values have gone up tremendously. And these people have become wealthy. They weren't wealthy. They become wealthy because of their house. And every time you make it more and more and more affordable for somebody to buy a house cheaply, you're actually hurting the value of those houses, obviously, because the one thing works in tandem with the other. And I don't want to do anything that's going to hurt the value of people that own a house, who for the first time in their lives are walking around the streets of whatever city they're in, very proud that their house is worth $500,000, $600,000, $700,000. Now, if I want to really crush the housing market, I could do that so fast, and people could buy houses, but you would destroy a lot of people that already have houses. In some cases, they've mortgaged their house, and the mortgage would be very low. And all of a sudden, the mortgage without any changes becomes very high, and they end up losing the house. I'm not going to hurt, and I speak with Scott, who's doing a fantastic job, and Howard, who's doing a fantastic job, and all of my people. And I always say, look, you know, I can crush the hell out of the market. We can drop interest rates to a level, and that's one thing we do want to do. That's natural. That's good for everybody. You know, the dropping of the interest rates, we should be paying a much lower interest rate than we are. We should be paying the lowest interest rate of any country in the world, because without the United States, you don't have a country. I mean, I had a case with Switzerland. We happened to be in Switzerland. Maybe I'll give you a quick story. But they were paying nothing. They make beautiful watches, great watches, Rolex, all of them. They were paying nothing to the United States when they sent their product in. And we had a $41 billion deficit. $41 billion with this beautiful place. Flew over it, isn't it nice? So I said, let's put a 30% tariff on them so that we get back some of it, not all of it at all. We still have a deficit, big deficit. We had 41 million. That's a big deficit. And I said, let's put a tariff on. Different tariffs, different places. You're all party to them. In some cases, victims to them. But in the end, it's a fair thing. And most of you realize that. But we put a 30% tariff on Switzerland, and all hell broke loose. They were calling, I mean, like you wouldn't believe. And I know so many people from Switzerland, incredible place, incredible, brilliant place. But I didn't realize that they're only good because of us. And there's so many other examples. I mean, us, probably other places, but a majority of the money they make is because of us, because we never charged them anything. So they come in, they sell their watches, no tariffs, no nothing. They walk away, they make $41 billion on just us. So I said, no, we can't do that. So I'm going to bring it up. I still would have a deficit pretty substantial, but I brought it up to 30%. And I guess Prime Minister, I don't think President, I think Prime Minister called a woman, and she was very repetitive. She said, no, 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 you cannot do that, 30%. You cannot do that. We are a small, small country. I said, yeah, but you have a big, big deficit. You may be small, but you have a bigger deficit than big countries. He said, no, 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 please, you cannot do it. Kept saying the same thing over and over. We are a small country. I said, but you're a big country in terms of, and she just rubbed me the wrong way, I'll be honest with you. And I said, all right, thank you, ma'am, appreciate it. Do not do this. Thank you very much, ma'am. And I made it 39%. And then all hell really broke out. And I was paid visits by everybody. Rolex came to see me. They all came to see me. But I realized, and I reduced it, because I don't want to hurt people. I don't want to hurt them. And we brought it down to a, lower level. Doesn't mean it's not going up, but we brought it down to a lower level. But they pay now, tariff. But I realized that we have many places like that where they're making a fortune because of the United States. Without the United States, they wouldn't be making anything. Think of it. Switzerland made $41 billion on us. And as she said, it's a small place. And I realized with that, I don't know, I was so, because she was so aggressive. And I realized in that conversation that the United States keeping the whole world afloat. Many places, I could give you 6, 7 places just in the people in this little area. I know every one of them. They're looking down. They don't want to see me, and they don't want to stare me in the eyes. But they're taking advantage of, everybody took advantage of the United States. But I've been very fair, and I gave them a tariff, and it was fine. But I realized that without us, it's not Switzerland anymore. Without us, it's not any of the countries that are represented here. And we want to work with the countries. We want to work with them. We're not looking to destroy them. I could have said, 39, 40%. I could have said I want a 70% tariff, then we make money with Switzerland. But Switzerland would have been probably destroyed, financially destroyed. I don't want to do that. But we should be paying the lowest interest rate of everybody. I hope Scott's listening to this, because we should be paying the lowest interest rate of everybody. Without us, most of the countries don't even work. And then you have the protection factor. Without our military, which is the greatest in the world by far, without our military, you have threats that you wouldn't believe. You wouldn't believe. You don't have threats because of us, and that's because of NATO. One other thing, and I have to say it so importantly, in the old days, and I used to say I'm the youngest in the room. Now I'm among the older. I hate to say it. I don't feel old, but I'm among the older. But I remember not long ago, 20, 25 years ago, when good news came out about, let's say, the United States. The United States had a great quarter. The United States had a great month. All the stocks went up. And that's the way it's supposed to be. Now when they say the United States had a record quarter, it's unbelievable how well it's doing, all the stocks crash because they say, oh no, inflation, they're going to raise interest rates. And they do. Some of these stupid people like Powell, they raise interest rates. And what they do is they stop you from being successful. It used to be when we had a great quarter, a great month, great earnings, great anything, any good news, the stock market went up. That's the way it's going to be. We got to do that again, because that's the way it should be. Now when we have a great month, they want to kill it. Like we did over 5%. People were surprised. We should do 20%. We could do 25%. When we announce good numbers, and the reason is they're so petrified of inflation. And growth doesn't mean inflation. We've had tremendous growth with very low inflation. In fact, growth can fight inflation, proper growth. So we want to get back to the days when we announce great numbers, because we're going to be announcing phenomenal. You know, all these factories that are being built at record, thousands of businesses are being built right now. Remember, $18 trillion is invested. I think the second number is 3. And that was China many years ago. Investments in the country from outside. 18 trillion, nobody's ever seen. And that's money coming in and building things, factories. Thousands of businesses are being built, thousands. Hundreds of big factories, car plants are moving back to the United States. They're coming in from Canada, they're coming in from Mexico, from Japan. Japan's coming in and building plants here in order to avoid tariffs. They're coming in from China. They're coming in from all over the world. We have more plants being built now, car plants, than we've ever had built, even in the heyday from the 1940s and 50s. And they're bigger. They don't use renovations anymore where they take an old plant, they rip it down, they build a brand new plant, super modern plant. But it's happening at levels that nobody's ever seen. In 2024, the U.S. built less than 2 million new homes, but Biden admitted more than 8 million new migrants. And those days are over. In 2025, for the first time in 50 years, the United States had reverse migration. Boy, that was nice. And these were criminals that were being taken out of our country because they allowed people to come into our country from jails, from gangs, drug dealers, murderers. 11,888 murderers. We've gotten most of them out. And then ICE gets beat up by stupid people from leadership in Minnesota. We actually are helping Minnesota so much, but they don't appreciate it. Most places do. You know, Washington, D.C. is the safest place now in the United States. It was a very dangerous place to walk, and now you can walk with your wife, your kids, right through the middle of the city. Right now, Washington, D.C. is as safe as it gets. It was one of the most unsafe, I had to admit. We sent in the military, the National Guard. Within 2 months, it was great. Within 3 months, it's like a really great place and a safe place and a beautiful place. It's even been cleaned up. The graffiti's gone. The fences are gone. We don't have to worry about fences anymore. All of the places, the grasses are cut and replaced with new grass in many cases. It's all going to happen in the spring. But Washington and D.C. is beautiful again, and it's safe. New restaurants are opening up. They were all closing. Now you can't get into a restaurant. Restaurants in Washington, D.C. are all opening. Memphis also, Memphis, Tennessee, New Orleans, Louisiana. We're there for 3 weeks. We've cut the crime down by 64%. Within another month, we'll have virtually no crime there. We can do that all over. We're going to help the people in California. We want to have no crime. I know Gavin was here. I used to get along so great with Gavin when I was president. Gavin's a good guy. And we're going to, if he needed it, I would do it in a heartbeat. I'd love to see. We did help them a lot in Los Angeles, a lot with the early in my term when they had some problems. But we would love to do it. I will say this, if I were a Democrat governor or whatever, I would call up Trump. I'd say, come on in, make us look good, because we're cutting crime down to nothing. And we're taking people out, career criminals who are only going to do bad things, and we're bringing them back to their countries. But where we've done it has been amazing, and we have a capacity to do it at much greater levels. We're cutting illegal aliens off welfare and other government benefits, and I have directed that starting immediately, there will be no more payments to sanctuary cities, because they are really just sanctuaries for criminals. They're really protecting criminals, and those are the ones we have to get out of the country: murderers, drug dealers, the mentally insane. They emptied their mental institutions into the United States. And despite that, we have the lowest crime numbers that we've ever had in the history of the country. Just came out. But equally importantly, we're cracking down on more than $19 billion in fraud that was stolen by Somalian bandits. Can you believe that Somalia, they turned out to be higher IQ than we thought? I always say these are low IQ people. How did they go into Minnesota and steal all that money? And we have, you know, they're pirates, they're good pirates, right? But we shoot them out of the water just like we shoot the drug boats out. They're not pirating too many boats lately, do you notice? When they go out into those boats, they want to take over a $1.5 billion tanker loaded up with oil, and they say, we're going to blow up your boat. They have powerful weapons. You hit the side of the boat, you blow the whole thing up. The insurance companies are petrified, so they say, just give them the boat, we'll give them money instead. And I don't do that. We blow them right the hell out of the water. We see them going out, we blow them out of the water. We don't have any pirates so much anymore. If we do, they won't be there long. We've cut down with the hitting of the boats that are loaded up with drugs, including submarines. Can you believe they actually buy small, they call mini subs, very fast. They're meant for drugs. We've knocked out 2 of them. The Democrats say they were fishing. You have ruined somebody's fishing weekend, I would say. A submarine is not a fishing boat. You don't fish. But we've knocked down drugs by water, the oceans, the sea, by 97.2%. Think of that. And I actually say, who the hell are the 3%? Because I would not want to be piloting one of those boats. We knocked them down, and now we're going to start on land. We're going to knock it all out. The land is the easy part. What we did on sea is incredible, and that's our great military. The situation in Minnesota reminds us that the West cannot mass import foreign cultures, which have failed to ever build a successful society of their own. I mean, we're taking people from Somalia, and Somalia is a failed, it's not a nation. Got no government, got no police, got no military, got no nothing. And then we have this fake congressperson who they just reported is worth $30 million. You believe this? Ilhan Omar, talking about the Constitution that provides me. She comes from a country that's not a country, and she's telling us how to run America. Not going to get away with it much longer, let me tell you. The explosion of prosperity and conclusion and progress that built the West did not come from our tax codes. It ultimately came from our very special culture. This is the precious inheritance that America and Europe have in common. We share it. We share it, but we have to keep it strong. We have to become stronger, more successful, and more prosperous than ever. We have to defend that culture and rediscover the spirit that lifted the West from the depths of the Dark Ages to the pinnacle of human achievement. We live in an incredible changing period. It's an unbelievable time, but we have to take advantage of the time that we're in. In our hands are technologies that our ancestors could scarcely have. I mean, they couldn't have even dreamt some of the things that we see today. And so rapidly they're produced. I mean, AI, 2 years ago, nobody ever heard of the term, and now everybody's talking about it. And it can have some very good purpose. It could also have some dangerous purpose. And for that, we have to watch out. But some tremendous things are happening because of it. And we're leading by so much. We're doing so well. But opportunities that are bigger and grander than ever before in human history are right before us. It is the pioneers in this room. Many of you in this room are true pioneers. You're truly brilliant people. Just your ability to get a ticket is brilliant because you have about 50 people for every seat. I don't know what. That's Larry. Everything Larry touches turns to gold. He made this very successful. But you're in this room, and some of you are the greatest leaders anywhere in the world. You're the greatest brains anywhere in the world. And the future is unlimited, and to a large part because of you, and we have to protect you, and we have to cherish you. I always say we have to cherish our brilliant people because there aren't many of them. So together with confidence, boldness, and persistence, let us lift up our people, grow our economies, defend our shared destiny, and build a future for our citizens that is more ambitious, more exciting, more inspiring, and greater than the world has ever seen. We're in a position to do things that nobody else has ever even thought of before. And many of the people in this room are the ones that are doing it, and I want to congratulate you, and I'm with you all the way. You can do things that nobody else can even think about. So I congratulate you on your tremendous success. And the United States is back, bigger, stronger, better than ever before. And I'll see you around. Thank you all very much. Thank you very much.
The President of the United States wrapping up an address in Davos, Switzerland at the World Economic Forum, an address that went for more than an hour. Plenty to unpack here, but I think the main market-moving event were the comments on Greenland. Equities at session highs about 20 minutes into the session, the S&P 500 bouncing as this address continued. The two headlines, ultimately the US doesn't want to use excessive force to get Greenland, but also is seeking immediate talks on acquiring Greenland. That according to the President of the United States in the last hour or so. If you missed some of this, welcome to the program. This is Bloomberg Surveillance, an extended edition. Take a listen to what the President had to say.
It's the United States alone that can protect this giant mass of land, this giant piece of ice, develop it and improve it and make it so that it's good for Europe and safe for Europe and good for us. And that's the reason I'm seeking immediate negotiations to once again discuss the acquisition of Greenland. We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force.
The President of the United States just moments ago. We can take you back into the room. I understand a Q&A session might be beginning, so let's try and take a listen to what the President's got to say.
George Washington and Abraham Lincoln, if they came back and ran as president and vice president, they couldn't beat you. And then what happened is the following day, I was told to stay tuned because there's something really bad happening in China. There are bodies laying all over Wuhan, right around that certain building that we talk about. I always said it came from Wuhan. It did come from Wuhan. And they were body bags. We saw it by satellite. And they said, there are strange things happening in China. And so it began. And we ended up with the COVID, and the whole world suffered. We did a phenomenal job. I don't think we got the credit we deserved. We did something that Operation Warp Speed, which some people say was one of the greatest military feats ever. We did a great job. Used our military, used a lot of people. But sometimes you get hit with things, nothing you can do. You get hit with things like that unexpectedly. And we got through it. And when I left, the stock market was higher than it was previous to the COVID coming up. And I called it a great achievement. But things happen, bad things happen. The things that we can stop are wars if we're smart. That we can stop. Those are a matter of being intelligent and having intelligent people on the other side, because wars are the worst of all. Wars are worse than anything. But we can stop wars because that's sort of up to us. But things like dust flying in the air, wherever COVID comes from or whatever comes, sometimes you have to be a little bit lucky. But we are poised to have an economy like no other, not only in this country, but anywhere. And you know, when you hear the kind of numbers that I can tell you that Scott Bessent was with me the other day, and he's looking at numbers. He said, I can't. And that's all he's done his whole life, pretty much your whole life. Scott, you weren't going to be a football player, I don't think. Scott was not that great at football, but he was always good at numbers, right? And he was looking at numbers. He said, I've never seen anything like this. We're poised to do things that no other country's ever done. And, you know, luck, I hate to say it, but we need a little luck. We don't want to get hit by something that nobody could have thought. Whoever thought we were going to hit by a pandemic? You know, when I heard the word pandemic, I said, oh, that's an ancient problem. World War I, they lost 100 million people. It actually ended World War I. A lot of people don't know. The Spanish flu in World War I ended because all the soldiers were sick. The soldiers were so sick on both sides, and that war was raging, and they were all dying from the Spanish flu. They were sick as dogs. They couldn't fight. So, you know, you don't know how that would have turned out. But so we do, I mean, subject to that, and I always have to put a caveat in for it, but we're poised to have the greatest growth of any large country, I think any country that there's been. When you look at what's happening in the United States, it's really amazing.
Thank you. One thing that maybe keeps you up at night, I know you don't sleep that much anyway, Mr. President, is the debt. The U.S. debt is high, is now the biggest expenditure on your budget. How to get out of that impasse?
Well, the big thing is growth. I mean, growth is the way. If we grow like this, we go from having at $37 trillion, we go from having high debt to low debt. But we also are cutting expenses, you know, the old-fashioned way. We have extraordinary growth. I think we're going to be growing our way out. I think we're going to be paying off debt. We're taking in tremendous money from tariffs fairly. And again, I'm using them judiciously. You know, Switzerland's a case study. I could have gotten much more. I could have asked for much more. But we're using them judiciously. But I think growth, most importantly, and then cutting costs. Now, if you take a look at Minnesota, $19 billion in fraud and other things. People going to airports, they came into the country, they don't have 10 cents, and they're leaving with hundreds of thousands of cash in their bags. When we get to that, and our DOJ, Pam, and Todd, and all the people that work over there, and all of the people that work in here, I can tell you, Scott Bessent is working on that. It's a priority, right? You have your whole team. We're in there looking for where this money is coming from, how much it is. It could be more than $19 billion. Can you believe that? That's just one state. If we were able to cut out 50% of the fraud, 50%, and we should be able to do better than that, we would have a balanced budget without having to talk about even growth. So we have a lot of options, but we're working very hard on that. That's a big deal. It's not just the protests, the fake protests done by agitators and, you know, professional insurrectionists. That's what they are. They're professional troublemakers. But we are looking very strong at the money too in Minnesota and other places.
I think, Mr. President, also the $500 billion invested in artificial intelligence and the frontier technologies last year also were driving growth exponentially in the U.S.
Well, AI has been a big factor. AI is massive. I mean, Mark Zuckerberg showed me a plant where he put it over a map of Manhattan, and it was basically the size of Manhattan. This is not, I said, you got to be kidding. It's a plant that was miles long, miles wide, very high. I don't think it was high like the Empire State Building, but it was high. And it literally covered most of the island of Manhattan. That's called a big plant. And, you know, when I heard they're going to spend $50 billion building it, I said, what are, you know, if you spend $50 million, you can build a nice little shopping center. If you spend $500 million, you can build a good shopping center. But how do you spend $50 billion? When I looked at this thing, I said, you think you'll be able to do it for that? It's amazing when, you know, some of the plants that I see, and I see them all. And again, so big is we're letting them build their own electric generation. This way we have no problem. And otherwise they'd be complaining. There'd be nobody able to, but you know, we have an old grid system. And not only that, they're going to sell at a very cheap price the excess electricity that they create back into our grid. So that'll solve some problems for certain states that don't have enough electricity.
We also know that on the AI, there is fierce competition between the US as the largest economy in the world, 27% of the global GDP and 5% of the global population, not doing that badly, and China. And we know that that competition is very tough on AI. I know you're heading to a state visit to China in April. How do you see the US-China relationship moving forward? Are you able to combine this tough competition with also collaboration?
So I've always had a very good relationship with President Xi and with President Putin. Talk about, you know, the larger powers. But I've always had a very good relationship with President Xi of China. He's an incredible man. What he's done is amazing. He's highly respected by everybody. And I do now. I mean, now I have good. It was very severely interrupted by COVID. I used to call it the China virus, but he said, do you think you could use a different name? And I decided to do that because why should we have a problem over that? But I would do that, and they were
a true diplomat, huh?
I became a diplomat for the first time. Well, you know who taught me that? Marco Rubio. Marco Rubio. He said, let me teach you about diplomacy. Hey, any guy that gets approved by 100% of the votes, think of it, he got liberal Democrats and radical right Republicans to approve him. He's the only one. The next one was like lost 45 votes, right? But he got all 100 votes voting for him. And at first I wasn't happy about it. I said, wait a minute, I don't like that. And now it turns out that the Democrats probably wish they didn't do that. And Marco has been fantastic. Marco, stand up, please. You have done a great job as Secretary of State. He's going to go down as the best Secretary of State. And Scott, and we have Susie, who's the first female Chief of Staff, and she's the best Chief of Staff, too. And I see Howard Lutnick, who I know spoke, and Howard's fantastic. Some of the deals we're doing are great. And I want to pay particular attention because we have Chris. And Chris, you got up and spoke, I think. He's the #1 oil man in the world because I was going to put Doug Burgum, who's fantastic. I don't know if Doug's here. Is Doug here? Doug Burgum is fantastic. He said, sir, there's one man better than me. And he introduced me to Chris. And he turns out to be. So we're drilling more oil and gas now than we ever have by almost double. Is that right, Chris? And on top of it, we got a lot coming out of Venezuela. So anyway, so we're doing great. The country is just doing great. We have great people. Thank you. And I see other people. We have Steve Witkoff. We have Jared. I got so many people. I'm in trouble because when I go back, they're going to be people with long faces. Sir, you didn't introduce me. I got so many people. And we have a lot of the greatest people anywhere in the world. I know them all. So I won't continue because we'd be here all day.
Thank you, Mr. President. We also know that you're a deal maker, and then maybe coming back to Greenland and Ukraine. What kind of deal in the end do you see between the U.S. And Denmark? Because, you know, I guess you see it now as a negotiation going on, or?
Well, it's costing Denmark hundreds of millions a year to run it. And Denmark's a small country and wonderful people. But, you know, it's very expensive. It's a very big piece of ice. And it's very important. I mean, I don't want to repeat the speech, but it's very important that we use that for national and international security. That can create a power that will make it impossible for the bad guys to do anything against the perceived good ones. And it's a great block for Europe, just like, Denmark was supposed to spend hundreds of millions of dollars. They didn't spend the money. They didn't spend anything almost. And we'll see what happens. I just say this. NATO has treated the United States of America very unfairly. We never asked for anything. We never got anything. We actually took care of the needs of NATO for years and years, which I felt was always unfair. So I got NATO to pay because they're rich countries. But I think it's time that NATO step up. We're helping them with Ukraine. Without us, I think Putin would have gone all the way. I think we have it. I think that could have been a World War III, if you want to know the truth. If Kamala was elected, or Joe, any one of those, those thinkers, I think you could have ended up in World War III. And I will say Steve Witkoff has been dealing incredibly with, but we're not going to have World War III. We want to get it stopped, but we're not going to have World War III. I think if I wasn't elected, I think that could have evolved into World War III. It was a very, very bad situation, and it still is, but it's not that kind of bad. It's bad because so many young people are being killed.
How close do you think there is on an agreement on Ukraine? I had the pleasure of speaking with Steve Witkoff and Jared Kushner yesterday. I know they're working hard on it. I know that they're also traveling now. Do you see this very close or still?
Well, I hate to say it. I thought that was going to be, so I settled 8 wars plus. And I thought that was going to be one of my easier ones. Not the easiest. Some I settled in a matter of hours because I'm good at that stuff. The United Nations should be doing this. I shouldn't be doing it, but it doesn't matter. It's got to get done, saving a lot of lives. We're saving millions of lives. With Ukraine, Russia, there's tremendous hatred between President Zelensky and President Putin. That's not good. That's not good for settlements. We know from dealing. There's abnormal hatred. With that being said, I think Russia wants to make a deal. I think Ukraine wants to make a deal. And we're going to try getting a deal done. I think, Steve, I think I can say that we're reasonably close. But what happens is oftentimes we'll have a deal with Russia. Russia's set, and President Zelensky will not do it. You saw that when he was in the Oval Office. I was not happy. And then we'll have President Zelensky wants to make a deal, and Putin doesn't want to make the deal. It's a very difficult balance, and it's big time, and it is. To use a word, it's a bloodbath. It's horrible what's happening. It's a drone war. The drones are killing, thousands of people a week, thousands. We have to get it stopped. So I believe they're at a point now. I'm going to meet with President Zelensky later today. I believe they're at a point now where they can come together and get a deal done. And if they don't, they're stupid. That goes for both of them. And I know they're not stupid. But if they don't get this done, they are stupid. So I don't want to insult anyone, but you got to get this deal done. Too many people are dying. It's not worth it.
President Sisi is sitting on the first row here. He spoke earlier today and also complimented you on the Gaza deal. I think there will be a signing tomorrow. Of course, there are different views on this, but how important do you think this signing is on the Board of Peace? And do you think this is going to sustain? Do you think we now will see Gaza reconstructed and the billions of US dollars invested?
I do. I mean, I think we have peace in the Middle East. There are some little situations like Hamas, and Hamas has agreed to give up their weapons. Now, they were born with a weapon in their hand, so it's not easy to do. When they were born with a rifle in their hand. It's not an easy thing for them, but that's what they agreed to. They've got to do it. And we're going to know, Jared, over the next 2 or 3 days, certainly over the next 3 weeks, whether or not they're going to do it. If they don't do it, they'll be blown away very quickly. They'll be blown away. We have 59 countries that are part of that whole peace deal. And some of those countries aren't even they're near the Middle East, but they're not in the Middle East traditionally. And they want to come in and take out Hamas. They want to come in. They want to do whatever they can. There's a problem with Hezbollah in Lebanon, and we'll see what happens there. But that's a problem. But there are these little flames, but there's peace in the Middle East. Now, had we not gone in and knocked out with those big, beautiful, we just ordered 25 brand new ones, the latest and the greatest, the B-2 bomber. Think of them, they went in there at 2 o'clock in the morning with no moon, no light, no nothing, and every single one of those massive bombs hit its target, 100,000-pound bombs hit its target, every one of them. And then on top of it, from a submarine 300 miles away, we hit the sites with Tomahawks, which is an unbelievable weapon. So, you know, we did our job. If we didn't do that, you would have never had peace in the Middle East. And the countries like Saudi Arabia, UAE, and Qatar could never have, and others could never have signed anything because you would have had this dark cloud, and the dark cloud was Iran with nuclear. Iran would, if we didn't take them out, they would have had a nuclear weapon within 2 months. They were very close to having the nuclear weapon, and we hit them hard. And it was a total obliteration. If they may try again, but they're going to have to try from a different area because that area was obliterated. Incredible thing we did, and because we did that, we were able to make peace. If we didn't do that, I would say, Jared and Steve, if we didn't do that, there was no chance of making peace because the countries I just named and other countries could have never signed off. They were afraid. They were afraid. We had a bully. The bully was Iran, the bully of the Middle East. They used to call it for years. They were the bully of the Middle East. They're not the bully of the Middle East anymore.
Mr. President, I know you even had to change plane last night, so I guess you didn't have much sleep, but I think but your energy is still there. I know you have several bilateral meetings. I know you're also hosting a reception. So thank you so much for coming back to Davos. Thank you so much. It's highly appreciated.
Well, thank you very much. Thank you, everybody, very much.
Thank you.
All right, that was President Donald Trump in Davos, speaking Boris Brendy, the head of the Davos World Economic Forum there, and he had about a 90-minute speech. I'm sorry, about a 60-minute speech, and then some Q&A there. So again, wide-ranging estimates there, wide-ranging discussion on a wide-ranging of topics.
But of course, the one thing everyone wanted to hear about was Greenland and what the U.S. plans to do with it. And the two big redheads that we got, the red headlines on the Bloomberg terminal, is Trump saying that the U.S. seeks immediate talks on acquiring Greenland and that the U.S. does not want to use excessive force to get Greenland as well.
Right, very good. So we will stay on top of that reporting here as that news continues to come out of Davos. And again, coming up on this program, the Bloomberg Intelligence Program, it is Scarlett Fu, it is Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. We have several guests coming up from the World Economic Forum, and we'll bring those to you throughout the next couple of hours. We want to turn to David Gura here from Bloomberg News. He joins us here in our studio. David, that was a long, rambling speech from the president in Davos, had some tough words, as I guess should be expected for some of those in attendance from the world leaders there. Any takeaways for you there?
It was striking. I was in this very same seat yesterday listening to the president as he went to the White House, that press briefing, and a lot of what we heard that seemed scripted was what we heard the president say yesterday. So he talked about the domestic economy, he talked about the last year and all he sees himself as achieving over the last year, the first year of his second term. But almost as an aside, he said to the audience, "You want me to talk about Greenland?" And lo, he did. And as Scarlett pointed out, he referred to it as a piece of ice, cold and poorly located, that can play a vital role in world peace and world protection. And he, over the course of maybe 15 or 20 minutes, made the case for the U.S. acquiring that territory. Didn't say explicitly how he would go about doing that, as Scarlett pointed out. Said that the goal here for the U.S. is not to use force to do so, but said that he needs it for strategic international security. That's our territory, the president said. And he dovetailed that, Paul, with commentary on NATO and criticism of NATO in a way that I think would shock a lot of people in the room, people from Europe especially, who likely blanched when he said that if something were to happen, if the U.S. were to be attacked and the U.S. were to call NATO, he's not sure that those allies would come to the defense of the U.S. And I just have to point out here, the one time that Article 5 of the North Atlantic Treaty has been invoked, was after September 11th. That's when NATO got involved. So we talk about his sandwiches often as sandwiches. You got to focus on what's in the middle. I think that was the case during that speech as well. Again, a lot of boilerplate that we've heard before about, again, his achievements in the state of the economy, but really it was the middle, it was the substance that was the most interest to people there in the room. And I'm frankly not sure that what the president said there is going to do anything to kind of placate or pacify or turn down the temperature in the room of those European leaders who have been so gravely concerned by what the president has said about Greenland.
But it didn't seem to alarm investors because we see equities higher right now. The S&P 500 up 0.7%. You're also seeing yields lower too, with the 10-year yield, marginally lower, but notably, it's a negative sign in front of the movement there. So for investors, it wasn't alarming to the point where anyone needs to do anything.
It wasn't, and this is a game that we play over and over again as the president introduces something, expounds upon it more, maybe walks things back, and investors are trying to process all of this in real time. So I think while this speech was important to hear from the president directly on Greenland more than we've heard from his posts on social media, I think attention now turns to what these European leaders say next. We were talking on surveillance about how there is no unanimity among European leaders yet. I think there's an effort underway by a lot of these leaders to kind of get everybody on board with a coordinated response to what the U.S. is proposing here. That's what I think we investors are going to be paying attention to in the days to come.
But that's a structural weakness with Europe, right? That they can't get together and come up with a decision quickly.
It is a structural weakness, and one I think that these leaders acknowledge, and certainly President Trump acknowledged in that speech as well, and in the run-up to it. I think that he sees Europe as being weak because they can't come to a coordinated response on issues like this, and he kind of extended that further in those remarks to talk about a potential military response to some sort of attack. So I think that he has and continues to see Europe as being weak by the way that it's structured here, and that sort of seemed manifest in this speech as well. So again, I think that's the more salient, important point for me is sort of the way that Europe talks about this and acts here in the coming days.
Mark Carney from Canada, some strong words today. How does that relationship, do you think, work between Canada and the European Union broadly defined? Because obviously there are some close ties there. But Mr. Carney had some pretty sharp rhetoric.
Yeah, he delivered a very forceful speech in which he said we're in the midst of a rupture, not a transition. So he is not minimizing what's going on here. And I think you've seen him go back and forth to Europe a number of times since he started in the job as prime minister. He clearly has good relationships with many of these European leaders, both through his work in this job and certainly the job that he had before that when he was at the Bank of England. He knows a lot of these principles, and I think he's worked hard to better fortify that relationship between Canada and these European nations. And so the substance of that speech, yes, it was this criticism of the liberal order. He basically said that the many countries have been misled by allying themselves with the United States. But if you look at how that has kind of turned into an economic policy platform, he's very much making the case for mid-sized countries. I think this is fascinating and something to chart going forward here. There's been so much focus on the primacy of the United States, the role of the alliance that you would have with the United States. He's saying, look, Canada is a good middle-sized country in its own right. There is room here for more coordination and collaboration among countries like that. And so I think that's part and parcel of what we've seen here, him extending this arm to Europe to try to develop that kind of relationship going forward.
Right, and it's not just to Europe as well, because Canada has now looked to China as a partner increasingly in this new world order, right? I mean, he's embraced China in a way that would probably have surprised Justin Trudeau just a year or two ago. They've come to an agreement here, opening the door to electric vehicles from China, auto investment from China. I mean, he's, in a way, being forced to remake Canada's economy.
Absolutely. And Davos was the last stop on a very significant trip for the Prime Minister. He's going back to Canada. We'll have a cabinet meeting over the next couple of days. But he said in that speech, we actively take on the world as it is, not wait around for a world we wish to be. So he went to Beijing. There was a lot of groundwork laid for that visit. There was new trade agreements that were negotiated and signed while he was there. Went to the Middle East, similar sort of setting there for deals. So we've seen the Prime Minister, as you say, Scarlett, taking on the world in a very different way than his predecessor, Justin Trudeau. But again, I think there's a thick level of realism there that the Prime Minister is very confident and content to talk about wherever he goes.
David, thank you so much. We appreciate getting your perspective here. You sat here, listened to it with us, and we saw that as well. So again, President Trump with his remarks at Davos. So we'll have to see how that plays out going forward here. But again, as you mentioned, Scarlett, the markets are taking this, I won't say more than in stride here. We've got the S&P up 58 points, and we've got the Dow up 424 points. It's about 0.8% for both.
Yeah, it looks like relief, really, when it comes to the investor reaction. Not that yesterday was really alarm. I mean, it was a big drop, relatively speaking, but it was nothing like what the Sell America kind of predictions that some people had coming into the trading day.
Yep, absolutely. All right, we're going to have a busy couple hours coming up. We have some voices coming from Davos. We're going to take a look at the Supreme Court hearings today on Lisa Cook. That is also on the agenda over the next couple hours, so we will keep you up to date. Again, the markets are on the move. Dow up 425 points. That's 0.8%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by IBKR. Will the U.S. unemployment rate exceed 4.5% in January 2026? An IBKR forecast trader, the yes was recently at 33%. Start predicting today at ibkr.com/forecast. Last trading day with this contract, February 6, 2026. Stocks, right now, they are higher after yesterday's sell-off after President Trump told the World Economic Forum he didn't want to use excessive force to acquire Greenland. You have 10 of the 11 major industry groups in the S&P 500. They are higher right now. Energy, that's in the lead. You can guess why. Johnson & Johnson's fourth quarter sales beat expectations, but the stock right now is lower down almost 2%. They had a bit of a setback in the cancer lawsuit of their talc products. Netflix, at the close, delivered a disappointing forecast for earnings. They're spending more. Netflix right now, those shares down 2.6%. Meantime, Bob Michael, Chief Investment Officer and Global Head of Fixed Income at Morgan Stanley, JP Morgan Asset Management, says things are a bit chaotic.
I know last night I went to bed in a panic and woke up in one, and it didn't get any better.
Right now, the S&P 500 is up 49 points. Dow Jones Industrial Average up 377, and the Nasdaq 100 203 points higher. The 30-year bond unchanged right now, 491. It's getting colder.
Sure.
And this weekend here in the big city could get a snowstorm Sunday.
That's what I'm hearing.
A big one. Natural gas futures jumping more than 50% as a result in 2 days. The bigger story, I was talking to Rob Carolyn, our meteorologist. He says it's the deep freeze, not the snow or the ice that we could potentially get. The deep freeze is going to get even deeper.
And then you have the snowstorm on top of that.
Snowstorm potentially in the city. But for the east and much of the country as well, nat gas futures right now, 23% higher.
I mean, I'm looking through like end of next week, and there's no warm-up. No warm-up. So that's kind of, if you're a nat gas holder, that's
I do have the Nest thermometer, so I can check it from my phone.
Oh, look
Somebody has raised it to 75. Guess what? That's going down to 65. Anyway,
I don't blame you.
Okay. Recheck the markets and thermostats right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Paul and Scarlett.
We did have some economic data this morning, which I'm just going to catch everyone else up on because in the excitement over President Trump's speech at Davos, so we kind of overlooked it, but it was on housing, and this is something, of course, that's very much on the White House's mind as it tries to address affordability concerns. Pending sales of U.S. existing homes fell in December by 9.3%. The consensus estimate was for a drop of 0.3%, and this follows a gain of 3.3% in the month of November. So this is an index of contract signings. That's the way they measure this. Clearly, the housing sector is not completely out of the woods yet. Affordability concerns remain a big, big, big obstacle.
I mean, I'm looking at the 30-year fixed mortgage rate, 6.16%. That's according to the Mortgage Bankers Association. And that's probably a little bit dated because we've seen yields tick up a little bit here. But I mean, when you talk to real estate folks, they kind of say you need a 5 handle on the 30-year mortgage rate.
To really get people moving.
Get people moving. And even then, it might not be enough, but because so many folks are sitting on mortgages, 3% handle, 4% handle. And then
the average cost of a home, what?
Oh,
it's got to be $350 at this point.
Yeah, I know, it's a good question. So that goes, you put the absolute cost of a home with the existing financing rates, that goes to the whole affordability
And
issue.
then on top of that, you have the insurance costs, right? To actually insure the home. And then you have all kinds of utility fees that go along with that, as we were just talking about with John Tucker's 65-degree temperature at home now.
Well, that's where I try to keep it.
Right.
And I think that's pretty comfortable. That's where they have sweaters.
You don't want to know what I keep it at.
That's where you have to wear the layers. All right, John Tucker, thanks so much. We appreciate that. Let's get back to Davos here. President Trump, again, a speech this morning where he upped the pressure on Europe to cede control of Greenland or face the consequences, saying that NATO owes it to the U.S. to granted full rights to the Arctic territory. Let's get some more reporting on that. Jenny Leonard, Bloomberg Economic Statecraft reporter, is with us. Jenny, what did you make of the speech here? It seems to be President Trump continuing to exert pressure on European leaders about Greenland.
Yes, it definitely dominated his speech. It dominates the whole week here, we have to say. It's funny, he started off by naming a lot of the domestic achievements that he's gained over the last year, and then he said to the audience, should I say a word or two about Greenland? And then went on for 20 minutes or so about Greenland. I will say there was probably a sigh of relief in the room and beyond that Trump took the military option of use of force off the table. But he also called for immediate negotiation on acquiring Greenland, which doesn't really leave the European leaders in that much of a better spot because, of course, they don't want to sell the island. And so it's going to be really interesting the next 2 days here with Trump to see, what are they going to make of it? He said, and I quote, "You have a choice. You can say yes, and we will be very appreciative, or you can say no, and we will remember." So maybe he took the nuclear option off the table, but I don't know that we're really out of this yet.
He also made the point that it would be impractical to defend Greenland that is not under U.S. control, and talked about wanting to own the Western Hemisphere, that the U.S. very much needs to make sure that it has sovereignty over the Western Hemisphere, or maybe not in those exact words, but certainly control over it. Put that into context for us, because this is not something he had brought up in the past when he had mused out loud about Greenland.
Yeah, this, I think it goes back a little bit to his first administration, but this second term, they really put this in their national security strategy that came out at the end of last year that had a lot of shocking things for the Europeans and their, civilization erasure. But they really are looking at this as necessary for the defense of the hemisphere. He mentioned the Golden Dome. He said Greenland has to be the US's because they need to defend the hemisphere, and for that, you need the island that also will then benefit Canada, who, of course, that they have their own issues. Trump has his own issues with Canada there. But, I will say an interesting thing about this issue is it is really dominating the week, but people are tired of it. We have seen CEOs, we have seen foreign leaders, I've even talked to U.S. officials who really are rolling their eyes at this issue because it's distracting from other business that they could get done here. They have absolutely no other topic with the Europeans. Of course, the Ukraine issue has completely fallen off the agenda. Although one other item of news that Trump made in his speech is that he said he was going to meet President Zelensky tomorrow, which we didn't know because President Zelensky is actually not in Davos right now. He stayed home. He has a team here. And the other piece of news that came out of Davos today is that the special envoy, Trump's special envoy, Steve Witkoff and Jared Kushner, are flying to Moscow tomorrow to meet President Putin. So, it's sort of sneaking its way back on the agenda, but it's really fallen off. We've not really talked a lot about Ukraine, the last 3 days here. And I assume the next 2 that Trump is still here will be largely consumed by Greenland as well.
Jenny, is there concern or level of surprise that maybe we haven't had a more unified response from the European Union as of yet, as it relates to Greenland?
Absolutely. Absolutely. I think this is a really tense moment for the Transatlantic Alliance, but this is also a tense moment for Europe. We've seen, Chancellor Merkel say one thing. We see President Macron of France say another. And this is really testing, their unity. I think they are, stuck in this, how do we respond to Trump? They've tried for a long time, I think, now to send the leaders that Trump gets along with well to sort of talk him off the ledge and say, we can maybe figure something out, but it's not worked. Clearly, in the speech we just heard, he has his eyes set on Greenland. So how do the Europeans respond? How do they get Trump to take them seriously? Do they use their own nuclear weapon, or option, their anti-coercion instrument, which would be, a little bit more aggressive than other options that are on the table right now? They're debating, and they're really, not on the same page. And of course, the U.S. officials are aware of that, and it's not really helping, negotiations or the strength, position of strength that Europe is coming with.
All right, Jenny Leonard, thank you so much. Jenny Leonard is Bloomberg's economic statecraft reporter, which means she's been extremely busy, not just this week, but since the start of the Trump administration, joining us from Davos, helping us make sense of what we learned from the president today when it comes to Greenland. He definitely toned down the rhetoric. He definitely lowered the temperature. And as Jenny pointed out, definitely took the nuclear option off the table, meaning push for Greenland through military means.
But it just still feels like this is a very important issue for President Trump and the administration. So it doesn't seem like it's going to go away. And as Jenny suggested, it'll probably be driving what's happening in Davos. So we'll stay on top of that. The U.S. Supreme Court today, closer to home, will weigh whether President Donald Trump can fire Fed Governor Lisa Cook over mortgage fraud allegations that she denies. Joining us now, Stuart Paul, Bloomberg Economics here. Stuart, we're going to the independents here. This whole case here, Lisa Cook and her position at the Fed, really coming into play is the overall independence of the Fed here. How have the markets been kind of dealing with this uncertainty?
The markets have been digesting this reasonably well. It's actually very interesting. The idea of market confidence in the Fed's independence has been the central focus of oral arguments that have taken place so far. Oral arguments kicked off at 10 o'clock Eastern time this morning, and this has really been the central focus of both the associate justices that have spoken up so far and the Solicitor General who is arguing Trump's case before the court. Right now, the question that the court has to consider is whether Governor Cook should remain in office while litigation continues regarding the legality of Trump's removal of Governor Cook from office. So the court has to wrestle exactly with this idea. Would irreparable harm be done and there, say a market sell-off take place if Cook were removed right now while this litigation is continuing? Trump's counsel, the Solicitor General, is arguing actually the market is losing more confidence in the Fed as an institution. They're losing confidence in the Fed's credibility to discharge its duties to manage interest rates by keeping somebody supposedly incompetent in office. So this entire idea of how markets are digesting who sits on the Board of Governors has been the entire show so far.
And we know the Supreme Court has repeatedly allowed the president to remove or push out leaders of other independent agencies. The Federal Reserve is kind of different in that the Federal Reserve Act bars presidential removal of governors except for cause, and I'm putting that in quotation marks. What has the Supreme Court said about the Fed? What has it signaled about the Fed as an institution versus other government agencies?
Relatively little. It signaled relatively little about the Fed that differentiates it from other institutions, other than the fact that it's answerable primarily to Congress. Its mandate is set by Congress. There are limitations on the president's ability to remove somebody except for cause. What constitutes cause in this case is pretty difficult, because the question is whether or not Cook as an individual has the capacity to even just perform her duties based on the allegations of financial impropriety that took place before she was ever even in the role. So the question of just general competence is one that's at play here. And it's not as though Trump is even alleging that she did anything specifically wrong in discharging her duties as a Fed governor. And so the question of for cause, this idea of for cause removal is being stretched no matter what.
Well, certainly seems competent from an educational perspective. Undergraduate degree from Spelman College, another degree from Oxford, and then throw in a PhD from Berkeley. That seems pretty solid to me. I don't know. What's the timing here about when we may hear from this court? Is it something we're going to hear in the relatively near term?
Well, so we should get some signals from the court. Everybody's going to be digesting the oral arguments as they're taking place today, but we're not likely to get a decision until late June or early July. Okay. So no matter what, Cook is going to be staying in her role to that point. And then the question before the court is whether she can stay while additional litigation continues. My expectation is that she will.
Okay, so that means that she will be in place for January 28th, the FOMC decision at the end of this month, March 18th, April 29th, and June 17th, when most of the market is looking for the Fed to cut rates around then.
That's right. Basically, no expectations for a rate cut before then. Personally, I think this will have relatively little bearing on Cook's decision to vote for or against any rate cuts. It doesn't seem as though she's been especially vocal in one direction or another, and it doesn't seem as though she's even been vocal about the importance of the Fed asserting its independence. One of the things that you would take as an indication that she'd prefer to stand pat and keep rates steady.
Is she one of the Fed officials who regularly speak to media at public events? I mean, is she on the calendar a lot?
She's on the calendar less than most, and she's really dialed back her public engagement while this has been taking place.
All right, Bloomberg Economics, what are you guys thinking about here with this Fed here, with the economic data? What's the data telling you guys about how this economy is looking, how this Fed should be reacting?
Well, the Fed is charged with basically skating to where the puck is going. Right now, growth is running above potential, inflation is still hot, but the question is, will conditions like that remain? Our expectation is that the pace of inflation is going to cool materially in the year ahead, so the Fed is going to become more comfortable cutting interest rates, particularly in the second half of the year. Our outlook is for inflation to run at a pace closer to 2.2% as we close out 2026, so the Fed can cut, let's say, 3 times or even 4 times in the second half of this year. So we're a bit outside of consensus with our expectation that the Fed's going to deliver relatively swift cuts, but mostly in the second half of this year.
In terms of data that's coming out before January 28th, the decision, what's likely to move the needle, or have we gone past that point?
I think that we're mostly past that point. We will get the Fed's preferred inflation gauge, the core PCE price index, tomorrow, but the data are for October and November, so relatively stale. Also, the Fed's able to estimate those with reasonable precision, given the CPI and PPI components. Expect an uptick in the annual pace of headline and core PCE inflation to 3.0 and 2.9%, both from 2.8% in September, the last month for which we have data, and that's just through November. So again, inflation is running hot. Everybody already knows that. The question is where inflation is going from here. We think that we're past peak tariff pass-through, and when the Fed starts to become a little bit more comfortable with that reality, we expect they're going to deliver cuts, but only later this year.
About on the labor market, how concerned we've seen that unemployment rate tick up here, but still in a reasonable area, I guess, for most people in the market. How do you guys think about it?
Yeah, the unemployment rate fluttering around 4.5%. I think the thing that matters most right now is whether the labor market is generating any sort of additional inflation pressure. And there's basically no indication to me that the labor market is a source of inflation pressure. We're looking at aggregate labor income growth falling from a pace of about 5% to about 3.5% this year. And that's with hiring running at about 35,000 jobs per month and the pace of wage growth ticking down just a little bit because of that cooling in the labor market. So while we have a balance of labor supply and demand, we're just not seeing any sort of upward pressure on wages. In fact, we're seeing some downward pressure on wages based on employer-induced churn in the labor market. We see a lot of employers that are firing people and then relisting job openings as a way of lowering their labor costs. Now, roll it back to the pandemic, we saw people quitting and firms opening up new jobs as a way of bidding up the cost of labor. So we're really seeing very, very little evidence that there's any labor market-induced inflation pressure. And when that's the case, again, the Fed should become more comfortable in time cutting rates.
Stuart Paul, thank you so much. Stuart Paul is a U.S. economist with Bloomberg Economics. What the team really sees when it comes to the U.S. economy, and of course, keeping us up to date on the Supreme Court hearing on Lisa Cook and her future at the Federal Reserve, or at least her present.
And Stuart is an avid skier, so he likes these low temperatures. He likes the fact that snow's coming this weekend. So there you go. All right, let's head back to Davos. Ken Griffin, founder and CEO and co-chief investment officer at Citadel, speaking with Bloomberg Television's anchor, Eric Schatzker. Let's listen in.
To characterize his remarks,
I'm not good at these sort of like guess-a-word games.
Well, that's precisely why
let me tell you what will be maybe out of sync with many other people's views.
Oh,
all right.
Okay.
He gave a speech where he unquestionably made it clear that the United States wants to see Europe economically prosper. And I think that was a really important message to be delivered, and I hope the Europeans heard it. because over the course of the last 12 months, there's been a tremendous amount of friction between our two continents, and we are long-standing allies. But at the end of the day, the United States wants to see Europe prosper. And for the free world to prosper, Europe must grow faster.
Is the way to get Europe to prosper, to get Europe to grow faster, to get Europe to be more competitive, is the right way to do that to troll European leaders, to taunt Emmanuel Macron on stage? Is that the right way to inspire the desired response?
I think Trump likes to troll people of all backgrounds. It's not limited to just leaders.
And will people of all backgrounds respond in the way that we or he might like them to as a result?
No, of course not. But it's just part of his shtick.
It's just who he is.
It's who he is. You know, I have on my wall a copy of a tweet that he put out about me, and I've been trolled. It's okay. Like, life goes on. Badge of honor.
Besides the point he made about wanting Europe to be more competitive, which you clearly agree with, did you find yourself agreeing with the balance of everything else he said?
So let me be very clear. I think the president has an extraordinary instinct for the problems that both the United States and the free world faces. I often don't agree with his solutions, but I admire his ability and his willingness to forcefully talk about the problems that we face both in the United States and in the free world.
His diagnostic acumen
is really top notch.
Well, so,
I mean, like, take a step back, okay?
Mm-hmm.
The United States supported WTO, free trade, NATO, and a whole variety of other global institutions from World War II onward to accelerate the economic growth of Europe post the war, because we believed that the strongest way to defend the free world, again, was for Europe to be prosperous. Now, over the course of that journey, we didn't update the terms of that deal. And the American worker, in many respects, got the short end of the stick around the world. He just did.
True. I mean, I think we can all agree that it wasn't just because of a lack of competitiveness, investment, burden sharing on the part of the Europeans. There were many American companies that went to China and gladly gave away their IP. That cost American jobs too.
Exactly right. Exactly right. And so this, again, is where the president's done a good job and said, do you know what? We need fair trade for the United States. We need a world hierarchy in which the American worker and American businesses have a fair and level playing field around the world. And often that wasn't the case when he was president, and he's really trying to address it. I wouldn't use tariffs as my mechanism of action to do so, but I have to give him credit. He is fighting for the American worker and the American people.
Okay, so his motives, in your opinion, are
constructive.
The right ones, constructive. Let's take it up to 10,000 feet. One of the reasons that this room is so full, Ken, is because you have a quality that distinguishes you, somewhat obviously, from many other business leaders, and that is your willingness to speak out, to champion what you believe is right, and to challenge what you believe is wrong. And we saw you do that with the Biden administration. You were a vocal critic. You took issues publicly with his policies and the posture of his administration. But you're fair about it. As you put it once upon a time, country before party. You've done it to President Trump as well. In April, some of you may recall, not long after Liberation Day, you criticized President Trump for moving too fast, alienating allies, making Americans poorer, and tarnishing the sterling reputation of U.S. assets. So here we are, right? For those who aren't counting, this is the second day of the second year of Trump's second presidency. What do you think now? This is the 10,000-foot view. Is he doing what's right for America? Not just diagnosing the problem. Policies and execution are just as important.
So let's be clear. He was elected into office because of two really material problems. Number one is our southern border was utter chaos. Millions of people streamed into our country from all kinds of backgrounds, some of which, frankly, backgrounds we wouldn't want, but they streamed into the United States illegally. That's what it is. It was illegal mass immigration. And the president secured the border. I mean, he brought that to an absolute halt. And I really hope that he makes it clear that the United States still embraces legal immigration. I think we need to reiterate that point quite a bit, because one of the great superpowers of America is that we've attracted so many brilliant people from around the world, but the chaos at the southern border, he ended. Big policy triumph. The second issue that he was elected around was that of inflation. The Biden administration, we had rampant inflation in the United States, a combination of fiscal stimulus that was just beyond the appropriate levels, and monetary policy that was slow to react to the fiscal stimulus that was occurring. We had a level of untenable inflation in the United States of America. And if you were a retiree and your savings were in fixed income assets, you were seeing your future dim every single day. And you had enough. And the president is really trying to grapple with the issue of inflation. You know, it's quite ironic to see the Democrats have changed the language to affordability to try to attack President Trump for the rise in prices that largely occurred in the Biden administration. But the president right now, I think, really does have the message that he has to address the high cost of living in the United States. How do we make sure that for the American retiree or the American worker, that every dollar they have goes further and their quality of life improves?
I might come back to immigration, but specifically on the point of inflation, you have said that, in fact, to a colleague of mine not long ago, Danny Berger, that Republicans are finding it hard to accept the reality that many of the policies that they've championed, including driving illegal immigrants out of the country, are, by their very nature, inflationary.
And that's exactly right. So here's where he has a much more difficult dance. Shutting down the flow of illegal immigrants and pushing people out of our country constricts our labor markets. Takes, like, it's classic economics. If you reduce supply, all else being equal, prices rise. And we've had real wage growth in a number of sectors of the economy where the illegal immigrants play a very critical role in performing difficult jobs that need to get done.
And tariffs are also playing a role.
Tariffs, you know, if we look at the most recent data, the vast majority of the tariffs, the tax of tariffs, is being borne by either the American worker or the American citizen at the cash register, or by corporate America reducing their profit margins. And the president did reduce tariffs on a number of goods that are in the day-to-day shopping basket of the American people. So he understands he has to address some of the negative implications of tariffs to help address the issue of affordability.
Yes, he understands. He understands that affordability is a real issue and that it's political kryptonite in the midterms, but immigration and tariffs are big levers, hard, you know, to counteract. Not to get too weedy here, but is he taking, in your mind, the right approach with recent initiatives such as banning institutional investors from buying single-family homes, intervening in the mortgage bond market, seeking an interest rate cap for credit cards at 10%, allowing home buyers to dip into their retirement savings? I can see why some of those measures might be welcome to American people. Is that really going to change the affordability outlook?
So I think this is where I might disagree with the president. The great power of the American economy is our embracing of capitalism. And when we unleash our entrepreneurs, when we unleash competition, we are able to materially improve our quality of living. And the real issue in the housing market is the lack of supply. And why do we have a lack of supply? Permitting in much of the country takes months or years to get a permit to build a house. I mean, how absurd. And then the building code has become so unwieldy and so overreaching that the cost to build a house puts it out of the reach of the average family trying to buy their first home, the home in which they'll have their dreams made. So the real issue is we need to address the regulatory burdens on the housing market. And if I were the president, I would have used Fannie and Freddie to do that. I would have said, if you are in a county that does not have prompt permitting and that does not have a reasonable building code, we will either drop the mortgage caps or we simply won't write mortgages in that county after a date certain, to get our politicians at the local level to move their feet and to address the chronic problem that we have in America. We have too few of houses.
I do think it's really important for people
so that
to know that you're willing to say that. Yes,
the difference here?
I do.
Let the American entrepreneur get to work, and with competition and with the burden of government off their backs, they can solve the problems that we face in day-to-day life. You know what?
Ken, I mean, at least I have to give you credit for being consistent. This has been your rallying cry for the better part of 15 years, if not longer, economic freedom.
Well, I mean, maybe it's because I view what we do at Citadel as part of that story of unleashing entrepreneurs. You know, if you look at the U.S. equity market, for example, it's one of the most efficient markets in the world. And it's been driven by incredibly competitive dynamics between us and a handful of firms that have radically dropped the cost of trading for all over the course of the last 2 decades.
So since we're talking about the American economy, for the moment, we will change our focus shortly. Let me ask you, because you said on those particular issues, you take issue with some of the things he's doing. It would be great if we had more housing supply.
Or credit cards. How do we increase competition?
Right.
Like, what is it that gives a Wells Fargo or a JP Morgan or a Capital One such incredible commercial advantages that it forecloses in a material way new entry? And are there steps that we can take that are equitable that will increase competition amongst credit card issuers that will bring down rates for all consumers on using their credit card? The worst thing we can do, if you regulate the maximum interest rate that you can charge, you actually reduce the stock of credit in society, particularly to younger people who have poor credit scores or to people who've had difficult times in life. And the younger people with poor credit scores in particular, those are people that literally start their business with their Visa card.
I want to go back
to take those entrepreneurs out of the economy, you really meaningfully reduce new firm creation, new job growth, and the innovation that makes America so special.
I would like to go back to the question I asked about whether the president is doing what's right for America. And you initially responded to me by saying he did what he said he was going to do. He tackled illegal immigration, and he's doing something about tackling inflation. That's still a work in progress, obviously. There are a number of other policies and positions that have a bearing on U.S. economic growth and U.S. economic competitiveness, particularly in the global arena. And I'd just like to understand, get a sense from you, channeling, I think, the interest here in the audience about whether you agree or disagree with where he is on the following. And you can do whatever you like, thumbs up, thumbs down. You can say agree, disagree. You can give me a little bit more, nuance. But redefining the focus of U.S. national security to the Western Hemisphere and seemingly opening the door for Presidents Xi and President Putin to operate with similar impunity in their own backyards. Good, bad.
So that's, I hope that's not the end game of our policy. Securing the national defense of the United States is of the utmost importance.
Always has been.
Always has been. And he's very focused on strengthening our military. And one of the things I really love is how he compliments the military every chance he gets. You know, you look at what happened in Venezuela. He is effusive in his praise of a mission that was flawlessly executed. It's really good to see him bringing pride back to our country for the men and women who serve our nation. So there's, again, it's like one of these mixed bags. I love the fact that he stands for a strong military, a strong national defense, and frankly, in America that no longer hides in its own shadow. I think he might be right. There's a good chance if he'd been president, we would not have a war in the Ukraine.
Well, hard to know and prove.
Hard to know improve, but hard to argue the
But at the same time, he's cutting aid and support for Ukraine. Do you approve or disapprove of that?
So with the Ukraine, he's really trying to figure out, like, how do I bring Russia and Ukraine to the table? And you can see his frustration
clearly
that Putin is an immovable object on this front. In some sense, they're both very strong men. They feel very convicted in their opinions. They don't like to bend. And this has been, I think, for the president, one of the harder battles he's had to fight is how do you create room for peace in the Ukraine?
You're a strong believer, Ken, that immigration, legal immigration, is the engine of innovation in America. Look at all the foreign-born Americans who are running some of the world's greatest companies, including Peng, for example, at Citadel Securities.
A huge portion of Citadel's leadership team was born outside the United States.
So curtailing legal immigration, restrictions on H-1Bs, halting processing of visa applications from 75 countries, is that the right way to promote the right kind of immigration?
So I know as a factual matter, within the White House, there's a real debate. How do we make sure that we continue to bring to our country the incredible number of people who have come to America, who have built and run our great businesses? You pointed out, half the Silicon Valley is run by immigrants or children of immigrants. At Citadel, my partner who runs Citadel Securities was born and raised in mainland China. In the hedge fund, my partner, co-CIO, was born in Ecuador. Head of my commodities business was born in Australia. I place a huge value on being able to bring the best and brightest from around the world to work at our team at Citadel. The president is really grappling with how do we make sure that that door stays open in the United States of America?
Well, why shut it in the process?
Because there was this whole moment that it was immigration that we were ending, and there was not the distinct focus on the chaotic part and the highly value-added part to our economy.
So the longer this persists, the worse it is for America?
No, I think the longer this persists, the more they'll get that gradient better thought through.
And one last thing before we shift our focus.
So you mentioned that I'm willing to speak my mind about the president's policies. And let me say why. Because he listens. And I think that American business executives are making a real mistake in not speaking their mind. Because this president, he'll have his moments where he'll troll, or he'll have those moments, but he does listen.
Well, there are consequences to speaking out. It would seem, I can kind of understand. I would love to see more business leaders speak out. It would be, frankly, good for the news industry. But Jamie Dimon says something on the JP Morgan conference call about the president's demand that banks cap credit card interest rates at 10%. And the next day or the day after, all of a sudden, we're reading about the Justice Department investigating debanking by JP Morgan. Are they not related?
Actually, I think that investigation was probably open long prior to that conference call.
Well, maybe the public's knowledge of said investigation was conveniently timed.
Perhaps.
So what is it going to take then for more business leaders to speak out? Why aren't they speaking out? What are they afraid of?
So first of all, behind closed doors, they're much more willing to engage.
Sure, I have those conversations too.
And so the question is they might ask themselves, to what end? They might just ask that question. From my vantage point, I hope that when I talk about American policies, that people that I work with in the House and Senate have a chance to understand my point of view. Been involved deeply in the American political process for 20 years, and I have a number of friends in the House and in the Senate, and I want them to have a chance to be informed about my thoughts on our policies. So I think American executives really should not be afraid to use their voice with this administration. The first administration in a long time, Trump 1, Trump 2, that has clearly put the interests of the American business community first. I mean, I can't tell you, you didn't touch on this, but the regulatory deluge under Biden.
Well, I didn't touch on it because we have covered it extensively in past conversations.
Was suffocating. Suffocating.
Oh, I know, and I know you're...
And it is such a relief in the United States these days to be able to go back to business.
Let's shift our focus to Europe for a moment. It's important for me to ask this question, Ken, because you have been clear in the past that you believe in the value of alliances and in having allies. So we'd like to know what you make of the president's insistence that America buy Greenland, and the corollary, right? The implicit threat to NATO if Denmark denies him. He said it today. All we want is a piece of ice. You can say yes, and we'll be grateful. You can say no, and we'll remember. Does that justify an invasion of Greenland, which he has talked about?
He was very clear today. We will not use force to take Greenland.
So where does this end then? Retaliatory tariffs? He jacks up tariffs on these 8 countries to 25%. The Europeans invoke the anti-coercion measures, and it's a global trade war?
I don't think we're heading towards a trade war with Greenland. But I do think the president today made an interesting case, almost compelling, as to what the U.S.'s interest is in Greenland.
Well, national security, international security. He sort of dismissed the whole critical minerals issue, the Golden Dome.
Right, that Golden Dome is what,
Sure, but
Israel's version of that allows Israel to exist as a country. If our enemies do not think they can take us on a first strike, they will not try to take us at all.
Do you really think that the Europeans, the Danes, the Greenlanders don't want the United States to put the kinds of defense systems in place in Greenland that would protect them equally as it protects us in North America?
So you and I sit here and scratch our heads and wonder why this is such an issue. And I think that's like a really interesting question. Like, why do we, why does the president
They would probably be willing to commit to it in writing.
Well, actually, the U.S. already has pretty substantial rights to access Greenland for defense. And as the president said, the United States has shed a lot of blood and spent a lot of money over the decades to ensure peace here in Europe and in North America.
How do you think this ends?
I think there's a significant probability that this moves from page A1 to page C17 over the course of the next 6 to 9 months.
An off-ramp. There's an off-ramp coming?
The question is, does this stay front and center in his mind versus all the other issues he grapples with?
That is the key question. I'm afraid I can't answer it. A couple of quick things before we run out of time. 2 days ago, Ken, we witnessed a disorderly, seemingly uncontrollable sell-off in the Japanese bond market. And there are many people here who may not be paying close attention to the Japanese bond market. Pay attention, right? It has been described as eerily similar to the UK's 2022 gilt crisis. Is there an implicit warning, Ken, in that sell-off for the U.S. Treasury bond market?
Actually, there's an explicit warning that if your fiscal house is not in order, the bond vigilantes can come out and extract their price. And what's particularly troubling is that if you look at what happened in Japan, when bonds and stocks move together in prices, then bonds are no longer a hedge for your equity portfolio. And they lose a substantial part of what makes them so special in constructing a portfolio. If U.S. Treasuries are viewed as being at risk because the United States is not seen as being creditworthy, then bonds and stocks will move together in price, and that will result in bonds having a much higher demanded yield in the marketplace. So mortgage interest rates will be higher. The cost for us to finance our deficits will be higher. I think that what happened in Japan is a very important message to the House and to the Senate. You need to get our fiscal house in order.
Liz Truss was playing with fire. The Japanese just learned they're playing with fire. Is the United States, is President Trump playing with fire?
Probably not yet. The U.S. has so much wealth, we can maintain this level of deficit spending for some period of time. But the longer we wait to change direction, the more draconian the consequences will be of that change.
Last question for you, Ken. You've described the risk management process at Citadel as, and this is an oversimplification, looking at historical scenarios and running stress tests to understand how they or similar events would affect your firm's positions and its portfolios. I'd like to know, are you running more or perhaps different kinds of stress tests now in light of, say, the possibility of a failed auction in the Treasury market, or recent geopolitical developments, or perhaps these incipient signs of social instability and civil unrest in parts of America.
I mean, what was the last one?
Well, look what's going on in Minnesota. I said incipient signs.
Yeah, it doesn't help. It doesn't help to turn every small issue into a bigger issue than it is.
I was
right?
trying to be nuanced. Maybe
Yes,
I chose the wrong modifier.
I'm going to be nuanced back. It paints a picture of a country that's tearing itself apart.
That's not happening.
I mean, I live in the free state of Florida. The streets are safe. The schools are great. People are happy. There is none of the turmoil that you see in Minnesota and Florida. Zero. And by the way, we have a bipartisan government in Florida. The mayor of Miami is a Democrat. The mayor of the county is a Democrat. The governor of the state's a Republican. So back to the issue of risk management at Citadel.
And stress tests.
And stress tests. I mean, of course, I have to give real consideration to the geopolitical dynamics that are playing out in terms of how we construct our portfolio. And it has real implications on our willingness to invest in countries around the world. As an American headquartered firm, we would, for example, think about our investment exposure to China different than if, for example, we were based in the UAE or Saudi Arabia.
Of course.
That's a consequence of where we are today geopolitically that we need to keep in mind in how we run our affairs and manage our business. And then, of course, we need to think about today, what are the implications of a bond market that can have a move of the violent nature that we saw in the UK in 2022?
And Japan 2 days ago.
And Japan 2 days ago. And neither of those incidents is receiving the coverage they deserve in the mainstream media in the United States of America. The American voters need to understand we may not be playing with fire, but we have turned the fireplace on.
That is a vivid metaphor on which to end our conversation. Ken, thank you very much. Ladies and gentlemen, Ken Griffin from Citadel.
Right, very good. From Davos, Ken Griffin, he founder and CEO and co-chief investment officer at Citadel. Speaking of Bloomberg Television's Eric Schatzker in Davos with some fascinating comments there. So again, we'll have more on that. Markets trending higher. Let's get a reset here of these markets. The best way to do that is check in with John Tucker. John, what do you got?
Yeah, we actually are in the green again for year to date with the S&P 500. Remember, it had erased the 2026 gains after yesterday's sell-off. Back somewhat. President Trump seemed to take the military option off the table for now over Greenland. So there's some degree of relief being expressed by investors. Major averages, again, pushing higher after yesterday's sell-off. Intel stock was gaining ahead of the chip company's earnings report. Analysts becoming a little more enthusiastic about its prospects. In fact, it was the best-performing stock in the S&P 500, up over 10%. Then Kraft Heinz, worst performer, down close to 5%. Berkshire Hathaway may sell its holdings there. In the meantime, Laura Cooper at Nuveen maintains her view that stocks will push higher.
The S&P 500 could potentially hit our price target of 7,500 by the end of the year, albeit I suspect we're going to see greater kind of choppy price action given the backdrop of geopolitical tensions.
The S&P 500 up 68 points. That's a 1% pop right now, 68.65 in the index. The Dow up 431 points, and the NASDAQ 100 up 322 points, a rise of 1.3%. They were talking about the bond market there in the interview with Ken. 30-year yield right now, 2 basis points lower. Let's go with 3, rounded off. 4.89 right now. That is on the long bond. Hyundai has overtaken General Motors as the world's fourth most valuable automaker.
Really?
And you can credit to some extent their push into robotics. Remember, they bought Boston Dynamics business and unveiling the latest humanoid robot. It's designed to work in their manufacturing plants, the car manufacturing plants, starting in 2028. So there you go.
Increased productivity at the factories, in other words.
I mean, that's the idea. Does it work? Or does the robot, turn into an evil monster and chase you
Let's
down?
hope not.
So anyway, we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash, Paul and Scarlett.
All right, thank you so much, John Tucker. It is 11:11 a.m. Wall Street time, and of course, what everyone was focused on this morning and remains focused on, you could see the relief in equities, in the bond market, in the dollar as well, is President Trump walking back some of the rhetoric, the heat of the rhetoric when it comes to Greenland. He has ruled out taking Greenland by force, but says he would remember if Europe does not concede to his push for negotiations to buy the island. Let's go to another big story that is percolating in Washington. Tyler Kendall is Bloomberg Television's Washington correspondent, and she joins us from outside the Supreme Court, where the High Court is hearing an argument over whether the Trump administration, the White House, can fire Lisa Cook, Federal Reserve Governor Lisa Cook, temporarily while she challenges some mortgage fraud allegations that she has denied. Tyler, what is the latest?
Yeah, hey, Scarlett. So right now, the Trump administration just wrapped up its questioning before the Supreme Court. So now we are hearing from Lisa Cook's side. And I have to say, so far, our own analysis is showing that at the minimum, there are these conservative justices appointed by President Trump that are showing skepticism against the White House's argument when it comes to what they are seeking here, which is known as a stay for a preliminary injunction. You outlined it there. They're essentially trying to remove Lisa Cook for now, while the broader issue of her case plays out in court. And while this is basically a temporary matter, really, it does have longer-term implications ultimately about whether or not Lisa Cook would keep her job, because the justices here are looking at the same core tenets over her firing. Now, with that said, we should caution that once we hear Lisa Cook's lawyers be questioned by the High Court, that could, of course, change perhaps the dynamic. So it's a little too early to say which way they're leaning. But really at the center of this is that the justices are asking questions around three main items. One, did President Trump have sufficient cause to fire Cook under Section 10 of the Federal Reserve Act? The president needs to have cause, but it's not explicitly defined. It's typically meant to mean malfeasance or neglect of duties related to the job, and the mortgage fraud allegations happened before Lisa Cook ultimately came to her position. So that's one line of questioning that we've really seen from the court. The second has to do with due process, but the third is a really important one that I wanted to highlight, which is that the Supreme Court is looking into what's known as the equities of the case, which means the ripple effects. What would this mean for the markets, for the economy, for central bank independence? And Paul and Scarlett, we just heard from Brett Kavanaugh, a conservative justice on the court, who said he's thinking about the, quote, real-world downstream effects that any sort of precedent would set. That has led us to believe that there could be some skepticism from his side of the court on the Trump administration's argument.
And so certainly, Tyler, there are some concerns by many that this case has broader implications, potentially opening a path for President Trump to remove Fed Chair Jerome Powell and other governors who haven't necessarily been as supportive of a lower rate environment. How is that being expressed or raised by any of the justices here, or the arguments?
Right, that is a really key part of this that goes back to this idea that they are looking at the ripple effects. So when they ultimately issue their decision, which likely is not going to be today, it could actually take months for this to happen. They could, have one feeling about whether or not President Trump has cause, but they could have another feeling about whether or not this is going to significantly impact the markets and the economy, and ultimately how the Fed operates as what they have previously outlined is a quasi-private entity that has control over monetary policy. Now, in his remarks, Kavanaugh said that, quote, history is a pretty good guide, and once these tools are unleashed, they are used by both sides, and usually more the second time around, showing that there is some skepticism here when it comes to what sort of down-the-road impacts this could have. Now, it is our understanding that Jerome Powell is inside the courtroom in what is considered to be an unprecedented show of support after we've really seen escalations reach a boiling point, or over the boiling point this last week, after it was confirmed that the Department of Justice had subpoenaed the Federal Reserve over allegations against Powell when it comes to cost overruns to the Fed's headquarters here in Washington.
Yeah, the stakes are definitely higher, and Jerome Powell's presence there did elicit some criticism from Treasury Secretary Scott Bessent. We should add as well that you mentioned there won't likely be a decision today. It could be months. Is there only one day of hearings, or does this continue for another day? I'm wondering how much they can pack into this one day.
there's going to be a lot packed into this one day. So we've already heard from the Trump administration side. Now we're going to be hearing from Lisa Cook's side, and then the Trump administration, the Solicitor General is going to have a chance for rebuttals. And then the Supreme Court is going to take its time, perhaps, and think about what it's going to do next. Now, I will say that we've already started to hear some arguments from some of the justices that the administration has asked for this to be done on an expedited manner, and they are asking, why does this need to happen on such a quick schedule? And that's going to be something really interesting to watch, because we know that the administration has some other cases that are brewing in front of the Supreme Court, including when it comes to removing other officials of independent agencies like the FTC. So they're all sort of dovetailing together, and at this point, it's anyone's guess on how quickly the Supreme Court is going to rule. But Scarlett, it continues what has been a trend from this administration to ask for expedited rulings. Take the tariff case, for example. The White House has asked the Supreme Court to rule expeditiously, to prioritize a decision when it comes to his use of tariffs under the International Emergency Economic Powers Act, and we still haven't gotten that decision yet either.
No, we still haven't, and it's something that we've been waiting for.
Yep.
I mean, this could go on until June, where the Supreme Court doesn't actually tell us how it's ruled on that. Tyler, thank you so much. Tyler Kendall is Bloomberg Television's Washington correspondent, joining us from outside the Supreme Court, where the High Court is listening to arguments over whether President Trump can fire Lisa Cook, the Fed governor, over mortgage fraud allegations that she denies. And of course, this comes before the FOMC decision on January 28th. It also comes, Paul, as the DOJ has begun a criminal investigation into Jay Powell over his comments about the cost of the renovation of the Fed headquarters.
Exactly, and then I guess in the interim, Lisa Cook remains
on
the Fed, so that is certainly the case. So that might suggest maybe the Supreme Court may try to be a little bit quicker than not. Green on the screen here, folks. S&P's up 71 points. That's 1%. So good start to the trading session. This is Bloomberg.
news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So you have some degree of calm returning to the markets, and President Trump seemed to play down the use of military action to take over Greenland. So there's kind of a collective sigh of relief on the part of investors. In the S&P 500, you have about 368 stocks that are higher as the index pushes toward the biggest gain since November. And then the yield on the 10-year down over 2 basis points right now at 4.26. So some easing there. Netflix delivering a disappointing forecast for earnings in the months ahead. It is spending more on programming, and they're also trying to close the deal with Warner Brothers Discovery. Johnson & Johnson of New Jersey, fourth quarter sales beating expectations, strong growth for several new cancer treatments, while it issued higher than expected 2026 guidance. But the shares right now are down about 1.4%. There's some litigation concerns still going on. Berkshire Hathaway, biggest investor in Kraft Heinz, may soon sell some or all of its stake in the cheese and ketchup maker. So shares right now, Kraft Heinz down 5.3%. And then Smithfield Foods says it's going to acquire legendary hot dog brand Nathan's Famous, a deal valued at $450 million. I didn't even know Nathan's was a publicly traded stock.
Me neither.
But it is up 8.8%. Nathan's, because I had to look. Nathan's Famous operates franchises and licenses.
Wait, what's the ticker, John?
NATH. NATH.
Okay.
Nath. So they license Nathan's Famous, Miami Subs, Kenny Rogers Roasters, and Arthur Treacher's Fish and Chips.
Wow.
I didn't know that was still a thing.
No.
But anyway, there you go. All your favorite foods in one stop.
I'm getting hungry.
Yeah, exactly.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Netflix, by the way, 52-week low. The stock getting today down a little over 4%. So we'll stay on top of that story. Let's get back to these markets here. They are moving higher, as John just reported. Let's check in with Phil Blancato. He's Chief Market Strategist at Osaic, joining us from the swamps of Jersey via Zoom. Phil, thanks so much for joining us here. We're starting to get into the teeth of earnings season here. What have you seen so far, and what do you hope to see going forward?
By the way, we have lots of treaters in New Jersey, and they're still delicious. They grow up and wonderful. Good stuff. You know, earnings season is fascinating this time around because we're going to have to accept somewhat of a return to normalcy. You know, we've had exceptional earnings growth the last 5 quarters. We've seen double-digit earnings growth. I think we're going to end up in that 8 to 9% range, the banks being the bellwether of that. And even the Johnson & Johnson name today, leaving that aside, a good name, great earnings, litigation aside, everything is priced to perfection. So 8 to 9% earnings growth so far is going to keep the market in this 1 to 3% range, barring any geopolitics aside. So I think we're going to see a traditional bout of volatility here, especially in the first quarter, when earnings are good, but not good enough to drive markets higher. With one caveat, very important caveat. We continue to see profits, bottom line profits, really be exceptional. With this 13%, 12% range, some as high as 15, some as low as 12, which is far above the historical norm of the S&P. And to me, that's the secret sauce here, why you don't bail out on equities, because profits are still strong, albeit earnings are back to normal.
Profits are still strong, albeit earnings are back to normal. How much of that do you think is due to something like AI or the prospect of AI? Because if we're early in the application of AI to help companies become more productive, then this could go on for a while. It could even get better.
Exactly. And actually exemplified by fourth quarter, when you look at productivity in the fourth quarter, near 5%, really incredible numbers. And our quarterly productivity for a while now has been very strong. So it's a combination of AI, which I think is only about an 8 to 10% impact on earnings. I still think it's early, depending on the company. But I think it's separate. I think when this no hire, no fire arena, where wages have returned to normal, and interest rates, let's not forget, the borrowing costs for corporations, depending on where they sit on the borrowing spectrum, how much they borrow, how big they are, is actually coming down quite a bit. So in that sense, you won on interest rates, you winning on not having a significant wage price spiral, but at the same token, using AI to boost profits. These combinations are keeping profits high, but again, back to average earnings, which means an average stock market.
Volatility, it seems to be back here a little bit here, just over judging by the last several days, a little bit of a deja vu back to April of last year when The market was trying to decipher what a world of tariffs meant. A little bit of that coming back into the marketplace here with President Trump over in Davos. Is this another one where we just try to see through the noise and focus on the fundamentals?
Yes and no. Yes, another noisy moment, but probably goes away pretty quickly. But here's the no side of this, where I want folks to understand where I think things are very different right now. If you look at the return of small caps this year, they're quite incredible. Don't get me wrong, it's a bit of a junk rally. You see companies not earning a lot of money, doing quite well. But in a sell-off yesterday, what was one of your best asset classes? Small cap. Second best, mid cap. So this rotation away is different than last year. We didn't have this. Those other asset classes just got obliterated last year, much more than the S&P or the Mag 7. Now we have a different scenario in what I think is going to be a year of volatility. I think we end the year positive. We're going to have lots of ups and downs this year for this price to perfection moment that we're in. I think you could really win in places like commodities, which we haven't won in a long time. Think of the super cycle we're beginning. Small caps, which are much better valuations in earnings season. Granted, you got to be careful where you're buying based on how much they're growing and if they make any money. And then third, I think most importantly, is that what you saw yesterday was even markets like international hung on much better than U.S. markets. So yesterday, or these last few days, really exemplified an opportunity to really change and rotate your portfolio. And if you don't, I think you're going to really weather much more volatility than you need to.
Makes a lot of sense. I got to ask you, Phil, about something that our Eric Schatzker just spoke with Ken Griffin of Citadel about in Davos, and that is to kind of reflect on the big sell-off we saw in Japanese government bonds at the start of this week. Huge moves there, and a lot of questions about whether that's an implicit warning for the U.S. Treasury market. There was some spillover effect yesterday. We're not seeing it today. And of course, JGBs have bounced back as well. How are you thinking about what we saw there and whether that was a Liz Truss kind of moment, reminiscent of the UK gilt crisis, and what it means for the U.S. Treasury market?
You know, we have a scenario where Japan is desperately trying to break a cycle that they've been in for the better part of 20 years. And we thought that was happening. And obviously, because of some of the inflation concerns, pressure on the consumer, they had to back off on that a little bit here. I don't know that it's such a seminal moment that we're going to get breakage, but it's the same narrative over and over again. Whether it's gold that's reflected of it, to a lesser degree Bitcoin or crypto, the whole globe, but especially the United States, has just printed too much money. So in the U.S. specifically, when you get some anger out of Europe, I don't think it's enough to deter them from buying U.S. Treasuries, but some of that. Then you get Japan, who's in a difficult situation where they're going to make their bet on U.S. bonds or Japanese bonds, probably both. We have pressure on the 10-year, and you see the 10-year has been stubbornly stuck in this, to a degree, 415 to 426 range. And if the 10-year stays higher, it doesn't matter what the Fed does, because you're really not going to have a tremendous breakage on mortgage rates. They're not going to come down a heck of a lot. You're not going to get rates back below 4% on the 10-year, because you need that to get more stimulus for small caps and, to a degree, larger caps. So I think it's another one of these moments where until the globe, and more importantly, the United States, can get to some measure of a balanced budget or not spending at the same rate, adding to the debt, trying to find new buyers for the debt, is a problem. And I don't think this problem is going away. So we end up with this almost stagflationary world where rates stay higher, growth is okay, but not good enough to get anyone out of the debt situation that we're in. And that's why I think we have volatility. That's why I think it's a normal year for stocks, and probably a volatile year for bonds, but still on the positive on the year.
Bond market, how much credit risk should we be taking? Investors were rewarded for it in 2025 for taking some credit risk. How about here?
You can. The spreads aren't really warranted to go in the high yield. They're not getting rewarded enough. I like credit risk in the muni market, though. I think some of the high yield muni bonds are wonderful. You can get a fabulous year depending on the state you live in and really benefit from no taxes. But the bond market, being the ag duration of around 6 years and going out 7 or 8 years, I think makes a lot of sense. The poison pill to that would be, what if we got a reversal in inflation, a reversal in interest rates? I don't think we're going to see that. I think there's still too much deflationary winds, kind of tailwinds in the world. Think about AI as deflationary tailwind, technology to a degree, deflationary tailwind. Certainly demographics. Some of the numbers coming out of China are incredible, how bad their demographic situation is. So I don't think we get a reversal in inflation. So being the bond market ag plus maybe 6 months to a year, you're going to win on yield and maybe a little bit of price appreciation. I wouldn't think credit risk is an issue here. We're just not seeing any breakage there. Rates have come down enough to get any relief that's in there. I'll leave private credit aside. That's a whole nother good discussion.
Yeah, it is. So I guess what it sounds like is, with earnings season here, you don't see anything, or you don't anticipate hearing anything that would change your take on credit, on the risk and reward scenario for high yield or for investment grade.
Nothing that's surprising me as of yet. You're not seeing any concerns on the credit market to me whatsoever. I don't know that I'd want to go out in the C market or I'd probably want to keep my credit somewhere in that double B, triple B market, somewhere in there at worst. I'm just not rewarded enough because the spreads are so tight to go that far down. So I still would want to be, sort of a core plus portfolio. I like the CLO market here. I like the mortgage-backed market here. I think those are very strong markets. We're not seeing any defaults in that arena. I think you can win by being diversified, but you don't need to go into deep poor credit or in that triple C market.
Gotcha. Phil, thanks so much for joining us. Appreciate it. As always, Phil Blancato, Chief Market Strategist at OSEG. Lots of news flow out today. We wanted to get back to some earnings. Our good friends at Charles Schwab, they put up some pretty good numbers, taking in more assets. It just blows me away here. Let's get some of the details on Charles Schwab, a big financial company reporting their results. Stock trading higher here today. Neil Sipes joins us. He covers the financials for Bloomberg Intelligence. Neil, talk to us about Charles Schwab. What's going on there?
Yeah, I think we're seeing a lot of franchise traction here. I mean, you look at Schwab, right? We think about a massive retail broker, 46 million touch points across the U.S. So this is the mass affluent all the way up to smaller buckets in higher net worth individuals. And what we're seeing is the fourth quarter was excellent, right, in terms of retail engagement. Markets were near all-time highs. We're still kind of floating around there despite some choppiness. Margin balances, these are obviously very lucrative lending opportunities for a name like Schwab, Robinhood, et cetera. Margin balances were at a record. So we're seeing that sort of exuberance in the markets, and all of that is, positive to the fundamentals at someone like Schwab, where people continually, it's a cyclical name, but you tend to add more assets into your account when markets are performing well. You tend to trade a little bit more. Engagement, sentiment is higher. All that sort of feeds the franchise.
Does that exuberance extend to speculative fervor? Meaning, is Charles Schwab going to lean into prediction markets or crypto?
Yeah, so I guess two different answers there. Crypto, yes. I think the more favorable outlook, at least for crypto regulation and enforcement, has sort of allowed them to move forward in rolling out spot crypto trading, which we expect in the first half of 2026. They've talked about how a lot of their customers are trading the Bitcoin ETFs and alike, and sort of moving into the spot trading that you've seen for a longer period of time at crypto native firms, as well as names like Robinhood. So expanding into that business, that should provide yet another additive product, not necessarily becoming a crypto powerhouse like some of the other names like a Coinbase or Robinhood that we know of. Prediction markets, on the other hand, they've been slower and more measured in the plans there, staying away from the sports. They've talked about if those financial type contracts that are tied to economic outcomes or stock outcomes, those eventually could make their way onto the platform. No plans yet, but for now, sports gambling is not on the table.
Neil, thanks so much for joining us. Appreciate you running up. It used to be just one floor. Now these guys got like 4 floors from VI. We appreciate the effort. Neil Sipes covers all the financial companies for Bloomberg Intelligence, and he's a proud graduate of the University of Dayton. So there you go. S&P 500 up 60 points, 0.9%. Yields come in just slightly. This is Bloomberg Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks are higher. President Trump seemed to rule out the use of military force to take over Greenland. So there's a bit of a relief rally that's making up some of yesterday's losses. But we paired those earlier gains after this headline came out. Denmark's foreign minister rejecting any talks over a takeover of Greenland demanded by President Trump. So put that in your pipe and smoke it. Halliburton, we'll start there, rising over 4%. The oil field services company reporting a stronger profit for the latest quarter than expected. And then you have United Airlines climbing just over 2%. They reported a better profit for the end of 2025 than expected. And this all helping offset a over 4% drop for Netflix, down 4.7%. The streamer sinking, even though it reported a stronger profit than expected. Investors seem to focus in part on slowing subscriber growth, and they're spending a lot more money. S&P 500 up 45 points, up 0.7, 68.41. The Dow of 345, up just 0.7% right now. And the NASDAQ 100 up 194 points. That's a rise of 0.8%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right. Very good. John Tucker, appreciate that. Scarlett Field and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, the U.S. Supreme Court will weigh whether President Donald Trump can fire Fed Governor Lisa Cook over mortgage fraud allegations that she denies. The case concerns whether President Trump can oust Cook temporarily while her challenge continues, but the legal issues may have a broader effect on the Fed's independence. Get some more color on that. We welcome our next guest, Nikki Lanier, CEO of Harper Slade, and a former St. Louis Federal Reserve Senior Vice President, joining us from the lovely Lexington, Kentucky via that Zoom thing. Nikki, what do you make of this case here with Lisa Cook here, I guess on its face, and then maybe even broader implications for Fed independence?
Oh my gosh, the significance of the implications on Fed independence should not be lost on anyone at this point, anyone drawing breath on this planet. The Federal Reserve's independence, as we all know, is the bedrock of American economic credibility. And so efforts to politically target or remove a sitting governor, especially as this case reaches the Supreme Court, this risks politicizing monetary policy, destabilizing global trust in U.S. markets. There's no upside to this, and the intentions of this president in unseating an extraordinarily beautifully qualified Federal Reserve governor is not only unprecedented but reckless.
So, Nikki, the fact that 3 conservative justices have expressed skepticism about the U.S. government's argument so far, Amy Coney Barrett has asked about the potential for risks to markets if Lisa Cook is removed. Does that give you some measure of confidence that she's getting a fair hearing?
I mean, hopefully so. Hopefully so. I think, you know, politics aside, which is hard to kind of set aside in this context, there is, I think, an understanding among our nation's leaders that the importance of the Federal Reserve remaining independent and not corrupted by political whims or personal gain is so core to the American economy, really the global economy. And I think that that's not lost on several of our Supreme Court justices. And I hope that that will be the case as this case ensues, that will be the actual result of this, that the president will not have any authority to remove this sitting governor.
So, I mean, this is a Fed that's like pretty much all Feds in memory said that they are driven by the data here. Is that potentially at risk? I mean, could we get to a point where this Fed does become too politicized and maybe the data isn't what's driving the decision making?
Absolutely, absolutely. And then it's game over. I mean, honestly, game over. That's core to the Fed's independence, is really relying on the data. These are stalwart and studied and highly pedigreed decision makers who are opining and deliberating painstakingly. I've seen it in these FOMC meetings over whether to raise interest rates and how to think about monetary policy for the interest of the whole. And they are extraordinarily data-driven, not just empirical data, but my job when I worked for the Fed was part of my role was to solicit the anecdotal data that rounded out the story, giving rise from the empirical data. And so they rely on that very heavily. And it is an extraordinarily painstaking process that the lay citizens like you and I and your listeners really have come to rely on.
So, Nikki, I'm sure after years of doing just that, kind of sifting through the data, considering all the anecdotal out there and assessing the economy, you don't just stop because you're no longer working at the Fed. What is your take of where the economy sits right now? What is the biggest challenge here for Fed officials as they consider what to do on January 28th?
Listen, the biggest challenge right now is the independence, and the Federal Reserve is under direct threat by the President of the United States. And so this idea of a president possibly being sanctioned in a permissive way to require the Federal Reserve to bend monetary policy to political interests and personal grievances, it is an extraordinarily dangerous precedent. And if intimidation works, if intimidation is able to prevail, then monetary policy leadership, the infrastructure giving rise to the Federal Reserve's dual mandate, how we've come to know and understand and rely on how the Fed assigns rigor to the process of determining policy is entirely upended. So I can't even fathom what that would look like in a world where the Federal Reserve is entirely relenting to and acquiescing to the political whims of any president, and especially this president.
And Nikki, we have Fed Chairman Jerome Powell actually in attendance at the Supreme Court proceedings today. What does that tell you? What kind of message does that send?
Big daggone deal. That's a big deal. Chair Powell's decision to personally attend these arguments, it underscores the gravity of the moment. Fed chairs don't usually appear in court casually, and so his presence signals the independence of the central bank itself, not simply the fate of one governor. This is far from just a kind of pedestrian personnel decision. This is a significant decision now before the judiciary, really deciding whether the Fed will remain independent and be able to do its job with the extraordinary rigor and discipline that it has been, or if it must cave to the whims and the wants of the president and his political desires.
Nikki, have you had a chance to speak with any sitting Fed governors or even Lisa Cook herself? I'm just curious what you've heard on your end.
I've not had an opportunity to speak with either of them, but what I will tell you just from my perspective, if I might be so bold, I worry about this moment and the crisis that it presents, the compounding crisis, the calcified crisis in many ways that it presents for what's happening in the labor market, and specifically the labor market regarding Black women. This is not sitting inside of a vacuum. This is in a larger context. This president and his administration has very much racialized his political policies. They are core to who he is and core to how he's planning to administer his priorities in his administration. And so what I really worry about is what this signals in terms of codifying continued attacks on professional Black women.
Nikki, thank you so much for joining us. Appreciate that. Nikki Lanier, she is CEO of Harper Slade and a former St. Louis Federal Reserve Senior Vice President, joining us via Zoom from Kentucky. Back on the earnings front here, a big name last night reported earnings, Netflix, and their guidance a little bit weaker than expected, picking up some spending on programming and some others, and of course, all overshadowed or all kind of tainted or just painted in the context of they're getting ready to maybe try to close a $90 billion enterprise value acquisition of Warner Brothers Discovery. So I got that all over the stocks. Let's get the latest from Geetha Ranganathan. She covers all the media stocks for Bloomberg Intelligence. Geetha, let's first just start with the earnings. What did you hear last night? The market selling off a little bit here today.
call when it came to the fourth quarter report, but you're right. The guidance was definitely a little bit underwhelming. Not so much on the revenue side. On the revenue growth side, they're still guiding to about 13% growth, which is pretty strong, in line with consensus. I think where they kind of fell short a little bit was on the operating margin side. And this is where, I mean, this was really the big takeaway, I think, for all of us, is that growth is going to come at a price. It's going to come at the price of, $83 billion for Warner. It's going to come with more content cost expenditure. That's inching up to about 10% this year. Remember, it's been about high single digits, about 6-7% in prior years. So again, definitely we are seeing that, yes, they can keep the growth, but it's going to cost them.
All right, Keith, unfortunately, we have to run for some breaking news, but we appreciate checking in with you. We'll do that as we go forward. Again, Netflix stock trading down on some news, a little bit weaker guidance here. Right now, let's head back to Davos. Kevin Hassett is sitting down with John Farron, Anne-Marie Horder, and Bloomberg Television. Let's listen in progress.
Liberation Day this week because of what was going on with Greenland. Do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff front, where I've been surprised, especially.
Now you're a true believer.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think the question is, the interesting question that I've been puzzling over and talking to some of my mainstream economist friends is, why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've got to stop doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people on Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you are a middle country and you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the U.S.'s biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, indeed the people here at Davos, that's one reason why we're here to spread the news, is that we've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, they look at their wallets, they see how it's going. And in the United States, they're going to see a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out in the last few days.
Are you concerned, though, a little bit about a tightening of financial conditions? Bond yields rising, which we did see this week.
There is a little bit of wiggling, but the bottom line is that in the end, the bond yield really depends on what's going on for the U.S. with the deficit. And we've reduced the deficit by about $600 billion year over year. And we expect that we'll do more next year. And we've done it with real stuff, not smoke and mirrors. For example, cutting government employment by 270,000 workers. And so I think that the bond markets are going to look at that and they're going to feel pretty secure in investing in U.S. debt. And Secretary Bessent is really the best debt salesman I've ever seen, too.
And he's always focused on where the 10-year Treasury yield is. He wants it at 3%. We're not there.
We're not there yet.
Not there yet. When it comes to tightening of financial conditions, though, a lot of talk also at the sidelines of Davos, and has been for weeks, is what's going on with the Fed. One CEO told me today that it's counterproductive if you have these concerns about Fed independence, because it means we actually might get tighter financial conditions. Jay Powell was there, present at Lisa Cook's hearing today at the Supreme Court. What do you make of a more assertive Fed Chair Powell?
Well, I think that again, as you recall, that I was a young economist at the Fed a long time ago, and I worked with Alan Greenspan, and he was really, really careful about keeping the Fed out of politics and keeping the Fed focused on monetary policy and interest rates and the dual mandate. And even to one point, I wrote a paper, an academic paper, that he refused to publish for the Fed for over a year because it was about carbon taxes and BTU taxes, and he didn't want the Fed to get involved in that fight with Al Gore and Bill Clinton while it was still going on. And so I think that, really regrettably, the bank presidents and the Federal Reserve members seem to want to have an opinion about everything every day, not just monetary policy. So, for example, you could go in, and right after President Trump took office, Austin Goolsbee gave a speech where he said, well, economists all agree that if there's a tariff, that it doesn't have an effect on inflation, it just affects the price level. But he said, here's why you shouldn't think about it that way. And I think that that's actually going into a politically dangerous place for the Fed. I mean, for sure you want to talk about inflation, but precisely then, right when President Trump's coming in and setting his tariff agenda, to have the Fed criticize him so vehemently, I think is inconsistent with the desire for independence.
Do you think it was appropriate that Jay Powell went to the Supreme Court today?
I do not.
No. When it comes to the Fed process, of course, your name is in the mix. Have you heard any more about the process? Because the president said we've learned today that he will be making announcements soon. It sounds like next week, potentially.
I don't know if the announcement's next week. You saw what he said. It was very sweet of him to mention that he wants me to stay. I think that we haven't finalized at the White House what's going to happen, but we're really thrilled that there's so many good candidates. And I think that the fact of whether I stay or do something else, whether he decides for me to stay, is really related to the fact that because he did such a good job recruiting a great White House team led by Susie Wiles, that this White House is really running on all cylinders. And part of it is because so many really great people joined the National Economic Council. And so I think that he's a little bit wary of breaking that up.
We spoke to Senator Tom Tillis today. Of course, you know him, senior member of the Banking Committee. He said it's not about the person, it's about the process. And he doesn't want to go ahead with the process of the new Fed chair until all the drama with the Powell subpoena is tied up. And he says he's still going to be there for another 347 days until his retirement. So how long do you think this will take?
Well, he's an old friend, and I have very high regard for him. And I understand that the subpoena is a challenge for some to think logically about, well, is it legit, and so on. But what we need to do is sit back and look at the evidence. The fact is that the overruns at the Fed are so humongous that it's right for us to investigate, well, where did they come from? Was somebody profiting from it, and so on. And I don't think that we've been super happy with the transparency of the Fed on these matters, and it's unfortunate that a subpoena might be required for them to just own up to what they've been doing. But I really expect that things are going to move quickly because everybody wants this resolved as fast as possible.
I know you're a friend of Senator Tillis, and by the way, he's here, so maybe you'll get an opportunity to see him walking around. He's very popular right now in the Congress Center. Have you had an outreach with him directly about this process?
No, I've not had an outreach about the Fed process with anyone other than the president.
Has the president, you think, spoken to Senator Tillis?
I have no idea.
Oh, okay. Because he is this key person, and he potentially may hold up the president's pick. Are you prepared for Jay Powell being the chair of the Fed for the rest of the year, potentially?
I don't think anyone expects that in the end the president's nominee will have any trouble at all.
I want to end just on the midterm elections. For me, it feels like the president's North Star this year is November 3rd, midterm elections. We heard more about affordability today, but a lot more about foreign policy. When do you think he's really going to start to flesh out more about, will we potentially see a credit card cap? Will we see more when it comes to the housing market? Is there going to be sort of ban with the defense sector buying, having stock buybacks or dividends?
Well, one of the things you saw in the speech was that there are a lot of foreshadowing events that he suggested were coming soon, including a big housing policy announcement. And I think that, you know, for sure, the economic agenda is really ambitious for the year ahead, and I think that you'll see more of it in the State of the Union. It's something that we've been working really hard on.
So in February, do you think the administration is prepared to call for something, say a housing emergency before the midterm elections?
I don't know if someone would call it an emergency, but I do know that it's really, really terrible what so many people are going through, because the typical down payment in the U.S. because of Joe Biden's inflation has about doubled. So it takes about $34,000 to get into the typical home right now, and who has that kind of money? And so we see that people aren't buying a new house until they're like 40, and that's just unacceptable to the president. And we've got a whole bunch of policies in line to make housing more affordable, which is a big part of making life more affordable. If you think about how much of the budget that you spend every month is about your house, if we can get that down, then we can really have a big effect. And we have actually already this year, because mortgage rates have come down.
Davos, for a lot of people in the Trump administration, has said to me, this is a place for global elite. As we end here, what do you think the one message the president should make to Americans on why he should be at this event in Davos, Switzerland, one of the hardest places to get to in the world, as you know?
Yes, it was kind of hard to get here, but I could tell you that President Trump believes that he can help the world understand the effectiveness and success of his policies. And this is a place where a lot of people who have advocated pretty awful policies for their countries have been kind of increasing in sanctimony as they've declined in wisdom. And we're here to set the record straight with hard data so people can see what it takes to have a great, wonderful economy. And we hope that every country that's here and everybody represented here listens.
Kevin Hassett, thank you so much for your time today. That was, of course, the National Economic Council Director, Kevin Hassett.
And I'm Joe Matthew in Washington. Big thanks to Anne-Marie Hordern with us live from Davos in that important conversation as part of our rolling coverage of the World Economic Forum. Good to see you and welcome. A slightly different start here to the Wednesday edition of Balance of Power. Hassett telling Anne-Marie just now on a string of headlines here on the terminal that Trump is disrupting an order that must be disrupted when we consider the world economic order that the president spoke to this morning. Says he does not believe we're pushing our allies closer to China, and talking about some pretty serious economic growth. 2 GDP quarters north of 5%. He suggests the U.S. is looking forward to in the year ahead, as the president mentioned this morning as well. Talked about the president's search for a new Fed chair as well. And talked about the membership of the Fed seemed to want an opinion on everything he said. Criticisms of Trump being inconsistent with independence, and thrilled there are so many Fed candidates expecting things to move quickly on the investigation into Jay Powell. The gist of what we heard here, knowing that Hassett may not be at the top of the list at the moment, but is still on the short list as the president considers his pick for the next Fed chair to replace Jay Powell. We want to check on Wall Street. We're going to do that for you in just a moment as we get our arms around everything that's happening. Jordan Fabian, our White House editor, is going to join us to talk about a truly remarkable speech this morning by the president, an unprecedented speech where he ruled out the use of military force to take over Greenland, and that's why stocks are popping here. We've also got arguments before the Supreme Court today in the Lisa Cook case, something that was just discussed with Kevin Hassett. He found it inappropriate that Jay Powell was in the room for that. Tyler Kendall will join us from in front of the courthouse, and it's all in the next couple of minutes of Balance of Power. So let's start, as we always do, at World Headquarters in New York. Charlie Pellet, the voice of Wall Street, and how things are shaping up in the Wednesday trade so far. Charlie, a nice little rally on our hands.
Indeed. However, Joe Matthew, we are off session highs, well off session highs on the S&P, but holding on to a gain right now of 30 points, up by about 0.5%. Key takeaway at this hour, tentative calm being restored to Wall Street after the worst day yesterday for markets since April, with President Trump's disavowal of force in his quest for Greenland, pushing up stocks and halting slides in bonds and crypto. So right now we've got the Dow up 280, up by about 0.6%. Again, the S&P up 0.4. NASDAQ right now up 0.3, and the Bloomberg Mag 7 index up by about 0.2%. The 10-year yield 4.27%, with a two-year at 3.59%. The 30 at 4.90%. Gold keeps on going, taking out 4,800, 4,822 on the precious metal, up another 1.2%. A retreat for silver, down 1.6%, 93 even right now on silver. And West Texas Intermediate crude higher by 0.2%, 60.47 a barrel. Bitcoin, meanwhile, down 1.8%, 87,760 on Bitcoin. Kevin Hassett, director of the National Economic Council, just wrapping up an interview at Davos, answering a number of questions, including an update on the search for the next Fed chair.
I don't know if the announcement's next week. You saw what he said. It was very sweet of him to mention that he wants me to stay. I think that we haven't finalized at the White House what's going to happen, but we're really thrilled that there's so many good candidates.
The president's short list includes National Economic Council Director Kevin Hassett, BlackRock executive Rick Reeder, current Fed Governor Christopher Waller, and former Governor Kevin Warsh. Again, recapping, stocks higher. S&P right now up by about 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Hey, Charlie. All right. We thank you so much. Charlie Pellet will have more on the markets in just about 20 minutes' time, even less than that, here on Balance of Power as we connect the dots between Washington and Wall Street. That policy we typically talk about in Washington is being exposed today in Davos, and this is the focus of our coverage here after a truly remarkable speech that you heard live here on Bloomberg Radio, streaming live on YouTube as well. Search Bloomberg Business News Live if you'd like to join us now. Inflation has been defeated, the president said. He talked about America on the world stage. He criticized our European allies, but only really in the end, it seemed one line in a more than hour-long speech mattered as he ruled out the use of military force in Greenland. I realize, as Charlie just said, we've had fatter numbers today, but it sure seemed to go over well on Wall Street with a nice pop in stocks in the early going, and we'll see if these hang in there. Listen to what the president said about Greenland in Davos earlier today.
We never asked for anything, and we never got anything. We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force. All the United States is asking for is a place called Greenland. They have a choice. You can say yes, and we will be very appreciative, or you can say no, and we will remember.
Oh, boy. Not sure exactly what that means, but let's seize on the news there, ruling out the use of military force. There will be no invasion of Greenland. And that's where we start with Jordan Fabian, Bloomberg White House editor, who's with us here in our Washington bureau. Not freezing in Davos, although it's pretty cold around here. Jordan, I'm just wondering what that referred to, or you can say no, and we will remember.
Well, I think you could take it as a shot across the bow at the NATO alliance, especially as they're grappling with the Russian threat in Ukraine, that maybe implying that the U.S. wouldn't come to the rescue if the Russian military forces were to cross from Ukraine into NATO territory.
Wow.
But again, it's reading between the lines, of course. He didn't say that specifically, but if you listen to what else he had to say about NATO, how he doesn't think that they would come to our defense, and it's sort of this outmoded alliance that he seemed to be at least implying that in those comments. And so while he took the use of military force off the table for now, there are these other perhaps future geopolitical risks if the standoff continues.
Well, we should note that, the president says he doesn't actually believe, he told this audience, he does not believe that NATO would be there for the U.S. if we were attacked, when the only Article 5 ever invoked was on behalf of the U.S. following 9/11. The Danes are very familiar with this. How offensive was that suggestion to people in the room?
It's something he said before, but I'm sure it's offensive. I mean, Danish soldiers, NATO alliance soldiers have lost their lives, lost their limbs in conflicts that involve the U.S. Since they invoked that Article 5 following the September 11th attack. And so not only did they invoke it, but they actually put blood and sacrifice into that. So
people died.
I'm sure it didn't go across well.
Well, it's worth noting that, look, he's in a room full of people who know the data. Half of this place has a terminal, right? And they know the history. So it's interesting that he's testing the lines on some of these ideas. Jordan, let's get back to the news, though. He is calling for immediate negotiations to discuss an acquisition of Greenland by the United States. Will such negotiations take place?
There are these talks, but I believe the Danish leader said at Davos that he's not interested in selling. So they still appear to be at loggerheads. So now the question is, what does the U.S. do next? Do they go through this mediation channel still, or will the president follow through on that threat to put tariffs on goods from those 8 European countries who have opposed his move to annex Greenland. That deadline is February 1st. So far, we haven't seen any moves by the administration to actually move forward on that, but now will they actually do that now that that sort of gauntlet has been thrown down?
Interesting. What's the rest of the trip look like here? He's got some sideline meetings today, including the Prime Minister of Poland. We know that he's sleep deprived. What's the next 24 hours look like?
Right. He's got a few more meetings, including with the Secretary General of NATO. So this topic certainly coming up again today. So not our last bite at the apple. And then tomorrow he's focused on this so-called Board of Peace that he's creating as sort of a rival almost to the United Nations. Right. He says there's a lot of countries waiting to sign up. Mm-hmm. We don't know who they are. He hasn't named them. Of course, there's that controversial $1 billion price tag he's put on permanent membership. And so perhaps more details tomorrow on that.
Just quickly, you used to travel with the president a lot. We understand Air Force One had to be turned around in flight last night. The president left last evening. The idea was, to fly across the ocean, get some rest. But they had an electrical malfunction of some sort that required them to turn this airplane, packed with officials and reporters around, head back to Andrews and fly back on a smaller jet. It made him about 3 hours late. Do we know anything about what the problem was?
I don't think we know anything further about the specific problem, but the Air Force is always going to exercise a lot of caution in those kind of scenarios, especially flying across an ocean. You don't necessarily have a lot of places to do an emergency landing if the problem gets worse. And so I don't think the president and the crew were in any acute danger last night. They could have done an emergency landing on the way back. They made it back to Andrews, but certainly something they took seriously.
Well, expect to be hearing more about that Qatari Air Force One, Jordan. Thank you so much. Jordan Fabian, helping to edit our coverage here by way of the White House and President Trump's visit to Davos. We are spinning two major plates here, as I mentioned. It's the president's address today, the geopolitics and trade associated with it, along with arguments before the Supreme Court that began about 2 hours ago now. And John Sauer, we actually heard from a short time ago, the Solicitor General, in making the case here, arguments, remembering this is about President Trump's attempt to fire Lisa Cook from the Fed. Here's a taste of the arguments from earlier.
We would contend there's judicial review kind of at the outer perimeters of cause, whether something goes to conduct, fitness, ability, or competence at all. But once you're within that, and we clearly are here, then there would be deference to the president. The statutory language, cause without further qualification, is itself, in its plain language, a broad, conferral of authority on the president himself.
Which brings us to the headline on the terminal. Supreme Court appears wary of Trump bid to fire Fed's Cook. And that was the baseline going into this. A skeptical court, if you believe the analysis and the tip sheets here, the conventional wisdom in Washington. Let's find out what's really going on at the court. We'll bring you there right now. Bloomberg Washington correspondent Tyler Kendall has had a freezing cold morning in front of the courthouse. Jay Powell is inside that building behind you, right, Tyler? What are we learning?
Yeah, hey, Joe. Well, the arguments just wrapped up, and we're starting to see people flood out of the courthouse. So we have our eyes peeled on whether or not Fed Chair Jerome Powell, excuse me for turning around, we're trying to see if he's going to come out of those front doors, because as you read that redhead on the terminal, that the justices suggested that they are weary of President Trump's efforts to oust Lisa Cook over these allegations of mortgage fraud, saying that the move could upend the Fed's independence and ultimately rattle markets. And that's because if we take a step back here, today the court was hearing this case, the administration's request for what's known as a stay of a preliminary injunction that has allowed Lisa Cook to maintain her position while the broader issue of her firing plays out in court. So they're essentially trying to decide whether or not she can keep her job for now. But the tenets that they looked at this case have longer-term implications. Essentially, the writing could be on the wall on what this would mean for her firing at large. And those three questions that the justices were really honing their questioning on has to do with: one, was there sufficient cause to fire Cook? Two, was she afforded due process? And three, what's known as the equities of the case? What are those potential ripple effects? And that's really where we saw the justices dig into the administration's arguments, including Brett Kavanaugh, Joe, who said that he is thinking about the, quote, real-world downstream effects and any precedent that this could set, not just for this administration, but any administration down the line when it comes to targeting an entity such as the Federal Reserve.
Well, this tracks with what we heard last May, right? And at the time, Kavanaugh made some remarks, and again in December, that he shares worries that this could undermine the independence of the Fed. At the time as well, remember the court described the Fed as a uniquely structured quasi-private entity that makes it different from the other agencies, Tyler. Does that come down to the heart of the case?
Well, I'm actually glad that you brought that up, because the first line that we heard from Lisa Cook's lawyer, Paul Clement, was that he is arguing that the Fed is a, quote, uniquely structured entity with a distinct historical tradition that goes back to its founding in 1913, appearing to mirror that protection, that carve-out that you're mentioning, that we saw the Supreme Court bolster last May when it essentially shielded the Federal Reserve from so-called political firing. So that is going to be a really key tenet here. Now, of course, we should also caution, while we've gotten this signal from the High Court on this weariness, as we're describing it in our story on the Bloomberg terminal, ultimately we're not expecting there to be a decision perhaps anytime soon, though the administration has asked for this to be done in an expedited manner, which tracks with some of the other requests that the Trump administration has made of the Supreme Court on other cases, such as the tariff case, for example. But as you well know, we are still waiting for a decision on that too.
Well, you point out something really important here, Tyler. They decided in October to let Lisa Cook remain in her job. So if we have months more of this, she keeps going to work every day?
Well, that was one of the questions actually posed by Amy Coney Barrett about why does this need to be done in such an expedited manner at this point, considering that Lisa Cook has been able to retain that position at this point for so many months. And that's sort of alluding to what might be the political motivations here, and whether or not that comes into this case that the administration is making when it comes to whether or not the president has sufficient cause. Now, we should say Section 10 of the Federal Reserve Act outlines that the president needs sufficient cause to remove an official. But something that kept coming up is, how do we define cause? Because it's not explicitly defined in the law, but it has typically been meant to mean malfeasance or neglect of duties related to the job. And these allegations of mortgage fraud happened ahead of Lisa Cook becoming a Fed governor. So her lawyers were saying, even if there were discrepancies on her applications, perhaps there were clerical errors, that doesn't reach that legal standard that this was related to her job as a Fed governor, and that it happened before she came into that position. So it doesn't reach that level needed that would qualify for a dismissal. So a full circle argument there, answer to your question. But these were the sort of threads that we saw the justices pull on as they were questioning both sides today here at the Supreme Court.
Really great reporting. That would mean that Lisa Cook would still be part of the FOMC for like another 3 or 4 meetings here, Tyler. Producer James looking at the calendar right now, right? We've got January, March, April, June. Pretty amazing here if it's going to be months more until we get a decision on this. We're out of time, Tyler, but is anybody out there other than reporters? Are there any protesters or onlookers?
Actually, this is one of the quietest Supreme Court cases that I've covered. As you well know, I'm normally fighting with the sound of the protesters. It's pretty...
Exactly, that's why I asked.
Quiet here today, except everyone's looking for Jerome Powell, though. That's the one person that we want to see here at the court today.
Let us know if you see him. Tyler, great reporting. She knows this case inside and out. We'll keep track with Tyler throughout the course of the day here on Balance of Power. This is Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Tentative calm being restored to Wall Street after the worst day yesterday for markets since April. President Trump's disavowal of force in his quest for Greenland, pushing up stocks and halting slides in bonds and crypto. Right to the numbers, S&P up 18, 68.15 where we stand right now. That is an advance of just about 0.3%. We've got the Dow up 212 now, up 0.4%. NASDAQ Composite, little changed on the day now, higher by 7 points. The 10-year yield, 4.27%, with a 2-year, 3.59%. Gold is surging another $60 the ounce, another record for the precious metal at $48.24, up now by 1.3%. Silver is down 1.5%. Spot silver, $93.60 the ounce. West Texas Intermediate crude, little changed on the day at $60.35 a barrel. And Bitcoin down 2%, 87,560 on Bitcoin. Natural gas has jumped more than 50% over the past couple of days on dangerously cold temperatures expected to hit the country. Right now, we have got nat gas up 21.6% to $4.74 per million BTUs. Earnings, United Airlines Holdings beat Wall Street estimates for the fourth quarter. UAL shares up by 2.3%. And Ryanair Holdings CEO Michael O'Leary says his online sparring with Elon Musk this week has been good for business. Speaking in Dublin, O'Leary said bookings have increased between 2 and 3% in the aftermath of the social media brawl between the corporate giants. The volley of insults began last week after O'Leary said that Ryanair would not install SpaceX's Starlink Wi-Fi service across the fleet because the weight and drag from the antenna mounted on the cabin's roof would add to fuel costs. Later, as you know, devolved into a fight over who was, quote, the bigger idiot. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie always bringing us to the heart of the story. Did you hear what Charlie Pellet said there? The words that he chose. Tentative calm. What a perfect way to describe this market today. Monster rally this morning. We're not seeing it now, but we're holding positive with some hope here that we might find some stability in the days ahead after the president ruled out the idea of invading, actually using military kinetic action to take over Greenland. He says we're not going to do that, but if they say no, we'll remember. It's 26 degrees right now in Davos, by the way. It's going to get down to 8 degrees tonight at Bloomberg House. Amazing, the news that we've been hearing from over there. Of course, none bigger than the president's speech this morning. And he talked so much about Europe. That was the thrust. I know it was supposed to be about affordability, and he did get into some of that. By the way, a half an hour from now, Lael Brainerd is going to be with us in studio to get her reaction to the president's framing of the economy today, which ought to be interesting. Never mind the arguments before the Supreme Court this morning. But it wasn't only about Europe. He did mention Venezuela as well. But in the line of attack was our ally to the north. Yes, Canada. Having heard from Mark Carney yesterday, we talked about it just a moment, the Prime Minister delivering a very blunt address in which he said, we are in the midst of a rupture, not a transition, when referring to the New World Order. Listen to what he said.
Every day, we're reminded that we live in an era of great power rivalry, that the rules-based order is fading, that the strong can do what they can and the weak must suffer what they must.
Wow. President Trump was listening, watching, and had a message back to Canada today. I don't know if he mentioned Carney by name. He referred to the Prime Minister. Listen to President Trump from his speech today in Davos.
We're building a golden dome that's going to, just by its very nature, going to be defending Canada. Canada gets a lot of freebies from us, by the way. They should be grateful also, but they're not. I watched your Prime Minister yesterday. He wasn't so grateful. But they should be grateful to us. Canada lives because of the United States. Remember that, Mark, the next time you make your statements.
That's right. He called him Mark. Derek DeCluett covers this for us from our Toronto Bureau. Bloomberg News executive editor for Canada is with us live right now. Derek, it's great to see you. Welcome back to Balance of Power. How's this all playing in Canada?
Well, Carney's speech is really reverberating around the country. I mean, some people are talking about it as the most significant foreign policy speech from a Canadian leader in maybe in decades. And it's all anybody can talk about because what Carney is saying, I mean, there are a bunch of signals in that speech that he gave. He didn't mention Trump. He really barely mentioned the U.S. But it's a signal to Washington, but it's also a signal to Europe, to the Nordic nations, and to the Canadian population. The underlying message being, don't expect the world to go back to what it was. We are sort of truly in a new era, and that will require a whole bunch of different policies, especially from countries like Canada that have historically been very allied with the U.S. On defense, trade, and security matters.
Yeah. Well, I'll tell you, you listen to what the president just said, right? The line was, Canada lives because of the United States. Yet days ago, we saw Mark Carney signing a trade agreement with Beijing. How do we rationalize these two?
Well, I mean, the trade agreement, let's be clear, is quite a limited thing. There were high tariffs that have existed for a while between Canada and China on a handful of things. Canada was tariffing Chinese cars, which it did to follow what the Biden administration wanted. I mean, basically, that was a match of what Biden had done on Chinese EVs, and the Chinese retaliated against Canadian food products, and they've agreed to lower those tariffs. If the question is how do Canadians react when Trump says things like Canada lives because of the United States? I mean, the answer really is not very well. I mean, Canada's been a partner with the U.S. on NORAD and NATO and all sorts of things. But something that many Americans don't know is that after 9/11, when the U.S. went into Afghanistan, Canadian soldiers, went too, and there's a monument with more than 150 names of Canadian soldiers who died in Afghanistan, just sort of responding as part of a broader NATO mission post 9/11. And people here do remember that sort of thing when they hear the president or other U.S. policymakers talking in this way about Canada.
Yeah, you saw this headline out there that Canadians are modeling scenarios for a possible U.S. invasion. We've only got about a minute left here, Derek. Is that real?
I mean, yes, in the sense that we believe that it's real in the sense that they've discussed this, as you would always do, scenario planning for the worst case scenario. Everybody understands that Canadian military might is vastly superior to Canadian military might, and so that's the way it is. But the polls all show that there is huge Canadian resistance to the idea of ever joining the U.S. 51st state. None of that really has any real traction here, and so that's the reality of how how the Canadian public feels about and thinks about this when you get past the question of theoretical military invasions.
Derek, it's great to have you, as always, from our Toronto bureau. Derek DeCluet with the Canadian side of this whole story. And we've got our eyes on Wall Street today following the president's address. Look, we had a very severe sell-off yesterday that we were told might be the beginning of another Sell America moment, bringing us back to Liberation Day. Everything was off, stocks, bonds, the dollar. We are seeing a recovery now, but it's been tempered. What was it that Charlie said? Tentative calm, which I think does kind of illustrate where we're at right now. We wanted to take a minute with Mike Regan to see what he's looking at. Bloomberg managing editor for U.S. Equities is with us live from New York. Mike, it's great to see you. Was that a one-day event?
Well, Joe, it's interesting. I mean, the market seems laser focused on this Greenland situation right now, and the rhetoric from Trump's social media over the weekend was very alarming in that regard. Then this morning we had his speech in Davos where he seemed to indicate that a military invasion, if you will, of Greenland is not in the cards. However, that really shot the market back up about 1% in the S&P 500, recouped about half of yesterday's drop. But then right after his speech, we started seeing headlines that Greenland does not want to negotiate with him at all. So really, I think is calling into question, well, what will Trump's response be again? So we've come back down, erased almost all that gain we saw early in the session, up about 0.3% in the S&P right now.
Well, it certainly gives you a sense of what is driving markets right now. Was much technical damage done yesterday, Mike? Because it was just a week and a half ago the S&P 500 was at an all-time high.
Yeah, I think so. I mean, we erased the gains for the year. Granted, only 3 weeks into the year, so that's nothing to worry about. We are trading below that 50-day moving average in the S&P 500. I think the rhetoric is very damaging, though. We've heard a lot about, to your point about Sell America. We've seen these strategists at Deutsche Bank and elsewhere sort of speculating on the possibility of the quote-unquote weaponization of U.S. assets, both equities and treasuries. People in Europe, especially the countries that would be a target of these potential tariffs over the Greenland issue, they own a lot of stocks. Something like those eight countries own about $5 trillion worth of stocks. They own a big slug of treasuries. Most of the analysts and investors I've read or heard their comments seem to think, it's kind of unlikely for this to happen, that investors would be shooting themselves in the foot if they were to sell U.S. assets over this issue, because it could have the potential to really drive down prices. That said, just the fact, Joe, that it's in the conversation at all is, I think, makes this a pretty fragile market right now, if that's the type of thing we're talking about.
It looks like the NASDAQ might actually turn negative while we're talking here. It's up only 3 points now. And much of this also has to do with this new aversion that the market seems to have with all things data center. The Mag 7's been having a real tough time here. Is this rotation into something, I guess we're calling quality, real and sustainable? Is the RSP what we should be looking at?
I think that we'll get a lot of the answers to these questions in the coming weeks when we get the earnings reports and the conference calls from the Mag 7 themselves to see what kind of pipeline they're talking about, what kind of demand they're talking about. I mean, this rotation certainly is real, and it's not just this year. It sort of started late last year. That said, there are pockets of the AI trade that are still booming. SanDisk is up, a ton.
Oh my God.
So it's not a wholesale rotation out of it, but people are looking for the sort of more valued, undervalued stocks. And there's, the AI trade sort of spills over into construction stocks and those raw materials. You need copper, you need steel. You look at the metal prices going crazy. So there is a spillover beyond the Meg 7 to the AI trade as well.
Really fascinating, as always, to spend some time with Mike Regan. Thank you, Mike. Great to see you from World Headquarters in New York. And boy, isn't that the truth? These storage companies are incredible. SanDisk just keeps on rising. We've got a new all-time high today. Same from Micron. There are pockets of strength out there. We'll keep tabs on it and get an update on the markets from Charlie Pellet in just about 5 minutes' time. And we'll assemble our political panel. Rick Davis and Jeannie Shanzano are with us once again, about a half hour away from our conversation with Lael Brainerd. Only here on Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg Radio.
Wall Street, we do check markets all day long. Here at Bloomberg, President Trump disavows the use of force in his quest for Greenland. Stocks higher. S&P 500 index up 24 now to 6820. That is a gain of 0.4%. This after yesterday's decline of more than 2% on the S&P. The Dow right now up 240, up 0.5. NASDAQ up 27. That is a gain of 0.1%. The Russell 2000 index of small cap shares gaining again up 0.4%. 10-year 4.27%, with the 2-year currently yielding 3.59%. Gold is up $54 the ounce at a record $48.17, up another 1.1%. Silver, though, in the red, down 1.9%, $92.82 the ounce on silver. And West Texas Intermediate crude up 0.1%, now $60.40 per barrel of WTI. Bitcoin 87,836, down 1.7%. J.P. Morgan Chase CEO Jamie Dimon says President Trump's proposal to cap credit card interest rates would spell economic disaster for the U.S., forcing banks to pull credit lines from many Americans. And he spoke about the idea at the World Economic Forum in Davos.
I have a great idea. Since there's a huge disagreement on this one, between Republicans and Democrats, I think we should test it. And in my view, and I can't do this, because it'd be antitrust. But the government can do it. They should force all the banks to do it in 2 states, Vermont and Massachusetts.
J.P. Morgan Chase CEO Jamie Dimon. Massachusetts, of course, home to Senator Elizabeth Warren. Vermont, home to Senator Bernie Sanders, both advocates of credit card caps. Recapping, S&P up 22 right now, up by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie, thank you very much. Charlie Pellet watching Wall Street for us as we watch Davos, and the president is making his way into the next event here. This is just kind of the rolling coverage that we're going to be giving you. We don't always get a heads up on how these are going to work. Right now, Larry Fink, who you've been seeing a lot of at Davos because he's the interim co-chief of the World Economic Forum, is introducing the president. If you're with us on YouTube, there's a live shot in the room. We're going to try to be a fly on the wall for some of these events. This particular one is a meeting. Well, maybe it's less of a meeting, more of a speech. The president, though, gathering CEOs. This is a who's who of global business in the room here, beginning with the aforementioned Larry Fink from BlackRock. But it's a who's who of industry, and the president's going to be talking to them as a follow-on to his address this morning to the larger group that included, of course, world leaders and business leaders. We're going to talk about all of this in a moment with our political panel. Rick Davis and Jeannie Shanzano are with us. Don't know if this is a prepared speech or if he's going to be riffing, having seen the president spend quite a bit of time off the script in his address earlier, which was, of course, framed as an affordability speech, right? We talked about this with Rick and Jeannie many times. And how is he going to make this case in Davos when talking about domestic policy here, bringing prices lower? Maybe he's going to get into it right now. Producer James tells me he's just at the podium. Here's President Trump live once again in Davos on Bloomberg.
And I heard you, I just got a report on the sales of tickets. There's never been anything like it, so that's good. It's going to break every record. So thank you for choosing us. We appreciate that. He's another spectacular person. And so many people in the audience, and I have this beautiful speech. Page after page, and I just said I just made a speech, and they were all here. They heard it one way or the other. And I said the last thing we want to do is waste our time and hear it again. But I do want to say the people in this room are amazing. Most of you were in the other room also. And the United States is doing really well, doing like nobody thought was actually possible, certainly not this soon. It's 1 year. It's exactly a year. If you think about it, time flies. It's 25%. That's a long time. But it went very, very fast. We've had tremendous luck. I think it's been reported by even people that aren't lovers of Donald Trump that it's been maybe the best first year for any president. I think in terms of what we've accomplished, it might very well be. But we've accomplished a lot, including ending 8 wars. I have 1 to go. I thought that was going to be one of the easiest ones, and it's turning out to be one of the tougher ones. But you heard me say before, 25,000, 30,000 people are dying a month. It's ridiculous. And I think we're getting close. Jared's here, and Steve Witkoff is here. A lot of people that are working on that are here, and they've done a good job. I think it could have gone into a world where if we weren't here, it was out of control. But I think we're going to get it resolved. And I'm doing it to save 30,000 people a month, if you can imagine. Your kid, I mean, take your son leaves home, waves to you, proud of him, you're so beautiful, and then 2 weeks later he had his head blown off fighting Ukraine or fighting Russia. It's both of them. The total are averaging 30,000 young people, generally soldiers, a little bit in towns, but for the most part it's soldiers. Every single month they're dying. So I think we're going to do well there. But we have Scott Bessent, who everyone knows, and Howard Lutnick, and these guys are doing a fantastic job with what we're doing. They were both recommended by many of the people in this room. I said, what do you think of Scott? Oh, he's fantastic. What do you think of Howard? Very different types. I would say these are two exact opposites. And I like that. I like that. They are the exact opposite. You know, I never thought of it that way. I'm just saying that I'm looking at you two. You are in every way, but they're tremendously talented people and very successful people. And I like bringing successful people in because there's a reason for success. It's one of the reasons that we've had such success. You know, we took over a country with a border that was a disaster where millions of people were coming in. Millions of people were coming in every single week. I mean, literally a week would have millions of people, and they weren't vetted. It's a totally open border. You'd have people come in. You could look at them. I don't want to say why define that, because they always discriminate, so I don't discriminate. But you could look at some people and say they're criminals. And we took in tremendous numbers of murderers, drug dealers, mental institution, insane asylum people that were in insane asylum institutions for the mentally ill and dangerous, very dangerous. They dumped them into our country like we were dirt, and we're doing a great job of getting them out. But it's it takes a lot of time, a lot of effort, and it's a nasty business too. But if they were bad someplace else, they're going to be bad here. If they killed people in their country, whether it was Venezuela or the Congo or any of the countries where they came. In the Congo, they emptied out their jails into our country. In Venezuela, they did the same thing, and in many other countries, they did the same thing. So when you read all these stories about ICE, you'll understand they're doing a hell of a job, because we can't have those people in our country, and we're getting them out. But we're doing numbers in terms of people investing in the United States like we've never had before. I guess it's because of November 5th, the election, but the election gave us a view, and it's a view on tariffs to protect our country, because our country is being plucked like you pluck a chicken. Our country was being plucked, and it wasn't good. And you can only
President Trump live at the World Economic Forum talking about the plucking of the United States to a room full of business leaders who have gathered to hear the president once again. They're hearing many of the same remarks that they heard a short time ago, and we'll keep tabs on this for you. If the president does make news or start taking questions, of course, we'll bring you back in the room. That was consistent, though, largely with what we heard for over an hour in the president's keynote this morning in Davos, which brings us back to the question of domestic policy and affordability. That was supposed to be the thrust of the speech, and he did talk about the housing market. He talked about inflation. In fact, he said that we have defeated inflation, virtually no inflation, extraordinarily high economic growth, and forecast GDP in the fourth quarter to be about 5.4%. Inflation has been defeated, he said, and the people are doing very well. We didn't, however, hear many new initiatives on getting prices lower. So let's assemble our panel to get their first take on this. They'll be with us, of course, in our second hour as well. Rick Davis, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, is with us live from New York. And there's Jeannie Shanzano, of course, our Democratic analyst, Bloomberg Politics contributor, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, was this a missed opportunity today?
Well, there aren't that many people who are going to be voting in the midterm elections or for president next year or in 28 who are sitting there glued to the television watching a Davos speech. Most wouldn't know what Davos is if you hit them in the head with a Davos 2x4. And so it's not the top of the priority for a domestic U.S. audience to talk about affordability. Obviously, he would be criticized if he didn't. And the U.S. press will pick up on it, just like what we're doing right now. So I think he sort of hit the marks. You can argue whether the marks are good enough. I mean, he has a different approach, right? Joe Biden was, I feel your pain. I'm going to empathize with your plight as a person who's got to make ends meet. And Trump is going to convince you that whatever plight you're in isn't real and that you should be enjoying yourself, regardless of what a loaf of bread costs or, a dozen eggs. So he's just going to blow through that kind of pain. And it's just a different approach, and he's not going to change between now and when he leaves office.
It's certainly a different approach. There were a lot of folks insulted in the room by the way he dealt with our European allies. Jeannie, and maybe that plays well at home. This realizing could be very good politics, but I'm curious your thoughts on the plan because we've got a big roadshow coming. Davos will be quickly forgotten as Trump plans to travel every week, we're reporting, and ramp up that activity as the elections for control of Congress grow near. He's been hearing he's got to get on the road. Is more of this messaging going to help Republicans?
Absolutely not. You could almost feel the pain of the political strategists trying to pull him in, rein him in. We heard Susie Wiles in that interview last year talk about we're going to get him on the road. He's going to talk about affordability. And yet he goes to the Economic Forum. Rick's right. Not a lot of Americans sitting around the kitchen table listening for what's going on at Davos, but he takes an opportunity to talk about the economy and he turns it into utter chaos and crises. And that is what Donald Trump has become in the minds of so many voters. It is chaos, it is costs, it is corruption, and all of it leaves them asking, what does this have anything to do with me? The man's talking about $1 billion to be on a board of peace. He's upset that he didn't win a prize. He's talking about sending troops into Greenland. And people are going to the grocery store and they can't pay for their bills. And this is what the latest CNN poll did, one of those typical, here's a phrase, how much does this remind you of Trump? And on, does he feel the pain about average Americans? It was about 30%. Does he care about people like you? About 30%. That's his base. He needs to do much better than that if the Republicans have a shot in the midterm, and he hasn't been able to make that case. So, yeah, they're going to send him on the road, but they're going to be clutching at their pearls as they try to keep him focused on the economy and affordability, which he calls a hoax. And by the way, Scott Bessent yesterday talking about retirees owning 5, 10, 14 houses. I don't know what world these people are living in, but it's not the world of Americans.
But we can have goals. Jeannie, look, we're going to, by the way, spend a lot more time with our panel in our second hour on the speech and the geopolitics surrounding it. Rick, what do you think of the roadshow? Susie Wiles told reporters on Air Force One he will travel every week and continue to ramp up that activity. In fact, he's going to be in Iowa on Tuesday, and then we move on from there. Is that where he belongs, is on the road?
Yeah, I think there's some clarity to that. Susie has said over the last couple months that regardless of how you look at the midterm elections, it's about him. And the reality is for their base to actually get out to vote, they need to make it about him because they're not going to vote for anybody else other than him. And so if they're successful in convincing their voters, and these are really MAGA voters, that this is a referendum on Donald Trump, there's a better chance than not that they'll be willing to do something they never do, which is vote in midterm elections. So it's a practical political consideration that Susie's doing, which is how do we convince voters who never show up to show up? Well, we got to make it about Donald Trump. And by the way, that plays to Donald Trump. He wants everything to be about Donald Trump. And so convincing him to go on the stump, do some more campaigning, he loves it. He thinks this is really what he does well. And frankly, bashing Europe, his vote loves that. Yeah. I mean, he doesn't have to talk about the price of bread. He can go in there and talk about, France and pick on Macron and people like that. And his base goes wild. They think this is terrific stuff.
It's amazing that we're in this world right now. And, of course, we're going to be following the president on all of his travels. Rick and Jeannie are going to stay with us. As I mentioned, they'll be here in our second hour as we really dissect the speech and what was said. That'll be following our conversation with Lael Brainerd. I do want to mention, though, quickly, with arguments before the Supreme Court today, following the president's attempted firing of Lisa Cook. She is out with a statement. We'll uphold independence as long as I'm at the Fed. And we're going to have a live report coming from Tyler Kendall from the Supreme Court in just a couple of moments when we welcome our global television audience to the conversation and welcome Lael Brainerd to our set here in Washington. We've got a lot to talk about. We're going to go to the fine print, so stay with us right here, only on
From Washington, D.C., this is Balance of Power with Joe Matthew.
Lisa Cook says she will uphold independence as long as she is at the Fed. Welcome to the Wednesday edition as Cook issues a statement following arguments before the Supreme Court this morning over the president's attempted firing of Cook. And we're going to have a live report coming up from the Supreme Court with insights ahead from Lael Brainerd, the former director of the National Economic Council in the Biden administration, former vice chair of Federal Reserve, with us here in our Washington bureau. President Trump spoke for over an hour this morning at Davos, but only one line seemed to really matter to the market as he ruled out military force in Greenland. We'll have much more on that with our political panel And it's all after a look at Wall Street easing back from an early rally. Let's see where we are now with Charlie Pellet in New York. Hey, Charlie.
Well, good day, Joe Matthews. Stocks higher across the board. We've got one eye on the U.S. Supreme Court, another eye on Davos, another on earnings. 3 eyes, yes. Dow, S&P, NASDAQ all advancing right now. S&P moving higher by 33 points, 68.29 there, gain of 0.5%. Dow up 271, higher by 0.6%. NASDAQ Composite Index up 58. That is a gain now of 0.2%. The Russell 2000 Index of small cap shares outperforming, up by about 0.6%. Bottom line here, Wall Street getting a cautious bounce on President Trump's tone. The president earlier today disavowing the use of force in his quest for Greenland. That is pushing up stocks, halting a slide too in bonds. 10-year at 4.26% with the 2-year, 3.58%. Spot gold up $63 the ounce, up 1.3%, 48.27 the ounce. Silver, 93.29. Spot silver down 1.4%. And West Texas Intermediate crude oil, 60.50 a barrel. WTI up by about 0.2%. Bitcoin down 1.8%. Bitcoin 87,777 on the Bitcoin. Netflix lower after earnings. Netflix shares down now by 4.8%. Last night after the close of trading, the streaming leader gave a disappointing forecast for earnings in the months ahead as it spends more on programming and works to close its $82 billion deal with Warner Brothers Discovery. WBD, Warner Brothers up 1.3%. The other player in all of this, Paramount Skydance, trading lower by 0.7%. So again, recapping here, S&P up 24, gain there of 0.4%. For on-demand news, 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. Live from World Headquarters in New York, Charlie Pellet will have another read on the markets in just about 15 minutes' time as part of our program here in Washington. I'm Joe Matthew. Thanks for being with us on the Wednesday edition of Balance of Power on Bloomberg TV and radio, streaming live right now on YouTube. We have a lot to talk about following the president's address in Davos this morning, his ruling out of military activity in Greenland, and of course, the conversation about affordability that he tried to inject into that speech, his claims of economic growth, all will be tested when we spend some time with Lael Brainerd. But we've also got our eyes on the Supreme Court today, and there is some major crossover here as the court weighs a very simple question: whether President Trump can fire Fed Governor Lisa Cook over mortgage fraud allegations that, of course, she has consistently denied. We heard the president's side of this case, speaking for the administration, Solicitor General John Sauer, in arguments just a couple of hours ago. Listen.
We would contend there's judicial review kind of at the outer perimeters of cause, whether something goes to conduct, fitness, ability, or competence at all. But once you're within that, and we clearly are here, then there would be deference to the president. The statutory language, cause without further qualification, is itself, in its plain language, a broad, conferral of authority on the president himself.
Remembering that the Federal Reserve has been qualified as a different entity than every other federal agency in the court's declaration last May, describing it as a uniquely structured quasi-private entity that follows in the distinct historical tradition of the first and second banks of the United States. As we try to get closer to the center of this case, we bring in Tyler Kendall, Bloomberg Washington correspondent, has spent the day at the courthouse listening to arguments. Tyler, the headline that we're running here on the terminal is that justices are skeptical of the White House's case. What are you hearing?
Right, exactly, Joe. And that was the indication that we got as we listened to the justices questioning, not just of the Solicitor General, but also of Lisa Cook's lawyer as well, signaling this weariness over the Trump administration's efforts to oust Fed Governor Lisa Cook and citing, interestingly enough, the potential ripple impacts when it comes to the economy, the markets, and of course, the central bank's independence. Now, if we take a step back here, it's important to note that the case in front of the Supreme Court today has to do with the Trump administration's request for what's known as a stay of a preliminary injunction that has allowed Lisa Cook to retain her position while the broader issue of her firing plays out in court. So essentially, they're asking the justices if President Trump can fire Lisa Cook for now. However, it does have implications for down the road because the justices were really asking questions that get to the heart of Lisa Cook's firing. And those themes that we saw the justices pull on really have to do with three different buckets. One is, does President Trump have sufficient cause to fire Cook? The second is, was she afforded due process? And the third are these potential impacts down the road when it comes to the economy and the central bank's independence. And it was interesting because we did hear from one of those justices appointed by President Trump, Brett Kavanaugh, who in particular honed in on that last bucket about what those impacts could be, saying that he is thinking about the, quote, real-world downstream effects and any precedent that this could set, not just for the future of the Trump administration, but any administration down the line. So, Joe, well, it seemed that we were getting this sort of consensus for how the justices were feeling. There was less of a consensus about what they're going to do next. We could see them issue perhaps a narrow ruling citing concerns that Lisa Cook didn't have enough time to address these allegations of mortgage fraud against her. We could see a broader ruling where they define what cause means, what that legal standard actually should be defined as, since it's not explicitly known in the law. Or ultimately, Joe, they could just kick this back to the lower court and not issue an opinion at all. So there's a lot of different threads that we're watching here, and it's something that's going to develop in the weeks and months to come.
All right, Tyler, before you blow away, just very quickly, did you get eyes on Jay Powell? Did anybody see him coming out of the Supreme Court today?
So we can confirm one of our colleagues inside the room did lay eyes on Jerome Powell as well as Ben Bernanke. He was also in the room alongside Fed Governor Lisa Cook. However, it's our understanding that he did not go out of the main public entrance here. There's a few different entrances at the Supreme Court that Jerome Powell could have used.
Got it. Tyler, thank you. Get warm. Tyler Kendall in front of the U.S. Supreme Court today with arguments being had. We discussed this a bit with Kevin Hassett earlier, my colleague Anne-Marie Hordern, bringing us back to our other big story today, the president, the administration on the ground in Davos. And we spoke with Kevin Hassett, director of the National Economic Council, said to be on the short list to replace Jay Powell as Fed chair, specific to the concept of Fed independence. Listen to what he said.
I was a young economist at the Fed a long time ago, and I worked with Alan Greenspan, and he was really, really careful about keeping the Fed out of politics and keeping the Fed focused on monetary policy and interest rates and the dual mandate. And even to one point, I wrote a paper, an academic paper, that he refused to publish for the Fed for over a year because it was about carbon taxes and BTU taxes, and he didn't want the Fed to get involved in that fight with Al Gore and Bill Clinton while it was still going on. And so I think that, really regrettably, the bank presidents and the Federal Reserve members seem to want to have an opinion about everything every day, not just monetary policy. So, for example, you could go in, and right after President Trump took office, Austin Goolsbee gave a speech where he said, well, economists all agree that if there's a tariff, that it doesn't have an effect on inflation, it just affects the price level. But he said, here's why you shouldn't think about it that way. And I think that that's actually going into a politically dangerous place for the Fed. I mean, for sure you want to talk about inflation, but precisely then, right when President Trump's coming in and setting his tariff agenda, to have the Fed criticize him so vehemently, I think is inconsistent with the desire for independence.
Do you think it was appropriate that Jay Powell went to the Supreme Court today?
I do not.
Interesting. He did not think it was appropriate. As we heard, Jay Powell was in fact there, and that's Kevin Hassett speaking with Anne-Marie Hordern. After sundown in Davos, the president still making his way through the World Economic Forum, and we might catch him at a couple of different events. He's got some sideline meetings with other world leaders following his conversation with business leaders that just concluded, so we'll let you know if he starts to speak and make some news. We want to seize on this moment, though, following the arguments before the Supreme Court, knowing that we have a lot to talk about with our economy, and a special conversation with Lael Brainerd. If there was one voice we wanted to hear respond to the president and this entire conversation about Lisa Cook's possible firing, we turn to the former director of the National Economic Council in the Biden administration, former vice chair of the Federal Reserve, distinguished fellow now at the Georgetown Soros Center for Financial Markets and Policy. Lael Brainerd, welcome back to Bloomberg. It's great to see you. Can I just start with what happened at the Supreme Court today? Did you think it was appropriate for Jay Powell to be in attendance?
Look, I don't know whether it's appropriate, not appropriate, but I do know Treasury Secretary Bessent showed up when there were debates over tariffs.
He sure did.
And could anything be more important to the Federal Reserve Chair right now than how the Supreme Court delineates the president's authorities on for-cause firing of board members?
Yeah. Well, look, this is obviously something that will not be resolved today, and we understand it could be months before we know. Lisa Cook did issue a statement following the arguments this morning and talked about the insulation that Congress has put together to insulate the Fed from political threats, holding it accountable for delivering on the mandate. For as long as I serve at the Federal Reserve, she writes, I will uphold the principle of political independence in service to the American people. We could be in a world where she has another 3 or 4 Fed meetings before this case is decided. Should she be in those meetings?
Well, look, I think what Justice Kavanaugh got to in his questioning, which is if a governor can be fired without any hearing, without any due process, without any real establishment of for cause, it really fundamentally means that the American economy can be in for higher inflation, less credibility on the part of the central bank, because that is what central bank independence is so important for. So I do think this issue about making sure that the president's ability to fire for cause is carefully delineated, because otherwise we will lose that fundamental bedrock of the American economic dynamism.
I want to get your take on the state of the economy, but as long as we're talking about this, you have the case involving Lisa Cook, and you now have a criminal investigation into Chairman Jay Powell. What is it that the president is trying to do in reshaping the Fed, if nothing short of that?
Yeah, well, I think really the criminal investigation just seems like a spectacular misstep on his part. If anything, it has really raised concerns. We've heard from financial market leaders. We've now heard from prominent Senate Republicans who sit on the Senate Banking Committee. The move to criminally investigate the chair for some renovations has really, I think, set off alarm bells that could lead to the chair staying in his seat as governor for longer than he might have done otherwise.
Right. Isn't that something? We had Tom Tillis on the program last week under no uncertain terms. Says he will not consider a replacement until this is resolved. As we spend time with Lael Brainerd, I want to go through some of the notes that I took during the president's address today before this crowd in Davos that I think we can agree knows a lot about the data. They probably have a couple Bloomberg terminals in that room. These are business leaders. These are world leaders who were listening to the president. Inflation has been defeated. Is that true?
Well, I think we know that inflation is still hovering close to 3%. We'll get the PCE inflation later, but inflation has not been defeated. Inflation close to 3% is not close to the Fed's target. There's more work to be done there.
The bold claim. Virtually no inflation, he says, and extraordinarily high economic growth. Over the past 3 months, he says core inflation has been 1.6%. He's projecting economic growth in the fourth quarter of almost 5.5%. Will that happen?
Seems very implausible. Don't forget, we had the shutdown in the fourth quarter, and that's likely to depress growth in the fourth quarter. Of course, we'll see a bounce back from that in the first quarter. He's right that we've had several quarters of very strong growth. That has been entirely propelled by the private sector AI boom. But if you look at jobs, it's been entirely jobless growth. So the rate of job creation has really plummeted during this time. And of course, with inflation still high, that's why you see consumer sentiment that's still very glum.
The president said people are doing very well. They're very happy with me. We've lifted more than 1.2 million people off of food stamps. How do you interpret those lines?
So, look, I think the polling, similar to the consumer sentiment data, suggests that actually there has been a precipitous decline in sentiment about the economy. And what we've seen in some recent elections is that a lot of Americans want the president to deliver on his promise to bring down prices on day one. Instead, prices have gone up a lot, and people are very concerned about affordability.
Well, and you wonder as well, the 1.2 million people off of food stamps, has that that because of the changes in eligibility, or is it because people are lifting themselves up with new jobs or higher wages?
Well, we certainly know that the Big Beautiful Bill had restrictions on SNAP, food benefits that have been calamitous for many American families, and of course, the Medicaid cuts, 11 to 13 million Americans that will potentially lose access. That won't kick in until after the midterms, but I think a lot of families are also already seeing the premium tax credits expiration means that they are paying double the premiums on their health insurance for another up to 20 million Americans.
And this may not be changing anytime soon as we watch the beat here, try to follow the beat on Capitol Hill. I want to ask you about housing. Really interesting. The president wants to ban institutional buyers from the single-family home market. That's one initiative that's been fixed. I suspect that'll be part of the State of the Union address. But he's been recently talking about his concerns over rating people's nest eggs in their homes, that making changes to the market could lower their home values. Listen to the president talking about this earlier in Davos.
Every time you make it more and more and more affordable for somebody to buy a house cheaply, you're actually hurting the value of those houses. Now, if I want to really crush the housing market, I could do that so fast that people could buy houses, but you would destroy a lot of people that already have houses.
I'm really curious your thoughts on this. Number one, I don't know how fast he could start building tens of millions of homes that I guess would be needed to actually lower home values. But how destructive would this be to people's savings?
Look, I think it was interesting, as you say, to hear him just reflect aloud. It seems like he's got some real ambivalence. Most Americans don't have a lot of ambivalence. They really do. They're hurting. Rent is too high. They want to own homes. Young families, first-time home owners who are aspirational. They've been locked out of the market for too long, and we know that the answer is more housing to be built. We are short 3 to 4 million units of housing at a minimum. And so in order to do that, a very forceful and long-term agenda needs to be put in place. The Senate actually had some good legislation, the road to affordability on housing. I think there's a lot of good ideas out there, but it really has to go beyond a few Band-Aids and take seriously the need for more supply.
It would take a lot to lower housing values. I suspect that would dent people's retirements, although we've been through a great recession before, and we've seen the housing market go through some pretty wild swings. Lastly, we have a minute left. Interest rates. The president says in the old days you had big numbers, they lowered rates. He doesn't understand the dynamic here with the Fed. We don't have time to get into all of that, but do you see a Federal Reserve that's on the precipice of cutting rates again?
So I think it'll all depend on the data. I actually think that this Federal Reserve is focused on the data. We have seen that the unemployment rate has held steady now. They were extremely concerned about a weakening labor market. For a month or two, we've seen some reassuring data there, which means they can take a little longer and see how those inflation numbers really play out. But if the president continues to threaten the Fed's independence, interest rates will actually go up.
Well, we've seen that a bit on the long end, haven't we? It's great to have you back with us. Lael Brainard, I didn't even ask you who should be the next Fed chair. You wouldn't tell me, though, would you?
I would not.
She's been in the building, vice chair at the Federal Reserve, and, of course, former director of the National Economic Council, Lael Brainard, with us in studio here at Bloomberg. We thank you for the insights, and we'll assemble our panel next.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. Stocks, however, pairing gains. We're well off session highs. S&P right now up 27. That is a gain of 0.4%. The Dow doing a little bit better, up today by 0.6%. NASDAQ now up by 0.1%. The 10-year at 4.26%. Spot gold is surging $65 the ounce, above 4,800 now. 48.28 on the precious metal. That's a gain of 0.5%. Silver, though, in retreat. Spot silver down 2%. Silver at 92.71. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm Joe Matthew in Washington. We want to bring you back to Davos, as I just mentioned. Mark Rutte, the Secretary General of NATO, sitting down for a bilateral meeting with President Trump, remembering that President Trump saying earlier today he did not believe NATO nations would back the United States if attacked. Let's listen live now on Bloomberg.
It's been amazing. As you know, we're staying, and tomorrow we're doing something else having to do with the border peace. We're getting tremendous acceptance of that. It's going to be great. So we'll see how that all works out, but we're doing that tomorrow. So thank you very much, media. Thank you very much. And Mark, would you
Yeah, just briefly, what I just wanted to say again, as I did this morning when I was on a panel, I want to thank you again for what you did since coming in January, Trump 47. Basically getting the Europeans and Canada to really step up, and that led to the enormous success we had in The Hague with the 5%, which is crucial to defend ourselves and to also equalize with what the US is paying. This was a problem already there since Eisenhower. I always tell the Europeans, you are completely committed to NATO, but there is also that one irritant, and it is this factor, that the Europeans were not paying the same as the US was paying. And we solved it, and this is crucial also because we need the money to protect ourselves. There's one thing I heard you say yesterday and today. You were not absolutely sure that the Europeans would come to the rescue of the US if you will be attacked. Let me tell you, they will. And they did in Afghanistan, as you know, for every American who paid the ultimate, for every 2 Americans who paid the ultimate price, there was 1 soldier from another NATO country who did not come back to his family. From the Netherlands, from Denmark, and particularly from other countries. So you can be assured, absolutely, if ever the US will be under attack, your allies will be with you. Absolutely, there's an absolute guarantee. I really want to tell you this because it is important. It pains me if you think it is not. And under your leadership, this alliance is stronger than ever.
Well, thank you very much. It's a great compliment. Any questions?
Mr. President, the Danish foreign minister rejected your call to negotiate on Greenland. What will
I didn't call him.
No, sorry. The Danish foreign minister rejected what you said in your speech that you were hoping to negotiate to acquire Greenland, essentially saying that this is not something that they are willing to discuss. So what will those negotiations
Well, they didn't
like?
tell me that, so when they tell me, because I don't like getting it secondhand. If he wants to tell me, he'll tell me that to my face.
And when will you be discussing this?
I have no idea.
When you said
I'll be discussing it with this man right here.
Mr. President,
He's frankly more important.
Mr. President, when you said you would remember if Denmark did not agree to a deal on Greenland, what did you mean? What are the consequences?
You'll have to figure that out for yourself. You're a smart guy.
Mr. President, do you see a price for Greenland that's reasonable?
I could see that, yeah. I could see that.
How would you calculate?
I could see that, but there's a bigger price, and that's the price of safety and security and national security and international security having to do with many of your countries. That's really the price, and that's the big price. And as you know, we're doing the Golden Dome. It's going to be very expensive, and it's better if we have Greenland than it is without. It's going to be safer. It's going to be stronger. It's going to be better for Europe, and it's going to be better for us. And so we'll see what happens. Any other question?
Is it reassuring to hear the NATO Secretary General say NATO will defend the United States if it comes under attack?
Well, I hope that that's true. I mean, he's a good man. He's never lied to me before. You know, we've had a good relationship, and he made that statement. That's nice. I mean, I just, you know, when I see what's happening with Greenland, I wonder, because I want Greenland for security. I don't want it for anything else. We have so much rare earth. We don't know what to do with it. We don't need it for anything else. And in terms of Greenland, you know, you have to go 25 feet down through ice to get it. It's not something that a lot of people are going to do or want to do. No, this is security we're talking about. And I can say one thing about Mark. He wants security, and he wants security for all of us. I think it's, you know, we're a member of NATO. He wants security for NATO and beyond. So when he says that, Steve, I think it's, it's very nice. Okay? Thank you very much, everybody.
Thank you, press. Thank you, press.
Thank you.
Thank you, press. Thank you, press. Let's go. Let's go. Start moving. Thank you, press.
All right. A live conversation there with President Trump and the Secretary General of NATO, Mark Rutte, who said, "You can be assured absolutely," this is Rutte speaking, "if ever the U.S. was under attack, your allies will be with you." He added, "It pains me if you think that's not so." Following the president's remarks earlier at the World Economic Forum, in which he said flat out he does not believe that our NATO allies would be there to help support the United States if attacked, if there was in fact an Article 5 violation, knowing that the only time there ever has been one was on behalf of the United States following 9/11. And of course, Denmark did send troops who died in Afghanistan. Let's assemble our political panel to get their take on the comments from the president so far today in Davos, and we're not done yet. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. Jeannie, the president, after the Secretary General of NATO just made that pronouncement, seemed to think it was kind of a personal. He said, "Thank you for the compliment." He does not believe that other nations, based on the pushback over Greenland, would be there to protect us. Do you think he takes Rutte at his word?
I don't think he believes that. And quite frankly, I think we're seeing a rupture in NATO. I mean, you look at the comments, and that's what I think's been so remarkable at Davos. You look at people like Mark Carney, you look at people like the UK finance minister, you look at others. They are starting to say that they don't think they can trust the US to be there for them. So I'm not so sure that Donald Trump is wrong when he says they may not be there for us. But of course, what he's not saying is that this is of his own doing, because to your point, they have been there for us for the last 80 years. And I think, Mark Rutte is standing a little bit on his own there, still harboring the idea that if he hugs close to Donald Trump, he will get something out of it. And I'm not so sure many of our NATO and European allies feel that way anymore.
He did spend a lot of time thanking President Trump for preserving funding for NATO. Rick, what's going through your mind after you just heard this conversation? The U.S. has never doubted NATO allies in responding to an Article 5, has it?
No, and I don't think it will in the future. The debate isn't about the ability for NATO to continue to protect one another's interests. As you've pointed out, it rarely comes into effect, but when it does, there's not a question. And the NATO countries respond in kind. And certainly Donald Trump has not said anything that would actually give cause for the NATO countries to not think that the U.S. wouldn't be there too. And I think you got to divorce some of this with just sort of the typical Trump grandstanding, trying to leverage Europe into a place where it hasn't wanted to be. Europe was not investing in their lethality, and now it's a much more lethal enterprise in NATO than it has ever been. And Trump spent a good part of his first term, you want to call it lobbying Europe, more like lobbing bombs at Europe. But and obviously he's been committed to doing that again in this last year. So it's how he gains leverage over these leaders is to be able to throw these insults. I'm not saying it's the right thing to do, but it's definitely a tactic. And I don't think you want to look too far past that tactic to see that things are actually improved in NATO since 2016.
Well, when we move past some of the insults that we heard this morning and some of the hot takes on data that Lael Brainerd helped us understand, we're not always accurate. And of course, the president, Jeannie, is talking to a lot of people who are pretty smart in that room. These are world leaders and corporate leaders who know the data and they know the score. But it wasn't just about that. The president, when he got back on the script, started talking about the cultural implications of our economies, Jeannie. And I'm wondering your thoughts on this rhetoric. Listen to what he said.
The explosion of prosperity and conclusion and progress that built the West did not come from our tax codes. It ultimately came from our very special culture. This is the precious inheritance that America and Europe have in common. We share it. We share it, but we have to keep it strong. We have to become stronger, more successful, and more prosperous than ever. We have to defend that culture and rediscover the spirit that lifted the West from the depths of the Dark Ages to the pinnacle of human achievement.
This followed a pretty long rant insulting Somalia, which she said was not a real country, and talked about the impact of Somali migrants in the United States. When you consider that language, we have to defend that culture. Jeannie, what culture is he talking about?
You know, number one, I think he's talking about a culture that is scripted, and he is far less, in my mind, comfortable when he's forced to go back on script, which he was doing at that point. And what strikes me about that is if his real interest is in preserving the West and everything that has made the West what it is since World War II, since the fall of the Berlin Wall, since the end of the Cold War, why is he doing everything he can to blow those relationships up? If that's his interest, why is he threatening to send American troops into Greenland? Obviously, before this speech, he has backed off from that. Why is he consistently telling our NATO allies that they wouldn't even be countries if it wasn't for the United States? That they have done nothing, that NATO has done nothing for the United States. So, you know, to me, this seems like what his political strategists want him to say, what his speechwriters want him to say, and he'll say it. But you can hear what he really wants to say is what he has said since 2016, that NATO is not serving the United States. We are serving it, and they owe us. That is Donald Trump's message to NATO. And I think for the first time, we are hearing European leaders wake up and say, you know what, we're going to take his rhetoric seriously. We aren't going to keep going and say, oh, he's just joking, or he's just using this crazy rhetoric to move us in a different direction. You see a split there, and you see Carney and others who are saying, I'm going to take him at his word, and we need to defend ourselves and look for allies in China and elsewhere.
Rick Davis, how should we interpret the cultural references? Are these the fingerprints of Stephen Miller on the script?
Yeah, I think that anytime the word culture comes out of Donald Trump's mouth, especially written in a speech, you can pretty much rest assured that that's coming from, you know, sort of the ideological center of the White House, which is Stephen Miller. And that is a reference to the Judeo-Christian values that are similar between the U.S. and Europe. It is not a modern conceit. It's an ancient conceit. And it's a bit of a dog whistle, you know, in today's domestic politics. So in so much as they're embedded into this speech, some of these kinds of symbolism and messaging for the domestic U.S. audience, at least the MAGA audience, then you can be rest assured that that's going to make its way through social media by the end of today.
Always a great conversation with these two, Rick Davis and Jeannie Shanzano. That's why they are Bloomberg Politics contributors. We thank you both, of course, and we'll have a lot more throughout the day on the president's address and the impact on the markets. We'll get an update from Charlie Pellet coming up in just about 5 minutes' time, right here on Balance of Power, only on Bloomberg TV and radio.